Little bit of downside. Maybe that's why we're seeing what we're seeing in futures this morning. But Europe feels like it's focused on the energy trade. The rest of the world definitely focused on the AI trade, Tom.
Yeah, European futures looking like they're left out in the shade, pointing lower by 0.3%. There was upside last week for the European stocks. You did end the week in positive territory, modestly, but today pointing lower by 0.3%. The FTSE 100 futures pointing lower by close to 54 points, not getting the lift from higher oil prices. Brent is up around 3% so far in the session. DAX futures over in Germany, of course, pointing lower by around 0.3%. We'll be watching energy, we'll be watching chips as well, of course, Anna.
Yeah, absolutely. We'll certainly watch chips. Let's have a look at some of the other individual stocks we'll watch. We'll start off with the chip story, though. What will the read across be from all that AI enthusiasm in the US? We see it in the futures. We see it in the session overnight over in Asia. The likes of SK Hynix and Samsung and SoftBank all continuing the strength that we've seen of late. We've had lots of news lines out of NVIDIA, including a move back into PC markets, so we will certainly focus on the chip sector. EasyJet in focus on the back of what seems to be quite a lot of interest from Castle Lake. No firm conversations about any kind of takeover. That seems to be the line from both sides. But if we did see an offer from Castle Lake, it would have to be substantially higher than where the stock closed on Friday. So that is interesting for us to watch. And Roche is in focus as well. Roche moving its weight management drugs to phase 3. We will watch how that influences the market.
Okay, the market. Let's talk about the market and figure out what the open is going to be looking like. The FTSE 100. Let's start there and see what's happening. We are expecting it to open a little softer this morning. We start off with an unch, a big green unch, so at least it's green. The expectation was that this will be a market this morning that would open a little softer, and maybe that's what we're going to see. So we're just ticking down a little bit. The expectation was that maybe we would see the FTSE 100 down by around circa 0.5%, and we're now beginning to edge in that direction, down by 0.2%. Elsewhere in Europe, we're expecting maybe a slightly more positive picture, but we are looking at very positive, well, no, I'd say very positive. We're looking at upside over in the United States. The tech trade is expected to drive the Nasdaq up by maybe another 0.5%. What are we seeing in terms of the sectors, Tom?
4 sectors currently in positive territory. Energy at the top of the list, gaining 1% on high oil prices, of course. The tech sector is playing that role. Renewed optimism coming through from SoftBank's investments in France, but also what we're hearing from Jensen Huang in Taiwan. Tech up 0.8, just shy of 0.8%. Telecoms up 0.6 as well, and basic resources gaining 5 sectors right now in positive territory. Utilities has just joined that pack. Very modest gains coming through there. On the downside, biggest losses coming through for healthcare. Then that sector's down 0.8. Media, which had been the leading gainer across your sectors on Friday, is currently amongst the biggest losers, down 0.7%. Anna.
Yes, I mean, don't have much to add in terms of the sector picture. It is a day where oil prices are up by 3%, and so energy stocks quite understandably go higher. And on the technology side, we were watching to see what read across there'd be, and yeah, broadly we are stronger. Looking for what we'll have more on Schneider Electric in just a moment, but looking to see if there is read across from the SoftBank story, the NVIDIA story. Lots of positivity, of course, around that sector at the moment.
Nokia is gaining 3.6%, so they got the optics part of the business, and that's been a very...
That was down quite heavily on Friday, wasn't it?
That was possibly some profit taking because the run-up in Nokia has been
extraordinary, yeah. So I think it was down quite hard Friday, so it's bouncing back a little bit this morning. Certainly not quite filling the gap towards the back end of the session that we saw. So on a 2-day basis, that stock's still down by 3.5%. So it's interesting to see that that was bouncing back. Where SAP was up on Friday, after we saw some more positive more positive news around what is happening in the SaaS sector. So quite a mixed picture coming through from technology this morning.
Okay, let's get into a conversation about where these markets go next. Will Hobbs, Brooks Macdonald CIO, joins us on set here in London. Really nice to see you, Will. Thank you for coming in. We'll get to your thoughts on what's going on in the UK, because that's really interesting a little bit later on in the conversation. But thinking broadly about some of the themes we've been throwing around this morning, I mean, AI and AI optimism driving Asia, driving US stocks, US futures pointing higher as a result of that. But you're not necessarily convinced by the rate of adoption we're seeing for AI technology. So tell us how you invest in AI with that sort of hesitancy in mind.
Yeah, no, this is the question of the moment, isn't it, I think, Anna? And one of the things you've got is I've always got in my head that idea of the William Goatsman analysis that looking at bubbles in the past, they're much rarer than they might appear, and quite often when you find big stock surges, it's actually a step change in technology. And what these valuations bring is they suck in talent and capital to solve the problems at the frontier. You've still got this very jagged frontier in the capabilities of the latest generative AI. So that gives us question marks about where this could go. But ultimately, I think now you're still sort of trying to work out how to invest in the picks and shovels phase, which, you talked about all the memory stocks, these incredible earnings growth stories, and how now to look at the next phase, which gets us a bit into the UK, of how this impacts the knowledge economy and what are the big areas that it could change.
And so you think that actually maybe the market is too focused on the current winners from AI, and actually it should focus on the companies that are going to win from adoption?
It's not too surprising, though, in a way, because this is where the earnings growth stories are at the moment. I mean, the earnings upgrades for Korea alone, astounding. And so that's really backing the earnings growth. And what you're finding so far, and this is where we don't quite know the answers, is that demand is totally overwhelming plausible supply. That's conferring massive pricing power on the memory stocks and various other parts of the supply chain. How long that lasts for, we don't know. But in a way, yes, I think if you're thinking to the medium term, you've really got to think not just AI. There are a broader batch of technologies associated with the information revolution, which I think are mostly going to be deployed in the knowledge economy, hence the UK and various other areas. And that is some of the areas where you've got to think about some of the adopters of this new batch of communications and other technologies, how they might coalesce in surprising ways and change the rules of the game.
So will that suggest that you assume, or that you're seeing evidence that the adoption is worth the cost, that they're getting that return on investment? Are you seeing evidence for that?
Tom, that's a really interesting question, because so far we're looking at patchy evidence, and obviously everyone's trying to look at this, again, the problem you have a little bit is that while that frontier remains quite jagged, you have quite a lot of trouble seeing generative AI migrate out of sort of relatively mundane tasks like generating paragraphs, where it's annoying but not disastrous if it hallucinates, further up the chain, and then you get into problems. But you are already seeing productivity statistics in the US pick up. That can't be generative AI, and that's already, the trend is higher. I think the trend is already higher in the UK if you use the right statistics on labour force growth. So in a sense, this predates, and that would not be too surprising. You've got machine learning, the generative AI forebear, already being deployed in quite widespread terms, and there's quite a lot of areas where that would be increasing productivity. Generative AI, if it comes off, could just be the cherry on top of that productivity trend already rising, if that makes sense.
Is there more upside in getting exposure to services that adopt AI or the industrial space, particularly as we think about physical AI and embedded AI?
My hunch is services, Tom. I think that's
because it happens more quickly, because it's easier to adopt, because the gains are easier to accrue?
I don't think the gains will be easier to accrue necessarily, but I think in a sense this is the area where there is most to go for. The cake is potentially biggest. And that is where, if you look at manufacturing now, I mean, you're already operating dark factories in China where the lights never come on. How much more productivity can you get in that space particularly? There are areas and there are bits to squeeze, but it's the services sector, I think, where there are most jobs and not necessarily jobs at risk, but superpowers to confer on the various employees. And I think ultimately that means that what you may find in the services sector, particularly things like legal, financial services, is actually, because your marginal cost to serve come down, people get access to legal, financial and other services. The bottom end comes down as such, and so you get supercharged like that way.
During most of these booms, you need the cost to come down for wider adoption. The cost is going up, not down right now.
Yeah, no, that's very true. And I think that is why I would talk a little bit about, you know, I always think back to this that amazing study by McKinsey, they were asked by AT&T, and you guys know this well, to look at the mobile phone market and where it would end up. And this was from the early 1980s. McKinsey, totally understandably, turned around and said, by the turn of the century, it's going to be about 900,000 phones worldwide. That was out by 100 times. And the reason for it was because from their vantage point, they thought these phones were ridiculously heavy. You could see that. The batteries were short. Coverage was wrong. So we just don't know which problems are going to melt away first to make our current forecasts incredibly wrong. But what we would say is that while you're getting, you know, all of this talent and capital sucked into the space, I think there's a good chance that some of these problems will be solved and costs do come down. You just don't quite know when. And so your diversified pitch is a sense, a little bit.
But at the moment, the market's buying the picks and shovels, which are unbelievably expensive. And do they have to come... The inflation rate in the input cost side of the AI story is very expensive. And if you look at the cost of influence, we are effectively subsidizing it because you can tell that because companies like Anthropic and things like that are losing money.
Yeah.
So kind of...
Yeah, no. Whether this trade comes off or whether, you know, I do think that, you know, Damodaran talks about this a little bit, doesn't he? The sort of big market delusion. You've got 5 guys coming into a poker table. All of them think they're going to win big. There's going to be some disappointed people. So some of that infrastructure play, I don't think we have to bet hard that it's all going to come off. But to your point is you've got to see wider, we want to see wider adoption. Yeah. How do we get costs down to generate that wider adoption? Because these guys have to make money to justify the investment that is being made. At some point, are we going to pay the higher price? I don't think so necessarily. So prices have to come down? If prices have to come down, and if you look at the studies of the past, you tend to find that these technologies, they end up mostly going to the consumer, don't they? Either via the sort of consumer surplus or directly so. It's just the path to that point. But I'm not sure that you're going to find massive pricing, you know, because if you look at these models, at the moment, they're not doing anything that much different from each other. There's not sort of one that's really standing out relative to the others. Therefore, how much pricing power can they have when it comes down the road? So I do think that some of this, there is going to be some disappointment in this area, but my bet is that the broader industrial revolution, the information revolution, that is going to mean a more broad-based kind of story in stock markets.
And part of that will be more productivity, and for that reason, you don't think we need to worry as much as we do about debt levels in European economies, including the UK, where you say that the drama around gilts is quote-unquote hysterical. Explain your thinking. No, it has been hysterical, I think, Anna, and that's been the case for some time, I think, in many ways. And, you know, some of that is down to, you know, the UK has had this kind of lull in economic growth. Some of that was down to the fact that we were at the epicenter of the great financial crisis and we were woozy as an economy for some time afterwards. But my sense is that that's been the wrong narrative for some time now, and actually that if you look at the trend in productivity growth, not taking the labour force survey, but taking the HMRC data plus some self-employed statistics, the growth in the labour force is less, therefore the trend in productivity is more. And if you assume, you know, many of the worries about the debt pile in the UK, for instance, are an assumption or an extrapolation that the growth of the last decade is all we're ever going to have. Therefore, yes, you worry about the debt. But if you go to, you know, your post-World War II, pre-GFC trend growth rate, then your debt to GDP disappears to zero in a space of 50 years if you don't need more of it. So I just think a lot of this is a bit of a red herring in a way, and that the UK has had way more debt to GDP in the past, and it hasn't been a problem. It's all about productivity growth. And the UK is big in the knowledge economy. We are a knowledge sector superpower, as you guys pay testament to. That's nice of you to say so. Sure. You just wonder whether the AI is doing the jobs or we're doing the jobs. We'll park that thought. I don't think someone's got to do a job, haven't they? Let's hope so. Will Hobbs, Brooks McDonald's CIO. Thank you very much indeed. Quick look at the core 6. This is what we're looking like this morning, just to check out what is going on around Europe. As you can see, defence stocks are down. Some of the safer trades, like Nestle, are also softer. Luxury, a little higher, but look at Schneider, up by 2.5%. But let's cast our eyes upwards and figure out what is happening with EasyJet. Chloe Melly's got all the details.
Good morning, guys. EasyJet is seeing a huge boost this morning with shares up more than 11%. after it said it hasn't had any discussion with the investment firm Castlelake, which said on Friday was considering a potential deal for EasyJet. And so EasyJet has said that it is very confident in its strategy moving forward and that the timing of that approach was highly opportunistic given the struggling share price. And so we are seeing a huge boost in the shares this morning for EasyJet. Moving on to another sector that is in the green this morning, and that is data center equipment. And so we've got a couple of news there. We've got a big SoftBank investment in French data centers and also NVIDIA entering the PC market. And so there's a lot of optimism, a lot of positivity around that tech sector. And so this is really feeding through into those data center equipment firms, especially those French ones. So Legrand, Schneider Electric seeing a big boost this morning, but also other names in that sector like Siemens Energy also getting some of that boost. And moving on to Universal Music Group, which has rejected an offer from Bill Ackman's Pershing Square, and it is down as a result this morning about 1.6%. This is an approach that was already seen with quite a lot of skepticism and had received a lot of pushback from top shareholders. And so we're maybe at a bit of an impasse there, and that explains some of that weakness. And finally, let's end with more M&A, and we've got the Finnish company Hiab, which has bought the company Labrie Environmental Group, which is a truck maker, for about $1 billion. And so that is really boosting that stock this morning. It really gives it access to the North American recycling market. And so we are seeing shares up about 5% for that company this morning.
Chloe, thank you. Chloe Melly this Monday morning with the stocks that are moving. A bit of M&A activity then to talk about, either in terms of what we've heard confirmed or what is being much talked about. We'll get to that shortly. We'll also talk about some of the tech news. Coming up, SoftBank makes a 75 billion euro bet on France. Could it become the new European epicenter of AI? That story is next. This is Bloomberg.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology, start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. Earnings season is here.
Earnings season begins. Let's get right to it.
Bloomberg is first to break the numbers.
Netflix here crossing the terminal.
Let's go to a retailer, Urban Outfitters.
I'm looking at shares of Paramount, Skydance.
Morgan Stanley, another monster quarter.
A lot still to come.
With the smartest insights.
What are some of the sponsors and some of the CEOs talking about?
I think the biggest risk continues to be that inflation gets imported around the world again.
Continuing coverage on Bloomberg.
bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Welcome back. This is Monday, the 1st of June, and European equity markets look pretty mixed, actually, which in itself is better than perhaps we'd anticipated. The futures picture was pretty dire earlier on, but US futures point higher. The Asia session has been positive, although all of that, though, has been focused very much on technology and AI enthusiasm. Here in Europe, the downdraft that you would expect from the higher oil prices we're seeing this morning is cushioned by, of course, Guy, energy stocks going higher, up by 1%, and a bit of technology and a bit of M&A.
Bit of energy, bit of, yeah. Does energy feel like a net negative for Europe this morning rather than a positive? Kind of, yes, the energy stocks are higher, but is that what's weighing broadly on sentiment? Maybe across Europe, maybe it's just the fact that we closed a little bit lower than where the US, we closed a bit higher than where the US finished on Friday. Let's talk about one of the single stock stories that we're watching this morning. EasyJet shares are certainly flying a little higher this morning, as you can see. We're off our highs, but still up by 11.5%. The move comes after the airline's board called the overture, which we heard about late last week by the investment firm Castlelake, quotes, highly opportunistic. This is the UK budget carrier, grapples with a depressed stock price, cautioning that attempting a takeover would be fraught with risk. Joining us now, Bloomberg Managing Editor for Space and Aviation, Benedict Campbell. Benny, good morning. Why is Castlelake interested in EasyJet?
Well, EasyJet called it opportunistic, and if you look at the share price, that's one way to start. It's one of the weakest performing stocks so far this year. Before today, they were down by about a fifth, so that gives them an opening. And then if you look at the sort of the underlying assets of EasyJet, they're not that bad, certainly better than what the stock price might reflect. They have a very solid order book with Airbus. They have slots in popular slot-constrained airports. So we live in constrained aviation times, as you know. It's difficult to get good aircraft these days. It's difficult to get slots at good airports. So EasyJet has both of those things, and that's probably where Castlelake sees an opening. So they think this is an undervalued asset, but it has valuable assets on the other side. So that's why they are considering making this bid.
And is this a business with experience of the aviation industry? What has Castlelake's activity within aviation been to this point then, Benny?
I mean, Castlelake is not a household name, but they do have considerable experience in the space. Notably, they made an appearance here a couple of years ago, partnering with Air France KLM for their bid for SAS. They eventually retreated, but they played a role in that. They are principally a sort of distressed type lender. They are a lender to Virgin, for instance. Not that that's a distressed asset, but they have some exposure here in the aviation space. What's important to note here, and this is something that EasyJet sort of alluded to, is there are considerable regulatory hurdles here. Castlelake is a US asset, and EasyJet obviously is not. And by the rules that are governed over here, you cannot own, or the majority of an airline, if you are from a different jurisdiction. So Castlelake could only own a minority stake in EasyJet, made more complicated by the fact that the founding Stelios company or owners still own 15%. So there are multiple issues around this. Castlelake can't just sort of swoop in and take over the business. They would again have to come in with a partner or settle on a minority stake.
And Benny, you mentioned earlier that we are in this world of higher costs for airlines. How is and how has EasyJet been navigating that inflation push that you've been seeing across the sector?
Well, the company today came out and said they're confident in their strategy. They have an investment-grade sort of outlook. Their profit outlook is still positive. Investors take a slightly more dim view on this. As I said, the stock is down quite a bit. This is a company that, like every other company in the field, has really been hit by what's going on in the Middle East, the closure of the Strait of Hormuz, and the resulting increase in the fuel in the price of fuel. That's something that really has hurt the company. And again, this is where the opportunistic sort of approach comes in. This is probably a good time to look at an asset that is grappling with all these issues while at the same time still having a sort of strong foundation in terms of its business model, but also in terms of its assets. If anything, the sort of the budget space of the industry is probably the part that is going to come out of this stronger, because people will be more budget-minded as they travel going forward. So the likes of EasyJet, the likes of Wizz, the likes of Ryanair certainly are probably longer term going to be net beneficiaries. The question is, can they make it through to the other side without things like Castle Lake coming in?
Okay, Bloomberg Managing Editor for Space and Aviation, Benedict Calmore. Benny, thank you. As we look at the EasyJet stock price up 12% so far in today's session. Let's get to the tech space right now, because SoftBank has announced plans to invest as much as 75 billion euros in French data centres, making the country a top European hub for AI infrastructure. Let's bring in Peter Elstrom, then, Bloomberg's Executive Editor for Global Technology. Peter, so SoftBank coming out with these plans. What are the details? They sound pretty sizable from a European perspective. What are the details, and will SoftBank actually be able to execute these plans?
Yeah, there are enormous numbers for Europe in particular. I remember our reporters broke this story a few weeks ago. They wrote that Masayoshi Son and SoftBank were going to come into France and they were going to invest billions and billions of dollars. And I remember we talked about the numbers and we're like, this can't be real. This seems too big for Europe in particular. But SoftBank and Masayoshi Son have been making some very aggressive bets in AI. Son has done this throughout his career in different areas. He's had some enormous successes, including Alibaba. Right now, he's invested a huge amount of money in OpenAI in particular, more than $60 billion. It's really the biggest bet on OpenAI in terms of dollars, at least. And he's also talked about building $500 billion in data centers in the United States. So this is another enormous bet by him in France. It really came out of this meeting that he had with Emmanuel Macron back in March, where the two of them talked about this, and Macron appealed to him directly about trying to bring some of this AI investment into France. So they're talking about an investment, as you say, of up to 75 billion euros. They're beginning with construction up in the north of France, in Hauts-de-France, and they're going to begin. It is a very big bet. It looks like France is kind of emerging as one of the winners in the AI space.
So why is that?
Not only have the data centers, but they have Mistral too.
Why France?
Well, I think in this case in particular, I think it's because of Macron's appeal, but I think also it helps that they've been taking AI very seriously in France. I think Mistral it's a small player on the global stage, but it's a quite successful player within Europe, and they're appealing. They got this investment from ASML, as we've talked about before. I think European companies like the idea that they're going to have a domestic player that will provide them with this AI technology so that they're not dependent on an OpenAI or an Anthropic, for that matter.
So we know why France wants this and wants the investment, Peter. But why is SoftBank making an investment into Europe more broadly? What is it that is at the core of this?
Well, Masayoshi Son has talked about in his conference calls in particular about how he wants to bet big on AI. He believes in AGI, artificial general intelligence in particular. I think for him, this is a nice chance to diversify his bets. As we wrote about recently, some people, even inside of SoftBank, have grown a bit concerned that his big bet on OpenAI is too concentrated. He's putting too much of his money on Sam Altman in particular. So it probably helps to not invest only in OpenAI, in AI models in particular, but also data centers. Again, he's investing this money in the United States, but he's diversifying a bit here. And in France, he's giving himself some opportunities to benefit from having data centers and other geographic areas in particular, and it's helped his stock. His stock was up about 14% today. He overtook Toyota as the most valuable company in Japan. That's a big deal for him. That's very symbolic.
26 years, I think.
Yeah, Toyota is an icon of business there. Son is running the company. He's a first generation. He founded SoftBank, of course, and his ability to overtake Toyota, at least for today, is a good sign.
But briefly, Peter, anything from NVIDIA that stands out and what we've been hearing from Jensen?
Oh, yeah. Computex in Taiwan has a ton of news coming out of it. The biggest news probably out of NVIDIA and Jensen in particular is the fact that they're moving into the PC space. They want to compete in laptops with Intel and AMD in particular. Another expansion for Jensen Huang, probably good for the stock.
Okay, probably good for the stock, and we'll watch Intel. Watch Intel, we'll watch ARM, lots of other related, watching Schneider Electric go a little higher on the SoftBank story as well. Peter, thank you very much. Thanks for joining us. Peter Elstrom, Bloomberg's Executive Editor for Global Technology. Lots of technology themes to pick up on this morning. The other big theme in markets, though, still is, of course, what's happening in Iran. It's moving oil prices, coming up diplomatic exchanges between the US and Iran as Israel expands its ground assault in Lebanon. We will discuss with Anna Rosenberg, Head of Geopolitics at the Amundi Investment Institute. This is Bloomberg.
Take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard,
oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop, but I'll still be driving someday.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
When it matters, investors turn to Bloomberg Surveillance.
I said it maybe even on your show here.
I hear you guys talking about this a lot.
Our investors are really thoughtful. They're engaged. They listen to your show.
As a number of people you've had on your show have mentioned.
The three of us have talked about it on this show many times.
I think you find, and you've heard this on your show, you've already talked this morning on your show, as you know, and you cover every day on Bloomberg.
You've heard a lot of guests talk about that.
I think your show is incredible. Bloomberg Surveillance, we're talking about it.
To the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Happy Monday. It's June the 1st. This is the opening trade. We are 30 minutes into today's session. European stocks are down 0.2%, so not feeling the AI love, at least for now. That's been, of course, rippling through the Asian markets. US futures also on the front foot, with NASDAQ 100 futures pointing up by 0.4%. But again, Europe is not playing in that party right now, though some individual names are. Here in the UK, the FTSE 100 is actually down 0.3%, despite the uptick that we've seen in oil prices. The DAX in Germany is just nudging into positive territory with gains of just 14 or 15 points. And over in France, the CAC 40 is performing marginally better, just up 0.1%. Guy, what are you seeing?
Okay, let's talk about the breadth and what is happening here. Basically, it's a 2-to-1 down versus up, 170 up, 418 down. Volume's a little on the light side, but not that. Well, actually, maybe it is. Maybe we are seeing a little bit of light volume. Europe doesn't feel like it's participating in the AI trade today. You've only got a few stocks that are benefiting there. Elsewhere, higher energy costs are weighing, though they are lifting some of the energy names. Let's talk about the gainers. Let's talk about the losers in this market. market this morning. EasyJet, the Castle Lake story, certainly one of the main drivers in the aviation sector. That stock is up by 11%. What is it the Castle Lake is looking at here? Is it the underlying assets? Hiab is a distribution company. It manages all kinds of distribution assets. It is looking or buying a industrial waste production vehicle producer. Got to get this right. Basically, trash carts, trash trucks, and that stock is up by 7% on that. Nokia's also rising quite nicely as well, though it did get. It was down on Friday. Today it's up. It's not fully kind of filling that gap this morning. On the downside, let's talk a little bit about what is happening there and give you an idea of what the picture looks like. Wise Group is the big loser on the downside. Elsewhere, I think it's a real struggle to figure out exactly kind of why some of these stocks are moving. Defense stocks generally are a little off this morning. Rolls is down. That's quite a heavyweight in terms of the downside. Roche is also down by 0.6%. Just a kind of a little bit of negativity in the pharma space. Plus a few kind of idiosyncratic stories, enough maybe just to suppress these European markets, Anna.
So those are the markets, Guy. Let's get up to date with some of the other stories we're covering then this morning. Berkshire Hathaway is to acquire Taylor Morrison Home in an all-cash deal worth about $6.8 billion. The deal is the first major purchase under Chief Executive Greg Abel and a vote of confidence in the U.S. housing market. The offer of $72.50 a share per common share represents a 24% premium to the house builder's latest closing price on Friday. Hungary's Prime Minister Peter Magyar says the country will amend the constitution to oust President Tamás Sulyok. The decision comes after Sulyok rejected Magyar's demand that he resign. Magyar, whose election victory ousted former Premier Viktor Orban, had set a midnight Sunday deadline for Sulyok to leave. In a video response, Sulyok cited what he described as his allegiance to local and European constitutional norms that required him to stay on. Bloomberg has learned that the European Union is considering a temporary freeze to its price cap on Russian oil as the war in the Middle East continues into a fourth month. The current price threshold is $44.10 per barrel and is due for review later this summer, with options including suspending dynamic and automatic increases until the end of the year. Guy.
Let's turn attention back to what is happening with the oil story. Oil climbing from a 6-week low. The outlook for a peace deal to end the war in Iran becoming a little uncertain once again. We are oscillating on this story. Washington and Tehran traded messages apparently over the weekend seeking changes to a draft agreement that would extend the ceasefire and open the Strait of Hormuz. You got Iranian comments this morning on an operation that Tehran hopes it can manage with Oman in terms of managing that piece of water. A lot of uncertainty, but basically the oil market is assuming that a deal is going to get done. There's not much call buying, there's a lot of put buying. That seems to be the skew right now. Let's figure out what is happening here. Anthony DePaola, our Middle East energy markets reporter, joining us on the details. Anthony, that seems to be the picture. The oil market seems to believe that a deal is going to get done. What evidence do we have to back that idea up?
Good morning, Guy. Yeah, I mean, coming back to work this morning after the region has been off for most of last week due to the Eid holidays here, it looks like a lot has changed because we're down about $10 from where we were when we left, say, Friday over a week ago. And we're coming back up a little bit today, as you said, from that low on last Friday, and that's because we didn't see much movement on the deal over the weekend. The issue here is that traders are still waiting for clarity on an opening of the Strait of Hormuz and when that oil can start moving out, and vessels can start getting back into the Gulf. So we're still seeing oil at elevated prices, still up about a quarter from where it was before the conflict started, and that's because of this lack of flow of crude, natural gas, refined products out of the Persian Gulf. So until we see that open and until we see that flow restored, we won't see that price dropping back to those current levels. And it might take a number of months until that tanker flow can get started. So we do see this positive view in the market by the fact that we have really taken some heat out of the price over the past week. Some very positive pronouncements about a ceasefire extension, 60 days. So very detailed aspects of that, giving the market some confidence that there will be a deal. But we are just waiting for that final signature. And I don't think anyone is discounting the fact that there could be another flare-up, but we are seeing and taking the positivity of the potential for a deal, as we can see from the market right now, Guy.
Okay, Anthony, De Paola, thank you very much indeed. Our Middle East energy markets reporter with that update. Let's stay on topic and broaden out the conversation. Bring in Anna Rosenberg, Head of Geopolitics at the Amundi Investment Institute. Anna, so the oil markets to some extent as well, but certainly the equity markets are betting that there will be a deal. Are they right to do that?
I think they're very optimistic at this point in time. There may be a deal, there may be a muddy deal, but the issue is that the underlying issues won't be resolved, because this is a highly complex situation, and we will not go back to the status quo ante, to how it was before the war started. Because even if there is a deal in which basically you get, both sides reopening the strait, ultimately you have various problems. Firstly, no one really knows who's actually in charge in Iran. There is a decentralized power structure going on, and this is why you're seeing these strange flare-ups of missile strikes, drone strikes happening at the same time as talks are taking place. Who is in charge? Is it the ones that are negotiating, or is it the hardliners? So essentially this means that any commander controlling drones or missiles can veto any deal by disrupting the Strait of Hormuz, by disrupting the region. That's one of the big challenges. The second big challenge is that you have opposition forces still in the country, in Iraq, outside of the country, that are not happy with this regime. They want it out, and they will at one point try to weaken the regime again, together with Israel, who is also not happy. So that means that the regime will continue to find itself in a situation of instability and will lash out occasionally. So at best, you get a reopening, a partial reopening, but there's going to be a risk premium because they will create uncertainty. So that's the challenge that we have here.
Do you think the markets are therefore underestimating, particularly the domestic pressure that Trump is under from the right of his party, underestimating the risk that Trump will ultimately have to accelerate any further military response, that ultimately the only card he has left right now to get the kind of deal that he has promised he will get is to restart a military campaign against Iran?
Well, I mean, Trump right now only has bad options, because restarting a military campaign could be a lot more chaotic than what it is already, right? You could see then a lot of disruption in the Gulf, which would put energy prices higher. So Trump is looking at this saying, okay, either I get a deal, which is not great, or I restart military operations, which could be worse. So this is why Iran is having the upper hand. They're looking at this thinking, all right, we have time on our hand. We can play this. We can continue to ask for more and more and more, because clearly the US is very keen on getting a deal, and we're going to try and extract as much concessions as we possibly can. The challenge is that Trump cannot accept some of these demands. And so we are in this back and forth and tit for tat, which makes it really difficult to get a deal over the line.
Are we right to talk about a deal, Anna, or should we just be talking about an extension of a ceasefire with things still to be decided in the future?
I think there are three scenarios. It's a comprehensive diplomatic solution, which is a very low likelihood. The second one, which is, when we talk about the deal, I think the only thing that's on the table, I call it a muddy deal, which is basically we both agree to disagree, but we reopen the strait. And then the third scenario is no deal. And in that no deal scenario, you have a military escalation, you have a status quo. Okay, so these are the scenarios on the table. Right now, we're still in this possibility of a muddy deal materializing, but it's tricky for Trump because it means at this point he needs to pay off Iran with a large upfront sum, which is very difficult for him to do domestically, politically. Then you have Israel, which is facing an election. This deal is not good. The terms of what we've seen is not good for Netanyahu facing an election, because it puts him in a situation where potentially he has lost the war against Hezbollah and against Iran in an election year. That's why Israel is doubling down on Lebanon right now. This is a sign that we're not going to be okay with Lebanon being part of a deal with Iran. So these are two fundamental issues that make it difficult, on top of what I just outlined at the beginning, the decentralized power structure in Iran.
Yeah.
So even if there's an appetite to do a deal, you have a lot of challenges to resolve that.
Tell us more about what we know and don't know about the Iranian regime itself, because we see these lines coming through this morning from one particular spokesman saying Iran reiterates it has not negotiated on nuclear issues with the US. But do we take these comments at face value, or there are just so many voices speaking out from Iran that we can't be sure what has been said and by whom?
Well, I think that the negotiators are saying certain things, but then you have the hardline elements. We don't know The Ayatollah, is he alive? Has anyone seen him? We don't know that yet. He's making comments that that Iran cannot give up the nuclear material. And frankly, when you look at this from a geopolitical perspective, you look at how Iran has been attacked. Giving up the nuclear material increases the risk of being reattacked. It would mean opening the doors to another attempt by the US, by Israel, to finish off the regime. So it's a huge risk for them to do that. The nuclear issue will not be solved as part of this deal. If at all, it will be kicked down the line to negotiate at a later point in time.
What sort of timeline are you thinking of? There is a big discussion in the oil industry about the fact that the tanks are getting empty. We're getting back, we're down to kind of the levels that we can't take much more out, that inventory is getting to zero. I don't know when we get to that point, but it feels like it's coming onto the horizon. It's becoming a reality very soon. So how long do you think it would even take to get to a muddy deal? Is it days, weeks, months?
I mean, we should have already gotten it. This should have happened a couple of weeks ago already, because, as I said, this deal is not going to be good and it will require difficult compromise. Should have happened. It's not happening. Why is it not happening?
Yeah.
We keep on having these mixed messages. Well, because they're not agreeing, clearly. Because it's politically difficult. Because it's politically difficult for Trump to kind of face this into a position where he can claim a win. And he needs to claim a win on this. So I think they're trying to square the circle somehow. I've seen yesterday or the weekend there was some report about, instead of giving Iran upfront just unfreezing of billions, you call it an investment fund. I've even seen the idea to have some US-backed property investments in Tehran. Very creative. I think something like this could allow Trump to give Iran some money and claim it as a win. So we're seeing a lot of creativity here.
If I look at the other end of the kind of distribution of outcomes, if we do get the tank to the tank bottom and oil prices rise sharply, where do you think the pain point is that will force Trump to do something because gas prices in the States are too high?
I think the pain point is already here. It's an issue of this is not a sustainable situation. And he knows this. And this is why we're seeing so much appetite to try and do a deal, even though it's a bad deal. Okay? He knows that this is, it needs to be resolved. And I think this is why the markets are optimistic. They understand that. Trump, we also kind of have this situation where they do a temporary deal, they don't solve any of the issues, kick them down the line, and then after the midterm elections, Trump revisits this whole issue. Because however you frame this, this is going to be unfinished business.
Do you think we can get through the midterms without this getting resolved?
I think something will give. I don't think we're going to be in the status quo.
Right, okay.
Just staying on the oil part of the story, but shifting our focus from Iran to what's happening in Russia, we've got some Bloomberg reporting about the number of Ukrainian attacks in the month of May on Russian infrastructure. Maybe that has more of a domestic impact than it does on international oil markets, given the sanctions and the energy caps. How are we thinking about Russia's position right now vis-a-vis Ukraine, and whether or not that does have more of an impact in terms of the energy markets as we look at the infrastructure damage in Russia right now?
Yeah, for Russia, this Middle East conflict is a hope or an optimism when they look at this from the degree that, firstly, they are benefiting from it financially, but secondly, it's putting pressure on Europe. And that means that, we've just heard it, on the oil price cap, they are hoping that this will cause more political instability in Europe and lower the appetite in Europe to continue to support Ukraine. Because Russia is struggling on the battlefield increasingly. We are hearing made-up stories about battlefield successes on the Russian front. At the same time, Ukraine is striking deeper. Now we've seen drones on Romania. Europeans are getting a little worried that Russia is being increasingly in a corner and more willing to lash out. And so Russia is hoping that they're playing this long game where, over time, Europe is in a more difficult situation if the situation in the Middle East doesn't resolve itself, and more willing to ease oil pressures from Russia. So clearly they're looking at this right now and think this may be an opening for Russia to take advantage of.
And we saw the US administration before the Iran conflict pretty engaged with trying to find a solution around Ukraine. Now we have the Iran conflict. And I just wonder about the bandwidth for the US administration right now, as we read over the weekend and last week and in the weeks just gone, in fact. More surveillance over Cuba. Is this the precursor for some sort of Venezuela activity over there? Lots of questions, at least, being asked about that. But do from a geopolitical perspective, this must raise questions with how much a US administration can deal with at one time.
Yeah, I think that Russia-Ukraine is not anymore top priority for the US at this point. It's a European problem. And when you look at how the funding has moved, it's now fully funded by the Europeans. And from the European point of view, the best strategy is to slowly bleed out militarily Russia over time by keeping the conflict more or less contained and by getting Russia to a point where they have to compromise. That's the strategy. I don't think we're going to get them to a ceasefire because neither Russia nor Ukraine are in a position where they have to. Now, to your question on the US, I think in the second part of this, the second half of this administration, we're going to see the U.S. double down on Latin America. Cuba is clearly there. They want to reduce Chinese influence in Latin America. The Western Hemisphere more broadly, Greenland is still on the table, not militarily, but politically, absolutely. And of course, I think we've discussed Iran at length. This means that the U.S. will have to stay somehow exposed to what's happening in the Middle East, because this is not easily solved.
Yeah, okay, so back to the Don Rowe Doctrine, perhaps, in the second half of the presidency. Anna, thank you very much. Thank you for joining us. Anna Rosenberg, Head of Geopolitics at the Amundi Investment Institute. Coming up on the programme, plenty of tech themes in focus this morning. We'll get back to the SoftBank story. It plans to invest as much as 75 billion euros to build AI facilities in France. We'll discuss that next. This is Bloomberg.
The productivity increase is not going to be marginal. I think it's going to be an order of magnitude. It's going to be significant. We're working on it internally, and we're really excited about it. I could see a world where an analyst who previously covered 20 stocks could cover 200 because they are maybe managing a fleet of agents that looks at all these stocks and tracks them. I could see a world where we're able to tackle a far greater number of top-of-funnel ideas and do a bit of work on them and more accurately pick what the best 15 to 20, best long ideas in a given year are. So I actually think it's going to reshape how we do things in the long term.
One of the things we struggle with is it's very easy to get siloed as an analyst, and these are the sectors I look at, these are the tools I rely on, these are the models I've built, and for us, we are spending more and more time as a research team collaborating around ideas with multiple people looking at sectors or trying to solve key questions or things in the market. And so the ability to have standard tools that we're all using to track lots of different things, to inform how the models are trained, will be super helpful, I think, in people being able to pick up someone else's work and say, I totally get this because it's in the same vocabulary that I do it myself.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, Mondays on Bloomberg.
Welcome back. This is the opening trade, 1st of June, and this is the picture across European equity markets. We're pretty flat, actually. Well, we're flat on the DAX. We're flat on the CAC 40. The FTSE 100 providing a bit of the downside. Media stocks have been a little bit weaker today. Rolls-Royce, last time I checked, was a little bit weaker today. Stocks Europe 600 then down by around 0.25% overall. And we're waiting, Tom, for more news around what's going on in France, the enthusiasm for the French AI story. SoftBank, Masayoshi Son, on the ground, on location in France, ready to make a big investment.
Yeah, and seemingly a pretty sizable win in terms of investment decisions and commitments for President Macron. So we're expecting to hear from the president alongside Masayoshi Son, of course, head of SoftBank, a company, by the way, which has seen its market value top Toyota in Japan. It's become the most valuable company, at least for today, of course. That's more about its investments in OpenAI than maybe the investments that it's pledging in France around data centers. So around 75 billion euros in terms of the data center build that they're pledging for France, starting with about 40 billion. So in total, we're talking north of 80 billion US dollars. And to your point, Guy, earlier, partly this is down to the fact that President Macron has lent in himself personally, but also because of the nuclear energy and the relative cost advantage that France has on that front, which of course is such a necessary component.
When would this happen? I guess would be one of my questions. He's made big commitments in the States, and it's taken quite a while to build them.
Yeah.
Even if he broke ground today, how long would it actually take to get this stuff up?
There's a date attached to about half of it, isn't there?
Yeah.
But no date attached to the other half, it would seem. What was it, 35 billion by 2031 is the way that this is being phased. So we'll see whether... But, you know, even that is quite a win in terms of investment in the AI story over in France. Interesting that we get also at the same time Salesforce announcing, we've got a big event obviously in France today around technology, but they're announcing a 2 billion investment. And that is to do with AI as well, just as the manufacturing PMI data comes in a little bit better than had been expected from France. And talking of data, we'll get plenty more data this week. Let's have a look at some of the other things we're watching this week. The Computex conference, we've talked about some of the lines from NVIDIA already in the preamble to that, but that kicks off in earnest tomorrow. US earnings are in focus with HP after market. We're also getting tomorrow inflation data out of the Eurozone. Then we start to move over to the States. The Fed releases its beige book on Wednesday. US earnings come in the shape of Broadcom. We get data culminating in non-farm payrolls come Friday.
Keep an eye on the ISM today. Keep an eye on the prices paid component of the ISM manufacturing data today, because it has
especially for tech.
It has been skyrocketing, which takes you back to the tech story. Let's discuss what's moving markets this morning. Skylar's here, Skylar Montgomery-Koenig from the MLive team. Let's talk about oil prices. We were just talking about it a few moments ago with our last guest. Oil prices are pricing in a very optimistic scenario.
Yeah, I mean, absolutely. If you look at the last 2 weeks, the market's just seized onto this idea that the Strait will open again. And the broad trend for Brent has just been downwards, that we're at levels on Brent that are kind of the lows we've seen in the past 2 months, or at least not far. We're bouncing a little bit today. But particularly when you look at options positioning, put open interest is the highest, or it reached the highest a week or so ago that it's been in over 18 years or something like that. And so there's clearly been this shift that everyone's very optimistic that there will be a deal.
Are we overestimating the impact that AI is having on growth? I mean, there's some evidence out of Taiwan. Growth is up about 10%. Exports out of Korea are soaring up about 50%. AI as a catalyst for driving macroeconomic growth globally. And that seems to be offsetting the concerns about the oil story right now.
Yeah, I mean, I think certainly it's a powerful growth driver, and we've seen that strongly in the U.S., but I think we need to be very mindful that that impact is felt unevenly. So yes, companies that have AI exposure will do quite well, but you also still have this energy impact. So if you look at world GDP forecasts, that's barely moved this year. You've had 70 basis points add to CPI forecasts, so people are very worried about inflation, but overall growth hasn't shifted in terms of expectations whatsoever. Now, part of that is certainly the AI story, and that's feeding positively into earnings, but that only impacts some companies. So I think when we're looking at the equity market, we need to be mindful of what's the tech exposure. So yes, you want to be exposed to stuff that has a higher tech weight, but also what's the energy exposure? Because my worry for some of these Asian equity markets is that they're big energy importers. So if you look at net energy imports as a percent of energy use for the likes of Taiwan and Korea, but maybe a clear is quite high, but maybe more of a clear short is something like Italy or Spain, where you have both a low tech weight in your MSCI index, as well as that big exposure to imported imported energy.
So talking there about the inflation dynamics, is that why we see bond and equity markets handling the uncertainty in oil prices quite differently? Equity's trying to look through it entirely, whereas the bond market's quite focused still on those higher energy prices as we see them this morning.
Yeah, absolutely. I think it's the inflation focus, so this idea that we know we're going to get higher inflation numbers in the U.S. in particular, CPI at 4% this year. You know, that's quite worrying for a Fed. And when you have data coming in so strongly, as Guy mentioned at the beginning, ISM comes in today, prices paid is going to be quite high, it's expected. Prices paid, employment, new orders, the ISM number itself is all expected to rise today. And so if you have inflation that high, but activity is still very resilient in the background, then the Fed can focus on that inflation mandate more. And it means that you could firm up that hike and have a stronger yield. And I think that's the message that you're seeing, is that AI can contribute positively to growth and to inflation, whereas you're more looking at the inflation impact for the U.S. from an energy perspective.
Let's talk about that Fed hike. How hard will it be to get a wash Fed 2 hike at this point? How strong does the data need to be? How strong does the inflation narrative need to be to get that to happen?
Yeah, I think this is the struggle, is there is a hike price, but it's kind of seen this really long runway.
Yeah.
And, you know, when you compare it to what you've seen for the ECB or for the Bank of England, there's quite a lot priced positively. So I think, you know, maybe just a continuation of current trends with inflation really close to 4% is more worrying.
Skylar, thank you very much. Skylar Montgomery-Koning from the Markets Live team. That is it for this morning, for this Monday on the opening trade. The Pulse is up next. They'll continue to take you through some of these tech themes and, of course, everything out of the Middle East. This is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern, right here on Bloomberg. Context changes everything.
Welcome to Bloomberg This Weekend.
Breaking news today from Wall Street to Washington.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays. Bloomberg Surveillance covers the latest in global markets and the political events that influence your world. Join Jonathan Farrell, Lisa Abramowitz, and Anne-Marie Hordern every weekday morning at 6 a.m. Eastern, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
NVIDIA taking another run at the personal computer market with another chip to rival Intel's dominance.
Emmanuel Macron welcomes SoftBank's Masayoshi Son to the Élysée presidential palace after the firm said it plans to invest up to 75 billion euros into AI data center capacity in France. And U.S. President Donald Trump says talks with Iran will, quote, work out well, even as the two countries again clash near the Strait of Hormuz. So first thing is first, happy Monday, everyone. I know it's been a pretty long month. Here we go, and here we come, June. Now, markets definitely looking at stocks advancing. Again, it's really the AI trade locking in some fresh gains today, allowing global equities, I guess, to shrug off some of the rebounds that we saw in oil prices as the U.S. and Iran remain deadlocked over a peace deal. So we have the positives, that's AI. We have the negatives, everything that's happening with the price of oil. If you look at some of the other things that we're watching out for, I would also look at Japan 159.47. This is a story that we've been following pretty closely over the last couple of weeks, and then NVIDIA pre-market gaining almost 2%. It's entering the PC market with a new chip aimed at loosening the stranglehold of Intel. Let's also have a look at what Intel's doing pre-market, and you can see Intel. We'll bring up in just a second. As if by magic, there you go, Intel down 0.8%. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, artificial intelligence are dominating the headlines this morning and again overshadowing developments in the Middle East. SoftBank also says that France is poised to become a top European hub for AI infrastructure. Now, we discuss all of that and what it means for the macro outlook with Ozan Tarman from Deutsche Bank. But first, Jensen Huang, the NVIDIA chief executive, says the company is entering the PC market with a new chip aimed at loosening the stranglehold of Intel. Now, the RTX Spark Super chip will launch in laptops and desktops from brands including Dell and Lenovo. Now, it's a fresh shot at the PC market with a new chip designed for artificial intelligence-powered computers.
This is the N1X that we built in partnership with MediaTek. This is N1X. This is a beautiful chip. This is a chip that, frankly, would take 33 years to build. And the reason for that is because 100% of NVIDIA's software stack runs here.
Well, the move pits NVIDIA more directly against Intel's as it looks to expand beyond its dominant position in AI data centers. Now, joining us now is Bloomberg's Peter Elstrom, of course, in charge of technology for us. Peter, thank you for coming on. Look, we basically have a series of major announcements, and they're pretty major. Let's focus on the first processor for Windows PCs. How significant is this?
Well, NVIDIA has built their franchise in AI really by selling these graphical processor units, GPUs, for data centers. And that's been a booming business for them, tens of billions of dollars, most valuable company in the world. Their market cap now is above $5 trillion. But as you're seeing, that's not enough for Jensen Huang. He wants to expand into a few different areas. That includes now into the PC space, where he wants to compete with Intel in particular with these chips to be able to run PCs. As you mentioned, they're going to begin with Dell and Lenovo, in particular with the RT Spark Super Chip, as Jensen calls it. And he's going to see whether he's going to be able to compete with Intel and AMD in that PC space right now. Now, it's a new area for them. They need to not just demonstrate that these are good chips, they're effective chips, and that they're going to be able to power the PCs in the way that consumers want them to, but also they want to show that they're good long-term partners with these companies to be able to build the relationships so that they'll trust them to be able to use those chips and then use them over the long term. So that's one of the bigger challenges for Jensen.
And Peter, Jensen Huang also said that agentic AI had arrived, but also argued that, AI won't threaten employment. What's his point here?
Well, there are a lot of concerns about how much AI is going to threaten employment, of course. So that's one of the issues that he's addressed repeatedly over the past. I don't know that the data is clear in his favor at this point, but he makes the case that AI is not going to eliminate these jobs. In fact, it's going to be useful. But he's also heralding this age of AI agents that are going to be able to help you do a bunch of more things. And we're seeing companies and individuals experiment with AI and AI agents in a whole bunch of different ways. In some cases, yes, of course, they are eliminating jobs. I think we don't know net whether that's going to be a loss or a gain.
Peter, we're also looking, of course, to France, where President Macron and Masayoshi Son are speaking at the moment. I think we have live pictures, and a major development is basically SoftBank saying that will fund data centers in France. I mean, this is one of the biggest AI infrastructure investments in Europe. That's the president of France speaking live in Paris. I mean, how does France stack up to the rest of Europe? And are we sure that this comes to fruition?
Well, this is an enormous amount of money for Europe, no question about it. We have heard Masayoshi Son and SoftBank have made a number of very big AI bets, some in Asia, but mostly in the U.S. so far. They're investing more than $60 billion into OpenAI. Beyond that, in data centers, they've said they could invest $100 billion, maybe even $500 billion in U.S. in these Stargate projects. But for Europe, 75 billion euros, to be clear, is more money than we've seen anybody promise to invest at this point. It could be an enormous boost for France in particular. Macron's been very aggressive in terms of trying to present France as the leading case for being able to build an AI infrastructure, really a foundation for AI in Europe. They not only have these data centers, if SoftBank builds them, as you say, they also have Mistral, which is really the leading AI player within Europe.
So interesting. Peter, thank you so much. Peter Elstrom there, of course, in charge of global tech for us. Now let's get more on that SoftBank 75 billion euro investment to build data centers in France. Bloomberg's Caroline Conan also joins us. So, Caroline, how important is this personally, politically for President Macron, given we also have elections next year?
Francine, as you know, we have presidential elections in less than a year from now, so this is the last edition of Choose France for President Macron. He cannot run again next year. This is something he's created back in 2017 in Versailles in order to attract foreign investments to France. So clearly, President Macron needed this year to be the biggest one, the big showcase. So he couldn't have done better than this investment, or at least this commitment from SoftBank, as much as 75 billion euros in 3 sites in the north of France, which is considered as the data infrastructure belt in France, as much as 45 billion euros by 2031 for the first phase of these projects. Of course, critics have said that there's been a lot of investments announced at Choose France over the past 10 years, and many of them have been actually delayed, or some commitments have even been abandoned. So we'll see exactly how long SoftBank does take to really build all this data infrastructure in France. But this is not just business, it's also politics. In fact, Macron went to Japan at the end of March in order to prepare the G7, and he met in Japan with the SoftBank CEO Masayoshi Son, who actually was saying in the French papers this morning that he was very impressed by how much President Macron has been personally committed to France's economic success. And of course, let's not forget that you have the G7 summit in France in just 2 weeks from now. That is happening in Evian. And President Macron really wants to champion himself as the European leader, protecting sovereignty, building data infrastructure independence from the US and from China. At the time when the UK Prime Minister and the German Chancellor are actually both weakened by domestic politics. So clearly, President Macron, given he cannot run again next year, has nothing to lose here in order to make sure that France is on the map for data and for AI. And finally, of course, remember, France has a huge competitive advantage, as we're still seeing these live pictures at the Élysée Palace ahead of this summit in Versailles later today. France, as I was saying, has a huge competitive advantage given the nuclear electricity. It actually comes from nuclear for 2/3 of the electricity production in France.
Caroline, thank you so much. Caroline Conan there with the very latest, of course, on the latest announcement in France. Now, futures pointing to another all-time high for the S&P 500 at the start of June. This as equities shrug off a rebound in oil prices as the U.S. and Iran remained deadlocked over a peace deal. Well, joining us now is Ozan Taman, Global Macro Vice Chair at Deutsche Bank. Ozan, thank you so much for joining us.
Francia,
Look, it's
always
an exciting
a pleasure.
day. It is always great to have you on TV. Look, it's a little bit of an odd day. We're at the start of June. We look at everything that's happening in the Middle East, but we also try and figure out the impact of these AI chips, stocks, and investments when it comes to the global economy. What kind of macro impact could it have?
Huge impact. By the way, I usually joke that you invite me and it's Champions League day. This time right after Champions League final. Macron has other issues to celebrate as well. And it's AI, those chips in France that we talk about, big part of the story. On one hand, there is a whole fear of war, positioning, etc. But these earnings led by AI continues to power us through. There's big discussion whether we're closer to 1999, 1998, 2000, implications of when all this will stop. But I think all these hesitations have created what I keep calling empty positioning, empty boats, empty buses. There is so much skepticism, and we continue to power through as long as AI remains the key narrative. And for stocks, it is at the moment. It's not the Iran war.
I mean, does it change, the labor dynamics in the longer term? Will it take longer than we think?
Very good question. 2 days, 1 week before the Iran war, the February 28, the famous date, the whole obsession was to worry about labor market, the Strini research, something big is happening, Twitter page. And people feared, some key names in US and beyond feared that 50% of white-collar jobs in 12 to 18 months will be gone. Funny these things. Now pendulum swings a lot with the rally, with all this CapEx extension, with the 3 key IPOs coming in. Now it's more popular to say AI may actually be inflationary. My famous partners in success, both Jim Reed and George Servelos, independently argue that AI will be inflationary, at least in the short term, that we don't need to fear about losing our jobs to robots yet. I'm more balanced. I think the labor side of things, the worry will come back. I think Walsh is keeping an eye on that. But for the moment, on that too, on your question, we're on a very different narrative than we were at Feb 27.
Ozan, what are you expecting from Kevin Walsh?
Again, very key. Tough hand he has, right? So at the moment, the key thing he'll try to do, I think, is to convince his fellow peers to hold, let alone a cut. My base case is this June 10 inflation is very key. If that also beats significantly higher, say 0.2 higher, then 2022 narrative will really increase. People will go for inflation expectations. It's not just a real yield sell-off. Then his hand will be very tough. If that's in line, if the next 2 inflation prints are in line, and if NFP like last 2 summers actually surprises on the downside, I think that will ease his hand a bit. We will find a balance, maybe no cuts, but none of this next move will be hike talk either. And that's the best strategic path he can take between the U.S. administration and the peers he needs to convince.
So you don't think actually there's a chance that the next move would be a hike from the Fed?
I personally do not. I think market will get more and more excited for it, and certainly at the moment market prices for it. But I think that narrative too, towards the end of summer, beginning of September, will change. No, forget the cuts. But this whole excitement about maybe him turning all the way around, convincing even President Trump, and maybe going for a hike this year, that's too much for me.
Okay, what's your take on Bank of England and also ECB? So June, ECB, we're going to get a cut? I mean, it's priced in.
Your good friend, Madame Lagarde, I think she's playing a smart game. This time around, an insurance hike, market gives it to her, so why not? That June is already in the pocket. Our chief economist, Mark Wall, expects 1 more in September. September is a long time, dear Francine. If finally another Godot, this deal comes one way or another, like what we've been talking about Thursday, Friday, through Bloomberg reporting as well, freeze the situation, open the Hormuz, discuss the nuclear in the next 2-3 months, that kind of deal hope, I think, will ease her hand a lot. And then I would question September. If things continue to escalate, chop, not certainty, oil doesn't do 150, but certainly doesn't do 80, 90 either, then she may take 1 more in September. Bank of England, toughest spot. I think he'll be very happy if he goes away with a hold. Hawks on one side, those on the other side squeezing him. I think for this country, the best thing is if he holds and let the US, Hormuz, and even UK political game play out.
What do you think will happen actually to the price of oil, given that there's no really end in sight in Hormuz? I mean, we're kind of in a wait-and-see pattern.
People that I really respect 2 months before, even 1 month before, said we have 1 month left, 6 weeks left. Paper oil will go over to physical oil, it's 150s, 200s. Not happening, right? So if there is some sign of deal, at least a 2-month truce, okay, not go back to pre-war levels, but I don't see it going back up to 150 either. So slightly lower than here, which would give the market chance to go for pain trades. Francine, my key pulse to you is, as of a week ago, and a week doesn't change much, a huge majority of pods, multi-asset, fast money players were paid rates and long dollars. Long dollars more in intellectual philosophy, certainly paid rates. Now, 24 basis points rally changes your psychology a little bit, but still, pain trade is for things to calm down, for oil not to go to 120, 100, 130, and in summer for us to come back lower. Our official view is that we will revisit the highs. Yeah. Francis Yarrett and team, 4.7 US 10-year, 3.2 Bund. And my gut feel is it may be like last year. Remember last year, 464 we traded in May. Yeah. Never looked back, came back lower. 468 we traded just last Tuesday. Inshallah, it will be the same this time around.
Very quickly, yen. I mean, it seems to be defying some of the record intervention we've seen.
On that too, the more consensus, more hedge fund players are saying it may be a bit futile. It's going to sooner or later the dollar yen will go higher. I am a little bit more with Ministry of Finance and Bank of Japan. I think they're playing the patience game. Obviously, again, Francine, if come September I'm still talking to you about war, etc., then forget it. All this intervention will be just a patch. But if things calm down, certainly they delayed a big attack, and a deal would make yen strengthen and ease the hand of Bank of Japan. But the key thing is June, Takaichi, Ueda-san, will he finally gives the hike. I'm not as pessimistic as bearish yen as most of the street is.
Okay, so interesting. Ozan, thank you so much, as ever.
And congratulations on the Emmy nomination.
Oh, thank you so much, Ozan. It feels like a lifetime away, but we'll cherish it in our heart. Ozan Torman, their Global Macro Vice Chair at Deutsche Bank. Coming up, Andrew Bailey, the Bank of England Governor, warns the risks from frontier AI models are so big they require an international approach. More on that interview next, and this is Bloomberg.
Up-to-the-minute geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Earnings season is here.
Earnings season begins. Let's get right to it.
Bloomberg is first to break the numbers.
Netflix here crossing the terminal.
Let's go to a retailer, Urban Outfitters.
I'm looking at shares of Paramount Skydance.
Morgan Stanley, another monster quarter.
A lot still to come.
With the smartest insights.
What are some of the sponsors and some of the CEOs talking about here?
I think the biggest risk continues to be that inflation gets imported around the world again.
Continuing coverage on Bloomberg.
When it matters, investors turn to Bloomberg Surveillance.
I said it maybe even on your show here.
I hear you guys talking about this a lot.
Our investors are really thoughtful. They're engaged. They listen to your show.
As a number of people you've had on your show have mentioned.
The three of us have talked about it on this show many times.
I think you find, and you've heard this on your show, we've already talked this morning on your show, as you know, and you cover every day on Bloomberg.
You've heard a lot of guests talk about that.
I think your show is incredible.
Bloomberg Surveillance, we're talking about it.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Jay Powell, the former Fed chair, used his first public comment since leaving the role to warn that the central bank's credibility could be damaged if politicians are able to remove officials over policy disputes.
If any administration finds a way to remove Fed officials over policy differences, then future administrations will do so as well. The public would lose faith that the central bank will make decisions based only on what's best for all Americans. The Fed's credibility would be lost. Credibility has been built and sustained over many decades, and we have a duty to safeguard that priceless asset for our fellow citizens and for generations to come.
Bank of England Governor Andrew Bailey says British banks are still locked out of using Anthropic's powerful new AI tool, Mythos. While speaking on Bloomberg, Bailey called for an international approach to fighting cybersecurity threats.
The spillovers from this sort of from cyber risk are so big that we can't just have a single sort of national approach towards dealing with the consequences and mitigating it. There's got to be an international approach to this. It's got to be in a sensible, sort of firmly based international process, because I think anybody who thought, well, I've dealt with my banks, that's okay, I'm afraid that won't work, because they're all so heavily interconnected. We've got big payment systems, big messaging systems, so that approach won't work.
Now, as chairman of the Financial Stability Board, you're obviously involved in lots of discussions around sort of global efforts on financial stability and looking for risks. And one area, again, where people are looking nervously at the US in particular is the run-up in private credit, and whether there should be more of a sort of a tougher approach to at least having more reporting requirements or other things on private credit. You've highlighted that a lot of traditional banks and institutions are now very much intertwined with private credit. Is that, I mean, are you getting a hearing on that from the US in terms of the risks of that?
Excuse me, yes. I think, look, first of all, private credit is playing an important role. I think it's a good thing. Let's come back to AI for a moment. We've got a very big investment demand going on for it to support the innovation in AI and in the tech sector more broadly, and private credit is an important part of meeting that demand, and that's a good thing. What I think we have to look very carefully at is the word private can be misleading in some ways, because it is not an island on its own. It is connected into the system, into the broader system. A lot of the underpinning liquidity will come from the banking system. It is connected into the banking system. That's not bad. That's inevitable. So it's very important that we understand those interconnections, how they work. Are there points of sort of fragility in there? That's why at the Bank of England we're doing a second system-wide exploratory scenario to follow on the one we did on hedge fund activity and major government bond markets a couple of years ago. So that's the first thing. The second thing I think is important is, and I think this is particularly true with the spread into sort of so-called retail investment, is do the investors understand the assets they've got and the characteristics of those assets? Because there are clearly, there are some signs of strains in the market. I think they're often described as idiosyncratic. Okay, every incident will have a different story attached to it. But we are seeing some increase in requests, quite a big increase in requests for outflows to take liquidity out. And I think how that plays out will depend on what investors think thought they had relative to what they sort of now think they've got.
Well, that was, of course, the Bank of England Governor Andrew Bailey speaking with our very own Stephanie Flanders. Now, the SpaceX IPO is already forcing changes across Wall Street, from index rules to investment products. Let's get more with Matthew Bloxham from Bloomberg Intelligence on today's Big Take. Matt, first of all, I love the Big Take. It's really, quite an amazing one. How consequential of an IPO will SpaceX be, and how exactly is Wall Street adapting?
Yeah, I mean, incredibly consequential. So put it in context, it's $75 billion of stock that's going to be sold, which is about twice the amount of the second largest, what will be the second largest IPO, which was Aramco a few years ago. And interestingly, maybe up to $30 billion of that will be allocated to retail tranche. So retail investors really being kind of targeted as a kind of a foundation of this IPO. And that, definitely kind of will test the professional investors in terms of how much they back this, because I guess there's a sensitive thing, maybe because the valuation feels high, they may be feeling a little bit cautious, but then they see the retail investors pile in, that pushes the share price up. And given we've seen these shifts in the index inclusion rules going to be included at an accelerated time frame, as little as 15 days with NASDAQ, then potentially the professional investors really kind of get caught short if the shares go up and they're not properly exposed in their funds. So yeah, this is a big IPO for everybody.
Yeah, and we have other big IPOs coming at the forefront. So what are the consequences for everyone else if they're lined up?
Yeah, I mean, I think clearly if this goes well, then that's a great platform for the likes of OpenAI and Anthropic to come in on the coattails, and you may well see them adopt a very similar model, a relatively high retail tranche, and take advantage of these accelerated index inclusion rules. But the other flip side there too, this is a kind of feels like a relatively full valuation at IPO, and if they don't get the demand that people are anticipating, then that may force the likes of OpenAI and Anthropic to either to go back to the drawing board in terms of when they IPO, how much they offer, or even what a realistic valuation benchmark might be for them when they come.
Matt, what will you be looking for ahead of the IPOs? Is it pricing, or is it just the sheer volume and how this will be absorbed?
Yeah, I think to some degree it's pricing. I think obviously we're expecting this week for the investor roadshow to start. Normally, incremental information that comes out from the company is incredibly tightly controlled through this period. But who knows, there may well be the odd kind of snippet of information here or there that kind of comes out, which kind of helps to underpin the story. Obviously, a lot of people are really focused on the orbital data center part of it, which seems to kind of be really kind of a core part of a number of different aspects of what they're planning to do and underpinning that $2 trillion valuation.
Matt, thank you so much. Matt Bloxham there from Bloomberg Intelligence. Coming up, Iran says Israeli attacks on Lebanon are preventing a deal with the U.S. We have the latest next, and this is Bloomberg.
We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake. While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
happened was you were
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. NVIDIA is taking another run at a personal computer market with a new chip to rival Intel's dominance. Emmanuel Macron welcomes SoftBank's Masayoshi Son to the Élysée presidential palace after the firm said it plans to invest up to 75 billion euros into AI data center capacity in France. And U.S. President Donald Trump says talks with Iran will, quote, work out well, even as the two countries again clash near the Strait of Hormuz. Now, staying with the Middle East, and the U.S. says it conducted strikes on Iranian radar sites over the weekend, while diplomatic exchanges continued between the two countries. Meanwhile, Israel has expanded its ground assault in Lebanon, shattering a brittle truce with its northern neighbor. Let's get more from Onur Ant, Bloomberg managing editor for the Middle East and North Africa. Onur, thank you for joining us. So the Trump administration selling a looming deal. Iran remains reticent. So who should we believe?
Well, neither side should be taken at face value. Since the war began, President Trump and others in the U.S. administration have repeatedly indicated that a possible deal with Iran has been imminent, and yet it's been 3 months since the war began and about 2 months since what was supposed to be a temporary ceasefire took hold in April, and the conflict is still raging on, as you have already pointed out. There have been skirmishes and various other hostilities in the region over the weekend, even as President Trump says that a deal is reachable, if not imminent at this point. What remains the critical point in this back and forth between the two is that Iran's demands have been pretty consistent since the war began. They want a level of control or oversight in Hormuz over vessel traffic, maintaining a nuclear program, as well as an end to all theaters of war should there be a deal with the U.S. Given what's happening in Lebanon, obviously the last bit of that is highly problematic. And the other two demands that Iran has are also kind of bordering on the red lines that Trump has maintained since the war began. So even if an extension to the current ceasefire is announced, it's really difficult to see how a lasting and sustainable peace can be arranged, can be reached, given this vast difference in terms of the main points, main demands between the two sides, Francine.
Onur, Israel's expanded its ground assault in Lebanon, so where does that leave the U.S.-Iran talks, and what's been the international response to that?
Well, the broader incursion has already met fierce criticism, including from countries in Europe, as well as the UK. In addition to the incursion, we have just heard from Israeli Prime Minister Benjamin Netanyahu, who said he ordered strikes on a suburb in Beirut. That's quite significant, especially coming after the incursion that you've just mentioned, because there has been no such, at least no high-scale bombardment in Beirut since the current ceasefire in Lebanon took hold in mid-April. This makes any deal between the U.S. and Iran even more difficult than it already probably is, because, again, Tehran has made it very clear that it does not want the conflict in Lebanon to be treated in a separate diplomatic track, or to be treated as a separate conflict than what's going on between itself as well as the U.S. And Israel. So yes, the escalation in Lebanon makes it even more difficult for the U.S. and Iran to reach a deal, because Iran says that a continuation of war in Lebanon between Hezbollah and Israel simply is incompatible with any peace deal that it might sign with the U.S.
Onur, thank you so much. Onur Ant, their Bloomberg managing editor for the Middle East and North Africa. And let's get more analysis with Jasmine El-Gamal, a former Pentagon advisor and founder and chief executive of Averos Strategies. Jasmine, thanks so much for joining us. It feels like it's a little bit Groundhog Day. I know things are moving, but it does feel like, President Trump, it still tries to portray like we're close to a deal.
Yeah.
But on the ground, it's not really the sense that we get.
That's right. Thank you so much for having me. You know, we've been talking about this for a while, and what I've been saying or trying to explain to people is that we shouldn't really be paying much attention to what President Trump is saying, to even what the Iranians are saying. A lot of what they're saying is meant to either soothe the markets or soothe their domestic populations. We should really be looking at what's happening on the ground and what the status is of the issues under contention. And if you look at that, you understand why it's taken so long to get to a deal, and you also understand that a deal is not around the corner. The best that we can hope for right now is a longer, extended cessation of hostilities, a gradual reopening of the Strait of Hormuz, a lifting of some sanctions, and unfreezing of some assets on the Iranian side. But as Onar was just saying, none of the actual root causes of the conflict have been addressed, and we can talk about what I'm looking at that I'm worried about moving forward in a bit.
What are you most worried about? Is there, I mean, even if there's a kind of truce, right? Yeah. Then does it flare back up when the negotiation starts, or is it going to be a stop-and-start situation for months, quarters, or even years?
Yeah. So, look, if we look at the ceasefires that have been negotiated so far in the region, you have the Gaza ceasefire, you have the Lebanon ceasefire, and look at what's been happening within the context of both of those ceasefires. The Israelis have not withdrawn per the agreement from Gaza. In fact, they're taking more and more territory. Prime Minister Netanyahu now saying he wants to take up to 70%. When I look at Israeli soldiers overtaking 70% of Gaza, I think about the potential for insurgency, the potential for more conflict that will spill over to the West Bank potentially and to other places around the region. When we go to Lebanon, same thing. Hostilities continue. About 1/5 of Lebanese territory has now been turned into a so-called buffer zone, homes destroyed, 1 million people displaced. I'm also looking at the unrest that will unravel from that. And then with Iran, of course, they can't agree on core issues like Onar mentioned, the nuclear issue, the ballistic missile program, support for proxies. And so all of these issues are now being kicked down the road. And what they're trying to focus on now, which both parties do want, is that end of hostilities that I'm talking about. But for markets, for shippers, for insurers, for people looking at the medium to long term, I would say we are certainly not out of the woods anytime soon.
And Jasmine, we'll talk about the market and why it's reacting in a bit of a strange way in a second. But actually, it feels like Iran is a net winner in this because they now effectively control the passage of the Strait of Hormuz. Is it going to be impossible to get it back from them without force? What can the U.S. actually offer them?
That's a great question. And I think the short answer is things will never go back to the way they were because Iran has now realized and practiced and proven that it can control the strait, at a relatively low cost compared to what is needed to undo that control. So we talk about the so-called mosquito fleet that Iran has, these fast boats, speed boats that they can throw a rocket launcher on and they can use it to intimidate or attack ships in the strait. They don't even have to actually attack ships. They just have to circle them, intimidate them, offer that threat, that looming threat that things could not go okay. And that is enough to disrupt the strait's traffic. Now, what the U.S. and international community would need to actually take that control back from Iran costs so much more and is not a cost that these countries are willing to bear. So all of the issues under negotiation now, many of them were on the negotiating table before this war started, right? And Iran has proven that it's willing to negotiate on its nuclear program because it negotiated the JCPOA. This back when I was at the Pentagon during the Obama administration. What Iran has now, to your point, is that feeling of leverage and control and power that it didn't necessarily had proven that it had before. And that's going to make negotiations that much harder. The U.S. will have to offer more concessions, which in turn will put more domestic pressure on President Trump. And you see that going round and round now in this vicious cycle of pressure, retreat, concessions, and more pressure.
And I know I ask this every time, but how much of an understanding do we have about the strength of the Iranian regime right now? I mean, they also have to pay the royal guards. Are they stronger than before, or are they weaker and we don't realize it?
You could say they're stronger in a certain sense, in the sense that they've consolidated, they've become more hardline. The hardliners have stronger voices now. People who may have been willing to negotiate or move in a different direction have been killed. So in that sense, they're stronger. But as you mentioned, economically, they're struggling. And the one pressure point really that the U.S. has over Iran is that economic pressure point. But then it takes us back to that battle of timelines that we've talked about before. How long can Iran sustain itself within that pressure cooker of the economic sanctions and the blockade of the Strait? How long can it sustain that versus how long can the U.S. sustain what it's doing? And how long can the market sustain? And, so it's that battle of timelines that we're talking about. Iran simply needs to survive, right? It's a very low bar for them. So that's why I tend to think that the time is not on the U.S. side, it's more on Iran's side.
Jasmine, thank you so much, as ever, for joining us. Jasmine Al-Gamal, their former Pentagon advisor and founder and chief executive of Aviro's Strategies. Now, Germany's top defense official says that while Europe is rushing to rearm, it also needs time and clarity from the U.S. Well, we spoke to Carsten Breuer at the Shangri-La Dialogue. He also told us that China missed a big opportunity by not sending senior military officials to Singapore.
It's my first time I've seen the Chinese delegations on big numbers and also on small numbers. It's important for me is always that the dialogue is keeping up, that we are able to talk, that we are able to communicate. The size of the Chinese delegation is very small this time, and it's also very low ranked. So I think China is missing an opportunity here to talk within the region, but also to other partners, to other militaries, to other politicians.
Let's talk about Europe. He was pretty critical of Europe. He was praising the Asian allies. I guess the numbers don't really add up because Europe has ramped up its defense spending. What else do you think Europe can do to kind of bridge the gap and perhaps reverse that relationship with the U.S.?
Well, hearing the speech from Secretary Hexet yesterday, I was probably leaning a little bit back, only a little bit, because what he offers as limits, as lines where we have to go, I must say we are fulfilling this with the German military, with the German army. So the defense spending in Germany is at this stage. We are ramping up enormously. When Secretary Hexet last year was here, he was talking about, well, even Germany is doing this. Well, we understood the message. We understood what we have to do, and it's not only Germany, it's also other countries.
Are you concerned about capabilities gap? We know that Europe has said that it will be able to defend itself by the end of the decade. I'm just wondering, in the meantime, where are the vulnerabilities? Where are the capabilities gaps? Some say nuclear could be an area.
For me, it's important that we are in a dialogue about this. So when we are talking about capabilities, we need a roadmap. It's clear that the U.S. is seeing their main effort now here in this region. But what we have to do is, if they're taking capabilities out, we have to mitigate those capabilities. So it has to be clear, it has to be transparent, and there has to be a roadmap in what time frame we have to do. So this is a kind of a little bit of a European dilemma. What we are facing. We have all understood that we have to take care of our security on our own, that we have to take over more responsibility, but we can't build up the needed capabilities that fast like it is necessary. So this process has to be designed, it has to be steered. And on this priority, it's ISR, which is on top of the list. It's capabilities in the airspace. It's a capability in space. It's of course air defense. What is in there? It's digitalization, where we have to get much more ahead of what we are doing. So multi-domain operations comes to mind. It's deep precision strike weapons or long-range fires. So this is the top priority, if you will. So, but you know, I'm a little bit reluctant to talk about priorities, because priorities, when you set priorities, you probably don't look into what is necessary. So we have an underspending in defense budget over years and years. So we have to fill the gap, to build up a baseline, and then starting from there.
Well, that was Germany's Chief of Defense, Carsten Breuer, speaking with Bloomberg's Haslinda Amit. Now, oil climbing from a 6-week low as the outlook for a peace deal to end the war in Iran becomes uncertain once again. This, as former National Security Advisor John Bolton says President Trump's push to amend the peace deal with Iran is to get gasoline prices low for the midterms.
Well, I think Trump is getting what he wants. This is a deal about gasoline prices at the pump in the United States. Trump worries, obviously, about the price levels people are paying. He's worried about the effect on inflation. He's worried about the effect on the elections in November. But this is not a deal that really ends the war in a satisfactory way for the United States.
Now, for more, we're joined by Bloomberg's EMEA News Director, Will Kennedy. Will, thank you for joining us. I mean, oil for me is a bit of a mystery, right? So it's a little bit elevated, but traders aren't pricing in peace yet. What does the price actually tell us of what they're looking at?
Well, I think they have priced in a lot of resolution to the conflict. As you said, prices hit a 6-week low last week, and they're up a little bit today because the deal hasn't happened yet. But it's clearly the market is positioned in a way that it expects a deal sooner or later, and that part of that deal will be some easing of the situation in the Strait of Hormuz that allows more Middle East oil and more Middle East fuel to reach global markets. So that's where we are today. There are clearly perhaps risks there in terms of if this deal takes longer than expected. But the market is, in a sense, fairly relaxed.
It is very relaxed. I mean, I think it's very relaxed, and they've been relaxed for quite some time. I mean, do we know what exactly they're looking at? Is it resolution, or they think we have enough oil?
I think there's a little bit of both. I mean, the markets have found a way to balance. You know, we've had stockpile releases. We've had a little bit of oil get out of the Persian Gulf. We've seen some demand destruction in different parts of the market. You put that together, and the market has found a place at this price, which is working. But there's no doubt, I think, that they have taken the fact that there is this diplomatic effort, that both Iran and the US have said that they are working towards a deal, as a signal that we'll get there. And of course, the political imperatives, as John Bolton said, for President Trump and the administration to reach some kind of deal are extremely strong. And I think that also plays into the market's thinking.
Meanwhile, over the weekend, we also reported that the EU is considering a temporary freeze on its Russia oil price cap over the Iran war. Are there any other options under consideration?
That's an interesting move. Clearly, the European concern is that because we have these higher oil prices, the mechanism of which currently defines what the price cap is will mean that Russia will get more from its oil because it's a function of what the market price is and a discount to that price. By freezing it, the aim will be to deny Russia the fruits of those higher oil prices. But as we've seen, Russia has been quite creative in finding ways to build structures that allow it to circumvent things like the price cap. So the question is not whether Europe will do this. I think for the European perspective, it makes sense, but just how effective it will be in the current market where India especially is buying a lot of Russian oil.
Well, thank you so much, as ever, for joining us, our EMEA News Director, Will Kennedy. Now, coming up, Bloomberg learns that the HSBC chief executive has been spending more time in Hong Kong to help revive its investment bank. Details next, and this is Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis about the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only only daily business show dedicated to tech, right in the middle of the trading action. 11 a.m. on the East Coast, 8 a.m. in the West. Only on Bloomberg Television. Context changes everything.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Raffiti. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine. Watch, listen, stream.
Welcome to the world of decentralized finance.
You can see the massive gains for the OG crypto coin.
The breakout we have all perhaps long awaited finally realized. We'll see if it sticks.
Bloomberg's covering all things crypto, the people.
There's no question this industry is composed of some bad actors and some good actors.
The transactions.
Volumes have surpassed $24 billion per day.
And the technology.
Stop talking about the technology. Start demonstrating the utility.
Bloomberg Crypto, Tuesdays.
Well, the conversations that matter and the insights you need. This is The Pulse, and I'm Francine Lacqua here in London. Now, EasyJet is pushing back on a proposed takeover by investment firm Castlelake, labeling the move highly opportunistic as a UK budget carrier grapples with depressed stock price. The budget airline cautioned that attempting a buyout would be fraught with risk. We're joined now by Bloomberg Managing Editor for Space and Aviation, Benny Camel. Benny, good morning. So what do we know about Castlelake's possible offer? What's concrete?
So Castlelake came out on Friday evening. There was some speculation in the market in the afternoon, and then they came out in the evening saying that they are exploring a bid. This is early days, so there's no formal offer out there at this point. We have sort of the contours of what a price might look like, and we know by which time they have to make a definitive decision, which is the end of the month. So they have a couple of weeks to sort of go back and forth on this. So EasyJet came out this morning saying that they view this, as you said, as an opportunistic move. If you look at the share price, you can see where they're coming from. The stock before today had lost about a fifth in value. It's one of the worst performing aviation stocks in Europe. Obviously today the stock up quite sharply, up about 13% off the back of this idea of an offer. So why would Castlelake be attracted to EasyJet? Probably because the company does have some valuable assets. They have a modern fleet of Airbus aircraft. They have a big order book. These are aircraft that are difficult to get by. So anyone owning EasyJet would have the hand on those assets. They also have valuable slots. They fly to places like Paris, to Rome, to all sorts of popular tourist destinations. So those are two sort of major assets that might attract Castlelake.
And so is Castlelake actually an active player in the aviation industry?
They're not exactly a household name, but they are a player in this space. They did sort of emerge a couple of years ago when they partnered with Air France to buy SAS, the Scandinavian carrier. They've also done some lending to airlines. They've helped with assets and so on. So they do know the space reasonably well. What's important is, though, that they are a US company and EasyJet is a European company. And by regulatory standards, you cannot buy full control of an airline when you're from a different jurisdiction. So either Castlelake is satisfied with a minority stake, or they find a partner that they can team up with. So we don't know what sort of contours a deal might look like, but they would have to do one or the other. They can't just take control of this. And that might also be why EasyJet cautioned this morning, saying there are significant regulatory hurdles, and in some ways basically telling shareholders, hold firm, we've got this, and you're probably better off staying with us.
Benny, thank you so much. Our Bloomberg Managing Editor for Space and Aviation. He's a busy man, Benedict Camel. Now, HSBC is redoubling efforts to revive its flagging Hong Kong investment banking franchise. Bloomberg understands that the bank is deploying its top leadership team to win back market share as competition intensifies in Asia's biggest financial hub. Well, Bloomberg's Tom Metcalf is here with the very latest. Tom, thank you for being here. First of all, what are the real concerns or struggles that HSBC is facing?
Yeah, it's kind of a sort of, I guess, inevitable fallout from that big restructuring we've seen at the bank, where effectively they really pruned back their investment bank and moved to very Asia-focused with the idea, your US arm, your UK arm, your Europe arm is basically all about Asia-linked business. So whether Asian companies coming into the US, for example, or US companies trying to access Asia. And what they're seeing is obviously with a bit less of that footprint, they sometimes miss out on those big global deals. So saw that particularly last year. And what this story points out is just these various steps they're trying to do to try and sort of, forestall that, deploying some real big guns, getting their CEO, George Elhedery, in terms of, it's almost like pitch meetings and stuff like that, and just making sure that they, as much as possible, shore up their position on those league tables.
And so what are the different solutions that HSBC is trying? I mean, part of it is also sending management. When we spoke to the chief executive, I mean, he says also he speaks perfect Chinese.
Yeah, exactly. There's all sorts of that softer side of things, and then huge bank, right? So they've got those really compelling, sales points they can make. Like we're a massive trade finance bank. We are a global bank in many ways, and it's just that competition they might face against, say, a JP Morgan, where they are, at least from the capital market side, a much smaller investment bank in quite a specific definition.
And Tom, what would you be looking out for, to actually measure success for HSBC?
Well, I think you'd be looking for a lot more listings, particularly in Hong Kong, right? That's kind of their target. And to be fair, they've definitely seen a big pickup this year. So there was only, a handful last year. Already they're at least listed on, dozens, which is clearly an improvement. And, it's always hard to unpick. Is that sort of market conditions? Is that the sort of specific moves the bank is making?
Tom, thank you so much. As ever, Tom Metcalf, they're in charge of finance for EMEA. Now, this is a picture across the board for U.S. futures. Of course, it's the AI trade that keeps on giving. The artificial intelligence trade seems to be locking in fresh gains today, allowing global equities, for example, to shrug off a rebound in oil prices as the U.S. and Iran remained deadlocked over a peace deal. I'm also looking at a couple of other things that we should be watching out for. Look, Brent headed for its first daily gain in 4 sessions. The benchmark actually rose towards $94 a barrel, as it remained unclear whether the U.S. and Iran were making progress towards an agreement on a lasting ceasefire. NVIDIA then entering the PC market with a new chip aimed at loosening the stranglehold of Intel. You can see pre-market NVIDIA gaining 1.7%. Intel, I think on the lower side, down 0.8%. Up next, Bloomberg Brief, and this is Bloomberg.
Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no, I don't. When I think about cameras in general and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8, right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Every weekday from 3 to 5 Eastern.
Only on Bloomberg. Context changes everything.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
A.m. in New York City, 10 a.m. in London. I'm Matt Miller in for Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Futures pushing higher after U.S. stocks notched another fresh record high ahead of Friday's payrolls report. That's as the AI rally presses on, with NVIDIA entering the PC market to challenge Intel and others, and oil also gaining as the U.S. and Iran clash near the Strait of Hormuz, with nuclear deals still in a deadlock. Let's get a check on the markets around the world. First off, Alice French in Tokyo for the latest in Asia. Alice?
Good morning. Yes, the AI theme going strong again here today, particularly for Korea. We can see Samsung up, Kioxia as well on those memory tailwinds. Goldman raising its target prices for both of those stocks. LG as well in Korea having around a 30% gain today on news that its chairman is going to be meeting Jensen Huang later this week. And of course, we have the Computex conference kicking off in Taipei with some very bullish AI comments from NVIDIA really driving that sentiment. Here in Japan, we can see that playing out with the fact that SoftBank Group, of course, that invested in OpenAI, has overtaken Toyota's market cap for the first time since the dot-com bubble. SoftBank now worth around 48 trillion yen and Japan's biggest company, all part of the rotation into AI and away from those sort of more traditional manufacturers. And I think this is something that we'll see continuing throughout the week.
Alice, thanks very much for that. Let's get to London now for a look at Europe with Justina Lee. Good morning, Justina.
Good morning, Matt. Now, I've been away for a week, but it seems like it's the same deal or no deal intrigue here. Now, we've had a bit of a consolidation in kind of German short-end bond yields, but today they're coming back up with the same concerns about oil, about whether we're going to see that deal. And that also explains some of the moves in currency here today. And we're seeing a bit of a safe haven rally all across the world. Now, what I find really interesting is that it's a completely different narrative in the stock market with the focus on the AI narrative. Now, the problem here is Europe doesn't have that many AI stocks, and that explains why, even though Asian stocks are up, U.S. futures are up, European stocks are still down a little bit today. And if we flip the board here, we're really seeing that reflected in the stock market trends all year round. I mean, European stocks have really lagged recently because with AI still pushing stocks up recently, I mean, European stocks don't have that source of support, and that's really becoming a problem in this part of the world when it comes to equities.
All right, Justina, thanks very much for that. Let's get a look at what's going on in markets here in the U.S. Justina mentioned that futures are higher, and we see that's true on S&P futures, about 0.25%. NASDAQ futures up a little bit more than 0.33% right now. Russell 2000, the small caps, little change. Taking a look at what's going on with treasuries as well as crude. Those have been so important in the trade lately. 2-year yields up a little bit, just 3 basis points to 403.5. 10-year yields up about 3 basis points as well to 446, 447, and you can see the long bond just under 5 right now. In terms of crude, we do see prices rising, although much lower levels than we've been accustomed to. So NYMEX crude WTI up 3 3/4% to $90.63 a barrel. Brent crude also gaining right now a little bit more than 3% to $94 a barrel as the price of gold comes down a little at $4,498 a troy ounce. For some of the individual stocks that we're watching, let's get back out to London and Chloe Melee. Chloe?
Good morning, Matt. Wise shares are tumbling this morning after the Bureau of Investigative Journalism reported the company was facing a money laundering investigation with concerns that the money transfer services from Wise were used to launder proceeds from drug trafficking, fraud and corruption. And so as we await more details on this from Wise, we are seeing this really weigh on the stock this morning, down more than 16%. Moving on to Revolution Medicine, which is up this morning very strongly, about 10% after
some positive trial data for its pancreatic drug, which nearly doubled the survival rate and also delayed symptoms for months. So this is a big breakthrough for the company, and we are seeing that reflected in this big surge in the shares this morning. And finally, EasyJet is also in the green after receiving takeover interest from the investment firm Castle Lake. And EasyJet said that it hasn't had any talks yet with the company, and that it was confident in its strategy, its standalone strategy moving forward. But it seems that investors are actually quite keen on the prospect of a deal, and we're seeing that reflected in those shares, up more than 10% in London this morning.
All right, Chloe, thanks for that. Chloe Melee there in London with a look at some of the individual stock stories that we're watching. Coming up this hour, more on the AI rally with Keith Lerner of Truist and Pascal Cagney, Ambassador for International Investment at Business France, joins us as President Macron scores over $100 billion in foreign investments, including SoftBank and Salesforce. SoftBank now the largest company in Japan after overtaking Tokyo. But first, NVIDIA is breaking into the PC market.
Introducing RTX Spark. Everything we've learned over 33 years distilled into one chip, and in close collaboration with Microsoft, a Windows platform for agents. We're reinventing the personal computer.
Joining us now is Matt Bloxham of Bloomberg Intelligence. Matt, so that little clip there, I guess, made it seem kind of commercial and chintzy, but this is really a huge move, isn't it? Because NVIDIA hasn't been dabbling in the PC market for almost a decade.
Yeah, that's right. It's a very significant move, and I guess it just demonstrates that a number of these historically separate markets are starting to collide. You know, we've heard that Intel is getting very much into the GPU market, and NVIDIA is going back the other way. So there's going to be a lot more competition across all parts of the technology landscape going forward. And yeah, this is kind of potentially really shake up the PC market. I think initially this is very much positioned at the premium end of the market. So, you know, the volumes might not be that big, but clearly from what Jensen Huang was saying today, that the expectation is that over time they'll be creating new versions of this chip, and it will be expanding into a much broader part of the PC market.
What have PC sales been like, Matt? I mean, for the consumer, you don't really need a PC anymore because your phone can do everything that your laptop or desktop could have done 10 years ago. I guess the business market is the only source of growth?
Well, yeah, I mean, yeah, the PC market generally has been pretty muted. You know, similar to what we're actually saying with the smartphone market too. You know, that these are heavily penetrated markets, so you're kind of really, to some degree, relying on the replacement cycle. But the expectation is that AI is kind of instigating a new and faster replacement cycle, because, you know, as AI becomes the de facto way that we do everything, people are going to increasingly realize that actually, you know, the 2 or 3 year old PC or smartphone or tablet they've got doesn't have the processing capability to do what they need it to do, or what they expect it to do with this new software. So I think that's part of the expectation, is we're going to see a new upgrade cycle for PCs.
By the way, SoftBank, we've been talking about a lot today because of the fact that they overtook Toyota as the largest company in Japan, but also together with Salesforce making big investments in France. What do we know?
Yeah, that's right. 2 separate investments, but obviously France in the limelight. So with the SoftBank potentially investing up to 75 billion euros to deploy 5 gigawatts of data center capacity across the region, supporting kind of various different initiatives. That actually, it's a big number, but it actually seems like fairly good value to money based on the kind of pricing we see for gigawatt hyperscaler data centers in the US, which can typically cost maybe $40 to $50 billion. And separately, we've heard from Salesforce that they will make Paris their AI center of excellence, potentially committing, I think, as much as $2 billion to that. So, you know, I think historically Paris has been a very strong platform for the data center market, and it's got a very healthy tech innovation environment, you know, kind of a bit like Silicon Valley or Silicon Roundabout we have here in London. And so I think, you know, to some degree it kind of plays off the back of that, that there is a really thriving technology hub in Paris and France in general. And, you know, they're definitely going to get a boost again from the investments, I guess, probably well well played, the French government for convincing these big firms to invest in France over other European countries.
Matt, thanks so much for your time. Matthew Bloxham there of Bloomberg Intelligence. We'll have more on those tech investments in France a little bit later on with Pascal Cagney, Business France Ambassador for International Investment, later this hour. Over in the Middle East, progress on a deal to extend the U.S.-Iran ceasefire at a standstill. Iran saying it won't back down from new regulations to control ship passage through the Strait of Hormuz, as the U.S. stands firm on insisting free passage for vessels through the waterway. Bloomberg's Oner Ant joins us now out of Dubai with the latest. So, Oner, what do we know about this deal that always seems to be imminent, always a few days away, and never comes?
That's correct, and there's a reason for it, Matt. It seems that the main red lines or main areas of disagreement between the U.S. and Iran remain almost unchanged. We are kind of going through the same cycle over and over again since the ceasefire between the two took hold in mid-April. As things stand now, Iran maintains that it wants to maintain a level of control over Hormuz, and it wants to maintain a nuclear program as well as an end to the fighting in Lebanon, where Hezbollah, Iran-backed group Hezbollah, and Israel are fighting against each other again in a parallel war. And it looks like, all these three issues remain key areas of disagreements between the two sides, which is why we have yet to see a breakthrough in these talks that are taking place over an alleged memorandum of understanding that could extend the ceasefire by another 2 months, allowing the sides to basically negotiate over these key issues that remain unresolved.
Yeah, Iranian media also reporting that the Iranians expect at least $12 billion in their assets to be unfrozen. What do we know about that and the demands for more money in terms of reparations?
That's a key part of the Iranian negotiating position since the beginning of these negotiations, of these talks with the U.S. But it's difficult to say whether it's a red line. It's one of the key. It is definitely a key demand, but it's difficult to say whether that is one of the sort of areas where Iran does not want to even negotiate. It has kept saying that it wants war reparations, and unfreezing of those funds could be a part of that. But it could also be handled in a different way, because Iran wants to obviously toll ships going through the Hormuz once the conflict comes to an end, and it also has indicated that it sees that also as part of a war reparation mechanism. Now, whether or not more will be, or any of that money will be released, obviously remains to be seen. It's up to President Trump, and that's a key sort of point of leverage that he is holding to sort of encourage the other side to come to terms with, come to terms on some of his key demands, such as the nuclear enrichment issue. But again, as I said, there is no final decision that has been made on this particular issue of unfreezing Iranian funds by the U.S. administration.
Oner, thanks very much. Bloomberg's Oner Ant talking to us about the latest in terms of an extension to the ceasefire. Crude bouncing back from a 6-week low on uncertainties over that deal. You can see that although we're up 4% on WTI and 3 1/3 on Brent, we're still at levels much lower than we've become used to over the past weeks and months. 94.15 the price for Brent. Let's get more with Bloomberg's Will Kennedy. So, Will, these prices seem fairly subdued. Is the market betting that this deal will come soon?
I think the market has been pricing in a resolution, some kind of agreement for some time now. As you said, Matt, prices are low by the standards of what we've seen during this conflict, and I think the thinking is that both sides are working towards a deal, that the president probably needs a deal to get gas prices under control in the run-up to the midterm elections, and so rightly or wrongly the market is taking a view that it will happen, and that's where we are this morning.
So if we do get an agreement to extend the ceasefire, how much further does the market expect crude to fall?
Well, that's very difficult to say, Matt. Clearly what's critical to the market is the flow of ships through Hormuz and the rate at which that oil can get out, the rate at which tankers can get in to start loading the oil that's backed up in storage, the rate at which countries like Kuwait and Iraq can restart oil production that's been shut in during the conflict, and traders will be watching that very, very closely to see how quickly things get back to normal. It will be a slow process. It will take weeks and months to unwind the impacts, but that will start to happen quite quickly.
I get it. Obviously, the price is difficult to call out, but that was what I was wondering about, Will. You know, if we get a reopening of the Strait of Hormuz, how quickly will prices come down? And I guess that's also a question to which very few people know the answer, if anyone. Will Kennedy is Bloomberg EMEA News Director. Thanks very much for joining us. Let's get on to the other top stories trending on the terminal this morning. Former Fed Chair Jerome Powell says the U.S. Central Bank would lose credibility if any president dismissed Fed officials over policy disagreements. Powell says if one administration starts firing Fed officials, future administrations would do the same, leading to distrust that would hurt the economy. He made those remarks as he accepted the John F. Kennedy Profile in Courage Award in Boston on Sunday for defending the Federal Reserve's independence. Goldman Sachs says hedge funds last week bought U.S. equities at the fastest pace in 6 months. Trading flows were driven by long buys and short covering in a combination of index and exchange-traded fund products. And Hungary plans to amend its constitution to remove President Tamás Szolyak. Viktor Orban loyalist Szolyak refused to resign after Orban's loss. Prime Minister Peter Magyar's TISA party won a two-thirds majority, enabling it to change the constitution. The ruling party has already filed an amendment to limit the term of prime ministers to 2 4-year mandates. Coming up, the first major acquisition for Greg Abel as Berkshire CEO. We'll discuss his big bet on the housing market and consolidation of the companies under the Berkshire umbrella next. This is Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Berkshire Hathaway is set to acquire Taylor Morrison in an all-cash $6.8 billion deal, the first major purchase under new CEO Greg Abel. In a statement, he writes, quote, "Over time, we expect to unify our site-built home building operations into a combined platform, enabling us to deliver the dream of homeownership to more Americans." Joining us now is Manuel Bagori to talk about this. And Manuel, the first interesting thing that I see here is not really the acquisition, but the fact that they're going to combine these assets. Normally, Berkshire allows companies they buy to continue running as separate entities, right?
Indeed, that also caught my eye, Matt. That was very interesting, quite remarkable. I think investors are quite intrigued by the fact of this potential departure from Berkshire's traditional strategy of allowing businesses that acquires to run independently. So the fact that Able may combine the different businesses in home building across the portfolio could potentially also set a path for other sectors and businesses across the different portfolio to also be combined, which is quite interesting. I agree with that. But also it's interesting because it's Able's first significant acquisition, in fact, since taking over the reins from Buffett. So I think investors were quite keen to see what would be the best significant acquisition for Able, and also how he decides to put the huge amount of cash that they have, right? So it's almost $400 billion at the end of the first quarter. So that's a huge pile of cash, and it'll be interesting to see how they deploy that capital going forward.
Yeah, it's a massive amount of cash. It bears restating, $400 billion. I mean, this acquisition looks tiny compared to that cash pile. What kind of target could they possibly acquire with that?
Well, Matt, Berkshire is well known for acquiring all sorts of businesses, particularly has an eye for those kind of more traditional, very stable, cash flow generative businesses across industrials and everything that ranges into financial services, as we've seen, and technology and so on and so forth. So it could be really anything globally. But obviously, this is a significant one, the biggest seen the transaction, almost $10 billion for Oxychem, just completed in January. So it's definitely a good one to set up for Able.
Got it. Manuel, thanks so much for joining us. Bloomberg's Manuel Bagori. This is Bloomberg.
is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that. And the speed of the business has never moved faster.
My career might stop. I'll still be driving some.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment.
3 revolutions in 1.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
This is Bloomberg Brief. I'm Matt Miller in New York. Time now for your front page news. First up on the Wall Street Journal, questions surrounding the results of President Trump's physical exam. The Journal says the White House memo lacks detail on tests assessing his cardiovascular health. Next up, the New York Times reporting that President Trump's upheaval of the government has led to an exodus of more than 10,000 lawyers since the beginning of 2025. The Times says many of those looking for work have gone to offices of Democratic state attorneys and nonprofits challenging Trump administration's policies in court. And finally, the Financial Times reporting that economists don't expect the Iran war-driven inflation shock to be as severe as it was during the 2022 energy crisis. FT analysis shows that inflation projections have increased by 0.8% on average since the conflict began, far below the 2.3% average in the months following Russia's invasion of Ukraine. This is Bloomberg.
A cidade estava sitiada.
Nisso eu começo, eu não sabia o que fazer. Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day. Bloomberg.
It is 5:30 a.m. in New York City, 10:30 in London. Good morning. I'm Matt Miller in for Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Futures pushing higher after U.S. stocks notched another fresh record high ahead of Friday's payrolls report. That's as the AI rally presses on, with NVIDIA entering the PC market to challenge Intel, and oil also gains as the U.S. and Iran clash near the Strait of Hormuz, with the nuclear deal still in deadlock, though the prices on oil are much lower than we've become accustomed to. Take a look at the futures picture first in terms of S&P futures and NASDAQ futures, looking at gains of 0.2% again after record highs and 9 consecutive weeks of equity indexes rising. Treasuries are adding a couple basis points to yields right now, but still below, far below what we saw at the beginning of last week. So for spot 0.35 on the 2-year, the 10-year at 4.47 essentially, and the 30-year just under 5%. Remember, a couple weeks ago, the 10-year was over 4.65. Take a look at oil. We had become used to $100 plus prices, and now $91 on NYMEX crude is a gain of 3.69. Brent up 3.24, but only to 94.36. Gold coming down a bit at just under $4,500 per troy ounce. Let's get a look at some of the individual stock stories we're following for you this morning. For that, we go to London and Chloe Mealy. Good morning, Chloe.
Good morning, Matt. We've seen Taylor Morrison shares soaring this morning after getting bought by Berkshire Hathaway in their $6.8 billion deal. So this is the first big purchase under the new Berkshire CEO, and it's seen as really a vote of confidence in the U.S. housing market. And so we are seeing shares up more than 21% this morning. So big mover there. Another big mover is Revolution Medicines, which has some positive trial results for its pancreatic cancer drug. And so the drug delayed symptoms for months and was also able to double the rate of survival. So this is a big breakthrough for patients, of course, a big breakthrough for the company itself. And we're seeing that reflected in those shares this morning, up almost 8% for the pharma company. And finally, EasyJet is also in the green after receiving some takeover interest from the investment firm Castlelake. And EasyJet has said it has not engaged yet in any talks with the company. It is confident in its own strategy. But it seems, as we can see from the share price, that investors are potentially quite keen on the deal happening, especially given the weakness recently in the EasyJet share price and the fact that some analysts are saying that Castlelake is actually quite a credible potential suitor. So definitely a saga to keep an eye on as we move forward.
All right, Chloe, thanks very much. Chloe Mealy there with a look at some of the individual stock stories we're following for you. Futures, as we just showed you, pointing higher. The S&P 500 posted 11 record closes in May. That's as investors await the next jobs report this Friday. Joining us now is Keith Lerner, CIO and Chief Market Strategist at Truist. And Keith, as I was saying, 9 consecutive weeks of gains. The path has been simply up, up, up. What could stop this?
Yeah, well, great to start the week with you, Matt. All in all, we still think the bull market deserves the benefit of the doubt. Is it going to be as a straight line as it has been recently? Obviously, probably not. But I will give you an interesting stat to start the week, since you mentioned the 9-week winning streak. We looked back since 1950 and looked at how often has this occurred, and there's been 10 other times since 1950. And when you look a year later, 8 out of 10 times the market has been up with low double-digit gains as the average. I will say, though, when you look at the next week, you've only been up 3 out of 10 times. So, the odds are actually against the market a little bit this week. But overall, when you see underlying momentum like this, especially as it's supported by earnings, I think as we look out as an investor over the next year, it's still a good underlying sign.
Yeah, I mean, I would think that major concerns are higher rates and higher oil prices, but those, as we just showed you, look really subdued right now.
Yeah, listen, the market has, at this point, it's come to grips with the belief of the outcome is around the Middle East. And, the market is certainly expecting some type of agreement. I will say, as we step back, you noted this early in the program, Matt, it's all about AI. And, we often talk about that every bull market cycle has a dominant theme. And we know this one is AI. That's been something we've talked about the last couple of years. But I don't know that people understand how much this AI is dominating kind of global markets. So in the US, we're just doing a study right now, 70% of the gains in the S&P is related to the tech sector. If you go to emerging markets, that's over 95%. And even something that's probably under the radar, small cap returns, almost 40% of small cap returns in the US are related to the tech sector specifically, because in small cap tech, it's up 50% this year.
How broad, though, has this rally been? I saw a stat a few weeks ago that 7 out of the 11 industry groups on the S&P had expanded margins. Of course, earnings season has been pretty spectacular with double-digit gains, but there's a lot of concern that that's concentrated. How do you look at it?
It is concentrated because of that tech factor that I just mentioned. But I will say, as we sit here this morning, we're looking at markets, we see, the S&P at record highs, emerging markets at record highs, small caps, mid caps, the equal weight index at record highs as well. And then as we look under the hood and say what's happening there, we are seeing forward earning estimates for each of those indices that I just mentioned also at record highs. So I will say within the S&P, you only have about 60% of stocks up this year in the index. So there's definitely some bifurcation underneath the surface, especially some of the areas that are getting hit, like retail underneath the surface. But all in all, I think it's maybe a little bit broader than people give it credit for, given what I just mentioned as how many of these indices are at record highs.
I notice you have a modest U.S. equity bias. Last year, the outperformance of indexes abroad was pretty striking. Is that an anomaly?
Well, I think on the margin, I think you have somewhat better activity for global markets in general. But we've been Team USA for a long time. That's where we still see the strongest earnings momentum in the globe. The one thing we did earlier this year was we did upgrade emerging markets because after a decade of almost doing nothing, it finally broke out on an absolute and a relative basis. And the earning trends, at least on a short-term basis, are actually even stronger there. We all know the reasons why, because of the semiconductor stocks there. But I would say the way we're approaching it is still lean with the U.S., a little bit more favorable on emerging markets. I think developed markets is where we're seeing a little bit more of challenges related to this, this higher oil prices and somewhat weaker growth at the same time. Central banks are looking to actually increase rates.
Yeah, I mean, we're going to talk in a moment about France and Europe as SoftBank invests in the AI economy there. But I wonder how much of a problem the lack of energy sources is for a lot of the EU bloc.
Yeah, well, one, as I mentioned, the GDP estimates are starting to come down since this Middle East tensions broke out. And again, the mandate over there is for central banks is focused on inflation as opposed to the U.S., which has that dual mandate. So I think that's somewhat of a constraint. The other thing, going back to this AI theme, and you also mentioned this before, that same study that we're looking at, tech has actually done pretty well in Europe, and internationally, the problem is it's not a big enough part of the index. So that's why partly why we're seeing those indices somewhat underperform. I mean, Japan's acting somewhat better here recently, but all in all, I think the U.S. and even emerging markets are still a better place on a relative basis. You're really going to need economic growth to really pick up to see Europe and some of these other areas outperform, which are more cyclically based, less technology focused.
All right, Keith, great to spend some time with you this morning. Thank you so much for joining us so early. Keith Lerner, the CIO and Chief Market Strategist over at Truist. Let's get to some of the other top stories trending on the Bloomberg terminal this morning. President Trump says talks with Iran over an interim deal will work out well. In a Truth Social post, he said constant speculation over whether he'll agree to a deal, should agree to a deal or not, isn't helping. Berkshire Hathaway will buy Taylor Morrison Home for $6.8 billion, and it's an all-cash deal, and it is Berkshire's largest since it bought Oxy's petrochemical business in January. It's the first major acquisition under the CEO, Greg Abel. SoftBank is now Japan's most valuable company, overtaking Toyota. Shares jumped 14% Monday. The AI boom has pushed SoftBank shares up 90% this year, while pressure on automakers has caused Toyota shares to fall 10% in the same period. Coming up, President Macron scores over $100 billion in foreign investment pledges with a heavy emphasis on AI. We'll speak to Pascal Cagney, French ambassador for international investment at Business France next. This is Bloomberg.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
About 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Introducing RTX Spark. Everything we've learned over 33 years distilled into one chip. And in close collaboration with Microsoft, a Windows platform for agents. We're reinventing the personal computer.
NVIDIA is taking on the PC market, ready to compete with Intel and AMD by modernizing laptops for the AI era. Let's bring in Bloomberg's Mark Bergen for more. Mark?
Yeah, this is NVIDIA's second attempt. You know, they tried this a decade ago. As we wrote, it kind of fizzled out. Obviously, they're an incredibly different company coming in this kind of post-ChatGPT era, and they are dominant in the data center business. I think for the investors, this is a diversification that they're really excited about. They're really looking, concerned. The chief concern for NVIDIA here is that some of their biggest customers, like Google and Amazon, are working on direct competitors to their AI accelerators and data centers. So this shows if they can successfully expand in the PC market, that gives them a lot of strengths in case that Google and Amazon continue on their tail.
Hey, Mark, SoftBank and Salesforce both making big investments in France. What do we know about that?
Yeah, I mean, SoftBank is huge. I think the number we saw was close to $87 billion US dollars. This is Masayoshi Son, the chairman, has made this a priority. I think the devil's in the details here. These that we're talking about from the announcement over the weekend is data centers with, I think, 5 gigawatts of capacity. That is huge. Something approaching what we have in the U.S. with the Stargate project with OpenAI and SoftBank there. Big opportunity for France, leaning in on its nuclear energy. Macron has been pushing this idea that France does have an advantage around energy pricing to develop these basically become the infrastructure leader across Europe. And if these projects would make the France by far much bigger than anywhere else across the continent.
All right, Mark, thanks very much. Bloomberg's Mark Bergen reporting out of London. Let's talk more about what's going on in France now to bring in more AI investments. Pascal Cagney of Business France joins us. He's French ambassador for international investment, appointed by President Emmanuel Macron. He is also the president of C4 Industries. So, Pascal, thank you for your time this morning. It's a huge investment in what's been called, I guess, the Silicon Valley of Europe. Tell us about what you expect this to bring to France and to the EU.
You need to understand this is actually the 8th consecutive year that we have the Choose France Summit here in Versailles. And really, it's a real fireworks of announcement in the sense that we've got in excess of 93 billions of investments. We're counting only 45 billions for the SoftBank announcement on the 3 gigabyte and not the 5 gigabyte that you were mentioning. It's huge for us because we have also a side of the data centers, many of other investment which are validating the whole strategy of pro-business that France has been demonstrating. We've got, as this mentioned, the Salesforce, the Oracle, the Databricks, all investing here together with the MJX of this world. So we're very, very pleased, welcoming 200 CEOs of the Fortune 500 here, in excess of 400 meetings with our ministers. So this is something that we've been doing extremely well. And remember that SoftBank announcement is really by a long shot the biggest ever announcement in Europe. So we can only be pleased.
Pascal, here in the U.S., we're continually reminded that demand is still much higher than supply. You know, in data centers, we're rushing to build them around the country to meet the incredible demand that we've seen for AI. Is it the same in France? Is it the same in Europe that consumers and businesses are using this technology at a pace we couldn't have imagined?
The truth of the matter, the adoption rate has been never seen. We are most likely slightly behind the US as it has been for the last 2 or 3 decades. But the fact that you need to really get is that France is exporting 19 terabytes of energy, of electricity. And that gives us an amazing, compelling advantage to attract and continue to attract all of these data centers. And it's not only about data centers. We're also trying basically to get the whole stack of the value chain into the AI with having our local champion Mistral, with EMI Labs, but as well having new processors, new motherboards, the ability to build all of that and to do all of that into a concept which is carbon neutral, which is very, very important. So we are using our USP, our nuclear energy. 95% of our total energy is renewable, right? To basically try to create a lead and attract Sun and SoftBank, but many others.
We have had in the U.S. serious social concerns about the price of energy being driven higher by data centers, local residents around those areas being forced to pay much bigger bills. How do you deal with that in France?
Remember, because we have a real excess of energy, 90 terawatt of data that we're exporting, that's not going to happen. We've got also a mechanism to guarantee continuous energy both to the business and to the residentials. So this is not something which has hurt at all the mindset of the people. The social risk that we can expect, if anything, will be about the consequences of AI that no one is really able to tell about. For the time being, we're very satisfied by what we're offering. We've got also the large names like Salesforce, Oracle, Databricks, which are putting their AI centers into Paris, which is really becoming the continental hub for AI. So this, plus other announcement in more traditional industry, is making these Choose France editions in Versailles an absolute success.
Can this kind of investment be large enough to affect the growth trajectory of France? Do you expect AI to help boost growth? Because that's been a problem that market watchers have noted. For example, we just spoke with Keith Lerner, and he said growth is slower in Europe, and you may have to raise rates at the ECB as well.
You're absolutely right. The growth has been lower. We haven't embraced the previous revolution, being the PC, the internet, the mobile, the same way we should have done. This is our chance to go back in the race. And President Macron has been playing a critical role in explaining that to my fellow citizens, but also at a European level, which is now why we believe that AI could extract a massive productivity gain from the 24% of the industrial throughput that Europe represents on a worldwide basis. If we're able to do that, we'll be able to bear the cost of a social welfare, the cost also of maybe too much bureaucratic or tax-based mindsets. But again, it's a big bet that we're doing. Right now, it seems to work. The adoption is strong. We attract talents. We're able to fix on the territory these data centers and all the value chains. The future will tell us. For the time being, let's take stock of what we've been doing and achieving to date, which is huge, right? This is 93 billions. You understand this is more than the 7 previous editions of the Choose France Forum. So let's celebrate.
Can I ask an economic question of you, Pascal? Because although you have cheap renewable energy to help power this kind of growth, and you've got an incredible investment announcement to talk about today, Isabelle Schnabel of the European Central Bank has brought up inflation concerns, and to those, the French are not immune, right? A lot of this stemming from the closure of the Strait of Hormuz after the U.S. invaded Iran. Are you concerned about inflation? Can you feel it in France, and could it become unanchored?
We feel it, but like in the past, at the time of the Ukraine war and the explosions of the energy price, we have been, if not immune, somewhat protected from the peak of inflation seen in the US or in the United Kingdom, for example. Is linked to the fact that our energy prices are actually competitive. Once this is said, we've got too much of high inflations with a GDP growth which has not been satisfying. Remember, we've got Hormuz, we've got Ukraine, we've got an overall trade concern with the tariff kicking in finally after a year and a half being implemented. So I'm not going to tell you that the horizons is totally immune of concerns, but all in all, when it's related to the ability of a given country of 75 million inhabitants to basically embrace the AI revolutions, to also take full benefit of the new space, to also really take benefit of what's happening in the health areas where we got in excess of 15 announcements during these shows, I think we do part of the job. So let's not be overly optimistic. Let's realize that inflation is essentially present. That's why we need to have a resolutions to Hormuz Strait basically challenging.
Pascal, great to get some time with you. Thank you so much for joining us. Pascal Cagney there of Business France, talking about a massive investment, SoftBank and others putting in more than $100 billion, 93 billion euros of AI investment into France. Coming up, we're going to get you set up for your trading week. This is Bloomberg.
to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Bringing you up-to-the-minute global economic news whenever and wherever it happens. I'm Lizzie Vernon in Florence, Italy, and this is Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
This is Bloomberg Brief. I'm Matt Miller in New York. Let's get a look at what's ahead this week. First up, JOLTS data is coming out on Tuesday. We'll be watching that closely ahead of non-farm payrolls. Then earnings from Broadcom, importantly, as well as Macy's on Wednesday. We wrap up the week with that non-farm payrolls report, the May jobs report coming out on Friday. We'll be watching it very closely as well. In terms of what's going on in the markets this morning, NVIDIA, after launching a chip for the PC market, up 1.7%. Because it's a more than $5 billion stock, that is going to move the market on its own higher. We have Berkshire Hathaway buying Taylor Morrison for $6.8 billion. That's a 24% premium to Friday's closing price, so you're going to see likely that kind of gain today. And Hewlett-Packard Enterprise higher ahead of earnings today. They come out, though, after the market closes, so watch for them at 4 p.m. with Romaine and Katie. That's it for me. Surveillance is up next. This is Bloomberg.
Say that there's maybe a little bit of a bubble in AI. When you have companies with market caps of $5 trillion, you don't see any bubble there at all?
Whenever we have an acceleration in technology and people get excited about it, you have significant capital formation around new companies that are trying to capitalize on that opportunity. And, you know, we've seen this before through history, and you're seeing it now. It won't be a straight line. The opportunity set with AI is enormous. There will be winners and losers. And it's hard to pick the winners and losers now. And certainly a lot of the capital that's being deployed will not produce adequate returns. And a bunch of the capital that's being deployed will actually not produce any returns. But it's hard, it's hard to call the timing on these things. And the thing I'd point to just from a historical lens is in the fall of 1996. Alan Greenspan talked about irrational exuberance in stock markets, and the NASDAQ was at 1,300. And the NASDAQ peaked 3.5 years later at over 5,000. So, these things can go on for a long time, but ultimately, there are adjustments, there will be drawdowns, there'll be rebalancing, and just, it's hard to call it because the technology trend and the investment is real.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up to them in the news whenever and wherever it happens. I'm Chevrian in Seoul, and this is Bloomberg.
The equity market has been super optimistic. Earnings have been quite strong.
Investors have never been richer and more miserable.
We're in a high-risk bull market.
The big issue is positioning. So positioning overall still is pretty subdued.
Just stay involved and look how your equities have done.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Monday, looking to build on a 9-week winning streak. The global AI trade powering equities to fresh all-time highs as the White House is keeping investors on U.S.-Iran deal watch. Former Fed Chair Jay Powell has a warning for the central bank. The Fed is facing a credibility test.
We heard for the first time from Governor Powell, I can't even say governor, I was Governor Chair Powell, Jerome Powell, in his first commentary since becoming governor, talking about how it would be a real devastation to the Fed's credibility and independence if a president were to fire anybody on the Fed, because it would set a precedent for any future president to come in and fire another Fed official. Is this about Lisa Cook? Is that what he's waiting for? I mean, people could talk about that. It does highlight, though, how fraught this moment is for them, given their dual mandate, very much in conflict with a lot of job opening for the president.
He doesn't say the president's name, but clearly this is a message to President Donald Trump. Quote, like many other institutions, the Fed has been undergoing a stress test. And now, when it comes to who's going to be picking up that potential stress test, it goes on to the incoming Fed Chair, Kevin Warsh.
None of this helps Kevin Warsh, none of it at all. The noise around the incoming Fed Chair is getting louder and louder, but ultimately we are only here because of the ill-advised attacks from the president on the institution, and without them, we wouldn't be here, and the noise would be dialed a whole lot lower for the new Fed Chair.
I hate this story. I'm not going to lie.
I despise it too.
I hate it because it doesn't leave us with any insight into policy that is going to be crucial in understanding the moment that we're in. We are in economic transformation when it comes to both the AI situation as well as the labor market dynamic that's going to be very much in focus this week. You put the overlay of Fed independence over it, it just becomes incredibly complicated and just an intangible story, and you can feel the market kind of grappling with
Would
that.
Jay Powell even be getting this award if it wasn't for the president jawboning him for years? He received an award for the John F. Kennedy Profile in Courage. He only has that because many perceive what he did was standing up to the White House with these unauthorized and, your point, ill-advised attacks.
We need to talk about policy and the prospect of changing policy. The Federal Reserve, of course, in focus, dropping the easing bias. Check out the ECB and the commentary coming from Isabel Schnabel as we wake up this morning. The risk of de-anchoring inflation expectations is rising. A more hawkish member of the ECB. We can no longer look through this shock. There are many on the ECB positioning now for a real rate hike this month, in the next few weeks.
It's 89% priced in when you look at market expectations. So if they didn't hike rates, it would be a pretty big shock. You start looking at the economic outlook for Europe versus the United States. You can see it's much lower over in Europe. In the U.S., do the U.S. Central bankers have the luxury of doing the same thing or potentially taking a step back? What is the risk for runaway inflation? Is it just hinged to what's happening in the Middle East?
They should just sit back and relax. It will all work out well in the end. The words of the president overnight. Crude with a bounce, up 4% this morning. WTI at 90, Brent crude at 94. Up across the board, up by 3 percentage points on Brent crude, if you can get those prices up for us in the control room. You see that pick up off a 6-week low on Brent and WTI. More strikes as well over the weekend. We've seen a period of this now building up over a week.
More clashes over the weekend. What did we hear Friday from the Chevron CEO, Mike Wirth? There's actually been more clashes than have been reported when it comes to the Strait of Hormuz. Remember 1 week ago, Sunday evening, Axios had this report that we were imminent, very close to a deal of a 60-day ceasefire extension. Well, a week has passed. Now, the president is saying that most people know and understand that it's, quote, much tougher for me to properly do my job and negotiate when political hacks keep negatively chirping. He is leaning into the fact and insinuating that it has become harder because individuals are pointing out that gas prices are going to be higher and the energy space is going to become a lot more challenging for him.
You have the president, you have Kevin Hassett coming out and saying that oil prices are going to be lower. You have the heads of the major oil companies in this country saying we could run out of fuel very shortly. You have Iran saying whatever they're saying, and the market's left wondering, who do we believe? And that has been the scenario that we've been in for quite a while.
AI by the Kospi. Every single morning, you want to check in on the AI trade, the Kospi, South Korea. Here stateside, that's the first thing I'm looking at. How is the South Korean equity market performing? Up 4% overnight. Up by, I think, more than 20% last month, and up by more than 100% so far this year. Just an unbelievable rally so far this year.
So what's the pain trade? It going down or it going up further? Because right now an increasing number of people are saying it's going up further, given the fact that everyone's saying, okay, 102% so far this year, that's enough. You can back it up. It's maybe a little bit overplayed. We're talking about 1999 type behavior, and other people are saying, but this is different. You got to go in. And that ultimately could be the riskiest trade of all that some people could see as the pain trade.
We'll spend some time on this a little bit later. I saw a story on the Bloomberg terminal this morning about a tech fund interested in buying SK Hynix. And I was sitting here thinking, you're a tech fund and you don't own SK Hynix? Like, you've been sitting this out? There's more still to go? So I don't know which side the pain trade is right now, but certainly if you haven't owned that this year, it's been painful.
I agree. There are different ways to look at that because that fund has actually outperformed. So you could say, on one hand, oh, they're just chasing the rally. On the other hand, you could say they could be the strong ones or sort of the bold ones to go in, chasing gains that look implausible to really put on a repeat performance.
Nasdaq futures this morning up by 0.2%. Coming up this hour, we'll catch up with Aaron Cannon of Clear Harbor, with Wall Street chasing fresh highs into June. Sarah Kunz of Clio Capital as NVIDIA jumps into the PC market, and Torsten Slock of Apollo on how the AI boom could fuel payroll gains. We begin this app with tech driving stocks to new all-time highs. Aaron Cannon of Clear Harbor Asset Management writing, markets are behaving as though investors believe that economic growth and AI-driven productivity gains are overwhelming geopolitical concerns. Aaron joins us now for more. Aaron, good morning.
Good morning.
Are markets misbehaving?
Good question. I mean, I think, clearly there's a lot of exuberance on the tech side, Jonathan. But there's also, the elephant in the room, and we talk about it almost every day, which is AI. And it sort of transcends both the economic picture, the earnings picture, as well as the Fed picture. How is Fed Chair Warsh going to deal with that elephant? He has the inflation mandate, he has the employment mandate, but then he also, I think, suspects that, or at least the market does, that long-term AI will prove to be disinflationary, that the employment picture could actually worsen as a result of this AI trend. But on the flip side, we see greater productivity and greater growth. We ultimately think that that's probably an easing bias on the part of the Fed, and that this market still has momentum, that the memory component of technology, which has really driven so much of this exuberance, has some legs. That maybe memory chips are more of a disposable concept, a consumable concept, that we can see greater growth, that we're not in the 8th or 9th inning, but perhaps we're in the 2nd or 3rd. So it's really an interesting time. We have massive bifurcation also in valuation within the AI tech sector.
You think they stick with the easing bias?
I do. I mean, I think Warsh is looking at both of these things. I think it's challenging because we have inflationary pressures in the short term with AI. And so I think Warsh probably will have a tendency to sort of pause, wait, and observe, with his view, I suspect, that AI in the longer term will prove to be disinflationary. This whole concept of median inflation, adjusted inflation that he's looking at sort of speaks to this element.
If they maintain their easing bias, my bias would be to buy stocks and sell bonds. What's yours?
Yeah, I think you're right, Lisa. And, the stock market trading at 21.5 times multiple here in the U.S. Is not particularly expensive when you look at the 26% earnings growth. I mean, I think that there is a challenge on the part of the Fed and the Treasury. When you look at the steepness of the yield curve and the general rise in nominal rates, you have, the long bond at 5%, 10s are almost at 4.50, 2s are at 4%, and you have the Fed funds rate at 3.75. So the market's sort of saying, oh, you know, there's a greater likelihood maybe that the Fed raises rates here if you look at 2-year Treasury yields rather than reduces rates. But my sense is that Warsh is going to probably want to lean towards the longer-term effects of this AI elephant.
So this would be counter to a popular idea, which is the reason why you're saying and pointing out that in markets you are seeing people price in rate hikes, not necessarily rate cuts, which leaves us with the question, what's the pain trade, higher or lower? And ultimately, we've seen hedge funds covering shorts as quickly as they can, the fastest pace in 6 months. You've seen people kind of rushing in. SK Hynix, suddenly a buy by a tech fund. I mean, is this sort of chasing things higher because ultimately that is the pain trade?
Well, it sure feels that way. When your bonuses at these hedge funds and these long-only asset management firms are predicated on performance relative to a given benchmark over a 12-month period that starts, you know, on Jan 1 and ends December 31st, this is a challenging time to sort of say, well, you know, we want to be cautious, we want to be patient, we want to be prudent, we're focusing on fundamentals. With that said, the memory sector, which is driven, SK Hynix, Samsung, Micron, you know, they're trading the mid to high single digits. Now, I know you can look back and sort of at previous semi-cycles and say, well, when they look cheap, that's the time to sell. When they look expensive, that's the time to buy because the E is moving around. But, you know, this may be a much more pronounced period for the AI trade, for the semiconductor build-out. When you look at the fact that semiconductors are playing such a substantial role in the lives of all of us here and people around the world, you know, to what extent is that cycle going to be longer, and perhaps the peak of that cycle could be significantly higher than in the past?
Aaron, I know that oil prices are under $100 a barrel for both Brent and WTI, but we had warnings last week, not just from Chevron on this show, but Exxon also was talking about inventories reaching dangerously low levels. They're seeing north of $150 a barrel. Could you keep the easing buys at the Federal Reserve if we see oil prices spike?
Well, unlike the ECB, our mandate in the U.S. is the employment picture as well as the price pressure. And I think history would argue that rising energy prices haven't been a triggering mechanism for raising rates in the U.S. And so I would be surprised if that ends up sort of nudging Warsh and the entire FOMC to take a much more hawkish bias here going forward.
But what if it bleeds through the rest of the supply chain?
Yeah, no, for sure. I mean, certainly consumer confidence is being hit. We saw the data last week. It's the worst since mid of 2020. So, you know, consumers are on their heels. We have mortgage rates at 6.75%. And we have, of course, gasoline prices that have risen. I think there's also another element here, too, where the consumer has their job, but they're worried about what's around the corner with AI. That is altering the behavior, perhaps, of the consumer going forward. I still have my job. The checks are coming in each month. But what happens next quarter and next year? And that could start to negatively impact consumption.
I think also it would depend on other variables. I'd be very interested to see, if that happened, how certain policymakers would respond. Would they try and offset it fiscally? Then I'd really worry at the central bank. Or would they allow it to rip and create the demand destruction that would ultimately mean the Federal Reserve could look through some of this? This middle ground is what gets people nervous. Matt Lazzetti of Deutsche Bank was talking to us last week about that. This middle ground where you're sort of muddling through, energy is elevated, it's not creating demand destruction just yet. I'm talking about the United States here. So they're looking at growth that's still robust, driven by AI capex, and they're looking at inflation that's at multi-year highs. It makes it very difficult to know what to do in this moment.
Yeah, people find it really annoying that gas is so expensive, and they'll complain about the fact that it costs $70, $80, $90 a barrel, $90 to fill up their tanks, but they're still driving. They haven't curtailed any of their behavior, and that's the difficult part for the Federal Reserve.
Aaron, good to see you. It always is. Thanks. Thanks, buddy. Thanks for being here. Aaron Cannon there of Clear Harbor Asset Management. Equity futures right now in the S&P up by 0.25%. We are on a 9-week winning streak on the S&P 500. So what happens if we make it week 10? I've checked this stat a million times just to make sure it's right. If you make it week 10, it's the longest weekly run we've seen going back 40+ years in market history. Just incredible. Have not had a weekly decline since March.
If we make it week 10, as you've pointed out, we'd have to go back to 1985 for a similar type of streak. It's only happened a handful of times in history. Again, this goes to the anxiety people have. Is this too good to be true, especially because it's driven by a number of stocks, not necessarily the entire market?
Futures up by 0.25% this morning with an update on stories worldwide. With your Bloomberg Brief, joining us this morning is Isabel Lee. Hey, Isabel.
Hi, John. President Donald Trump says talks with Iran will, quote, work out well. That's despite clashes between the two nations near the Strait of Hormuz. The president reportedly requesting several amendments to the most recent deal. The European Union is considering a temporary freeze to the price cap on Russian oil. Sources telling us here at Bloomberg the current price threshold is around $44 per barrel and is due for review in July. And SoftBank overtaking Toyota as Japan's most valuable company. Shares of SoftBank climbing 14% in Tokyo trading, pushing its market cap past Toyota's for the first time in more than 2 decades. That's your Bloomberg Brief. John.
Isabel, thank you. More from Isabel in about 30 minutes' time. Up next on the program, a long road to a deal.
I think Trump is getting what he wants, but this is not a deal that really ends the war in a satisfactory way for the United States.
They're still waiting for a deal. Henry Trace of Vader Partners joins us next. Live from New York City this morning. Good morning.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Massive week for jobs data. Check it out. Coming up tomorrow, the JOLTS report. Wednesday, ADP. Thursday, claims. Friday, the big one, the headline act, is the payrolls report. The estimate in our survey, a really punchy, quite decent 89K. Wide range. It's always wide these days. The high is 125, the low is 50. But anything above 50, most economists will tell you, in this economy, that's okay.
Yeah, and you add to it potential revisions. If you do have a solidification of the relatively robust number that we got the prior read, how much does this create a problem for the Fed? You were talking about the dual mandate before in terms of inflation and the labor market. If the labor market shows signs of strength, how much does that drumbeat increase to potentially hike rates?
Looking ahead to the main economic data points of the week ahead of us. Equity futures look like this. All-time highs coming into Monday. Record highs coming into June. Up by 0.25% on the S&P, on the Nasdaq, up by 0.27. In the bond market, you'll notice yields climbing just a little bit this morning. 2s out to 30s, up 3 basis points on 10s, just sub 450. This move in crude setting the tone this morning. Just a bit of a bounce. WTI and Brent up by more than 3%. Under surveillance this morning, a long road to a deal.
I think Trump is getting what he wants. This is a deal about gasoline prices at the pump in the United States. Trump worries, obviously, about the price levels people are paying. He's worried about the effect on inflation. He's worried about the effect on the elections in November. But this is not a deal that really ends the war in a satisfactory way for the United States.
So here's the latest this morning. The president saying an interim peace deal with Iran will, quote, work out well. Traffic through the Strait of Hormuz remains a key sticking point, with Iran doubling down on plans to control the waterway. Bloomberg's Tyler Kendall has the latest. Good morning, Tyler.
Hey, John, good morning. Well, the U.S. and Iran did continue diplomatic efforts over the weekend as President Trump is now urging patience. He went on in that post on Truth Social to say that constant speculation is not helping and that everyone should, quote, sit back and relax. We did hear from some Iranian officials over the weekend who confirmed that the two sides continue to trade proposed amendments on the potential agreement, but they say ultimately the talks could still collapse, and that appears to be partly because there are still these huge sticking points between the two sides, as Iranian state media reported over the weekend that the current draft agreement would give Iran the, quote, exclusive authority to control which vessels transit through the Strait of Hormuz, something we know is a non-starter for the U.S. And in fact, we heard from CENTCOM over the weekend saying that they are bolstering those efforts and that they are sharing information with vessels to help them transit through the strait, though at this point they're not going to deploy military assets to serve as escorts. And this has actually helped to bolster, according to sources telling Bloomberg News, ship owners' optimism when it comes to the uptick in traffic in the strait, though of course it is still well below the pre-conflict levels, as data analyzed by Bloomberg News shows at least a quarter of non-Iranian tankers have made their way through. Though, John, we know that the risks still remain and that tensions are incredibly elevated, as we've now seen a series of strikes exchanged in recent days. Just overnight, John, CENTCOM did confirm that the U.S. hit Iranian radar and drone sites, with the IRGC saying that it retaliated, and Kuwait reported that ballistic missiles entered into its airspace.
Tyler Kendall with the latest in Washington. Tyler, you too should, quote, sit back and relax. Should you be relaxed about this situation? This headline just crossed in the Bloomberg terminal moments ago. The drip feed about what is in and what is not in this particular draft deal continues to pour through.
Right, so Iran is saying that the uranium transfer disposal is not in the U.S.-Iran draft agreement, which means it does not meet the critical red line this president has talked about when it comes to why he even began strikes in Iran.
Henrietta Trays of Veda Partners has this to say: investors should not count on Congress reining in the president on the war, particularly with gas prices now down to a fairly inconceivable $4.35 per gallon on average. Henrietta, I'm right there with you. The idea the strait's been all but shut, largely shut for the last 3 months, and we're at $4.35 is quite impressive. Your thoughts on this deal? What's holding things back from getting the sign-off from the president?
It's still the tax policy. Obviously, the nuclear issue is a problem. The physical blockade, the mining, the drones, the mosquito boats, all those issues are real, but it's always the tax policy, as we've been saying from the jump. And it's the reality that if the IRGC controls the strait, then you need to work with them. And they are a state sponsor of terror. So we've been in this ceasefire for, 2 months now, Operation Economic Fury, with Secretary Bessent going back and forth, imposing some of the largest sanctions we've ever seen, offering sanctions waivers at the same time, has created this confusion around whether or not we can work with a state sponsor of terror and then ultimately allow them to tax an area that they now have military control over. It's a tax problem, and those issues take months. I mean, just think about how long it took us to write the One Big Beautiful Bill, or the 1986 tax reform, or the Tax Cuts and Jobs Act. This stuff takes forever. And I think for the investment community, the most important question is, what are we going to do about gas prices if we're concerned about consumers? And the reason I say it's inconceivable that we see rates this low is because we're still under that $5 threshold. And as long as we're under $5, Congress is not going to go out of their way to pass a gas tax holiday. You know, the good news is they also won't do an export control ban. Hopefully the administration won't do that. But we're not in that urgent place, and that's very unexpected, not what I would have anticipated.
Henrietta, when you speak to lawmakers on Capitol Hill, do they tell you that that $5 a gallon mark is when potentially we could see legislation to help ease consumer pressures?
That's exactly it, Emery. And that goes all the way back to, I would say, the very beginning of the war. I think the first time I heard that was up on the Hill with some very solid Republicans who were hearing more about the president personally. We were dealing with that, Christ the healer. If you remember that Instagram post or the Twitter post, it really was $5 gas in June. So what's interesting here is those were the two variables that lawmakers and their staff would tell me were most important. We haven't hit $5, but we did get to $4.56, and now we're down to $4.33, but we're in June. So they're in this stalemate where we expected both of those things to cross at once, and only one of them has. Only time has gone by. So I was talking to a House Republican staffer yesterday, one of my favorite people in the world, and she said, be mindful that there's only 18 legislative days until the August recess. That's really what you need to know.
When it comes to the Strait of Hormuz, the president once said the U.S. and Iran could actually manage it in a JV, a joint venture. Can you see Congress passing on that?
No way. And more importantly, it's not just America that's involved here. I mean, I talked to a lot of other nations and their trade council and their trade negotiators as well, and they do not have any interest in normalizing relations with a state sponsor of terror. You know, they see the IRGC as an entity that they don't want to work with. They don't support the fact that the president got us into this mess, and they're really slow walking their response because they do not want to communicate with them. These are Western banking nations, Western banking corporations, Western banking shipping, and they don't want to violate the OFAC laws. They want to continue to perpetuate the Western banking system, and they're also a huge holdup. Their meeting that I think is most important is going to be in Ankara, July 7th and 8th, and we'll see if there's any movement, but they don't want to pay the toll, and that's really important.
This market has been so humbling over the last 3 months, that's for sure. Henrietta, thank you. Henrietta Trades there of Vader Partners. Humbling for us all. Sitting there at the start of March, worried about a prolonged conflict with Iran and the Strait not reopening for several weeks, and here we are 3 months later with equities up by more than 20% on the NASDAQ, up 10% on the S&P, and high-yield credit spreads tighter by more than 30 basis points over that period.
It's mind-numbing, and it's the reason why the pain trade's been higher, because it runs counter to what you would assume when you take a look at oil prices and what you see on the ground. The question that a lot of people are asking is, are oil prices subdued because of jawboning from the central bank of President Trump? Or are oil prices subdued because there is leakage? There are oil tankers that are getting out, and actually the supplies are much greater than people expected. The answer to that is actually really important and inconclusive at this point.
I think it's a little bit of both, though. At least in the paper market, you see it whipsaw the second you have a truth from the president. Sometimes in the past few months, it's been gaps that we've seen an entire year. But the physicality of this, you have to think. Some of it is lower because we already know ADNOC is getting some of their material out.
The jawbone has been pretty impressive, the effect it's had, but also the inventory drawdown has been a lot more effective than maybe some people in the commodity market expected it to be. Up next, Sarah Kunz of Clio Capital as NVIDIA introduces a new PC chip.
exploring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch season 2 on all these lovely channels.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
What a winning run on the S&P 500 on a daily basis, 7 days on a weekly basis, make it week 9. Equity futures this morning, setting things up in the right way for week 10 maybe, long way to go. Up by 0.25% on the S&P, on the Nasdaq up by 0.3. In the bond market, focus on the front end of the curve. Just pick out twos, we'll isolate that point on the yield curve. Twos last week, the biggest weekly decline in yield terms that we've seen through the year so far. And the first weekly decline that we've actually seen come back to April. Yields this morning a little bit higher, up by 2 or 3 basis points. Setting the tone for that move lower was crude last month and last week, down by more than 10%. Crude this morning setting the tone for the move higher. Crude bouncing by more than 3%. Brent back at 94. WTI back in the 90s. More strikes over the weekend and no deal. Promise of a deal, but no deal.
Yeah, even CENTCOM coming out this morning saying it conducted self-defense strikes on Iranian radar and command control sites for drones. So giving you a sense that kinetic activity very much is still continuing in the region despite the ongoing ceasefire, at least in name only. A question going forward is going to be how much will the inflationary backdrop be dictated by oil prices and how much will it be driven by the underlying strength in the economy? And that's what the labor market data this week is going to be really important.
Payrolls this coming Friday. Crude right now 93.99. Counting you down to the open about 3 hours away with your morning movers. Yahara has more. Hey, Yahara.
Hi, John. We start with NVIDIA. Those shares are moving higher in the pre-market, up more than 2% after the chip giant unveiled a new AI-focused processor for Windows laptops, expanding NVIDIA's reach beyond data centers and into everyday consumer devices, just as the next generation of AI-powered laptops rolls out. And for that reason, you are seeing AMD shares and Intel under pressure, some 5% as NVIDIA encroaches on one of their most important businesses. Turning to some deal news, we are seeing Taylor Morrison shares shooting up 22% in the pre-market after Berkshire Hathaway agreed to buy the home builder in a $6.8 billion cash deal. What's notable is, of course, this is coming during a tough time for the home builders, of course, due to affordability issues. So it's interesting that Greg Abel has chosen this area as his first major acquisition under as CEO of Berkshire Hathaway. And we end on shares of Wise. This is a payments and money transfer company. Shares are plunging nearly 17% in the pre-market after the company confirms it's responding to questions from prosecutors in Belgium as authorities there investigate whether Wise accounts may have been used to launder money tied to fraud, corruption, and drug trafficking. John.
Yahara, thank you. Thanks for the update. Berkshire buying a home builder gets your attention. Interesting moment to do just that.
Especially because it is the first big move by Greg Abel. And guess what? They're looking to buy affordable homes. They're talking about the affordability issue. This comes ahead of what a lot of people think will be subsidies. So how much are they trying to get ahead of some of those subsidies and get in on a tax advantage strategy? And how much can they merge with their Berkshire Hathaway realty size that you see everywhere? You know, how much do they unite those efforts?
A major policy push could be on the horizon here going into the 28th general election, which is not too far away. On our radar this morning, the US and Iran trading fresh strikes near the Strait of Hormuz. both countries confirming talks for a potential deal still underway. The president posting, quote, "Sit back and relax. It will all work out in the end." Elsewhere, the former Fed chair, Jay Powell, addressing the risks of public pressure from the White House on the central bank.
If any administration finds a way to remove Fed officials over policy differences, then future administrations will do so as well. The Fed's credibility would be lost.
The remarks coming as the Supreme Court weighs the future of Fed Governor Lisa Kirk, who President Trump has pushed to remove. And finally, NVIDIA, making a push into the PC market, the world's largest company, introducing a new chip aimed at competing with Intel.
The developers are so excited about it. This is an incredible computer. All of the acceleration, all the software capabilities associated with it, working with every developer to make it incredible for all of you.
The chip set to debut in laptops and desktops from leading PC brands later this year.
Welcome RTX Spark Superchip, which is going to debut soon in computers that will probably be outside of your price point because these are going to be very high-end computers, at least at first. The first question could be, why are they doing this? They already own the data center outcropping. Why do they need to dominate the likes of Intel and AMD's landscape? And the answer could be because the way that we're all going to consume some of these AI tools will be on our personal computers. Is this going to be the democratization of some of the large language models, and how much are they trying to make sure that they did what Apple did, which was create an ecosystem impenetrable to other competitors, saying if you want to run our chips with respect to data centers and large language models, you need to have our chips for our PCs.
And it's a heavily penetrated market already. So the first question is, why are they going back into this? They tried to do this a decade ago, but it's because of AI. And everyone's going to have this new, faster replacement cycle. And NVIDIA wants to be a part of that. I find it interesting because they're going to be taking market share likely away from Intel. The U.S. government has a stake in Intel. And I would love to know what they think about this move from Jensen Huang, you know, one of the president's so-called best friends.
He won't be happy with that move. Intel in the pre-market down 5%.
It's pretty logical if you think about that was the one moat that they had, that NVIDIA is coming after their lunch. At the same time, if they create something that is internationally competitive, does that go to the national champion type strategy that the president has tried to eschew?
Sarah Kunz, the Clio Capital, writing the following. Here's the quote from her. If the data center play cools off, this is something NVIDIA can point to as part of their continued ability to dominate. Jensen remains the king of the deal optics. Sarah joins us now for more. Sarah, just picking up on that last point of that quote, and welcome to the program. Do you believe this is just optics, or is there some real substance here?
I mean, it's real. There will be real chips. Jensen does what he says he's going to do. That being said, I don't think we've heard a lot about the financials. It is unlikely to be transformative to their status as the world's biggest company. I think it's a nice to have and a little bit of a flex.
Flex for what purpose? Is this a flex to try to say to Intel, AMD, hey, remember who's boss? Or is it a flex when it comes to the way that we all absorb chips normally, which is in our phones and in our personal computing devices?
I think it's a reminder to the street that whatever direction AI takes, because we do know that on-device inference has gotten a lot of funding, a lot of attention from venture capital investors. It sort of helps take some of the pressure off of the backlash against data centers. And so I think that Jensen just wants to remind everybody that he is going to be everywhere that AI goes.
NVIDIA's shares are only up about 13% so far this year, and I say only because you're looking at the likes of SK Hynix up some million%. I mean, if you start looking at the zeros and trying to calculate it, it becomes mind-numbing. How much is this Jensen Huang trying to say, you guys are looking past us for meteoric growth, but we have more meteoric growth ahead of us?
Absolutely. I mean, it is really hard to anniversary the kinds of years they've been having. I think we see something similar sometimes with Alphabet as well, where they are, in my mind, the clear undisputed leaders in AI. But because they're already doing so well, it can be hard to sort of get the market to continue to be as excited about them when they can go look at something like SK Hynix and say, oh, we can take this from a somewhat undervalued Asian market competitor to a borderline overvalued, right, U.S. stock that everybody wants to buy into. And so the price action gets more muted as your company sort of just goes from strength to strength versus starting from behind and really kind of going up and to the right.
Sarah, what do you think this does for Intel? How much does this hurt them?
I'm not sure it'll hurt them. I think that the reality is that these are different businesses in terms of where their core businesses are. If anything, I think that it could actually help people pull back and say, wait, are we properly valuing the Intels of the world? Because we've sort of put them a little bit to the side and said their chips aren't as high tech. This isn't where the future is. It's kind of NVIDIA or bust. And so if anything, I think that longer term, that chart could actually start going back up.
You mentioned in your original note the 90s are back in this summer. Well, Intel was king in the 90s. PCs were king in the 90s. Do you see this market, people saying NVIDIA is getting into this because potentially people are going to have to upgrade because of AI? Are people going to be using PCs in the future?
Yeah, I mean, day to day, right? We maybe aren't using PCs all the time. I'm talking to you from a laptop right now, right? We don't necessarily use the sort of big desktops that we grew up with, but a lot of enterprise does. And we saw that with the Mac Mini kind of surge because people wanted to get their hands on them for Claude. And so while we don't think of this as kind of a consumer play, I think that certainly in enterprise, yes. And then the other thing about these inference chips is they have a big play in phones as well, and that's something we certainly all use all the time.
Hit pause on a freak out with that Intel move of 5%, just down the corner of my eye, just looking at this chart of Intel, up by more than 210% on the year so far.
Yeah,
phenomenal.
Yeah. It's not exactly going to kill the people who've been in Intel from the beginning of the year. And if anything, to Sarah's point, it gives it new cachet. It's such a hot market, even though it's an old market, that even Jensen Huang wants to get into it. Well, you know, we got to go where the cool kids are going.
Sarah, can I just finish on something a little bit more juvenile? The dancing. The dancing reminds people of Microsoft and Barmer and others too. Is that kind of thing indicative of anything about where we are in this point of the cycle?
You know, I think that we are at the hero worship stage. The reality is that Jensen, whoever helps him sort of craft his image, they are masters at it. He is the Michael Jordan of tech CEOs. He really, truly tends to not miss. And so if he is dancing, I suspect that culturally, that is something that is going to be well received.
Sarah Kunz of Clio Capital. Sarah, thank you. Appreciate it. Unlike Barmer, most people, even at the time, thought that didn't look cool. Right? Whereas Jensen seems like he's having a genuinely good time. And it's hard to say that Jensen doesn't look pretty cool when he's doing these things.
He's not trying to look cool. He's like...
He's having fun.
This is not exactly somebody who's like trying to get slick moves. Would you rather that, or would you rather the article that came out about Bill Gates having a Mr. Rogers look that everybody was talking about to try to make sure that he was as vanilla as possible and unthreatening? I mean, Jensen Huang, it seems like, is kind of owning himself. I don't know. That's just
Jensen on a food tour. He's having a good time.
I mean, yeah.
Credit to his wife and his daughter, who apparently I've heard him in interviews talk about they're behind his look. So they were the ones that I think said, you know, try this leather jacket look.
You can't make that up.
I mean, he's the guy at the party actually enjoying himself.
Yeah, and, and it kind of goes to where he was as a young entrepreneur. That's kind of who he was as well.
I'm never the guy at the party actually enjoying themselves. I'm looking forward to leaving without anybody noticing.
But
really
you never pretend.
Go and say
You're not
hello.
even at the party.
But yeah, I was like about to say, like,
Lucky
you're not even
no.
Let's get you an update on news elsewhere this morning with your Bloomberg brief. It's the hours, Isabel. It's the hours. Isabel Lee has more.
Hi, John. Celebrity lawyer Abelardo de la Espriella unexpectedly winning the first round of Colombia's presidential election with almost 44% of votes. The results put the conservative outsider in a strong position to become the nation's next president. Asia's largest low-cost carrier, Indigo, reporting an unexpected quarterly loss. That's amid disruptions linked to the Iran war. The net loss was around $267 million, compared with analyst expectations for a profit of $197 million. Goldman Sachs sees two-sided risks for oil as weaker demand competes with supply losses tied to the Iran war. The firm says April sales data in China and Western Europe imply about 2 million barrels a day of downside risk to demand, which could knock roughly $10 a barrel off its $90 4Q Brent forecast. That's your Bloomberg Brief. John?
Isabel, thank you. More from Isabel Lee in about 30 minutes' time. Up next on the program, AI's Labor Reckoning.
People talk about AI reducing jobs, complete nonsense. Because the output is so incredible, people want to hire more. This is going to show up in our economy somehow soon.
Torsten Slok of Apollo agrees. He joins us next, live from New York City. You're watching Bloomberg TV.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know, you good at your job, bro. Like, this is actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. Mm-hmm. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
You know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Ahmed, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Stocks adding to gains, all-time highs on Friday, record highs to start June. We look like they're up by 0.25% on the S&P, up by 1/3 on the Nasdaq 100. Under surveillance this morning, AI's labor reckoning.
People talk about AI reducing jobs, complete nonsense. It's causing more software engineers to be hired because the output is so incredible. People want to hire more software engineers. This is going to show up in our economy somehow soon. And so the first thing is useful AI has arrived.
So here's the latest this morning. The NVIDIA boss, Jensen Huang, saying concerns around AI's impact on the workforce are overblown. Torsten Slok of Apollo agrees, writing, there is zero evidence of job losses because of AI. Non-farm payrolls for May could come in significantly higher than the around 90K expected. Torsten joins us for more. Torsten, good morning. Good to see you. What are people getting wrong?
Well, I think what people are getting wrong is this whole notion that it's not only about individual companies, it's what's happening at the macro level. And at the macro level, it's become much easier to open a business. You see this in the surveys from the census of how many businesses are created every week is exploding higher. You're also seeing data from Stripe showing you the number of solo founders of new businesses is also exploding higher. So there's a lot of new businesses that are created. Yes, some of them will probably only be one employer, namely the founder, but a lot of these businesses will ultimately result in a lot more jobs. So it's not only about the displacement that there might come on some micro levels, it's much more about the aggregate where we have a significant increase in the number of new businesses that are formed.
It doesn't help, as you know, that some of the individuals at the frontier of this massive push are talking about a white-collar washout when it comes to the labor force. What's your message to them?
Well, yeah, this has started actually already in the spring of last year, where there was a lot of people beginning to talk about, well, within 1 year's time, we will already have layoffs and we'll already have entry-level jobs that may no longer exist. But here we are with ADP on a weekly basis for the last 8 weeks, producing 30,000, 40,000 jobs every week, jobless claims still being low. ISM today, over the last 6 months, ISM has gone up. We're above 50. ISM is likely going to be also high today. And now we have some very strong tailwinds, not only from the AI spending boom, but also from the One Big Beautiful Bill. This economy really is on fire in the sense that we both have strong growth and we also have upward pressures on inflation. And now we also have, of course, the ultimate risk that if AI does result in more job growth, it will be really the miracle drug that both creates higher productivity and also creates higher job growth.
That can be true at the same time that John's assertion can be true, which is that white-collar jobs can decline as a proportion of overall jobs. If you look at the job growth and where it's come from, it's construction, it's manufacturing, it's in healthcare, it's in education, it's not in finance, it's not in media and media services. So how do you square those two ideas?
Well, if you look at also the unemployment rate, so now we'll get more data on Friday. If you look at the unemployment rate for people that are between 20 and 24 years old, That has exactly gone down in the last 6 months, also telling you that it's not the case that young people can't find a job. There's some issues around what type of job they can get, and yes, maybe they may not be getting initially the job that they wanted. There may be something also about expectations for young people when it goes into that discussion. But the bottom line still really here is that at the end of the day, young people are actually doing really well because the unemployment rate for young people is actually lower than where it was 6 months ago.
Okay, to build on that, the conversation yesterday among some of the people who might be entering the workforce in a not so distant future, plumbing. A discussion around becoming a plumber because you're going to make a lot of money in plumbing, but you're not necessarily going to make a lot of money going into white-collar workforce. So at what point is that the type of work that is going to be the future of a lot of the job creation? Is that what we're seeing right now in some of the data?
Yeah, but I'm also critical of this whole idea that white-collar workers are just going to say, oh, I got fired, I'm just going home in my basement and sitting here rolling my thumbs. Of course, those white-collar workers are going to say, hey, maybe we should open a business, maybe I have some friends, maybe I have some connections from my last job. And I think that that's exactly what's going to make it a lot easier with large language models, with agents, to build a new model. And that's exactly why business formation is going up. That's why the number of solo founders has also been going up. And that business formation will ultimately also result in a lot more job growth.
Could we touch on something you said about that might be about expectations of those entering the workforce? Are you saying that potentially younger generations, if they don't like some of the characteristics of a job, they are going to not go into the workforce and potentially maybe start their own business or do something else?
Well, there is certainly a lot of course, discussion around, well, is it because young people can't find a job? They can certainly find a job. But then why are we having this discussion? Maybe exactly to your point, Anne-Marie, maybe we are actually hearing more young people just not having met their expectations of where they could get a job. In other words, maybe they didn't get the job that they thought that they could get. So yes, maybe there is something also when it comes to the expectations of younger households and younger people when they enter the labor force.
What you're describing to me sounds like entitlement, but we'll leave it there. I want to ask you another question. Do you think the Federal Reserve has been, quote, undergoing a stress test?
Well, I saw Jay Powell, of course, yesterday. He did say at the last press conference he was going to keep a low profile, but this obviously is generating some attention here today. So I do think that it is clear that, of course, we'll have new leadership. That leadership is, in my view, absolutely going to be completely doing all the right things and moving in the right direction. But it is a little bit noteworthy that the outgoing chair here does bring up issues just in the, not in the 11th hour, but a few minutes after midnight, exactly this discussion around, well, okay, let's now give the new Fed chair a chance and he can then run with it, which he will do in a very good way.
Kevin Walsh, I think, was hopeful that we'd see the disinflationary impact of this massive push towards this technology and they'd be able to have easier monetary policy. Where do you stand on that, Torsten?
Well, we probably have to wait a little while for that because initially the AI boom will certainly be inflationary. It's very clear when you look at semiconductor prices, when you look at energy prices, when you look at labor, meaning what is the price of constructing a data center. And it also, of course, when you look at the broader equipment prices, it is also very clear that this is going to be inflationary. On top of the upward pressure on inflation coming from the lagged effects of tariffs and, of course, also higher energy prices. So initially, in the initial phase of the build-out, we should actually expect the AI data center build-out to be inflationary rather than disinflationary.
Can we finish on the price of AI? There were some CEOs, not all, but some CEOs excited about the prospects for agentic AI and replacing the human labor force with that. When they start to realize the actual cost of this, will they have second thoughts on replacement?
Well, this is also a huge discussion around token demand and token usage. And at the end of the day, token usage is not necessarily the same thing as creating higher productivity. So that's why businesses, as we speak, are exactly trying to figure out how much token demand do we have and do we ultimately need? And will it pay off? And will the price of that token demand also be worth it relative to the cost of labor? So it really is a transition where we will need to figure out over time exactly what does the endpoint look like. Are we going to get to a point where we'll be much more productive? And will we, in my view, probably need more labor and not less labor, especially in the aggregate from the macro perspective?
You're pointing to a very much inflationary backdrop, and this comes ahead of the labor market report that we get on Friday that could be hotter than expected if we see the same kind of trend continue as we saw last month. What do you think the Fed's response will ultimately be, given the fact that no one has the appetite to raise rates?
Well, this is, of course, the challenge that the expectations for a long time in the dot plot has been that rates are going down and the Fed is going to cut. And now markets and Fed fund futures are slowly beginning to say, well, maybe there could be a hike coming. And we all know that if there's a hike coming, then it doesn't come alone. Hiking cycles are never just one hike and that's it. It will always be 3 or 4 hikes or more. So that's why the market is debating with itself in rates. Well, if there is a rate hike cycle beginning because of these factors that we both have a low unemployment rate and at the same time we also have pressure on inflation, then all those things would certainly argue for the risk to the upside, namely that rates are going to stay higher for longer.
The picture that you're painting of both an inflationary build-out of AI plus a labor market that's poised for expansion, not contraction, due to the extra economic activity, is one that could call for a rate hiking cycle. What could you potentially see? I mean, what is increasingly your base case going into 2027?
Yeah, because this is the Fed's dual mandate. The Fed has two goals, exactly as you're saying, Lisa, namely the unemployment rate, and that's been going down and is likely to, according to the consensus, continue to go down. And inflation by the end of the year is still, according to the consensus, 3%. So if you're 3% inflation and a very strong labor market, that indeed opens up a much higher likelihood that we will see a stronger economy. Also because of the tailwind, let's not forget, is not only the AI boom, but it's also the one big beautiful bill. And both these things are not sensitive to interest rates. It's really unique. Those factors that are sensitive to interest rates in GDP, namely housing and autos, they are slowing down. But the factors that are driving growth at the moment, the AI boom and the one big beautiful bill, it doesn't matter what the Fed funds rate is doing. We will have an AI boom. It doesn't matter what the Fed funds rate is doing. The one big beautiful bill will continue to support GDP for the next several quarters.
Torsten, it's good to see you. It always is. Thank you. Torsten Slok there of Apollo. That last point, an important point for this Federal Reserve. Yes, it's a problem if inflation is running above target. It's a bigger problem if it's been running above target for a number of years. But it's certainly a major problem for this institution if the kind of things that are driving inflation to multi-year highs are out of their control. And if they choose to hike interest rates, you're just beating down the sectors of the economy that aren't generating inflation, the sectors of the economy right now that are really struggling.
Ultimately, you've perfectly articulated why we've heard from all these Fed officials their unwillingness to raise rates. They will talk about how they want to move the easing bias, how the risks are two-sided increasingly to the inflation side of things. They aren't talking up their rate hikes and they're not pricing it into their SEPs. So at a certain point, how high does the bar have to ultimately be?
The only thing you can do is attempt to, and I think they're trying to, attempt to anchor inflation expectations. Up next on the program, Sarah Hunt of Alpine Saxon Woods will catch up with Sharon Miller of Bank of America. Ed Ahosseini of Columbia Threadneedle joining us as well. The second hour of Bloomberg Surveillance is just around the corner.
Trading day is about to start.
And you're already looking at that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment. 3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
World's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world. The Dealmaker Playbook, where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation. As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlet Fu, who's taking a closer look at drone companies. With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI. That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Inflation is actually benign and fine right now.
Then what are we really left with? Where's this so-called inflation?
There's just an embedded narrative that inflation is not a problem.
We think that we're going to see a slowdown in the back half.
If we come through this, there is some risk of a broader-based economic acceleration.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now, and your price action looks like this. How many times have we said it? Coming into Monday at all-time highs. Equity futures up another third of 1%, following a 7-day winning streak. On the Nasdaq, up by a third. In the bond market, you'll notice yields this morning across the curve, 2s, 10s, and 30s bleeding a little bit higher, up 3 basis points at the front end of the curve, taking a bite out of last week's move. With this move here in crude this morning, WTI and Brent up by more than 3%. Brent crude just short of 94. WTI back in the 90s. Going into this week, the week ahead looks like this, full of economic data through the week. Jolts tomorrow, ADP on Wednesday, claims on Thursday, payrolls this coming Friday.
And that's where the proof is going to be. Ultimately, if you have higher input costs, higher commodity prices, that becomes a headwind if you don't have the growth to continue with it. If you have the growth and you have the job creation, well, suddenly you have an inflation problem, and that's where the issue comes for the Federal Reserve. On Friday, if we see the unemployment rate drop, and you start to see wages paid increase at the same time with a headline number that comes in strong, these sounds will be resounding, not just to remove the easing bias, which remarkably they still have, but to potentially jawbone a little bit more hawkishly going forward.
Imagine if they still kept it. 17th.
Aaron Kennan.
Imagine if they still kept
Aaron Kennan thought that they keep the easing bias because ultimately that is the path of travel. Maybe it ultimately is, but without pain, you start to see where is the rationale right now.
The guess for Friday, 89K is the median estimate in our survey. The range is 125 at the high end, 50K at the low. That's a decent set of forecasts for payrolls this coming Friday.
Absolutely, and that would be welcomed by this White House, especially when you have an unemployment rate that's still close to 4%. But the issue is not right now for the jobs market for them. The issue right now is, of course, is what is going on with inflation and the concern with gasoline prices. And based off the president's Truth Social post at 1:03 a.m., it does look like he's looking for more time, for more of leeway, roadmap, breathing space from Congress and some people that he says are, quote, chirping about the deal, because he's saying to sit back and relax and all work out in the end. Well, we've been here how many times before, and we're still not at the end.
And yet here we are, and crude's at 90. It's not at 110, 120, 130, 140, 150. It's not at 200, which is a number that was thrown out there by some people in this commodity market 3 months ago.
Tripping, yipping. I just am like sitting here thinking, like, what other adjectives are we going to have going forward? This is, to me, ultimately, one of the conundrums for the market. Is the reason for oil prices not being higher because of the job owning, because people listen and they're like, oh, okay, it's we're all getting to a resolution, or is it because inventories have done the heavy lifting, to your point, the fact that there was more crude on the water, and that there are some ships getting through, and that is ultimately what a lot of people keep pointing to, despite some of the physical shortage warnings that we keep hearing.
It's been a managed shortage.
Yeah.
Big time, and that's helped out without a doubt. There's a big fat cushion there supporting things. help ensure that people get supply. It's not to say that we haven't had shortages in certain places in the world. We have in Asia. Certainly haven't experienced them here stateside. What's been phenomenal, really, is that we haven't seen the price shot in a bigger way in America either, because of this massive inventory drawdown.
Well, we have the Strategic Petroleum Reserve. We have the inventories being drawn down. The issue is what happens when we get to very low levels. And you hear from the oil companies, and they're saying June is going to be a critical month. But to Lisa's point, how much can you quantify what is getting through the Strait of Hormuz right now? You just saw from the IRGC this morning that about 15 ships they allowed through. You heard the New York Times reporting that CENTCOM over the weekend talked about, they're reporting 70 ships they got through. We have reporting that ADNOC is getting some of their products out. It's hard to quantify exactly how much is shut in when it comes to Strait of Hormuz.
Equities aren't blinking. Crude's up again. Futures still positive by 0.25%. Coming up this hour, we'll catch up with Sarah Hunt of Alpine Saxon Woods with stocks adding to all-time highs. We'll catch up with Sharon Miller of Bank of America on how small businesses are spending big on tech, and Ed Al-Husseini of Columbia Threadneedle on the growing odds for rate hike later this year. We begin this hour with stocks kicking off a new trading month at fresh record highs. Sarah Hunt of Alpine Saxon Woods writing, there is plenty of enthusiasm out there, but without earnings, it would be hard for markets to look through some of the clouds on the horizon. Sarah joins us now for more. Sarah, good morning.
Good morning.
What are those clouds on the horizon?
Oh, we just talked about some of them. I mean, you look at where energy prices are right now, and I'm amazed too, because when we sat here in April and we discussed this, it didn't seem like this was going to be the case if we got to June and we were still in this problem. I think what's interesting is how much, people adapt and you get crude moving in different ways. But I also think there are it's a very narrow market. The earnings are being driven very, very small slice. That's a very exciting slice, and everybody's really excited about it, but it's not quite as broad. And if you don't get inflation to back down, you could start seeing some issues into earnings for that reason.
It's certainly keeping financial conditions easier than they otherwise would be. Equities are at record highs, high yield credit spreads are tight. How supportive is that for growth here?
I think it's very supportive. I mean, I think that's one of the things that we always look for when we think that things might be getting a little worse from the economic standpoint, is you look at credit spreads, you look at, and you see where things are. Those are so tight. Corporations are raising money. This AI boom is being fueled by a combination of cash and debt, and they're able to raise that debt without too much of a problem. That is very supportive for what's going on. It's the underneath things that are somewhat problematic that could be an issue as we go forward. So far, it hasn't been as bad as I think we all expected it to be.
Julian Emanuel of Evercore ISI put out a note this weekend where he wrote this: record weight in a handful of names is creating a market of stocks, not a stock market. Is that a feature or is that a bug?
At the moment right now, it's a feature, especially if you own those stocks, right? But it's a bug for longer term because you don't necessarily want the index to be so highly weighted in just a handful of names that's all that drives what's going on. And I think right now there are plenty of places where earnings are growing that are part of the giant ancillary build out, but you still have places where you see a lot of potential spending issues and inflation issues as you move along. It's very difficult to not think from a transportation side that doesn't get built into prices, and that's a problem, except for the fact that the larger cohort of spending is from people for whom it's not as much of a problem, but it still ultimately does get there.
One of the big challenges that some people have raised is that we aren't seeing the broadening out, that we aren't seeing sort of the beneficial ramifications in some of the economic data and some of the other sectors that could participate. On Friday, we get the labor market report. What do you think is the sweet spot that would give people confidence that the rest of the economy is starting to see that broadening out and not necessarily experiencing such heat that would put the Fed still in focus?
I think from a broader perspective, a higher number is going to give people more confidence because it means that companies are still hiring, right? And I think that's an issue, especially since some of the larger AI companies went on a little bit of an anti-hiring boom, and in fact, they were firing people for a while. But I think, going forward, so far, it's been remarkable how much spending has held up. Even though the soft data has been weak, the actual data has not been nearly as weak as the sentiment surveys would suggest. So I think that's more of a concern about what's happening, but on the ground, people are still spending a lot of money.
When you look at the hiring market, of course, and we've been talking about this a lot on this show, what the Standard Chartered CEO had to say. But do you think AI is truly replacing jobs, or is that just right now the easiest excuse for a lot of firms to turn to?
I think it's both. I think it's an excuse for people to get rid of people, but I also think that you're going to have an and, where it's going to be people and AI. Software was looked at as a situation that was going to be a disaster, and then all of a sudden people are starting to realize that you need people to look at the code that the code is creating for itself. So I don't think it's as destructive in the near term, but I think for the companies that are spending a lot of money, they're looking through their looking through their payrolls and going, maybe we don't need all the people that we need. And I think that's the problem. It's not so much that it's going to take over the world, but that extra hiring, that extra people that you need right now, they don't need it. And to Torsten's point earlier, you've got this inflationary boom before you maybe get some of the deflationary effect that people are hoping it'll bring.
Software just had a massive month, up by more than 20% on IGV last month. What's behind the bounce?
Well, I think that it was devastated so terribly that it's not a huge issue to see that it's actually not going out of business, that there are a lot of companies within the IGV that are going to be fine, that for a lot of companies it's going to be about growth on the margin and the companies that grow by seat, right? That's going to be more of an issue. But for a lot of other companies, you are integrating that AI with software. It is not going, the software is not going away because the AI is there. You need both of those things. And I think that that's the realization is that it's not as devastating as people thought originally, or at least this past doesn't look so devastating.
Yet today we're only down by 3 to 4% now. It was catastrophic a few months back for that particular part of technology stocks.
You've had winners, though, and losers, right? Snowflake has been a huge boom in terms of their partnership with Amazon, and on the other side, Salesforce hasn't done as well. So it hasn't necessarily been everybody gaining back what they lost. I do want to issue up a correction. We were talking about plumbers and other people who might benefit, and someone said, why always plumbers? Are electricians, carpenters, and painters chopped liver? No, they are not. I also will recommend to my son electrician and carpenter work, because potentially that could also be lucrative.
This is why you always get a shortage and then you get a glut. I hear the same conversations with the labour market repeatedly. How many plumbers do you think we're going to have in 15 years? Based on this particular push in the last 12 months.
Well, based on the current availability, I mean, I welcome it right now because it's certainly a shortage. But you're right. The idea of technical prowess becoming the next trading zone until robots get up and running, and then all of a sudden we have the same issue.
You mentioned the winners and losers in software. Let's pick up on that. Microsoft's still down on the year by 7%. Not all hyperscalers are created equally. Alphabet's flying and has been over the last 12 months. What's holding back that name? What's holding back Microsoft?
I think it's concerns about whether or not they are growing in the right ways at the right time. Is there something that's going to happen to the software side? I don't know that it's actually. I think that that's more of a reaction to the combination of their businesses than it is about anything specifically Microsoft is doing. And I actually think that that's one place where you could see some further recovery.
Oh, you'd go into that name?
Well, I think that it's not. Yeah, I don't think that there's anything wrong with Microsoft here. I think actually because it's been a laggard, there are reasons to think that that going forward, I don't think you're going to be a year from now sitting here going, Microsoft was a terrible investment.
Well, 12 months ago, we could have said the same thing about Alphabet, and here we are. Is it too early to pick the winners and losers in technology?
I think it is. I mean, I think that's part of the problem, and that's where there's a scramble, and you keep getting these rotations because people think that this is definitely going to win, this is definitely going to lose, and a couple months later you're like, oh, maybe I was wrong about that. We've got to reverse some of that, or we went too far in that trade. So I think that some of the volatility is definitely on a rotational basis.
Sarah, always good to see you. You're going to stick with us. Sarah Hunt of Alpine Saxton Woods. Microsoft's still down on the year, but up 10% last month, up 10% the month before. Software starting to have a bounce.
Part of the reason why people aren't necessarily being able to pinpoint winners and losers so easily, first of all, it's always difficult when you're in the early innings of some sort of technological revolution. I was talking to one banker recently, and I said, how is this similar or different to 2000 and other tech booms? And he said, you don't have a sense of what the ultimate future will look like or what the goal is or exactly how it's going to be used. You don't know when you even are going to reach it. There is a level of uncertainty about the ultimate endpoint that I think is very different than in the past.
Futures this morning on the S&P positive by 0.25%, adding some weight to the rally with an update on stories worldwide with your Bloomberg brief. Isabel Lee has more. Hey, Isabel.
Hi, John. Israel expanding its ground assault in Lebanon as Hezbollah steps up attacks on Israel's north. Sources telling us here at Bloomberg, the new U.S. proposed ceasefire with Iran would involve Hezbollah stopping attacks on Israel and Israel refraining from escalation in Beirut. The Janus Henderson Global Technology Fund is adding SK Hynix to its portfolio. The fund's co-manager is saying SK Hynix dominance means it may enjoy, quote, a bit more outside earnings growth next year. Shares have already risen 1,000% in the past year. And Anthropic is set to give the EU Cybersecurity Agency access to Mythos. This is the highly advanced AI model. Access to Mythos has been limited since it was first previewed due to fears it could fall into the hands of cyber criminals. That's your Bloomberg brief. John?
Isabel, thank you. More from Isabel in about 30 minutes' time. Up next on the program, keeping credibility at the Fed.
If any administration finds a way to remove Fed officials over policy differences, then future administrations will do so as well. The Fed's credibility would be lost.
Governor Powell keeping a not-so-low profile. More on that up next with Tyler Kendall, live from New York City this morning. Good morning.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg. When news breaks,
a redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need.
There's going to be now tons of tariff headlines until midterm elections.
Hear it first on Bloomberg.
Nine-week winning streak on the S&P 500. We haven't had a weekly decline since March, and since the lows of March, a 20% move off the bottom on the S&P 500. On the S&P this morning, up again here in June by 0.25%. On the Nasdaq, up by 0.2. In the bond market, yields with a bit of a bounce across 2s, 10s, and 30s. Yields up by 3 basis points on the front end to 4.03%. With this happening in crude, just to build up again, a bounce. WTI and Brent crude up by 3%. Last month, the biggest monthly decline we've seen since spring of 2020, down by almost 20%. That's your bounce this morning of just 3% and $94 a barrel.
It's not going to make people cry in terms of this idea that suddenly commodity prices are going to cause demand destruction. It is going to create discomfort, though, for the Federal Reserve. You have to wonder, are yields rising for the right reason or the wrong reason? Is it because there's so much strength in the economy that we can absorb higher prices and it leads to inflation? And ultimately, the answer to that will be on Friday, as well as, of course, JOLTS data that comes out tomorrow. Do we have that labor market impulse that can allow that to continue?
But how much more challenging might this picture be when it comes to energy prices, when it comes to how this infiltrates down to gasoline prices? I'm not seeing anything Tehran and Washington agree upon on this moment, besides maybe allowing more vessels to the Strait of Hormuz, which is very helpful for the energy price. But Iran this morning, you have a press report saying that uranium transfer disposal not in the latest U.S. draft pact. I saw another report that they will not entertain the idea of curbing down their ballistic missile program. So when it comes to all the president's red lines, they're not meeting any of them.
I noticed that John Bolton was criticizing a deal that hasn't been signed yet.
There's
Did you
no
notice
deal.
that too? John Bolton was getting ready to criticize something that hasn't happened yet. Market was sitting here thinking, I wish this was done and dusted.
That's the chirping, and he doesn't like the chirping, and that's what we're hearing.
Right? Do you think that's what he was talking about? Maybe.
I mean,
Maybe.
he's not alone. There's a lot of it going around.
Lots of chirping. I think he's talking about Senator Lindsey Graham, that the second he's close to maybe having some sort of, not the end deal on nuclear, but a deal about the Strait of Hormuz, someone says, do not do this. Then you have other individuals, Democrats, that are saying all of this has been a complete mess. He's talking about all the chirping, I think.
You can see why Bolton's upset about anything anyway, given Iran has basically threatened his life.
Yes, as well as threatened the president's life, as well as a number of individuals that were there from Trump 1, like Brian Hook, individuals after they went after Qasem Soleimani. You still have the IRGC saying they want to have revenge
for Trump 1 when it comes to Qasem Soleimani. And this administration, I think John Bolton would say that the regime is intact. This administration would say the regime has changed, but John Bolton would say it's still the same regime, just under different management.
Crude up by 3% this morning. Makes the Federal Reserve sound like child's play. Under surveillance this morning, keeping credibility at the Fed.
If any administration finds a way to remove Fed officials over policy differences, then future administrations will do so as well. The public would lose faith that the central bank will make decisions based only on what's best for all Americans. The Fed's credibility would be lost.
So here's the latest this morning. The former Federal Reserve Chair, Jay Powell, saying the central bank has a duty to safeguard credibility, noting straightforward legal protections for the Fed in his first public remarks since he was succeeded by Kevin Warsh. Bloomberg's Tyler Kendall has the latest from Washington. Hey, Tyler.
Hey, John, good morning. Well, as you mentioned, these are those first public remarks that we've gotten from Fed Chair Jerome Powell since he was succeeded as Fed Chair, giving us perhaps a little bit more insight here into why he decided not to leave public life despite departing Fed chairs traditionally doing so. But his comments come with this added weight, considering that we are waiting imminently for the Supreme Court to rule on a case related to Fed Governor Lisa Cook and President Trump's attempts to oust her. Jerome Powell mentioned legal protections. We know that Section 10 of the Federal Reserve Act of 1913 shields any Fed official from being fired without what's known as sufficient cause, though not historically defined. It's typically been meant to be referred to as malfeasance or neglect of duties related to the job, which is why we've seen Cook's lawyers argue that these allegations of mortgage fraud against her are related to a time before she was Fed governor and don't meet that very high legal bar. Now, Jerome Powell's comments didn't name names, though, as you heard, he said it's all about policy disagreements when it comes to administration stance against the central bank. And this administration has been very forthright with its comments and its criticism, though officials have often defended President Trump's decisions to lobby them against the Fed chair. Now, John, we won't get too wonky here. What the Supreme Court is actually deciding is whether or not Lisa Cook can keep her seat for now, while the lower courts decide the actual merits of the case. But really, they're really closely intertwined. We could hear as soon as this Thursday, though court watchers say that it will likely come near the later end of the term, which is later this month.
Tyler Kendall with the latest down in Washington. Tyler, thank you. I think you can sit here this morning and say that is not keeping a low profile. You can question whether you should be making those comments just a few weeks ahead of Kevin Warsh's first meeting. But at the same time, it's difficult to criticize the guy because he wouldn't be receiving this reward if it wasn't for the president's attacks on the institution, and the former chair wouldn't be even on the board if it wasn't for the attacks of the president on this institution.
And Kevin Warsh would be a completely uncontroversial pick to come in and lead this institution, given the fact that he had support by plenty of establishment figures. At a certain point, this is a controversy of the president's own making based on his accusations. On the flip side, does it ultimately matter? Right now, we're looking at break-even rates. We're not seeing inflation expectations skyrocket. So is that the question around the independence of the Federal Reserve? There are deeper questions for the Fed that we should be discussing. Like, when the deficit gets to a certain level, does that compromise the Fed's independence just naturally? Because ultimately, their policy will set the interest rate that the rest of us have to pay.
That actually will be more important to the market because, as you and Jonathan have made the point consistently, the market does not view the Fed as not being independent right now when it comes to the president's attack. They believe in the institution, but all this might be wrapped up this month because obviously this is the final month for the Supreme Court's term. And as Tyler was talking about there, this really a lot has to do with, he didn't mention Trump, but this has to do with what is going on with Trump pressuring Lisa Cook and trying to oust her from her job. My question is, when the Supreme Court rules on this, what is Jay Powell going to do?
Depends what they ruled.
Is it time for him to step aside?
If they rule with her, then he will. And if not, let's see.
Sarah Hunt of Alpine Saxon, we're still with us. Sarah, let's talk about the schedule. Payrolls on Friday, following week CPI on Wednesday, following Wednesday, Fed decision. How are things lining up for you?
I think that let's go backwards. From a Fed decision standpoint, I think the odds of doing nothing are extremely high. And it's really going to be a question of what the tone is. And to your point earlier, whether or not we still keep a slight easing bias or a neutral bias or a slight hawkish bias, the market is going to be looking at that very carefully because interest rates, while they don't actually matter for the spend, there is a relationship that happens with higher rates in the equity markets and technology that don't always accrue well to investors, right? So we don't want to see an enormous That would be problematic for markets where they sit right here. I think that the payroll numbers on Friday are going to look pretty good, and I think that we're still in that question of what is a good number versus a bad number, what is growth versus what we were used to seeing with a different immigration picture. So there's a lot of ways to look at that data, and probably you can find good things and bad things in it. CPI is going to be really important, right? Because it's going to be how much is this translating, not just through the energy picture, but into transportation, into higher prices, and that's going to be something that I think is going to be the most limiting right now on the Fed than anything else.
You're right to draw a distinction between preparing to change how you communicate policy and changing policy. They're clearly not preparing to change policy anytime soon, based on communication we've had so far. How consequential will a change in communicating policy be at the June meeting? Is that consequential, just slipping into neutral in a moment like this?
I think it depends on how far it would go, right? Because if it sounded extremely hawkish, then people would say that's a really big change. It's going to be incremental. How incremental is that change? And is that something that we have to be adding to the list of things that we might be worried about going down the pike, right? So it's going to be a question of degree and tone. And if it's not that wildly of a swing, then I think it's less consequential. But if it's a big swing, I think that becomes more of an issue.
Does Governor Powell go before year end?
I have no idea.
Does it matter?
I'm not sure it matters so much in terms of how the Fed is going to operate, but I think from an optics and a clashing standpoint, it's noisy.
It's really noisy.
Yeah.
I agree with you. Sarah Hunt of Alpine Saxon Woods. Sarah, thank you. It's getting noisier, not quieter, going into this meeting in a few weeks' time.
Yeah, not to mention just the economic backdrop, but also, of course, the political one. The market's moved on. I don't feel like the market really cares about the personal drama and the interpersonal play, because they view Kevin Warsh as a viable option to be Fed chair. They see Governor Powell as under attack, so they don't see it as a consequence to policy. I will say it will be a consequence to policy, though. If you have a jobs figure that comes in hot, you have inflation that comes in hot, and this Fed still is reluctant to signal a rate hike, that will become consequential.
So I don't think the market ever cared, to be honest with you. I don't think it had to move on. It was never on it. That's my issue with this back and forth and the noise around it. I don't want there to be a dependency issue with Powell and this institution, that somehow if he leaves, we've got this massive problem. And the way he communicates around the issue could introduce that, I think.
Maybe. Let's see. I mean, ultimately, that's going to be the question. At what point does the market start caring? Right now, I was looking at Fed funds futures, really quiet, not necessarily suggesting some sort of complete increase at the long end.
Couldn't agree more. The market's just not there on the issue at all. Futures this morning, up 0.25%. Sharon Miller of Bank of America joins us next.
tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you up-to-the-minute space news whenever and wherever it happens. I'm Ed Ludlow at NASA's Kennedy Space Center in Florida, and this is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington. Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Live from New York City this morning. Good morning to you all. Here's your price action. Equity futures on the S&P 500. Just about positive by 1/3 of 1%. If you find this screen boring, Bramo can tell you more about how she did some plumbing over the weekend.
I did. I installed some new toilet fixture.
Okay.
I was really impressed with. I was thinking
the
to myself,
fixture?
it was like the pump and sort of how you like flush the toilet. And
Oh,
it's
so
like
you did some some legit plumbing.
Some legit plumbing. We have to
Nice.
like unscrew the bottom. I was like, if everyone's talking about this plumbing, I can do it too. And YouTube really helps.
Supported by YouTube, not Gemini.
Well, I mean, I could go to Gemini if
Or
you
a bit
want to
of
send me
both.
your thing. But no, YouTube has a lot of really helpful videos to if you want to do your plumbing yourself.
Okay, good to know,
But
Bramo.
you could talk about
Just a flavour of the very serious conversations that Bramo's having in some of the commercial breaks here. Let's turn to the bond market. Yields look like this. A bit of a bounce. 2s, 10s, and 30s up by 2 basis points at the front end, 4.03%. Bit of a bounce on crude as well. You'll notice it on Brent and WTI this morning. Still no deal. I've forgotten how many times we've had a deal. I've lost count. I can go back to maybe April 17th when the president told us the Strait of Hormuz was reopening, and then it didn't. And it hasn't since over the last several months.
And remember, last weekend, the president did miss his son's wedding and said that he was dealing with Iran, and there was tons of reports coming out. And Sunday night, Axios had this report that there was going to be, at minimum, an extension for 60 days, and the Strait of Hormuz would be open, the blockade would lift, and then potentially they would work on the harder issues. Well, we are a week into that, and nothing has actually changed. There is one thing. You are seeing more reports, even from Iran itself, saying they're allowing some vessels to go through. The issue is, of course, is we can't quantify exactly what's on that cargo and how much that is. And that is why it's hard to time when potentially, especially definitely some parts of the world, are going to come to a place where they are just really running out of those physical barrels.
Equity futures this morning firmer by 1/3 of 1%, even with that move in crude. As we count you down to the open, about 2 hours away, let's get you some morning movers, some single names. Yahara has more. Hey, Yahara.
Hi, John. We are seeing NVIDIA shares up 2.3% in the pre-market after it unveiled a new processor focused for Windows laptops, expanding NVIDIA's reach beyond data centers and into everyday consumer devices. But this will be on the high end, so think thin laptops outfitted with AI capabilities. And we are also seeing Microsoft shares rallying nearly 5% in the pre-market because the new chips are being built for the Microsoft's Windows ecosystem. Also on some bullish comments on software from CEO Jensen Huang, which we'll get to in a moment. But also important to note that Microsoft and NVIDIA are the only Mag 7 stocks in positive territory this morning. On the flip side, that NVIDIA news is causing pressure for these names, starting with Intel and AMD. The NVIDIA's new chips, of course, takes direct aim at the PC market, an area they've long dominated, and Qualcomm is not escaping the pressure either. Those shares down 10% since AI-powered PCs is an area that Qualcomm has been betting heavily on for future growth. And CEO Jensen Huang is not done moving markets. Because of him, we are also seeing a rally in the software stocks after arguing overnight in Taipei that AI agents will need more software tools and not fewer. So that is sending shares of ServiceNow and Salesforce higher in the pre-market.
Moving equity markets more than the central bankers are at the moment. Yahara, thank you. Seems to be the way, right? Jensen overnight. It's got a lot of weight in this stock market.
The market's moved on from the Fed. They're saying, you're following us, and in the meantime, we're going to follow the dancing queen.
Look at it doing this.
Yeah, exactly.
Very 60s, 70s.
Yeah.
Okay, very cool. We've all lost it this morning, haven't we? All right. You having fun?
No,
I know you was.
literally what Jensen did.
I have literally seen the video.
Yeah.
I literally know.
And yes,
Thank you.
we're having fun.
Good. I'm pleased you are. Literally. All right. On a radar this morning, President Donald Trump insisting that talks with Iran over an interim peace deal will, quote, work out well. He's urging Americans to just sit back and relax. Trump's comments come as both sides continue clashing near the Strait of Hormuz. Elsewhere, NVIDIA revealing that Anthropic, OpenAI and SpaceX will be among the first to use its new Vera chip. Vera will go into full production in the third quarter. It's NVIDIA's first standalone data center microprocessor. And finally, shares of SK Hynix surging 1,000% over the past year. And the Janus Henderson Global Technology Fund is planning to buy shares, betting that a worsening chip shortage will boost profits even further.
You could say that this is just chasing the rally, number one, be skeptical of this. Or you could say that this means that even though the rally has already been more than 1,000%, there still could be more to go, which highlights the pain trade of things going higher despite some of the skepticism. Just as sort of some context here, this is an $8.3 billion fund that has outperformed 96% of its peers. So it's not exactly coming from a point of weakness when it comes to performance.
It is interesting, though, that they didn't already own so much of this, given the fact that they have Micron, given the fact they have SanDisk. I do think it's interesting is when you hear from the co-manager of the Leaders Fund, the customers are so willing to sign these contracts on what you think are fairly draconian terms. I want to know more about some of these draconian terms that some of these chip makers are signing with some of these customers, because it seems like it is so dire and they're just desperate to get their hands on it.
The move in that stock ever since the start of this year just hasn't looked back. I keep returning to the MSCI Emerging Market Index to get an updated weighting on things. SK Hynix is almost 7% of that index now. Samsung is close to 8% of it. Taiwan Semi close to 15%. So you're looking at like a quarter of the index in 3 names. I know I've repeated that a few times, but when people say they want to buy EM, buying EM today means something very different to what it meant 10 years ago.
That's the reason why the South Korean Kospi is up 102% so far this year.
Crazy. At the halfway point of the year, just unreal. The impact of AI on the workforce remaining front and center ahead of Friday's payrolls report.
People talk about AI reducing jobs, complete nonsense. And the reason for that is very simple. Because the output is so incredible, people want to hire more. This is going to show up in our economy somehow soon.
Bank of America's latest business owner report finding small businesses are increasing spending on tech services, including AI. The team writing the following: we view this as a productivity play. Businesses are using these tools to improve employee efficiency and add growth. Sharon Miller, the president and co-head of business banking at Bank of America, joins us now for more. Sharon, good morning.
Good morning.
It's good to see you. Thanks for being here and sharing this report with us. I've got one question about this report. Where are they getting the money to make these investments? Are they cutting costs elsewhere? Where's it coming from?
Well, we are seeing an investment in AI, and as we look at, and technology, and when we look at what's happening in the overall experience for small businesses, their spending is up 14% year over year in technology and AI. So they are repositioning some of those funds to invest more into technology, AI, where that can help them with either their productivity gains or with marketing, all different sorts of things we're hearing from clients.
Does that mean cutting staff when you're repositioning money?
I'm not hearing cutting staff. What I am hearing is people are holding off on perhaps adding another person. So this is about retaining their employees that they have today, reskilling them. We talked about that a bit at the break, learning some skilled labor, plumbing.
Yeah.
That was good. And I think that, at the end of the day, what I'm hearing from our clients is that they're just waiting to see what types of productivity gains they can have and what more capacity can they create for their employees.
I hate asking this question because it sounds very lightweight, but it's actually important. How do they feel?
How do business owners feel today? I would say cautiously optimistic. And as a small business, and we bank 3.5 million small and mid-sized companies at our bank. And when I talk to clients, when I'm in the marketplace, we're hearing there's certainly concerns. And I hear you guys talk about that gasoline prices, by the way. When we had our April report, gasoline per small business client on average was up 31% when you look at that spend. So talk about eating into some of the profits, and inflationary pressures. But as a whole, what we're seeing is that ingenuity and repositioning of funds to invest in technology, AI capability, so that they can do more and be more productive.
This runs counter to the narrative that we hear from a lot of big box stores and analysts who cover them, who say that they are monopolizing the entirety of the business, that they're gaining share. And you see that with respect to just some of the numbers coming in. They have negotiating power when it comes to their suppliers. They have economies of scale when it comes to deploying AI. How does what you see differ from that narrative that we hear increasingly from the Walmarts and Costco's, et cetera, of the world?
Well, I would say that, look, small businesses and medium-sized businesses, they do benefit from some of the downstream impact as well, from big companies investing into communities. There is competitive advantages when it comes to being a smaller company, less than 500 employees. You're going to have the ability to pivot a lot quicker than some of these large companies. Plus, I think it's about the communities. And when I'm out shopping, I do think about how can I connect with my community, help small businesses, and that really helps the economy. When you look at what is really happening in the U.S., small business, that is the backbone of our U.S. economy, creating 43% of jobs in the U.S., and just everything that's happening within our communities. It's really important that we are supporting them.
When you look at some of the pressures, you mentioned gasoline, and across the United States, it's very different. We're under $5 a gallon here on the East Coast, but you look at Nevada, Washington State, California, they are north of $5 a gallon. Are you seeing different risks and pressures to businesses depending on where they are across the continental
Yeah, and then
US?
also what they do, right? So if you're in transportation, if you're moving goods, agricultural, you're going to have more pricing pressure when it comes to gasoline. I was in California just a week ago. It was over $7 a gallon when you're looking at the price. So, it does differ depending on what area you're in and what industry you're in. But yes, I mean, there's inflationary pressures, no doubt, and people are looking for ways to control those costs.
Are you seeing inflationary pressures, though, outside of that energy need?
Yeah, you're seeing some inflationary, wages, right? Wage growth, when you think about wage growth in the U.S. And we were talking a little bit earlier around, are they hiring more? No, I wouldn't say that they're hiring more than what they have today, but what I would say on average is that we're seeing wages go up, and that's pressure on business.
Just for the record, with regards to California, Newsom blamed Chevron, Chevron blamed Newsom on this program just on Friday. Hopefully we cleared that up now, right?
There is something everyone can just do themselves. And the California Department of Energy has it out on their website when they take a gallon of gasoline and they show you how much you're paying for. And so much of that is taxes and regulation that is self-induced by the California legislature.
Similar problem right across the continent. In Europe. Sharon, we had Torsten Slok of Apollo on the program a little bit earlier, and he was talking about the amount of people that are starting new businesses in this country. Are you seeing that in sign-ups to the bank as well? Are you seeing a pickup in business activity?
We are seeing, we're acquiring new clients. We're continuing to grow market share, and business formation is up. So we do see that, and above really pre-pandemic levels. So
is it sector specific? What's driving it in your mind?
Well, I think, look, there are many businesses that are being formed that won't have payroll, so to speak. So just individual solopreneurs. When you look at larger businesses, we're seeing those being formed as well that are planning to hire employees. But I do think that business creation, formation, that is not down. In fact, it has increased. And so people are out there, whether it be they have stopped working in the corporate world, looking at entrepreneurship. But when you think about entrepreneurship and what's happening with wealth in the U.S., 30% of all of the wealth is really held with these entrepreneurs, small and mid-sized businesses. And that's over $22 trillion as you think about what's happening. And over the next few years, we expect at least 5 million of those businesses to either sell or transfer to the next generation. So there's a lot going on in the community, not just because of formation, but because of succession planning as well.
Just real quick, if the Fed were to hike rates, would that curtail some of that activity?
You know, I mean, look, we're at a historical low rate environment today. We have seen, you know, credit and our loan book increase throughout the past. We've been the #1 lender to small businesses in the U.S. for 19 consecutive quarters. We've grown our balance sheet every single quarter, and we continue to invest in the communities.
Sharon, it's good to see you. As always, thanks for being here. Thank you. Sharon Miller there of Bank of America on small businesses and business formation in this country. Didn't hate your question about feelings, by the way.
Oh, thanks.
I think right now sentiment is in focus. It's going to shape policies and actions in a number of ways. And you can see sentiment on the consumer side of things is at rock bottom. So something we all need to follow.
Well, I actually think that small business sentiment is incredibly important because it dictates whether they hire, whether they invest, whether they expand, whether they create new businesses. So feelings do matter.
Feelings always matter, Brahma. How do you feel?
I feel great.
Feel good? You feel good? We feel good?
My toilet is working well.
Okay, good. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Isabel Lee has more. Hey, Isabel.
Hi, John. Defense Secretary Pete Hegseth avoided mentioning Taiwan during a speech at the Shangri-La Dialogue, seeking to convince U.S. allies that staying quiet on Taiwan is the best way to project American strength. Intel is going after NVIDIA. The Financial Times reporting the company plans to ship a new AI chip by the end of this year. The chip will use cheaper memory and cooling technology than its rivals. And the New York Knicks will meet the San Antonio Spurs in the NBA Finals, a rematch of 1999. The Spurs are looking to return to the title for the 6th time, while the Knicks are seeking their first championship in 53 years. Game 1 is Wednesday in Texas. That's your Bloomberg Brief. John?
Isabel, thank you. I've sat here repeatedly and said, not a great product when it comes to the NBA. That is a great product.
It's going to be amazing.
That is going to get a lot of eyeballs on a lot of TVs.
Yeah, it only costs, you know, $5,600 for a nosebleed seat.
It's cheaper if you go to San
Antonio.
Antonio.
I'm not talking about seats. I'm talking about as
baseball
media content.
Yes, I'm glad that you have come around. I'm glad that it took a championship.
I'm just saying that this is like, you know, in an ideal world for the NBA.
This is
the final they wanted.
Exactly.
Without a doubt. Up next on the program, Shifting, the narrative.
It is entirely appropriate for Fed officials to be thinking about raising rates. I think you need to have a shift in the narrative from the Fed that needs to take place.
Up next, we'll catch up with Ed Al-Husseini of Columbia Threadneedle, live from New York City. This is Bloomberg.
is back to take a look under the hood of the business of Formula One.
Hi, I'm here to see Pierre Gasly.
Welcome to my workplace.
Do you feel pressure?
Massive pressure.
Ferrari is the best example that we can be very proud of the past to look after the future.
From the iconic brand setting the standard.
Oh boy.
Can you imagine Ferrari without racing?
No, and I say no, no, no.
To the newcomers forging ahead.
I grew up my whole life racing against the boys.
This global phenomenon continues to chart new territory.
This was a tennis court 8 days ago.
I can't even believe that.
And the speed of the business has never moved faster.
My career might stop, but I'd still be driving something.
Yeah. Probably very fast.
Yeah.
This is so exciting!
This season, we're along for the ride.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you the world's business and financial news whenever and wherever it happens. I'm Michael McKee at Mount Everest, and this is Bloomberg.
Equity futures right now in the S&P up by 0.25%, up by 0.25 as well on the Nasdaq 100. In the bond market, yields with a bit of a bounce, following a bounce in crude as well. The 2-year yields high by 3 basis points. Under surveillance this morning, shifting the narrative.
It is entirely appropriate for Fed officials to be thinking about raising rates. Our view is that the Fed is on hold, that they are roughly at neutral. I think you need to have a shift in the narrative from the Fed that needs to take place. They need to downweight the idea that this is about temporary forces. They need to downweight the idea that the labor market is not a source of inflationary pressures.
Here's the latest this morning. Bond traders looking for strength in Friday's payrolls report to confirm bets on future interest rate hikes. Ed Al-Husseini of Columbia Threadneedle writing markets have now repriced the Fed's terminal rate by a bit under 100 basis points over the past 2 months, from around 2.5 cuts at the end of February to around a hike today. Seems fair to me. Ed joins us now for more. Ed, good morning.
Good morning.
You're sort of endorsing market pricing, but as a base case, do you expect them to hike anytime soon?
No, I think the bar for that is still pretty high, but it's important for them to create the permission structure for markets to price in these hikes.
What kind of steps do you think they take in June to create that permission structure?
Well, the obvious one is removing that language around the easing bias. I think that's fully digested by markets at this point. That's been well front run. But I think starting the conversation around what do they see in the inflation story that's concerning. There are elements that have to do with the tariff pass-through, maybe peaking. There are elements that have to do with the AI demand that may just be starting. And then there are elements that are legacy from demand over the course of the past several years showing up in services. What of these parts of the inflation basket concerns them at this point?
To cite the current Fed chair, inflation's a choice. What part of that story, the inflationary mix right now, is a choice? What do they have control over?
I think ultimately, if you take a step back, you have to have a theory of change for inflation. What's driving it? And the Fed, I think correctly, has put the labor market at the center of that story. So to the extent that they've tightened policy in the course of the past 5 years, they've cooled the labor market, they've brought down wage growth. That's the key transmission mechanism here. And so when they look at the inflation story today, one of the good elements in the background is that there isn't a lot of heat in the labor market. There aren't a lot of factors to accelerate the inflation push that we're seeing at the moment.
At the same time, you could argue that there is a financial markets input that is pretty strong into the inflation rate, particularly because it's coming from the higher end and because it's coming from the wealth effect. People feel richer. They might feel miserable, but it's a good time for shopping therapy. So at what point does the Fed want to hike rates to curtail some of the enthusiasm if they're seeing that enthusiasm in markets trickle into inflation?
That's a really good point. I think one of the key debates, and we've had folks like, Goolsbee start to surface it, is how much is the anticipation of higher productivity bringing forward demand? Because if it's significant and we anticipate this productivity in the future, that's a positive demand shock that the Fed should start to offset. That's equivalent to the late 90s, is kind of the cleanest analog. On the other hand, if productivity does not materialize, if we're still in the early stages of anticipating this productivity, then the demand shock is relatively weak. That's something we can look through.
At this point, based on the backdrop of a Fed that probably is going to be pretty reluctant to hike rates, even if there is a pretty strong labor market, you do have inflation that continues to run hotter, and the fact that globally you're seeing investment pretty substantially coming from governments in a whole host of different metrics, how much do you hate long-end bonds?
I think long-end bonds have repriced. It's really interesting if you again, zoom out, 30-year yields at 5%, maybe a shade above. There are two questions to ask. To what extent is the Fed going to protect the inflation risk premium further out on the curve? And I think they've started to move in the direction of offering investors that protection, tightening policy in the front end. Again, the result here is the yield curve has started to flatten quite materially. If you look at those spreads between 5-year yields and 30-year yields, they're now the lowest level in about a year. That's a meaningful signal that policy is getting tighter. I like that as a long bond holder. And so I think that risk reward is getting a lot more attractive.
Ed, what's different than the peak productivity boom in 1999?
It's hard. So that story, it begins in the mid-90s. It ends in the mid-2000s. We still don't have a great, I think, answer as to why did it run out of steam. And so I think the big difference today is we're still in the build-up phase. We're still front-loading demand in the form of AI investment. It's not clear that the productivity boom that is to come is going to be similar in magnitude or duration. It could be a lot smaller. It could be a lot longer. And again, these are bets that the Fed is going to have to chew through as they make monetary policy.
What do you think the first meeting for Kevin Warsh looks like?
Boy, it's really hard. He's got a long agenda. I think the nice sort of forcing function here at the start of his tenure is we have a little bit of an inflation problem. So issues around Fed communication, issues around the Fed balance sheet, in some ways step into the background. And so it's an opportunity to focus on the issue at hand, which is where do we need to set monetary policy for the next 6 to 12 months.
Are you bearish growth? Just the way you talked about market pricing being somewhat tight and being encouraged by where we were at the long end, I just wondered if you're bearish on growth.
I think it's one of the strongest sort of consensus points of the market is that growth is very solid for the foreseeable future and that the labor markets have stabilized. If there's a lesson from the course of the past several years is we can be surprised on both fronts. I think the pricing, whether you look at equity markets or through the lens of credit spreads, the pricing for growth is very healthy. There's a lot more room to be surprised to the
risks are underpriced. Interesting, Ed, thank you. A lot to think about there. Ed Hosseini there of Columbia Threadneedle, just how things were building up in that conversation, that's kind of where my mind started to go.
I immediately went to the 2-year, 10-year yield curve, of course, because that's what he mentioned, and it is near the lowest level, the flattest level going back about a year, 42 basis points. Gives you a sense that people are starting to think of this, if you just look at historical reference points, as a tightening in the front of the yield curve, which makes sense based on some of the rhetoric. You just wonder also, if you're a contrarian, that is the most contrarian point of view to take.
Couldn't agree more.
Because everybody thinks that this economy is going to grow and that growth is going to surprise to the upside.
Difficult to find anyone who wants to take the under on growth right now. Yeah. Like, most people are pretty bullish. Because the engines for growth are rate insensitive, et cetera, et cetera. We've heard it all before.
Yeah, one big beautiful bill, you've got AI as sort of price insensitive buyer, you've got earnings going through gangbusters kinds of levels, so all of a sudden people are feeling really, 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 really bullish.
Interesting trade. Coming up, Peter Chia of Academy, plus we'll catch up with Kristen Caligus-Rowland of JP Morgan Private Bank, Nancy Lazar of Piper Sandler, and Noah Weisberger of BCA Research, the third hour of Bloomberg Surveillance. Up next.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
About 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
Let's talk about the significant risk transfers to find space in their balance sheet.
Hedging some of that risk.
You could look at it the other way. Obviously, this stuff is risk-weighted.
I would much rather be long than be short.
We're in a kind of sweet spot.
Very, very strong alignment. 3 revolutions in one.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Every trading day, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
The equity market has been super optimistic. Earnings have been quite strong.
Investors have never been richer and more miserable.
We're in a high-risk bull market.
The big issue is positioning. So positioning overall still is pretty subdued.
Just stay involved and look how your equities have done.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning for our audience worldwide. The third hour of Bloomberg Surveillance starts right now, and your scores look like this. Record highs coming into Monday. Once more, equities adding some weight to the rally, up by 0.25% on the S&P 500, on the Nasdaq up by 0.2. Bit of weakness on small caps, maybe off the back of this move in the bond market. Yields creeping a little bit higher at the front end of the curve by 3 basis points this morning. Off the back of this move in energy, Brent and WTI bouncing following further strikes over the weekend at the absence of a deal, up by 3% this morning on Brent, just short of 94, going into a week ahead full of economic data. The headline act later this week is Friday. It's the payrolls report.
This is an incredibly important payroll report. First of all, it is the last payrolls report ahead of the first meeting for Fed Chair Kevin Warsh, which is going to be instrumental in setting policy, given the fact that we've had inflation above target for more than 5 years, inflecting in the wrong direction. People are saying, well, it's because of oil prices, and that's transitory, that dreaded T word coming back into play. If you have a hot labor market, that becomes less transitory. And suddenly, if people are looking at wages that are growing at a little bit faster clip, everyone's asking for a raise, taking Jonathan Farrow's advice. Yes. All of a sudden, you have a little bit of an issue that the Warsh Fed has to deal with.
This is going to be a very important labor market report, not just for the Federal Reserve, but also the administration, which is trying to go into, we're just really peak election season ahead of the midterm elections this summer. And they're trying to really jawbone the market. And the president, Kevin Hassett, Scott Bessent, Treasury Secretary, constantly say that oil prices are going to drop. And they're not right now. They're rising across the continental United States. And until they get a deal, potentially we are going to hit very low inventory levels and we can see skyrocket of energy prices. The one thing that they do have, though, is a low unemployment rate. And that is why it's so important.
Back yourself. Don't let your employer have the leverage. Believe in yourself.
So,
ask for that raise.
Fed official Kevin Warsh, you can call up Jonathan Farrow and tell him what you think of that.
Economists are the only people on the planet worried about higher wages, right?
Yeah. Okay.
Name
We want
another
to see people.
group of individuals that are worried about higher wages.
Exactly the same. Yes.
Employers maybe have to give them out.
As for a raise, it's just a question about how much you're going to get taxed on the other end of it.
Economists should be the ones that take wage deductions every year. They started this.
Economists have mentioned over the weekend in the different various trips that they all take, they don't think that they're going to be made obsolete.
Have you noticed that?
Because of artificial
of course,
intelligence.
Yeah.
John
in
Williams.
Reykjavik, Iceland.
Or in, Serbia or wherever they were.
What are Fed officials doing in Reykjavik,
I
Iceland?
think that this one was in Croatia.
Oh, this was in Dubrovnik.
Yeah, this is the Dubrovnik seminar that John Williams was talking about how
what are Fed officials doing in Dubrovnik?
It's actually beautiful, especially if you like Game of Thrones. They have some beautiful.
Do they?
I think that a lot of it. No, but I've seen. That's where
looked into it.
Yeah, that's where a lot of it was filmed.
I'm going this summer.
There you go. You see, you're both bullish your jobs as you should be. Coming up, Peter Cheer of Academy Securities with stocks eyeing an 8th straight day gains. Kristen Caligus-Rowland of JP Morgan on investing in the next generation of AI winners. And Noah Weisberger of BCA research on how AI is rewarding reinvestment over returns. We begin this out with stocks building on record highs and crude rebounding from 6-week lows. Peter Cheer of Academy writing the higher for longer theme for energy prices will sink in and start to price itself into markets even more. Pete joins us now for more. Pete, good morning.
Morning.
Price itself in what way? Into growth expectations or even more into inflation expectations?
I think into inflation expectations, pushing bond yields higher. And again, I think you've been pointing out, right, the stock markets are at all-time highs. If you strip away the AI story, stocks haven't. So they've already been pricing in some of this. So I think that affordability risk is there a little bit in stocks. You have to look through to the various subcomponents to see it. I think that continues. And unfortunately, I think it gets worse because unlike what they're saying, I keep looking at the January futures contract for oil. It's, right around 80. It has not dropped much at all. So all of a sudden, this whole kind of concept that we had 2 months ago where by the end of August things would be normalizing, I don't think we're normalizing anytime soon. And this is still hasn't fit the economy fully.
Straight shut for 3 months. We've had a bit of leakage, but all but closed for 3 months. We've had a move of about 60 basis points at the front end of the curve. So 2-year yields have been higher. What more do we need to do on the rate side?
I think we are probably going to see 5 on 10s before we see 4% on 10s. I think you're just going to see global bond yields under pressure. Everyone has to spend on defense. Everyone has to build out their industrial base. Everyone's got to build out electricity and energy prices. People are feeling that pinch. So I think global bond yields are going higher. We're going to face that. And I think we're at the point, if we get too much dovish talk out of the Fed, they will lose some control over the long end of the yield curve. That was not my view back in February before we started the invasion, but now everything that's going on tells me that if we try and, jawbone about rate cuts, we're going to lose a little bit of control at the long end.
I was reading your note and I was a little bit pessimistic, and we'll get into horses and whether we're the horse in just a second. But actually, it's making me really optimistic to hear you say this, because you still think that growth will surprise to the upside. Ed Al-Husseini was on, and he thought that actually the bigger risk right now was growth surprising to the downside and the possibility that bonds would actually be a buy here. Why do you disagree with that?
One is I think people underestimate the data center and AI, just the amount of jobs that are being created to build this out, right? The chip industry is, going like gangbusters. The construction business going extremely well. The electricity generation business going phenomenally well. So I think ultimately it's somewhat weird is I think you create a lot more jobs to build out the data centers. Then once the data centers are up and running, those particular places don't have that much employment. But to get there, this build out, I think it's been very good. It's been very good for logistics. It's very good for, the cats, the deers of the world to provide things for them.
Yeah, and this is the reason why you are seeing some job growth in places like construction and manufacturing, as well as in other related areas. Torsten Slok of Apollo was on earlier saying that he saw job growth actually expanding across different types of sectors as a result of artificial intelligence. Let's get to the horses. You think that if you create an analogy to the horse and buggy, it's unclear whether horse and buggy or automobile to human is the right analogy, or whether it's automobile to horse. Are we the horses?
That's my concern. I think, you start any business class, they always go through the buggy whip, and what happened to buggy whip manufacturers who all had great jobs until the automobile. But the automobile was great for the country, right? It was great for everyone. There was huge efficiencies. The automobile industry, I'm looking like, are we the horses, though? Are they actually trying to replace humans this time? There were 25 million horses before the automobile. There's about 7 million. Now, when you read about it, the horses today have a much better life. They don't do any hard work. They sit there and, they graze. People ride them here and there. But, so, maybe we all need UBI. But again, I'm not as convinced at this point that this is going to be great for jobs. I can see that argument, but I also see, this is the first time I've really seen a technology, I think, that's going after all our jobs in a different way.
But there is also a counter argument to this. Before Uber was coming into a lot of cities, there was people protesting, people were saying we need more regulation because it's going to mean that basically in New York City, taxi drivers will be obsolete. But now what you have in New York City today is more drivers than ever. Uber, Lyft, plus the taxi drivers. Isn't that counterintuitive?
I think one thing I've certainly noticed, the price has gone way up, right? There was a price cutting where everything went down, and now I pull up my Uber app, I'm like, oh man, I better take the train home. I can't afford to take the Uber home. So, there's been some of that too.
Uber didn't kill driving or taxis in New York City.
No, it changed it. It changed it, and again, I think all the taxis have adapted to an Uber-like sort of thing. So it's grown, it's good. But again, that's one job, and again, that was. It didn't feel like it was revolutionizing anything. It was still how you get your taxi. Instead of sticking up your hand, you used an app. There were things that allowed people to take advantage of that. The other part of this is, I think everyone's talking about, people are trying to create jobs. I'm not sure becoming an Uber driver, things like that, is the same sort of job level as when someone starts a bakery or something where they're going to employ 3 to 5 people. So I'm a little bit skeptical. Birth-death model, once again this year, is a big part of job growth. And for the last 3 years, birth-death model has played a role, and then they wiped down the jobs by 750,000 to 1 million, because these aren't the same sort of new company formation that we had in the past.
UBI, how costly is this going to be? Where's the money coming from?
It was some of those things. I really tried to avoid thinking about universal basic income. It kind of just gets me wrong. And then all of a sudden 2 weeks ago, okay, I better start writing about this at least a little bit. South Korea seems to be the first ones that are kind of pushing that direction, right? Their economy is so bipolar, right? It's like you've got this memory and the chips just crushing it, absolutely crushing it. The rest of the economy, I don't know, they're benefiting, but clearly there's some degree of willingness to share these profits. I feel like the biggest threat right now in the U.S. to AI data center story, it's not the use, it's not corporations not wanting it, it's politicians trying to latch on to some of this negative sentiment, either about the electricity generation, the electricity usage, or the jobs. And I feel this is going to be a political risk more than anything. Maybe that's why I kind of mentioned UBI.
Who's got the appetite to raise corporate taxes?
Well,
could that become a bipartisan issue?
Who thought we'd have a mayor in New York that on many times seems, very socialist, to say the least. So, yeah, I could see something.
That's what I'm watching for. Just if the Republican Party starts to get along with the idea that that's the next step of populism, that you have to do something about corporate taxes.
Or maybe it's the Democrats. I feel like there's something bubbling below this that is... There's something unfair about what's going on with AI and electricity. I don't think it is at all. It fits our exact theme that we need to be good at data centers. We need to be good at AI chips, building out electricity. I think we're seeing a reindustrialization. I think it's great for the heartland of America, where you're seeing this growth between the Appalachians and the Rockies. But politicians do seem to be trying to latch on to something. And just the sentiment 2 weeks ago, when all we were talking about was every commencement speech where someone mentioned AI was almost booed off the stage. Maybe that's a bit extreme, but there is something bubbling, and it feels like the sort of thing some politician could latch onto. And this UBI seems popular with some people. So that, to me, would be the derailment, is this becomes a big election issue.
Well, there's massive backlash, and you have the extreme right and the extreme left want to do things like taxing, Bernie Sanders and Steve Bannon. So this is going to be not just a midterm election issue, but 2028. To John's point, what happens if you see policy that's directed at these companies?
Then again, I think you're going to see a little bit which countries across the globe rush to take this in. Again, the Saudis and other countries in the Middle East want to become the data center caps of the world. That's kind of been derailed a little bit, certainly since the fighting. Depends what sort of peace agreement you wind up with. If you have a peace agreement where Iran still has the ability to have a lot of missiles and can threaten the Middle East, it probably doesn't grow there. If not, maybe they invite this. So I think there's going to be a lot of political wrangling. And some of this is even good. As Canadian, when they all say we're having some interesting conversations, and Canada actually gets a do-over. And we kind of screwed up LNG in Canada. 15 years ago, it could have been us or the U.S. The U.S. has been phenomenal at it, right? It's grown out. Canada kind of got mired in regulation, but all of a sudden, with demand from Europe and other places who want to maybe avoid Middle East, so there are these huge opportunities. And again, I think it's all around this electricity generation, the reindustrialization, the data centers and AI. And you're going to see, I think, even in the U.S., state by state, who rolls out the red carpet or who keeps the red tape, and that's going to determine the winners and losers for the next 10 years.
Do you think Prime Minister Mark Carney's figured that out?
Who? I doubt it. Though he has made some improvements. I think he's seeing some of it. I think you're, again, I'll go back to, the president says lots of things. The one thing that I kind of remember in the last few months is when he chastised the leader of Scotland and said, you buy North Sea oil from Norway, you buy turbines from China, you have your own North Sea oil that you don't use. That seems idiotic. So I keep coming back. I think they're going to unleash the petroleum and energy companies in Europe. We're probably still months away, but even there, I was just in London, the concept of a changing view of ESG to be much more true sustainability and resilience, it's developing. It's not there, but it's coming.
It's interesting to track the politics of the left on this issue and how things are shifting pretty quickly.
It's out of necessity. It's out of the reality of the moment. I will just say, when you talk about UBI and some of these populist measures, the U.S. isn't going to be the first place. I was speaking to the Thailand and the Turkish finance ministers. They're talking actively and verbally about some sort of universal.
You got breaking news, Bramo?
No, I'm not saying I've got breaking news. This is a couple of months ago, but there is that discussion happening around the world, and there are a number of countries that don't see the benefits as much as the potential pernicious impacts on their economies, and those might be some of the first movers.
I just hate the idea, and I hope this is not the world we're going to, but I hate the idea of having this centralized power down in the nation's capital who gets to decide what everybody earns because there are no jobs. That sounds like a terrible future to me. If you take aspiration out of society and wanting to climb the ladder out of American culture, is that the world we want to go into in the next 20 years? Do you remember that line from Reagan where he said the scariest words in the world were, I'm from the government, I'm here to help? Yeah. I'm a tech bro, trust me. They're the words that are scaring me right now.
Yeah, the idea of work as purpose is something that's really been at the underpinning of the nation. So the idea that we'll just give a payment to everybody and that's going to fly, it doesn't have the same kind of palatability as it does in other places that are more, perhaps, amenable to that kind of idea. That's why I say look outside the U.S. for that kind of mover, that type of first mover. That said, we're a long way from getting there. Even the fear of that's going to drive policy before we get there, and that, I think, is what people are looking for right now.
Peter's good to see you. It always is. Thank you, sir. Peter Chair of Academy Securities. Thought Bramo was breaking news on Turkey just a moment ago.
No, I'm just saying that there was an entertaining of that idea much more than U.S. officials currently.
Just in case you're in Turkey.
It was not breaking. Please do not, no.
Let's get you an update on stories worldwide this morning with your Bloomberg Brief. Isabel Lee has more. Hey, Isabel.
Hey, John. Iranian officials addressing the status of peace talks, claiming that, quote, transfer or disposal of its nuclear material is no longer in the latest U.S. draft. Tehran also saying the ceasefire is in effect on all fronts, including in Lebanon, and that the U.S. and Israel are responsible for any violations. In his first public comment since being succeeded by Kevin Warsh, former Fed Chair Jerome Powell highlighted the importance of central bank independence. Powell said the Fed would lose credibility if any president were free to dismiss Fed officials over policy disagreements. And NVIDIA unveiling Vera, a new CPU aimed at energy-efficient data processing. CEO Jensen Huang shared that Anthropic, OpenAI, and SpaceX are among some of the first biggest users of the new microprocessor. The new product will go into full production later this year. That's your Bloomberg Brief. John?
Isabel, thank you. Anne-Marie's still dancing. Still.
I like this dance.
Look, I said he looked pretty cool.
He did.
Not in a traditional kind of way, just the fact that he's enjoying himself at the party.
Yeah, he was enjoying himself. He was at the party enjoying himself.
Have you got the mug ready?
Took the leather jacket off. Yeah, we're waiting for the bum shot.
AMH positions the mug so it gets the shot.
We need good.
In the commercial break.
We need good,
And partners with the cameraman to make sure it gets picked up.
I was trying to do it without anyone noticing, and John picked up.
Yeah, of course. Up next, your Morning Calls Plus. Callaghan Rowland of JP Morgan Private Bank on finding the next generation of AI winners from New York City this morning. Good morning.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Initially, the AI boom will certainly be inflationary. It's very clear when you look at semiconductor prices, when you look at energy prices, when you look at labor. Also, of course, when you look at the broader equipment prices, it is also very clear that this is going to be inflationary. On top of the upward pressure on inflation coming from the lagged effects of tariffs, and of course also higher energy prices.
Torsten Slok of Apollo on the program a little bit earlier on this morning. If you're just joining us, good morning to you. The price action, the score is shaping up as follows. Futures on the S&P 500 adding some weight to the rally, up by 0.2% this morning, following a 7-day winning run on the S&P, a 9-week winning streak on the S&P 500, one of the longest streaks we've seen going back to the mid-80s if we make it week 10 on the Nasdaq 100 this morning, just about positive. With this move in the bond market, yields higher across the curve, particularly at the front end, up by close to 3 basis points, 4.03% on a 2-year note this morning. Off the back of this move in crude, WTI and Brent higher this morning by close to 3%. Brent crude at 93.63. That's the price action. Let's get you some morning calls. First up, Barclays initiating coverage on IBM with an overweight rating, seeing a stable growth engine around its very defensible software portfolio. Your second call from Mizuho, raising its price target on AMD to 615 from 515, saying agentic AI should drive demand higher. And your third and final call from the team at Morgan Stanley, upgrading Dow to equal weight, saying the company is maintaining the semi-supply chain shortage better than its peers. Bit late on that one.
Especially since those shares have been higher than a lot of people. But it highlights how there still is upside that people are seeing right now, despite the rallies.
Not to throw shade. I know that was throwing shade. But all these analysts, many of them have struggled to keep up with the earnings momentum of many of these stories, which is unusual, to say the least.
And why a lot of people are still bullish, even though the gains have been eye-popping, to say the least.
I should get more sleep. That stock is up by more than 1%. Investors eyeing the next leg of the AI trade as the focus shifts to the physical build-out. Kristen Calagus-Rowland of JP Morgan Private Bank writing, power is the bottleneck and private infrastructure is central. Major value creation of next-gen AI winners is happening before the IPO. Kristen joins us now for more. Kristen, good morning. Good to see you.
Thanks for having me.
That last line is so important. I'm going to talk about SpaceX. You don't have to. SpaceX founded 24 years ago. So much value creation has already happened for so many of these names. Is that beyond just the 3 big IPOs people are expecting this year?
I do think that the shift in the private markets and the ability to build these companies is something that can't be done in the public markets, which is why within the world of artificial intelligence, when we have these tectonic shifts, everyone's trying to figure out what's the best way to access that. And I think a couple years ago, most folks looked at the Mag 7 and others and thought that was a easy and efficient way to access. And I think some of these now platform companies are making us rethink, given that the S-curve is happening pre-IPO, that maybe the attention should be shifting to private markets. So especially in a world of AI, where there's platforms being created, I think people are looking at the private markets and saying maybe there are other things that we should be thinking about as these builds keep happening.
How crowded is that trade already, given the fact that this has been going on for quite a while?
It's a good question. I mean, I think in private markets, you would say, everyone used to talk about the unicorns, companies that were worth more than $1 billion. Now people are talking about the decacorns, because when you look at the unicorns, there are $4 trillion of them. Interestingly, though, if you look at where the concentration happens, almost 80% of unicorns are in platform companies, about 24 of them. So think of the SpaceXs of the world. And so I think there's still a lot taking place where it might take 24 years for a SpaceX to get to where they are today. But I do think AI is accelerating that shift in a lot of these places where there is the bottleneck of what happens to the future of AI. So
one of the risks in private markets has always been that for every SpaceX or OpenAI or Anthropic, there are about 150 different companies that have failed and lost everyone's money. And at what point do you see that kind of risk increasing, given the uncertainty of the destination and what's going to ultimately work?
Yeah, I mean, I think the reality is in the private markets, everyone thinks that it's hard to be, disciplined around risk. And the reality is now people are raising so often. The CapEx needs for AI are so huge that when you go to raise that next round, it's not happening a couple years later. It's happening 6 months later or 9 months later. So if you don't hit those marks, the reality are you don't get that next funding round. So I do think the opportunity set is huge. I think the dollars at work is large as well. But I do think the people that are, the working versus not working, how quickly that's taking place and being caught is actually happening faster than I would have thought.
I know you're also focused on fragmentation around the world and the price of security.
Totally.
Is that also where you're seeing a lot of money being spent?
Well, it's interesting because if you think about AI, one of those next layers when you think about the move into physical AI and the need for security and resiliency, I mean, the reality is that global fragmentation is providing more opportunity sets in the private markets because you have Europe that needs to increase defense spending. That's happening probably 2 to 3 times as to what they've done. You have the US that trade policies are changing, durable realignment to figure out where that's gonna, provide opportunities. And then you have China that's trying to figure out how to become, energy and resource independent. So all of those things I think are creating a world, the world is becoming more globally fragmented and so are the private markets because people are trying to find solutions in every pocket of this, which is pretty fascinating to watch.
Is that a world that's getting more expensive?
Is what? Say it again.
Is that a world that's getting more expensive, that shift from globalization to fragmentation?
Likely, and I think it's one where a lot of our clients are concerned about things like inflation and what that's going to mean in the portfolios and figuring out, am I positioned appropriately for it? I think when we look at even our own client base, 20% of our assets under supervision are still held in cash. And I think people need to think about what is the impact of inflation. And I also think a lot of folks look at things like infrastructure and recognize the ability for that to provide some inflation protection. But the reality is 80% of our largest families still have no allocation to infrastructure. So there's a lot of conversations that we're having right now to say, what are the impacts? Where can the private markets provide those opportunity sets? But how are you actually positioning your portfolios? And we'll see how that plays out over the coming months as people understand more of the implications of AI.
Kristen, this was smart. Bit of a clinic. Appreciate it. Thank you.
Appreciate you.
Thank you. Kristen Caligas-Rowland there of JP Morgan Private Bank. Whenever we talk about that, I always think about the bond piece of the portfolio.
Well, my main question was the same one to Sharon Miller, which is all this enthusiasm, is any of it going to change if the Fed were to hike rates, right? Because ultimately, if you end up with a more inflationary backdrop and this need, an existential need for capital, does a rate hike change anything in this? And the answer is no, at least not for Sharon Miller. And it seems similar in this case. And so you just have to wonder, what's the obstacle? I don't know. This is a fascinating morning.
It's not going to reshape the CapEx intentions of an Alphabet or a Microsoft anytime soon.
Or an entire country or continent.
To that point too, by extension. Coming up, Nancy Lazar, Piper Sandler on whether inflation has peaked in the United States. Plus, Shahara's got some morning movers for you. NVIDIA unveiling a new chip for PCs. That stock is up at the pre-market by more than 2%.
9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Bringing you up-to-the-minute global economic news whenever and wherever it happens. I'm Lizzie Burden in Florence, Italy, and this is Bloomberg.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Seven days, no losses on the S&P 500. Haven't had a weekly loss going all the way back to March. Unreal. Equities this morning on the S&P 500 positive again. We're up by 0.2% on the S&P. On the NASDAQ, up by 0.15. Let's get you some single names, some morning movers. Yahira has more. Hey, Yahira.
Hi, John. We start with our big mover of the day. NVIDIA, those shares are up 2.2% in the pre-market after the chip giant unveiled a new AI processor designed for Windows laptops and expanding NVIDIA's reach beyond data centers into consumer devices. The Windows connection also helping to lift Microsoft shares up nearly 4% in the pre-market, but that also getting a second boost from comments from CEO Jensen Huang over in Taipei overnight, saying that AI agents will need more software tools, not fewer. So that is helping to lift software stocks this morning as well, like Salesforce. Turning to MGM, those shares are soaring nearly 15% in the pre-market as the New York Times reports that Barry Diller is preparing an $18 billion bid for the casino giant. He already owns roughly a quarter of MGM and has called the company's casinos and hotels hard assets that serve as a hedge in an increasingly unpredictable world. It's a bet that has been working, with those shares up 20% ahead of this move this year. And we have two catalysts helping to lift IBM shares. We'll start with the more practical reason, which is Barclays issuing its first rating on the stock, marking it a buy. Now the more unusual one, apparently an old video of President Donald Trump praising IBM CEO resurfaced over the weekend. He also said the stock could go a lot higher from here, so that is helping shares soar more than 9%.
Yeah, Hara, thank you. Appreciate it. Can we do two things? Can we bring up MGM again and then take Cam 2? Just as you bring the stock, just take Cam 2, bring up Bramo. That's the Bramo Cam 2 is. Bramo's face when that stock came up. You got thoughts, Lisa?
Well, it's just that when I saw the headline that People Inc. was buying MGM, this was like a GameStop moment, that GameStop was going to buy what? Were they going to buy? Shopify or something? I mean, they were going to buy some eBay, whatever, the same time. No, it's totally different. But my point being,
very different.
They were going to buy eBay, and it just seemed like, the minnow was buying the shark, right? And it's sort of People Inc. Well, do we actually can imagine that buying MGM, which has physical assets, et cetera. And then it was Barry Diller, and so then I went down a rabbit hole of where this is going to be financed, and that's where my mind was going. So I was just thinking, a magazine buying a casino empire just seemed strange to me.
You're suggesting sign of froth? Where are you taking this?
It's a fascinating tie-up in this world of new creations.
Nice, okay. Very diplomatic. Appreciate it. It's like a generic magazine you don't want to read.
You just think about People Inc. You think about picking up People magazine. You don't think about People magazine going out and buying the casino and the hotel empire.
True, you don't.
But this is the world that we're living in.
It caught my eye too.
I think it's interesting.
Just wanted your response to it.
Thank you. That's my response.
Just watching you Hira talk about it and then
Well, I'm also reading about, the concept of what this physical hard assets are and the idea that it could be recession-proof because people feel so desperate that they go and they gamble.
I'll tell you what I was reading. Anne-Marie sent me this moments ago from Kick Jukes. Arsenal played football like the ECB are set to run monetary policy. I thought was particularly notable.
Pretty harsh.
Pretty harsh.
Spoken like someone who spent their Saturday.
If you're not interested in either, badly seems to be the connection between the two. A steady week of data building up to Friday payroll report. Fed officials growing increasingly cautious on the outlook for rates and the economy too. Bloomberg's Enda Curran joins us now for more. And welcome to the program. When we talk about being cautious on the economy, one very specific part of the economy, the outlook for inflation. And what kind of changes are you expecting to see in the data this week, and how will they inform this Federal Reserve meeting 2 weeks Wednesday?
Well, it's a really critical week. As you mentioned, we have several private indicators on the employment market, John. They're all expected to show that the jobs market's in good health. We have a reading on the construction sector, manufacturing sector, the Fed's beige book where they go out and talk to business people around the country. All of those are expected to send mixed signals, but broadly speaking, one of okay activity. And all of that builds into then all-important payrolls data on Friday. There, we're expecting the unemployment rate of 4.3%. and a jobs increase of around 89,000. Now, if that comes in at that level, it would take the 3-month average to the highest in a year. And then you're not talking about a stabilizing labour market. You're possibly talking about an accelerating labour market. And people are looking for jobs gains, quite broad-based. It's the healthcare sector, it's leisure, it's construction, and also manufacturing because of the inventory build-up due to the Iran war. So if it all plays out like that, at the end of the week we'll be saying the labour market's in good shape. Certainly policymakers won't be worrying about the jobs market. They will be keeping an eye on inflation, which is what they have been warning about in the last few weeks.
And for the last few years, the way the year has mapped out has basically started the year with worries about inflation, got into the summer, worried about the labour market, got into September and started cutting interest rates. Just how this year's building up ended, does it feel slightly different?
It does feel different, John. It feels like the pendulum has swung back to the inflation story. We saw what happened with the PCE last week, especially on the annual basis, and it's not expected to get much softer in the months ahead. And remember, it's not just the Iran war story anymore. It's also the AI build-out. And even though that's well understood, there's this feeling that AI build-out's accelerating and having an even greater impact now on inflation in terms of inputs and the cost of products involved in that process. So it's bubbling up to this story that at the very least there's upward pressure on inflation to the point where policymakers, not necessarily hiking, I don't think that's people's base case yet, but certainly the idea of a Federal Reserve rate cut this year, the hopes for that have greatly diminished, John. And it's a question, I think, of treading water to see whether or not we do reach a tipping point later in the year where the policymakers do have to move on the upward side.
And looking forward to the coverage from you and the team throughout the week down in Washington. Enda Curran there, down in the nation's capital. Nancy Lazare of Piper Sandler with a bullish outlook on the economy, writing along with employment, entering a sustained expansion. At the same time, inflation is probably peaking. Nancy joins us now for more. Nancy, good morning. Good to see you.
Good morning.
Put those two things together. So you've got employment entering a sustained expansion, but you've also got inflation peaking.
So we're still early cycle when it comes to the labor market. And so over the past 3 months, we've averaged only 50. That's probably going to continue to grind higher. Unemployment rate has just peaked. So wage inflation is still more in a slowing trend than an accelerating trend. That doesn't happen until after the labor market really gets hot. So we're just now moving into a period where people are going, yeah, employment's starting to broadly improve, kind of moving away from the AI headwind, moving away from young grads not being able to get a job. So we're still early cycle, and that makes it easier for inflation to slow. And then at the same time, talk about AI and the inflationary effects. I just disagree with that. I know certain price levels are going up within the tech space. Got it. You saw it in the PCE deflator in April. That's not inflation. That's a price shock, and price shocks are a tax. And if one price goes up, another price goes down, and/or you get a shift down in the demand for some of those products. And indeed, consumer spending, real consumer spending on tech products is in a declining trend because of those price increases. And then you've got some unique events going on. The tariff rate has peaked because of the Supreme Court ruling. You're getting tariff refunds. Walmart, I think last week, suggested they are actually going to lower prices in part because of those tax refunds. So tariffs And most importantly to me, and I sound like a broken record to many of you, it's that inflation is always a monetary phenomena. Money growth has slowed significantly. It was over double-digit back in 2021. Government spending, federal outlays have actually stalled out. You saw that in the GDP data also in the first quarter. So very, very different monetary fiscal backdrop, which is also conducive actually to slower inflation.
The people who would beg to differ would say you've seen margin expansion at companies, you've had retailers outperform, you have earnings outperform once again, and the services in particular, you've seen prices increase actually pretty steadily throughout the year and at a steadily increasing pace. How do you counter that and say that's not enough to give you a sense that there really is some sort of inflation problem?
The consumer is negatively reacting to those increases in the service prices. Airfares are obviously up, as we all know, but real consumer spending on airfares have actually stalled out, gone down, same with hotels. And so in 2020, 21, 22, certainly there's pent-up demand, but also consumers' nominal income growth was 10%, so they could pay these higher prices. Now consumers can't. It's more of a tax on the consumer than it is a sustained shift up in price. Companies are trying. And profit margins being a record high is a good thing, not a bad thing. That's the only way you're going to get a sustained job cycle. If companies are making money, then employment increases. If companies aren't making money, then employment decreases. So it is a very interesting stage of the business cycle.
Is this a good jobs recovery? Is this a good jobs market, given the fact that there have been fears that people will be able to get jobs, but they're not the jobs that they want. They're not the jobs that have the same kind of wages that they're looking for.
I'm very excited about this job market. We are shifting back into more blue-collar, goods-producing jobs, which we destroyed after China joined WTO, which destroyed a whole part of this country. I talk a lot about this. I was just in the Midwest last week. It's fantastic to see the rejuvenation in that part of the country. White-collar job growth is going to continue. The unemployment rate for college grads is about 3 percentage points higher than older college grads. It's always 3 percentage points higher. It's always a more difficult market for younger grads to get a job. There will always be white-collar jobs, but the most important thing is that we are broadening out the labor market where goods-producing jobs are now going to be an important driver. And outside of the Northeast and the Midwest, and the West Coast, that's where the bulk of the jobs are. So it's actually a healthier labor market, one of the healthiest labor markets I've seen in decades.
Could both grow, or do services jobs and some of these white-collar jobs actually need to decrease in order to see a renaissance of what you're describing for blue-collar?
Well, you are going to get creative destruction again within the back office. There was an article last week about how back office employment is indeed going to decline. It's declined my entire career because technological innovation is constantly making businesses more efficient where you just need less people. You go to the airport, you just need less people in certain areas within the services because you've got all this new technology that's making it easier to check in. So this is just a continuation of the trend. But what that used to be the only job. Now what's happening is, again, you're broadening out the labor market.
I wish the airport was a better experience.
Yeah.
You know?
You got to have clear and TSA.
Got to have everything.
Yeah, you do.
And then pick a line.
And then gates at the airport so the plane can actually...
No. I think it's great because LaGuardia now is gorgeous, and I will say
gorgeous as a stretch, Brammer.
Yeah,
it depends.
Gorgeous,
I think that the B
decent.
I think it's lovely. I mean, compared to what I grew up with.
Acceptable.
Oh.
You know, you've been shaped by New York airports your entire life, so that is gorgeous.
My bar
I understand
is
it's all relative. Very low.
I mean, I'm like doing plumbing work on the weekends, but I will tell you, I am very impressed with what they did. I know that, you're not, but...
No, it's good. It's an improvement. Yeah. I'm with you. But like, relative to...
They're like fountain, different patterns.
That's not going to get me excited.
No.
Not at all.
All right.
Nancy, thank you. Appreciate it. Thank you. Really thoughtful way to talk about the US economy right now. Bullish on the outlook. Nancy Lazar there of Piper Sandler and Lisa there on a gorgeous airport here in New York City.
It's so much better than it was. It was a dump.
Got to work on shopping though, haven't we, at some of these airports?
I mean,
right?
I guess that's not
what
my bailiwick.
That's where it's
you want, like,
sort of
high-end shops. Is that what you
decent
want?
Restaurants.
Oh, decent restaurants. Yeah. But it's better than some places. I mean, you should
True.
Go.
Yeah. Who? Nope. Okay. Let's get you an update on stories elsewhere this morning. They're still asleep, Brammer. With your Bloomberg brief, Isabel Lee has more. Hey, Isabel.
Hi, John. NVIDIA is entering the PC market with RTX Spark Superchip, taking on Intel and AMD. The new chip will debut this fall in laptops and desktops from leading PC brands, including Dell and Lenovo. It will also run Microsoft Windows for ARM operating system. And Anthropic set to give the European Union Cybersecurity Agency access to Mythos. This is the extremely advanced AI tool. Access to Mythos has been limited since it was first previewed due to fears it could fall into the hands of cyber criminals. And the New York Knicks will meet the San Antonio Spurs in the NBA Finals, a rematch of 1999. The Spurs are looking to return to the title for the 6th time, while the Knicks are seeking their first championship in 53 years. Game 1 is Wednesday in Texas. That's your Bloomberg Brief. John?
Dream final for the NBA. Isabel, thank you. Appreciate it. Thank you for this morning. Up next, we'll set you up for the day ahead. Plus, we'll catch up with Noah Weisberger of BCA Research on the market shift from returning cash to spending it. That conversation up next.
We've been scouring the frontiers of science and technology to help explain the difference between the next gold rush and whatever this thing is. And in Season 2, we're upping the stakes. More danger.
Now that is some high-grade uranium mineralization.
We used to have a stable climate on this Earth. Right now, we do not.
More science.
We're pushing the envelope of technology in multiple directions. Software, hardware, chemistry, physics.
The cable is like very cold.
And more CEOs that can nail the photo shoot.
Hundreds and hundreds of billions of dollars are at stake.
While the problems are economic, the solutions are too.
And yes, we will be talking about AI.
There is a lot of humanoid hype out there.
But our future doesn't run on hype. It runs on innovation. Watch Season 2 on all these lovely channels.
Middle East tensions are high.
Both sides willing to go back to the battlefield.
The narrative changes moment to moment.
Is there a ceasefire? Is there not a ceasefire? Markets are up, markets are down.
Count on Bloomberg for up-to-the-minute reporting.
Breaking news this morning.
Breaking news in the last few minutes.
On-the-ground perspective.
Talking to you from the bomb shelter.
This White House still pushing.
And the analysis you need to make informed decisions fast.
Clearly, nothing is final until it's well and truly final.
The really important question is whether we'll get second-round effects.
Nobody covers geopolitics like Bloomberg.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Look at where energy prices are right now, and I'm amazed too, because when we sat here in April, it didn't seem like this was going to be the case if we got to June and we were still in this problem. It's a very narrow market. The earnings are being driven very, very small slice. That's a very exciting slice, and everybody's really excited about it, but it's not quite as broad. And if you don't get inflation to back down, you could start seeing some issues into earnings.
That was Sarah Hunt of Alpine Saxon Woods. The Strait has been closed for 3 months. We've had some leakage, but all but closed for 3 months. Been tallying the scores for you. Over the 3 months, oil was up around 30%. Two-year yields are up around 60 basis points. So you've got an energy shock, bit of a rate shock. Let's check in on the growth shock. The S&P over that period up 10%. The Nasdaq 100 up 21%. High yield spreads are tighter, they're not wider. They're tighter by more than 30 basis points over that period.
If you think that
monetary conditions have tightened based on the front end of the yield curve, think again, because if you look at financial conditions, they've eased. And so how do you explain this? Well, it's earnings. That's what everybody tells us. At what point are we looking at an economy that would have been an astronomical boom had it not been for the shock coming from the Middle East?
This could have been just a bit of a dampener to what could have been a massive boom in this economy, and maybe we'll still get one, I don't know. Futures right now in the S&P positive by 0.2%, 7 days, no losses. Here's day 8 on the NASDAQ, up 0.25% also. Here's your day and your week ahead. Lisa talked about earnings. We'll get earnings through this week. We'll get tons of data as well. Later this morning, PMI and ISM manufacturing data. After the close, earnings from HPE. Tomorrow, JOLTS data. Wednesday, results from Broadcom and CrowdStrike plus ADP, durable goods and ISM services. On Thursday, jobless claims. Friday, the payrolls report. The payrolls report, the headline act for the outlook for data. Let's talk about this equity market. Noah Weisberger of BCA Research with a year-end target for the S&P of 7,700. He writes, tech and increasingly the market is moving from a cash return regime to a reinvestment regime. Many investors assumed falling free cash flow would undermine tech leadership. It has not. Noah joins us now for more. Noah, good morning.
Good morning.
Good to see you. And welcome back, buddy. It's been too long.
Too long. Thanks for having me back.
Thank you, sir. Thanks for coming into the studio. That quote, I think, is going to resonate with a lot of people. That's what people expected to happen. What was different about all of this? What changed?
So a couple of things. One, I'll start off in a very wonkish direction, which is if you look historically at free cash flow, what you're getting paid for historically hasn't been like alpha. It's actually been for sector exposure. So you've been long tech and short things that kind of are heavy capex and lag the cycle. And so as tech shifted its stripes, people still wanted to own tech, essentially. I think that's what happened, one. Two, I think people want to invest for growth. As a matter of kind of almost philosophy, do I want to own an equity because it gives me back cash in the form of a dividend and a buyback? Or do I want to own an equity because it gives me access to risk I can't take as an individual? So in theory, that's what you'd want. Historically, that doesn't work, but it's working now, and it's working now very bigly, as they say.
Well, let's extend this, and we can take the bigly analogy with us as well. What we're seeing right now is capex intensity pick up. The prospect for capital returns has been dampened somewhat.
That's right.
People are starting to think about a shift from shrinkage to massive IPOs and more equity issuance. Are you saying that's less problematic so long as we get the growth?
I think that's right. So again, we have a couple headwinds. There's IPOs coming. Maybe there's some political headwinds after that. And the capex theme has run pretty hard. But firms are definitely shifting in that direction. We see not just in the tech sector, but across the board, capex is taking up a bigger chunk of operating cash flow, buybacks and dividends, a smaller chunk. But the market seems to be rewarding that, not just in tech, but in the other sectors as well. So I think that's a shift in the market psychology. I think the other thing to keep in mind is as CapEx is accelerated and you're burning through free cash flow, you actually aren't seeing leverage increase, except for maybe a little bit in the hyperscalers, but across the broader market, because earnings growth, to your point earlier, earnings growth has been so strong that debt to EBITDA has fallen for the market. It's fallen for the tech sector. Has risen, I apologize, has gotten better, risen for the market, risen for the tech sector, and down a drop for the hyperscalers. But, last point, revenue growth plus margin expansion equals recovering ROEs and ROICs. So I think that's what investors are looking at.
You sound bullish. You sound like you're positive. And then I look at your price target, which is basically bearish for the moment that we're in, which is 7,700, at a time when we're looking at the S&P currently at 7,580. So you're not seeing very much upside. Why not 8,200? Why not get a little more ambitious here?
I'm a complicated guy.
Okay, duly noted.
So our target is from the beginning of the year. If we launched in February, $308 of earnings, a 7,700 target. We haven't touched it yet. We were a little bit below bottom-up consensus when we launched, and we're well below now. So we're like, 340 is where bottoms up are. I think we want to keep that in sort of in a lockbox a little. Companies are seeing the demand today, and they're behind. This is not CapEx that's going to be leading to excess capacity. It's CapEx because demand is so strong. So I think you always get nervous to say it's through cycle and it's not sensitive to rates, but it's through cycle and it doesn't seem so sensitive to rates here.
You said political headwinds could potentially happen. Are you talking about political headwinds for the AI space, for these hyperscalers, whether it comes because people don't want data centers in their backyard or because they might be taking individuals' jobs?
I think both of those I would put in that camp. Probably more after the midterms and into the next presidential cycle. And so I think that's a little bit further out. But those would be two of them. I mean, one of the things that we wrote about a couple weeks ago has been this long trend higher in margins, which has been incredibly powerful in the long term, and then in the very near term. Like if I think, referencing back your question before, like where have we been wrong or why aren't we bullish enough? We were kind of moderate on margin expansion for 2026, and that's just been amazing, in part because revenue growth has been amazing, and these companies have operating leverage. But if we think of some of the drivers of margins and like the competitive landscape in the US over the last 30 years, so big picture hats on, a lot of those things are things that if I were to be a populist, I'd take a hard look at. And not just building in my own backyard for data centers, but things like the corporate tax rate, competition policy, and so on. And so I would put those all on the whiteboard for 2028.
Noah, good to catch up. Let's do this again soon. Thank you, sir.
Absolutely.
Thank you very much, buddy. Noah Weisberger there of BCA Research. If you're just joining us, welcome. Check out crude this morning, Brent and WTI. Just moments ago, a bit of a break at 90 on WTI at 89. What we do know is that Iran had a call with Japan. And now you're getting some headlines from that call.
Yeah, the president is posting on Telegram about this call and saying that Iran will ensure that Japanese ships, their passage of those ships via the Strait of Hormuz with greater ease, meaning basically they're going to allow Japanese ships to pass through. This would be a very big win for this administration because Japan is a key ally. Japan is one of those countries, huge energy importer. They have been struggling. I am curious to know, though, is Japan willing to pay a fee? And has that become an issue for this White House? We don't know. We need more detail.
That's an important question, but some encouraging signs, at least.
Yeah, and a question the market doesn't really care about because right now the market is saying if you got sort of passage of ships, at least for now, but you're right, what terms were agreed upon and who else is going to come up with a bespoke deal? Is this what we want? One bespoke deal after another with specific nations directly with Iran?
Have we got another month of this? Maybe. We've had 3.
You mean
why not make it 4?
Yeah, I can tell you some reasons why not.
If it's up to the regime, we'll have this until the midterm elections. Yeah.
I think we could park this one.
Coming up on the programme tomorrow, we'll catch up with Ted Mortensen of Baird, Monica DeCenso of JP Morgan, Neil Dutta of Renmac, and Osun Kwon of Wells Fargo from New York City this morning. Good morning. Looking forward to covering a week full of economic data with you. This was Bloomberg Surveillance.
Welcome to Bloomberg This Weekend. I'm David Murray.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas.
The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors.
We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
A cidade estava sitiada.
Nisso eu começo, eu também não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home, they are suffering, and someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Have you ever thought about, or would you make a movie for a streaming service? Would you make a Netflix movie?
Man, that's a great question.
I mean, I'm waiting for one where I ask and you go, that was a shitty question.
Yeah. I mean, you know,
Nah, you good at your job, bro. Like, it's just actually the first time anybody's ever asked me that. You know, I'm not here to say what I would and wouldn't do in the future. You know, but the theatrical experience is one that means a great deal to me. It means a great deal to us. I feel a certain responsibility. Like if Fruitville had happened a calendar year later, it probably would have come out on streaming. You know, I've been fortunate enough that everything that I've written and directed has been a theatrical release. So I feel a duty to try to protect that. You know, but that's where I'm at today.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
Just hitting high after high after high. 30 minutes till the start of the cash trade. I'm Matt Miller.
I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, tech charges higher as NVIDIA enters the PC market, and Jensen Huang makes the bullish case for software stocks.
Berkshire buys Taylor Morrison for nearly $7 billion, marking the first major deal under CEO Greg Abel.
And just sit back and relax. President Trump says talks with Iran will work out well, even as clashes continue.
That's how we're doing. We're feeling super relaxed about everything. Everything is chill because we're at all-time highs.
Yeah.
Yet again.
We just get higher than ever before.
Yeah, and we're coming off the back of 9 consecutive weeks of gains for the S&P 500. Here's what's leading us this morning. It is NVIDIA up another 2 1/3%. We'll talk about this with Ed Ludlow in just a moment. They're making chips for PCs and laptops, so they're taking on Intel and AMD. Its RTX Spark Super Chip will debut in Dell and Lenovo computers this fall. So as you'd imagine, Intel and AMD are lower this morning.
Yeah, I think even other brands are going to use it, like any brands that make PCs that use Windows. Software stocks are extending gains after NVIDIA CEO Jensen Huang said AI will create more use cases for software. So you see a lot of rallies across these names.
Wow, 8 1/3% for ServiceNow. I guess it's been beaten up a lot. Let's discuss all this and more with Bloomberg Tech co-host Ed Ludlow. Ed, how disruptive is it for NVIDIA to enter the PC chip market world?
Disruptive, and that's reflected in the fact that Intel, AMD, and more so Qualcomm are all down significantly, right, in the balance of the pre-market. There is a lot of skepticism about the utility of an AI PC. AI PCs aren't new. There are versions of it out there that have Qualcomm chipsets, for example. The idea being that just locally on device, you can run a reasonably sized model without needing to have anything that's like barnstorming in way of compute. Jensen has been teasing this for quite a long time. You know, it is them muscling into a market that Intel and AMD and more recently Qualcomm have dominated. But that is the idea that, you know, in an era where everyone is running an AI agent either for their own personal use or because they're a knowledge worker, that NVIDIA is best placed to run the compute locally on device because they're the best at it in data center. And that's basically Jensen Huang's very simple argument.
I think it's probably bigger news for the PC market in general for Dell and Lenovo than it is for NVIDIA, right? Because their GPU sales are still going to just tower in the face of anything they could possibly do with PC chips.
This won't come until the fall. So this next generation of AI PC, which is basically any OEM, so Dell, Lenovo make the PC, it runs on the Windows operating system, and NVIDIA has its GPU in there along with a Grace CPU. And the reason that ARM is up is that it's all based on ARM architecture on the CPU side. IDC forecasts that we're still going to see the PC market shrink 11% this year, in part because of the impact of the memory bottleneck. Overall, the dollar value of the market will go up because memory prices are high, but the bright spot is the AI PC. So it's still a bit unknown, but if there is going to be some surprise or area of growth in the global PC market in terms of shipments, then a convincing AI PC, as the forecaster would put it, will be it.
All right, Ed, we look forward to your coverage of this on Bloomberg Tech. Ed Ludlow, of course, co-anchor of Bloomberg Tech, which kicks off at 11 a.m. Weekdays, including today. In deal news, Berkshire Hathaway is buying homebuilder Taylor Morrison for nearly $8 nearly $7 billion in cash. Sorry, it's 6.8 to be exact. CEO Greg Abel, it's his first major acquisition since taking over for Warren Buffett at the beginning of the year. Let's get details from Bloomberg's Alex Rajbandari, who covers Berkshire. So they did Occidental, right? Was that Buffett's last big takeover, and now this is Greg Abel's first?
Yeah, exactly. Occidental is petrochemical business,
yeah.
yes, was acquired last year. It was closed earlier this year, but this is the first signature deal from Greg Abel as he took over from Buffett earlier this year.
Is it basically just a value play because these like home builders and housing stocks in general have just been so beat up?
They've been beat up. The new residential developments are down. Mortgages are kind of high. So there's a lot of signs that show that it might be the, kind of the bottom of the cycle. So investors are, might be taking it as a sign of, a vote of confidence for the home building sector in the U.S.
The interesting thing to me is that I read in your story that they're going to combine Taylor Morrison with their other housing businesses, even though they're going to keep the CEO on to run Taylor Morrison. And don't they usually have, these companies that they buy continue to run as individual businesses?
That is correct. This is a real departure from the way Berkshire used to operate under Buffett, and we shouldn't overinterpret it so much. I mean, they say they want to combine this over the years, so we'll see. But it's definitely new that they want to combine strengths together. The companies were operating quite independently. There would be some, executive that would go from one company to the other one. Sometimes it happened, but it's not the case for most of it, and so that's really new for Berkshire. And investors are, I was talking to an investor yesterday who was taking this as a positive news.
I guess, is this Greg Abel then putting his mark on things? If it is a different style of investment than they would typically do?
Yeah, definitely. And also, Buffett was speaking this morning, and he said that, Abel was leading the deal. It's his deal. He did it on his own. Buffett was not in touch with the CEO of Taylor Morrison, so that's definitely the first mark for him.
All right, Alex, thank you so much for joining us. That's Bloomberg's Alex Rajbandari on the latest on Berkshire Hathaway. And in the next hour, Meredith Whitney, one of Wall Street's most influential voices, known for her bold calls, joins us to discuss the housing market and more. And on Wednesday, be sure to catch Bloomberg Deals, 12 p.m. New York time. Deals abound, including one recently for People Inc., buying MGM Resorts. Elsewhere, President Trump posting on Truth Social this morning that talks with Iran over an interim peace deal will, quote, work out well, adding that everyone should just sit back and relax. That comes after the U.S. struck Iranian air defense facilities after Iran shot down an American drone. Bloomberg Washington correspondent Tyler Kendall joins us now. Tyler, it's really a feeling of like we've never been closer to a deal, but we've also never been closer to everything falling apart with all of the fragility and continued strikes happening in the region.
I think that's the perfect way to put it, Danny, because we did hear from both sides over the weekend that diplomatic progress continued as President Trump is now urging this patience. But we heard from Iranian officials who did confirm that the two sides continue to trade proposed amendments on the potential memorandum of understanding. But also in the same sentence, they said that there is still this high risk that the talks could collapse. And that's because, at least publicly, the two sides still feel very far apart on some of the key sticking points, including new this morning. Iranian state media reporting that this potential agreement does not include any mention about the transfer or disposal of Iran's stockpile of highly enriched uranium. Now, perhaps that's not too surprising, considering it is our understanding that this would be a phased approach to an agreement where those conversations about potential curbs related to Iran's nuclear program would be delayed. But it was our understanding that written in this memorandum of understanding, it would explicitly say that they were going to prioritize talks around this stockpile. And it's not just the issues with nuclear. Before that even happens, we know that there are still issues coming up with a deal to reopen the Strait of Hormuz. Yesterday, again, we saw Iranian state media saying that the current draft proposal would give Iran the, quote, exclusive right to control which vessels ultimately transit through, something that we know is a non-starter for the U.S. And then, Danny and Matt, that doesn't even begin to mention that there is still, of course, this risk of escalation. As you say, and said at the top there, CENTCOM confirmed this morning that the U.S. had to block missiles that were coming into Kuwait, trying to target U.S. forces there after the U.S. conducted what they called measured strikes against Iranian radar and drone sites over the weekend.
You also have Israel continuing to conduct serious strikes against Hezbollah in Lebanon. How are they part of these ceasefire talks because the Iranians insist that they want Israel to stop striking Lebanon as well as part of the deal.
Right, and that's what's complicating this, because so far the U.S. has maintained that Israel is not a party to these negotiations and that that is a separate front, though we do know that it does risk derailing these ongoing talks because, like you mentioned, we heard just really a couple of hours ago from Iran's foreign minister posting on X saying that any violation of the ceasefire related to Israel and Lebanon would equate to a violation of the ceasefire between the U.S. and Iran. Now, we should say, while we did see what is considered to be the broadest incursion into Lebanon in more than 2 decades, Israel says that that comes after Hezbollah fired more than 300 projectiles towards Israel. So it is definitely a risk for escalation when it comes to the broader region. And we should also keep in mind here, Matt, that the U.S. has wanted to see Iran's support of proxy groups, militant groups like Hezbollah rolled into any potential final deal. So it is going to be a narrow line to walk here, as at least for now, the U.S. says that it's not going to derail progress and that diplomacy still very much remains on the table. It is just one of what is turning into a flurry of examples of an uptick in fighting in recent weeks.
All right, Tyler, thanks very much. Bloomberg's Tyler Kendall there in Washington. Check on markets right now after a 9th consecutive week of gains, finished at an all-time high. We are looking at continued gains for S&P and NASDAQ futures this morning. Let's get a look at some of the single stocks on our radar. IBM jumping after a video from December of last year of President Trump touting the company went viral for some reason this weekend, and investors are bidding up the shares to the tune of almost 10%.
Because time is meaningless. It doesn't matter.
It's a flat circle.
Yes, I hear that. Barry Dillers People Inc. has offered to buy MGM Resorts. It's a deal valuing it at roughly $18 billion. Shares up 11.9%.
Salesforce plans to invest $2 billion in France by 2030 after picking Paris as its AI innovation hub in Europe.
Ooh.
Ever since we started calling Kiev, I'm going to pronounce all cities the way local people do.
No, it's not the same because it's the Russian way to call it Kiev, and it's not a Russian place, it's a Ukrainian place. There's no like oppressors in France currently like preventing it from being called Paris. Anyway, coming up, we discuss the software rally. Anurag Rana of Bloomberg Intelligence joins us now right here on Bloomberg Open Interest.
At 9:30 a.m., the market tells you what it's really thinking.
We beat the drum to the opening bell.
With deep analysis of the forces driving the price action.
Focusing investors on what really matters.
Where the money flows, which markets are changing.
Conversations with players shaping the narrative.
Innovative growth companies gravitate to NASDAQ.
It's not just like, let's buy the Mag 7 or AI.
That's a really compelling story.
This is where your trading day begins.
And this is Open Interest.
Only on Bloomberg.
We are dealing with supply issues, and so therefore fertilizer, the planting season, food security is high up there, but so too is fuel and energy. So yet again, as we had with Ukraine, the energy crisis, the food crisis, the cost of living, and that kind of fiscal space needs to be created for countries that are going to be dealing with the debt crisis. They are still repaying their debts. Inflation will result in interest rates that will put many countries in jeopardy on the debt issue. So we're looking to find solutions here from the IMF, from the World Bank. There have been many offers of the windows and facilities that could be put at the disposal of countries. But I think at this stage we need scale. Many countries are still recovering from the previous shocks, and some of those crises are not over yet.
Bringing you up to the minute
geopolitical news whenever and wherever it happens. I'm Jennifer Zabasaja in the Lesotho Highlands, and this is Bloomberg.
Asia is at the forefront of some of the world's biggest stories.
And we're here, where the action starts in Sydney.
And in Tokyo, get ahead as the global trading day begins.
The Asia Trade, weekdays only on Bloomberg.
Let's get now to high interest. Look at what's making headlines around the world. Strategy, the largest corporate Bitcoin holder, sold about $2.5 million worth of cryptocurrency, and that's its first sale since 2022. The co-founder, Michael Saylor, says future sales could help optimize taxes and fund new purchases. The digital asset treasury model Saylor pioneered in 2020 has been under pressure since crypto prices plunged last October. When I asked him, he said, never, ever sell Bitcoin. But I guess he's changed his mind. America's protein obsession is causing a whey protein shortage, sending prices soaring and forcing food makers to reformulate products or pause production. Suppliers are selling out months in advance while companies scramble for alternatives like milk proteins, soy, and pea proteins. Consumers haven't seen major price hikes yet, but higher costs are expected to hit store shelves soon. And software stocks are surging after NVIDIA CEO Jensen Huang pushed back on fears that AI agents will replace software companies. Huang made the comments at a trade show in Taipei. He said AI will actually drive demand for more software tools, Danny.
Let's discuss the rally that is unfolding now with Bloomberg Intelligence senior analyst Anurag Rana. Anurag, how nice of Jensen Huang to throw the software industry a bone. I mean, is it as Jensen Huang portrays it? Is AI going to save software?
Yeah, no, I think it was very nice of him. And again, he wants to make sure that this large industry, which is, several trillion in market cap, does not go away and keeps on buying his chips. Because, if you go back and look at from December 31st onwards till today, it has been under a lot of pressure. I remember coming into the new year saying, maybe we'll see a revival in the software trade this year. And boom, the first month it was down, I think, 35-40%, all of them. Yet fundamentally, nothing has changed in the last 6 to 9 months. Frankly, if anything, I would say fundamentals have been slightly declining right now, but that's more due to macro conditions, not because of AI disruption. So the last 1 week action is absolutely, spectacular, honestly. ServiceNow is up now 35%. IBM's up about, 30% or so just in a week. So it's pretty crazy what the software and the semi-unwind trend is that's happening right now.
Yeah, I mean, to your point, Anurag, I haven't looked across the industry, as I'm sure you and your colleagues have, but every time I interview a software CEO, they have fantastic revenue for the reporting quarter and maybe for the current quarter, but looking ahead, annual recurring revenue isn't as strong as it has been. That seems to be a pattern. Do you see that across the entire industry?
Yeah, for most of the application software, that's true. And, we think that has nothing to do with AI disruption. That's just the nature of where we are in the IT spending cycle on the enterprise side. Those companies are investing more in hardware, more in infrastructure right now. And where do they take money out from? They take it out from consulting, and they take it out from application software vendors, which are a seat-based model companies. So if a company was growing 15%, next quarter their bookings growth is, let's say, 14 or 13. So it's not as if it's gone negative. It's just the rate of revenue increase is declining. And that has been the theme for, I would say, more than 12 to 16 months at this point.
Well, isn't that an issue for the business model if you also lump in AI costs on top of it? Because one, maybe profitability is sinking, or as you say, the revenue growth is starting to slow. And at the same time, I mean, we're talking to Carmen Lee from Silicon Data later, who's launching an exchange to trade inference futures and compute. The stuff is getting really, really expensive. You're finally seeing Anthropic starting to pass along some of the costs along with others. Can you really build a business model where you start to incorporate AI, but at the same time your margins are shrinking because the big enterprises don't want to spend as much on software right now?
That's a very, very good question, but you have to divide it in two parts. That is absolutely true for the AI infrastructure players, which have actually done okay. That's the Microsoft and the Amazons and the Googles of the world. But when you look at the application software industry, they're not seeing that big investments because they are not doing it. They are outsourcing it to somebody else. So their margins actually been holding up nicely. In fact, now they are being so cautious in terms of spending on operating expenses and sales and R&D that they are actually not. They're seeing a margin expansion. In fact, somebody like a Workday has said that they may not see a headcount increase for the next 12 months, while revenue is going to be up 12 to 13%. So there are two different buckets that you have to see when you look at the entire space.
All right, Anurag, thanks so much for joining us. Always a pleasure to get some time with you. Bloomberg Intelligence Senior Analyst Anurag Rana coming to us out of Chicago. Quick check on markets as we look at headlines coming across the terminal that Iran is going to stop the exchange or has stopped the exchange of messages with the U.S. over the Israeli attacks. This according to the Tasnim news agency. So you can see that this has hit S&P futures that previously were up and now are in the red, and it probably looks the same across. I'll go ahead and type GLCO and see what, there you go. Brent crude spiking even higher right now at 350, but still at 94.60 at a relatively low level.
Yeah, we had a huge decline for Brent crude in the month of May, the biggest monthly decline since 2020, of March 2020, when you had all the COVID lockdown. So it's coming off that low base. Yes, stocks are lower, but not a huge amount. The big impact is perhaps in bonds. You see yields moving higher across the curve, up 4 basis points, nearly 5 basis points for the 2-year yield for gilts. It's even a little bit worse. It's 5 basis points for German 10-year yields, also up.
It's so interesting. Iran. So Tasnim, the Iranian news agency, says the axis of resistance is going to activate across all fronts. And I thought this was part of U.S. demands that there would be no more axis of resistance, right? We don't want them to continue giving money to these proxy terrorist groups like Hezbollah. That doesn't appear to be working for them.
If anything, it just shows the gulf in some of the rhetoric of the president saying, calm down, a deal is close, and where the reality is actually in the ground, that Israel and Hezbollah are still exchanging fire, and there's still these sticking points that clearly have yet to be resolved.
All right, coming up, Citi's Stuart Kaiser still sees value in S&P, the S&P as we enter week 10 of gains for the index. This is Bloomberg Open Interest.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Bringing you the latest geopolitical news whenever and wherever it happens. I'm David Gura on the Salar de Uyuni in Bolivia, and this is Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Know how the market day started.
Find out how it finishes.
Public markets to private markets.
From the micro to the macro.
Covering retail, entertainment, the business of sports.
The supply chains, trade policy, how it all is impacting the U.S. equity market as we drive to the closing bell at 4 p.m.
A holistic approach to covering financial markets.
If it matters to your life, we're covering it. I'm Katie Greifeld.
And I'm Romaine Bostic, and this is The Close.
Live every weekday.
Only on Bloomberg. Context changes everything.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
The latest headline coming out of Iranian state media: Iran to stop exchange of messages with the U.S. over Israel. This is the president was saying on Truth Social just moments ago that basically keep calm. An agreement is near. Instead, what you're seeing are equities drop. Oil's moving higher. Oil moving higher by 5.5% for WTI. Brent's about 5%. And yields across the curve also rising. Let's bring in City Head of U.S. Equity Trading Strategy, Stuart Kaiser. Stuart, I'm struck by we're on day 93. Oil markets remain volatile on any headlines. And I could say, yeah, equities are turning negative, but we're down like 0.2% from all-time highs. What meets the bar of a big reaction from equities as we continue to see the fragility in the Middle East?
I think on the Iran side, you have to see a hot war, kind of pick up again. The market has largely tried to sort of compartmentalize Iran, put it off to the side, and unless oil responds in a very, very meaningful way, and I think in that case you need kind of broad-based attacks to do that. Equity markets are going to try to ignore this as much as they can and focus on the good news, which is earning in the U.S. economy and things of that nature.
Which has served you well throughout other geopolitical crises, right?
Mm-hmm. Yeah, 100%. And this year has been absolutely no exception. If you look at forward 12-month earnings on the S&P, they're up $50 already year to date. On a 20 times multiple, that's 1,000 index points. That's a not insignificant amount of support that you're getting from the earnings side of things. And that's probably the key reason that we remained, pretty constructive on risk here.
I was actually looking at forward PE estimates on NVIDIA, and it's still only 21 times earnings. Like, that's pretty crazy. We talk about Micron all the time being under 10, but it's just not expensive, this market, is it?
No, I mean, it's not. I think, the question there is how durable are those earnings going to be. Eventually, these growth rates have to start to kind of slow down, but we just have not arrived at that point yet. And if you look at, 2 year out, you're still looking at 20% EBITDA growth and 20% sales growth for these kind of Mag 7 and AI broad-based companies.
How far out do you go? Like, at what point, if somebody's like, hey, I just saw that 4 years out, we're going to have a slowdown in earnings, let's sell.
Yeah, I think that's too. Look, I think we're still at the point where the curve is inflecting higher. And if you're in that sort of curve inflecting higher point, if you're anchoring yourself 5 years out to try to rationalize things, you're probably not going to be bullish enough and you're going to miss a lot of this. So I think we're still in the acceleration phase. And if that's the case, then you still want to be long these stocks in our view.
All right, Stuart, you're going to stick with us. Stuart Kaiser from Citi here on the desk throughout the open. Let's check on, well, you can see what's going on with markets right now. We're falling, but to Danny's point, from an all-time high, right? From 9 consecutive weeks of gains, from a close of 75.80 in the cash trade on Friday on the S&P 500. So this still looks pretty good, and you have to imagine investors are likely to buy the dip. The 10-year yield at 4.49, creeping higher, and Brent crude creeping higher as well, but still well under $100 a barrel. We're back with the opening bell.
When I visited Fernandez at IMAX's headquarters outside Toronto, we went to the facility where IMAX designs and maintains its cameras. The latest next-gen equipment was out with directors on filmed for IMAX sets, but there was still plenty of cool gear on view.
As the head of the finance department, do you look at all the things in this room and think, this costs that amount of money, this costs that amount of money?
Thankfully, no. I don't. When I think about cameras in general, and what we, when we first, I'll give you a really prime example, the film cameras. When you thought about it, okay, are we building 2? Are we building 4? Are you building 8? Right? And that's where I start to think about, well, what makes the most sense from a return perspective? Because yes, Nolan wants the cameras, but how many other filmmakers out there use the film cameras? The lens that I look at it through is essentially, how many do we build and in what way? Because the one thing is we are going to invest to build it right and to build it for longevity. But do you need 10 of them? No. Building 4, that was the right number. And do we potentially want to build a couple more? Maybe a couple more, but I don't think we need 10 because they won't always be in use all the time.
I imagine that at different points you need to tell people no. What's that process like for you?
Oh yeah, it's a key role in the CFO position. It is a word that most people are used to, and yet they still think you're not going to say it.
When news breaks,
A redhead across the Bloomberg terminal.
Bloomberg has you covered.
Trump's global tariffs are struck down by the U.S. Supreme Court.
For all the context and clarity you need,
There's going to be now tons of tariff headlines until midterm elections.
hear it first on Bloomberg. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
We are moments away from the start of trading on this Monday, the 1st of June. I'm Matt Miller. This is Bloomberg Open Interest. You can see that futures have turned lower now, about 0.2% on the S&P, about 0.25% on the NASDAQ. This after we closed at 78.50 on the S&P Friday. 9 consecutive weeks of gains. We haven't seen that kind of winning streak since 2023. Ringing the opening bell at the New York Stock Exchange, you've got FedEx Freight, a little bit of a spin-off there from the global packaging company. You see Lynn Martin there, president of the NYSE, joining them on the, is it a podium? It's kind of like a balcony there at the NYSE. And then down at the NASDAQ market site, you've got a bunch of employees from Blackline, one with pink hair, which is pretty cool, a lot of them with yellow handkerchiefs, which is not, ringing the opening bell to celebrate their 25th year anniversary. I guess since their founding, I was looking on the comp function, though, and they've lost 71% of their market value in the last 5 years.
Okay.
So that's not great.
That's not great.
No.
Definitely don't want to celebrate that. Anyway, what I'm looking at this morning, yes, the overall market is down. It was up before we got the latest headlines on Iran ceasing all talks with the U.S., but we were up because of what's happening with NVIDIA, up 3%. It's now making chips for PCs and laptops. They are taking on explicitly Intel and AMD on this. Its RTX Spark Super chip is going to be debuting in computers this fall, Matt.
All right, I'm looking forward to seeing how much that matters. Definitely, it's helping today. You can see NVIDIA up 3%. Software stocks also extending gains after NVIDIA CEO Jensen Huang said AI will create more use cases for software. So fighting the narrative that AI is going to eat software's lunch, you can see that's helped ServiceNow shares up more than 6%, Salesforce up 5%, and Microsoft gaining almost 3.5%. Let's bring back Citi head of U.S. equity trading strategy, Stuart Kaiser. So AI continues to power this rally. That's no surprise. How broad is it? Because you know, this market keeps looking for bottlenecks and keeps bidding up other parts of the market. A lot of companies that we never would have thought of as AI, like Caterpillar or Ford, become AI plays. How much can that spread out?
Well, I think to your point, like or sort of more industrial AI is a huge broadening trade. I think that's one of the bigger consensus trades now is you're going to have a global industrial production cycle as these data centers have to get built on, on a global basis in Europe and China and Latin America.
And they'll need energy, and we'll need software to play with AI, and we need laptops from Dell. I mean, it's going to spread.
And you need aluminum, and you need copper, and you need memory, and you need analog chips, and you need construction. So I think I think people assume this is a narrow Mag 7 trade, but our sort of AI portfolio has almost 130 stocks in it, just to give you a sense of it. So it is much broader than just 5 or 10 stocks, and that's why the market has been able to power higher, even as people rotate out of those Mag 7s a little bit into these other parts of the market.
Well, part of the attractiveness, again, of these stocks is their terminal value, of just how much opportunity they have to come. And I was talking with a banking executive in the last week who said the flip side of that is software stocks, because you can say, look, they're still doing good now, and they'll probably be okay for the next 4 or 5 years, but year 6 and onwards, how do you price in what they're actually going to look like? Isn't there some degree to which the losers necessarily need to stay with depressed valuations because you just don't know what the future is going to hold for them?
Well, look, I think, as Matt brought up before, what does NVIDIA look like 5 years out? You're talking about how high can that terminal value get. In software, there's a debate about, do I have some terminal zero stocks? Look, that has been a little bit on the back burner now, but even if you've all have highlighted a few of the software stocks that have rallied, there's more than a few stocks in that software sector that are actually down pretty considerably. And that's good news, bad news. I think it's good news that people are identifying certain software stocks that are going to be winners out of this and that do have a really strong business case. And then you have some that, whether it's terminal value zero or just much lower value here, and those companies ultimately get acquired or rolled up, we'll have to see. But yeah, I mean, it's much healthier to be talking about what is terminal for Micron or NVIDIA than it is to be talking about what is terminal value for, one of these software stocks. But it's an ongoing debate, and, right now it's net positive. I think we can agree on that.
I think everyone pretty much agrees on that. You say there's value in S&P calls, but I wonder at what price or at what strike. How much further can we go from here?
Look, you could talk yourself very easily into 8,500 on the S&P in the next 3 to 6 months, and it wouldn't be too Herculean to get there, right? I mean, you're adding $12 to $13 of EPS each quarter, right? On a 20 times multiple, that's 250 index points each quarter, just simply on the chronological roll of earnings. And the PE, as you mentioned earlier, has actually contracted almost 5% this year. So it's not too crazy to think, hey, could 2027 EPS be $400? And what multiple do I put on top of that? So look, I think folks are thinking above 8,000 probably in the next 3 to 6 months as a bull case.
By the way, I don't know if you've seen, Jim Bianco had a chart showing stock market concentrations, and each time obviously there's a peak and then the bubble bursts, starting with railroads in the 1800s, right, and the dot-com peak and burst as well. Does this have to end that way also?
I mean, what are the old saying, things always end badly, otherwise they wouldn't end. So I guess at some point it's going to end in a not friendly way, but we've generally not been too concerned about market cap concentration. To your point, this has happened historically, whether it was energy companies or banks or Intel or, name your sort of really powerful theme, IBM, GE, some of the big healthcare companies. So is it a little more concentrated today than maybe it has been in the past? Yes, but this is just sort of, we've termed it, it's a feature, not a bug of markets, that you have these really powerful themes, those companies get rewarded, you get a little bit of a concentrated index, that theme sort of, grandfathers out, and you go on to the next one. So is it going to end well? Probably not, because things just don't normally end well, but are we really, really concerned about the concentration? Personally, not so much.
What difference does it make when the things that are leading are so capital intensive? And I mean AI data centers, because we were in this world where basically one of the big bullish theses was there's still a lot of money that wants to get put to work. It means people can keep buying stocks and credit spreads can remain really tight into infinity because there's just so much cash that needs to find a home. What happens if that dynamic starts to flip, that there is more supply, be it in debt markets through AI data centers or the big IPOs come to market, when supply does look more plentiful and maybe demand doesn't change?
To us, the way you invest in that is you follow the money. So if you think these companies are spending too much, then almost by definition, the recipients of that spending must be earning kind of an above trend ROE. So that is the bottlenecks trade, whether that's memory, whether that's aluminum, whether that's power generation, which is our personal favorite. I think if you believe one group is overspending or paying an unhealthy price for something, then whoever's selling that thing to them must be really benefiting, right? So hate to say it, it's a little bit of a follow the money scenario in this case. The credit story is non-trivial. You're going to have these large cap tech companies are now going to be very large parts of the credit indices, and there's a lot of implications there. Does credit hedge equity as well when they basically have the exact same trade going on both sides? But big picture, again, if you believe someone's overspending, I think you want to target the companies that are the recipients of that spend. To us, it's power generation, but there's various sort of bottlenecks you can chase after.
Wait, that's interesting. So as credit becomes remade more in AI's image, it's less attractive to hold alongside equities?
Attractive or not, that's probably a valuation discussion.
Sure. Because it's a hedge then.
But to your point, the credit index maybe used to be a lot more financials heavily weighted. Well, now what you're seeing is the Metas and the Microsoft are now finding their way into the CDX indices. So all of a sudden, the sector weightings of those two assets look much more similar than they used to. And you could argue that maybe means they don't hedge each other quite as well as they used to.
This reminds me, by the way, of Blessed are the Cheesemakers.
Say more.
Because of the whey protein shortage, and we're talking about the difficulty that product makers are having getting whey protein. The only way you get whey protein is from the cheese makers because they separate the curd from the whey.
Invest in the bottlenecks. Invest in the cheese bottleneck.
Exactly.
I like it. Stuart, thank you very much. Do you have any cheese thoughts before we depart?
Buy cows, I guess.
There you go. Stuart, thank you. Bullish on both the S&P and on cows. City head of U.S. equity.
Bullish on cows is fantastic.
That is good, yeah. Equity trading strategy, Stuart Kaiser. Let's get a check on your equity market. We're about 9 minutes into your trading day. And wouldn't you know, we're positive, despite the fact oil is spiking this morning, despite the fact yields are also spiking over reports that Iran is cutting off its exchanges with the U.S. over displeasure at Israel, continuing to trade strikes with Lebanon and Hezbollah. NVIDIA, that's what's leading us here. Thank you, NVIDIA, for allowing to add 26 points to the S&P 500. I imagine to say that without that, we actually wouldn't be gaining, considering we're only gaining 2.2 points on the S&P, but that would be another all-time high. The chip makers are doing well as some of the software stocks, thanks to Jensen Huang saying, hey, software, it's going to be using AI. I mean, it needs it. It needs it to be buying enterprise software. It needs to be buying AI applications in order for this to all make sense. Amazon, Alphabet, Tesla, Apple lead the declines. AMD, you also have some of the competitors. Now that NVIDIA is getting into the PC market, Intel, Qualcomm, those all declining. So if you look at the sectors, only 2 are gaining, and that's enough for this overall index to be gaining. That's, of course, tech with NVIDIA, and energy as the price of oil rises, rather. And then on the downside, you have consumer discretionary, because what suffers as gasoline goes higher, it's consumer wallets, and thus consumer discretionary underperforms. But we're still a little changed to slightly higher this morning now, Matt.
All right. Yeah, with only 2 industry groups gaining, that's pretty fascinating. Coming up, SpaceX is forcing Wall Street to rethink mega listings, and the IPO's success or failure could have significant implications for the market and investors. That's next. This is Bloomberg Open Interest.
My old mentor, Roger Staubach, who told me when I transitioned, football will never leave you, but you need to leave it. Wow. Everyone has a dream, and a lot of dreams are, my dream is to play football and play professional football, and you get the dream comes true, but it is going to end. And the day it ends, the day before it ends, you're one of the best in the world. Great. The next day you wake up, that's gone. What are you great at? And the truth is, nothing, right? I'm not great at anything else.
I talk about it all the time, Steve, is this whole idea of it's not from penthouse to penthouse. And what I mean by that is you played for 15, 20 years and you're in the penthouse. That doesn't mean that you come to the business world and you're going to be in the penthouse. You don't start on the 3rd floor or the lobby. You actually have to start in the basement.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo. And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this yield forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
If I were to tell you that oil was up 5 1/3% and you didn't see this, you would assume that stocks were at least a little bit down. Instead, we have an equity index that's little change to higher, and for the NASDAQ, still 0.2% higher, because all that matters is AI and the fact that NVIDIA is up this morning. Let's get you now some top calls, some of the analyst action that we're watching this morning. First up, Citi, they upgrade Kohl's. They say that investor expectations have become too pessimistic. The firm believes that the market is undervaluing Kohl's free cash flow potential and sees an attractive risk-reward setup. Next up, Citizens, they initiate coverage of Microsoft with a $550 price target. The firm says that Microsoft has developed a compelling and differentiated approach to AI sovereignty while maintaining an attractive financial profile. Shares up 2 3/4%. Finally, Morgan Stanley, they upgrade Dell. They say that recent results show strong execution. The firm sees Dell gaining share in AI and enterprise markets, managing supply constraints better than peers, and benefiting from pricing power. And now they're also going to get NVIDIA chips. So those shares up 8 1/3%, Matt.
All right. Wall Street has seen blockbuster IPOs before, but none like SpaceX. Today's big take on the Bloomberg Terminal examines how the company is forcing index providers to rethink how they handle mega listings. NYSE President Lynn Martin and NASDAQ President Nelson Greggs both weighed in on fast-tracking the stock into major indexes.
From our perspective, market integrity is not something that is a competitive dynamic, and some of the rules that have been changed to woo some of the large companies, you referenced SpaceX, are questionable.
We're a bit more conservative with the 3 times. It's really a guardrail to make sure there's representation that's meaningful, and then it gradually scales over time. Usually it takes about 1/3 of a company's float has to be public in order to be a full representation.
Joining us with more is Bloomberg's Isabel Lee. She co-wrote today's big take. Excellent story, and obviously a little bit of a debate here that rings a little bit hollow from the NYSE, because everyone now seems to be making similar rule changes, right? And of course, they lost out on that business to NASDAQ, so...
NASDAQ is the big winner here, but there's also the point, I mean, if you add SpaceX immediately to the index, or almost immediately, for NASDAQ from 3 months, it becomes 15 days. For FTSE Russell, it becomes just 5 days. For S&P, they're still in consultation from 12 months to 6 months. All that said, if you add SpaceX immediately, then critics argue, or actually the people on that side, proponents argue that you're reflecting the market. But the critics would say you're adding such a volatile stock into the indexes, which is not really safe, because it means millions and millions of Americans will own SpaceX almost immediately. Like Bloomberg Intelligence has this note, some $20 billion worth of passive buying will be the result of immediately buying
What does that mean for all the other companies in this index? Because presumably you need to make room for something so massive.
There is that. So there's also the classification. So some say rockets are industrials, but then if it's based on revenue, then it'll be maybe tech. But then because of Starlink, it could be communications according to DataTrek. So all those we still don't know. And to your point, it highly depends on which sector it is. I mean, sure, you can change it down the line, but for the first few months or first year at least, where it will stay will be very telling, because that will mean also which passive funds will buy it, SLE or XLF and things like that.
So what do we know about who has changed rules thus far? Obviously, NASDAQ has made changes to the way they run their index to allow quicker listing without the seasoning that typically is necessary, although they never had the same amount of seasoning as others. I think FTSE Russell has changed the rules. I've heard the NYSE 100 has a different rule set. So what do we know?
FTSE and NASDAQ have already changed the rules. They're in effect. And for the S&P, which is arguably the biggest, they're still under consultation. From 12 months, they're arguing it to be 6 months. That's still short in the grand scheme of things. And we know that new companies that go public, they tend to have a rocky start. And if you go on Reddit, which may not be the most important source, but telling.
For many it is.
I know. I was looking for a retail investor, and I found one in the story. A lot of people were saying that they would sell when they buy, and a lot of people were like, why would I even buy? It's going to be in my index in just a few weeks.
Isabel, isn't this just the new normal? In a world where companies are private for longer, it means that when they're IPOing, they are bigger. It's not just SpaceX, which of course is huge, but it's also Anthropic. It's also OpenAI, Quantinuum, thank you.
I wouldn't even dare.
It's like the John Mayer album, but with
Continuum.
Quant instead of, exactly.
Which is a good reason to buy.
And a great record.
But even that, I mean, it's gone from 1 billion to now, I think it's probably going to list it somewhere like 1.5. Like, these companies that are IPOing are just bigger and more mature than they used to be.
That's exactly right. And this isn't unprecedented. In the past, some of these indexes have also changed during when Meta went public. But that is the new playbook. You scale privately, stay private longer, raise funds privately, and then when you go public, you're a mega cap, as opposed to before, you grow a little big, and then you go public, and then you grow bigger. So it's kind of reflecting really a new market these days. But to your point also, OpenAI, Anthropic, so SpaceX will be a huge playbook for them, and it will be telling whether they will be successful.
All right, Isabel, great to have you on the program. Fantastic story. Check out Isabel's story. It is today's big take on the Bloomberg terminal and on the website. A wave of economic data this week culminates with Friday's jobs report. We'll talk about that next. Kicks off with the jolts tomorrow. This is Bloomberg Open Interest.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
What is going to be the consequence for U.S. markets? We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Good morning. This is Bloomberg Daybreak Europe. I'm Lizzie Burden in London, and these are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Bringing you up-to-the-minute global news whenever and wherever it happens. I'm Jumana Bersachi in Beirut, and this is Bloomberg.
A busy week for economic data this week. At the top of the next hour, we're going to be getting ISM manufacturing. Tomorrow, it's JOLTS data. And then Wednesday, results from Macy's and Broadcom, plus ISM services. Thursday, another round of jobless claims and Lululemon earnings. Then finally, on Friday, the U.S. payrolls report. Setting us up for a very busy week in economics. Enda Curran joins us. He covers the U.S. and global economy for Bloomberg News out of Washington. Enda, maybe we should start with the data we're getting in about 7-8 minutes time. What are we expecting for ISMs?
Probably expecting something of an uptick there. You know, the manufacturing story has been complicated, Danny, as you mentioned, but there is a feeling that the number might be better today as the build-up of inventories on the back of the Iran war has an impact, and of course the ongoing story around the AI boom there as well. So, and that's a kind of a theme expected for most of the indicators this week, but that they're all meant to point towards, you know, reasonably solid activity. Mixed pictures in some areas. Obviously, the Fed Beige Book will give a very important reading on sort of manufacturers thinking at the moment as well, but it's all expected to be somewhat positive leading into that big jobs number on Friday.
You know, right now, traders are betting on rate hikes, no longer on cuts this year, but Veronica Clark from Citi last week was on surveillance and said she still expects 1 to potentially 3 cuts this year because the labor picture is going to be so bad going into this summer. She's going to be on at 5 a.m. later this week, and she'll have a chance to either repeat or revise that because the jobs picture doesn't look that bad right now, does it, Enda?
No, it looks like it's quite good. And if we get the figures on Friday as expected, so economists are looking for 89,000 in terms of jobs added in a month, Matt, and then you're talking about an unemployment rate of 4.3%, broad-based hiring, healthcare, construction, leisure, even manufacturing, as I mentioned, because of both the AI boom and the inventory story linked to the Iran war. So if those numbers come out the way economists expect, on a 3-month average, that would be the biggest gain in a year. And then you're talking about, is that a stabilizing job market or an accelerating one? And obviously that's what's really turned the tables for Fed policymakers right now. If you listen to them over the past couple of weeks, they're all saying, I'm less concerned about jobs now, more worried about inflation headed in the wrong direction. So it's not getting into a game of who's right or wrong on rate cuts or rate hikes, but right here, right now, policy is certainly on hold, and those officials at the Fed are warning that they're more worried about price gains than anything else.
I don't think it's unfair to throw you a curveball on the yen because your economist concerned with the global economy, and I'm sure you've been watching this story unfold as we all have. A spike today pushes the Japanese yen back towards 160 again. What is the Bank of Japan to do?
Well, so in Japan, it's been a big story of tradable inflation there, Matt, as you mentioned, and the currency has been at the center of it. We had that back and forward, you know, several times at this stage over the past couple of years in terms of will the authorities intervene or not, and they have intervened at times. But I think the warning from the BOJ is when it comes to inflation that they are expected to pull the trigger at some point soon. It's a question of when. Because of their dependence on large amounts of imported energy, for example. The food story also quite relevant there in terms of what's happening, and it's linked to the exchange rate. So it's front and center to the Japanese policy story, and I think it's one why a lot of people expect Japanese policymakers will have to tighten rates at some point over the coming months.
And to just quickly, but isn't this the global story and part of the reason why U.S. yields are being pressured? How much of it is just about not just the BOJ, but the ECB, the BOE that are also facing this pressure and maybe look more likely to hike than the U.S. is?
No, totally right, Danny. It's commonality. It's big move up in yields. You know, it's partly because of the Iran and the energy story. We all know that. But there's also a feeling that, you know, we're just rolling from one shock to another, go through them over the years, pandemic, inflation, Ukraine, Iran. And there's kind of a feeling now that inflation is where it is. It's going to be very hard to get back to targets for central banks. They'll have to tolerate maybe it's floating above those targets for some time. And that means higher interest rates than they once were.
Thank you so much. Enda Curran out of Washington. We have ISM manufacturing data coming out next. This is Bloomberg.
world's most powerful investors don't ring a bell. They quietly reshape entire industries. This is the money shaping the world, the Dealmaker playbook where power and billions of dollars change hands every day. From private equity and credit to venture capital and M&A, we bring you the inside scoop on the biggest deals and debates, plus exclusive conversations with finance's ultimate insiders. Great scoop on this. You've been reporting about an activist investor coming up and trying to shake things up. What's the latest?
We've been hearing that there was going to be an activist at some point. The question was who?
There is a convergence of technology and national security.
The United States is a big country. We're playing in the Northeast. That's an economy as big as the United Kingdom.
This is a really interesting space to watch. We're expecting more consolidation. As this is Bloomberg Deals at Bloomberg Invest, I want to talk about the broader deal and M&A environment.
This is a moment in time. We'll see how long we're here. It's far too early to call.
There is an underinvestment in what's going on in private markets because everyone's looking for additional AI cloud capacity, and it's very tough to build.
Everybody wants to get things going, and the IPO market is just one symptom of that. It is an early indicator of what we're going to see in the M&A market.
Let's go to Scarlett Fu, who's taking a closer look at drone companies.
With ongoing conflicts in the Middle East and Ukraine, there's renewed investor appetite for new names in the space.
Excellent reporting. I'm Danny Berger, and this is Bloomberg Deals. Every week, only on Bloomberg Television.
Investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Amin, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
President Trump continuing to insist he is in no rush to make a deal with Iran on ending the war. Late overnight, he posted on social media that critics should sit back and relax. It'll all work out in the end. ABC's Rachel Scott has more from the White House.
This morning, Iranian state media is reporting the country's top officials are reviewing the president's proposals. The country's top negotiator casting doubt on how quickly a deal could come together, reportedly saying, quote, "Do not trust the enemy's words and promises." Complicating negotiations, Iran's insistence that the war end on all fronts, including Israel's massive ground operation in Lebanon. Israel now pushing further into the country than they have in 26 years as they fight Iranian-backed Hezbollah. Capturing Beaufort Castle, nestled on a strategic mountaintop. The Israeli flag now flying above its walls.
Heavy traffic leaving southern Beirut today as Israel's Prime Minister Benjamin Netanyahu calls for more strikes on the city. A dozen arrests overnight outside the ICE detention center in Newark, where those inside have been complaining of abhorrent conditions. The center is privately run. As the number of suspected Ebola cases in Central Africa tops 1,000 with more than 280 deaths, those who've been in the region are being closely monitored. ABC's Matt Rivers has more.
Americans traveling from the DRC, South Sudan, and Uganda can only enter the U.S. through 4 airports. Medical student Michael Ruprecht was working in Uganda when the outbreak began.
I obviously was really terrified and scared when I heard about it.
Michael's flight home to Michigan was rerouted to Dulles International Airport in Virginia for a CDC and DHS mandated screening.
Chipmaker NVIDIA has unveiled a new chip that puts AI capabilities directly into laptops and desktops. CEO Jensen Huang telling a Taiwan conference it's part of NVIDIA's 3-year-long collaboration with Microsoft to reinvent the PC for the AI era. This is ABC News. attempt today at finding the miners missing for a week now in a flooded underground cave. ABC's Britt Clennett.
This morning, a glimmer of hope for those 2 miners missing for 13 days. Rescuers reporting hearing knocking signals in the 6th chamber beyond where the original 5 were found. Teams confirming the sounds are not echoes. It comes after the remarkable rescue of those miners who were trapped for over a week.
Maine Senate candidate Graham Plattner is fighting back claims about his personal conduct. ABC's Jay O'Brien has more.
At a campaign event last night, Plattner responding.
These people are going to try to make this race about anything but what it's supposed to be about, which is policy. They never want to talk about policy. Amy and I have a very loving and very happy marriage.
The candidate's wife reportedly finding the messages in the spring of 2025 before Plattner's candidacy and later notifying the campaign out of concern it could hurt Plattner's high-stakes race.
Plattner accusing the outlets that ran the story of not reaching out to him or his wife, but using what a former campaign aide said instead. Second Lady Usha Vance rolling out her annual summer reading challenge for its 2nd year in an effort to enhance childhood literacy and curb some of the summer reading loss that comes during the summer months. The program's aim is for children from kindergarten to 8th grade to read 12 books over the summer. I'm Sherry Preston, ABC News.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they performed.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals and the Bloomberg Business app.
Good Monday morning from the Bloomberg Interactive Broker Studio in New York City to our worldwide audience. We are streaming live on YouTube, streaming live on Bloomberg.com as well. Scarlett Fu and Paul Sweeney, this is the Bloomberg Intelligence Program. Coming up, we're going to check in with Susan Spence, ISM Manufacturing PMI Chair. We got some data coming out here on the manufacturing front. Looks a little bit better than expected. We'll keep an eye on that. We're also going to check in with Tyler Kendall, Bloomberg Washington correspondent. We'll get the latest out of the Mideast. Iran, not happy. The market's reacting here today. Mandeep Singh, Global Tech Research Head at Bloomberg Intelligence. We're talking about anything technology, hardware, software, it doesn't matter. Mandeep knows everything. Carol Pepper, founder and CEO of Pepper International, will join us to discuss her market outlook. So we got a lot going on here today. We got oil surging higher today, up over $6, nearly $7 per barrel for WTI crude oil at $94. We'll keep an eye on that. Right now, let's kick everything off with John Tucker and a Bloomberg Business Flash. John.
All right. This ISM Manufacturing Index at a 4-year high of 54. The estimate of Bloomberg economists was 53. Of course, we'll break it down in just a minute. The Bloomberg Business Flash being brought to you by IBKR. For the past 3 years, Interactive Brokers' individual clients averaged 24.3% a year, beating the S&P 500. Lower costs and access to 170-plus global markets matter. Visit ibkr.com/performance. Let me start with oil. That's soaring after this report that Iran is going to stop the exchange of messages with the U.S. The major stock averages, they're mixed. Remember, if we close with anything higher, that'll be another record. NVIDIA shares, they are higher right now. They're going to debut this new chip for laptop and desktop computers to challenge Intel and AMD. NVIDIA up close to 4%. Intel down over 6% right now. Barry Diller's People offering to buy a portion of MGM Resorts it doesn't already own for $48.30 a share in cash. MGM, the best performer in the S&P 500, up 13%. Cam Dawson at New Edge Wealth says a lot of good news is already priced in stocks.
The big debate that's happening in markets right now is not whether or not the earnings are here today, it's whether or not how long they can stick around, how long this super cycle in demand for semiconductors and AI-related equipment can sustain this supernormal earnings growth.
And right now, Brent up 6%, WTI 7% higher. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Scarlett and Paul.
All right, JT, thank you so much. Appreciate that. Scarlett Fu and Paul Sweeney live here with you in the Bloomberg Interactive Broker Studio. Let's get that at ISM data. Susan Spence joins us here, ISM Manufacturing PMI Chair. U.S. manufacturing activity expanded in May at the fastest pace in 4 years. Susan, talk to us about the data you guys released today.
Sure thing, and good morning. Thanks for having me on. This was a good month. I'm relieved to finally say that after a year of not being able to. Not only did we beat consensus, which was 53.2 out of 54, but all of these sub-indices are going in the right direction. They have all increased, exception supplier delivery is the same as last month. The only decrease was prices by 2.5 points, so really loving that. Employment has stubbornly still stuck in the contraction territory, but it's up 2.2. And what was curious and interesting to me is the sentiment on hiring versus managing the workforce is now dead even. For every positive comment, a negative. So that has taken a turn. So I'm optimistic. I have to tell you, though, 57% of our respondents this month, even though they were more positive on sentiment than last month, 57% are noticing the price, or noting rather the price volatility as an issue. So my conclusion is we're in an expansion. That's great, but because so many categories and commodities of pricing are up and continue to be, the concern is that that could choke off demand and maybe stop this roll into expansion. We'll take it right now for what it is. The demand sentiment, positive to negative, same as last month, 1.6 positive comments to 1. We just need orders to keep flowing. And I believe if orders keep flowing, the indices will stay lifted and employment could finally breach that 50% point.
All right, Susan Spence.
Yeah, that'd be good.
Thank you so much. Susan Spence is the chair of the ISM Manufacturing PMI on the latest data, which was better than expected. All right, let's get a check of stocks on the move right now. For that, we bring in Avalon Purnell to take a look at some big movers, even as the indexes themselves are a little changed. What do you have?
Yes, we can start off with MGM Resorts. That's ticker MGM, currently up about 14% to hit its highest intraday level since 2023. And that's after Barry Diller's people proposed to buy the remaining part of the international resort and casino operator that he doesn't already own. He's offering about $48, a little bit more than that for the remaining part of the company. But I did find it interesting that this is happening about a week after their rival Caesars was also taken private, and the move is making it the top gainer.
Okay, very good. I mean, I'm surprised Barry Diller, he's 84 years of age, wants to kind of triple down on the gaming.
Once a deal maker, always a deal maker.
I guess that's the case, and he's one of the best, that's for sure. How about ServiceNow?
Yes, that's ticker now, currently up about 8.5% to hit its highest intraday level since January, and that's after NVIDIA's CEO brushed off concerns that the software industry is at risk of being disrupted by those more advanced AI tools. Instead, Jensen Huang said that he sees more use of these tools because of AI in the future, and that is obviously very welcome news to software companies like ServiceNow that have come under a lot of pressure this year as investors really question if AI will continue to cannibalize their business.
And Avalon, you have one that's a good throwback name.
Yes, GoPro, that's ticker GPro, currently sliding about 11%, and that's after the wearable camera maker warned about its ability to continue as a going concern in a financial statement. It is quite tiny now, but worth noting that tariffs, rising memory costs, and supply chain issues have weighed on its bottom line.
All right, Avalon, thanks so much. Appreciate that. Avalon Purnell from Bloomberg News giving us the stock movers. And for more conversations, I'd like to subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, or anywhere you listen. Market Drivers is brought to you by Eisner Amper. Eisner Amper provides assurance, tax, outsourcing, and advisory services to businesses that need more than a generalist. Taking a look at that, and whatever the challenge, we have a team for it, EisnerAmper.com. So there you go. So what do you think of this news today? Just that Iran not happy with kind of the state of talks, and so saying that we're going to just pull out here at least today.
I feel like we've gone through so many iterations of this. There's going to be a deal coming soon. There's not going to be a deal. We're talking, we're not talking. All along, there's been skirmishes from both sides as well. So it's kind of more of the same.
Yeah, exactly, Ben. We're seeing it, most pronounced, as John Tucker was just reporting, in the energy space. WTI crude oil up $6.34 here, $93.69. So this is oil had been trending down, but we're seeing a pop up today on.
No more 6-week lows.
Yeah, exactly. So up and down, but it just feels like there's two parties talking past each other as opposed to talking at each other. Let's get the latest on what is happening in that part of the world. We can do that with Tyler Kendall, Bloomberg Washington correspondent. She's down there in Washington, D.C. So, Tyler, I guess another zig today in what has been kind of a zigzagging narrative to any talks that may be taking place between the U.S. and Iran.
Yeah, at this point, Paul, we had a few developments that showed that the sides appeared to be pretty far apart, at least publicly, despite both sides also confirming over the weekend that diplomatic progress was continuing. You had reports this morning from Iranian state media that some of those main sticking points still remained, including that in this draft agreement that the two sides are working on, it would not include any mention of Iran's highly enriched stockpile, whether that is transferring it or disposing of it. Not necessarily surprising, since we know that the approach to these negotiations is a phased one and that any talk about curbs to the nuclear program would come at a later date. But it was our understanding and our reporting that has indicated that there would be an explicit mention of that stockpile in any memorandum of understanding. Pair that with other reports over the weekend, again from Iranian state media, saying that Iran will maintain exclusive authority, that's a direct quote, over the Strait of Hormuz, another aspect that is considered to be a non-starter for the U.S. And then you have the development within the last hour that Iran says it is cutting off all exchanges with the U.S. over escalation when it comes to the conflict in Lebanon between Israel and Hezbollah. We should say that over the weekend we saw Israel launch the largest incursion in Lebanon in nearly 2 decades, but the IDF says that that is in response to Hezbollah launching nearly 300 projectiles towards Israel. So the escalation continues. We'll see how this ultimately progresses here, because Paul and Scarlett, keep in mind the U.S. maintains Israel's front against the Iranian-backed Hezbollah militant group is a totally separate front, that these are separate negotiations. But for now, it seems like it has put the talks on standby.
Yeah, well, the U.S. might say that, but I think from the start, Iran has been saying that whatever ceasefire that is in place must include Lebanon. What is the latest in terms of the president's remarks? Because on Friday, we had heard that he would make a final determination on the proposed peace plan. And since then, you know, he's kind of backed away from that idea.
Right. So, Scarlett, as he was going into the Situation Room, he said that we should expect him to comment on it afterwards. And then we didn't hear from him until really late last night on this deal, where he said that so far the constant speculation is making his job harder and that everybody needs to, quote, sit back and relax. He says that the U.S. will be making the right deal when the time is right. But of course, we've been getting just this flurry of reporting on where exactly these things stand. So at the moment, we really haven't heard comment from the U.S. When it comes to exactly what sort of progress is being made as we try to glean what is in this potential memorandum of understanding. But all of those conflicting reports that I mentioned from Iranian state media go, at least publicly, against what White House officials have said in recent weeks, including that no country will have control over the Strait of Hormuz, including that we will see some firm commitments about what will be discussed in regards to Iran's nuclear program, and that this is a separate front when it comes to Israel. In fact, we know that the U.S. wants in a final deal to see some sort of curbs put on Iran's support of these proxy militia groups. But Scarlett, at this point, you had Iranian state media saying this morning that the, quote, axis of resistance is going to activate on all fronts, referring to those proxy militia groups. So it just shows another roadblock towards getting towards a potential deal, at least publicly, between the two sides.
All right, Tyler, thank you so much. We appreciate your reporting. As always, Tyler Kendall, Bloomberg Washington correspondent. She's down there in our Washington, D.C. studios. And so I'm not even sure, like, we haven't had face-to-face negotiations in a while.
No, it's all gone through the mediators, through Pakistan, through Qatar.
Right, and that would seem to be, you would think you'd want to sit down with...
Well, you kind of have to agree on the terms on which you're meeting.
Yes, yeah.
And I don't know that we've gotten that far on that front either.
I mean, you know, I'm just thinking about, like, you know, the Korean War, the Vietnam War. You go to Paris, you know, you get a mediator, and you kind of sit down, and you kind of figure out what kind of table you want, what the flags are going to fly.
Yeah, but, you know, the technology has made things easier in some ways, and also easier for people to avoid each other, too.
Yep, I guess
mean, if you get everyone into the same room, then, you know, by definition, you have to talk about something.
Right, exactly. And so anyway, we're seeing that in the financial markets here today. WTI crude oil up over $6, just around $93.50. Again, we had been trading down below 90 for several days there. And the stock market kind of taking it in hand, as it tends to do. The S&P 500 is pretty much unchanged here on the day.
What war?
Exactly. And then the Dow's down 115. It's only about 0.2%. The NASDAQ's up by 10 points. So there you go. The VIX out a little bit, sitting right on 16 for your volatility index. This is
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom with this Bloomberg Business Flash. Major averages, a little change right now. The Dow is down 132 points, S&P 500 unchanged at 75.80, and the NASDAQ 100 right now 14 points higher. So anything that ends up higher today, that's a record. Only 2 of the 11 major industry groups in the S&P 500 are up. Energy in the lead as the price of oil surges. You have the latest headlines indicating Iran isn't talking to the U.S. at the moment. Brent, the international benchmark, up 6%, 96.93 a barrel. MGM Resorts, best performing stock in the S&P 500, up over 13%. Mr. Diller making an offer for the remaining portion of the stock he doesn't already own. Qualcomm down over 9%, worst performing stock in the S&P 500. Of course, Qualcomm's a rival to NVIDIA, and NVIDIA unveiled something called the RTX Spark, which it described as the most efficient PC chip ever built. Oh, here's one for you. Tired of changing toilet paper at home?
Always.
Well, Here's the answer. Charmin has introduced the Charmin Forever Roll. It's big. How big is it, John? It's a foot in diameter.
What?
So big. It comes with its own roller that it's so big. It's like this big.
It's not going to fit into a New York City apartment.
Well, that's why you have to buy your own roller. It has an introductory price of $20. I think it's a great idea for Mischief Night.
Yes, exactly. All right, but the big question for toilet paper is from the top or from the bottom?
You got to go from the top.
Got to go from the top.
Oh, I always go from the bottom.
Oh,
I know,
no
but I'm
kidding.
contrarian like that.
No,
So.
it's a major issue in my household.
And what, because no one agrees, or?
Yeah, we don't agree.
Oh, okay.
Yeah.
See, other people are like me.
Yes.
They believe it should go.
Yes,
Okay, well,
that's
there you go.
me.
See, I'm not total contrarian. All right, John Tucker, thank you so much. Can you find a picture of this gigantic roll of Charmin
There
for
is
us?
a picture, yes, and
All
I
right.
will get it
All right,
right
we work
to
on
you.
that. Thank you so much. John Tucker with our Bloomberg Business Flash. John mentioned how NVIDIA is entering the PC market with this new RTX Spark super chip. It's, of course, causing repercussions across the chip space. We see Intel shares, AMD shares decline. Of course, they are competitors. Let's bring in Mandeep Singh, our global tech research head here at Bloomberg Intelligence, for more on this. So Mandeep, Jensen Huang made the announcement in Taipei at an industry conference. How big a deal is this that NVIDIA is entering the PC market?
Well, PC is a saturated market. You know, when you think about the PC market, 250 million units a year, grows probably low single digit. So it's not that exciting compared to some of the other stuff that they've been doing on the server side and the data center side, and the numbers would pale in comparison. I think where they're going with this is they think the physical AI would be a much bigger opportunity. Now, when I say physical AI, it's your robotics, your humanoids, and that kind of stuff. And you're not going to be able to do that just by focusing on the server and the data center market. So they really want to expand into other areas to build that ecosystem where they have, you know, a PC footprint. And they just don't want to be the chip provider anymore. That's been NVIDIA's key strategy over the past few years, is they will give you all in terms of the CUDA software, stuff on the networking side, rather than just being confined to being a GPU provider. And that's where they're going with this is, look, you guys can run agentic AI on our PCs. Now, granted, their market share would be, low single digit. I don't expect it to really take off and displace Intel or AMD. But what they're trying to prove is the concept that, in theory, we can have our own PC, and that is what will position us well for that robotics.
If we choose to go down that road.
Yeah.
The strategy guy who advised Jensen Huang to do this, he'll be out of a job in 12 months, I guarantee it. This is a dumb move. This PCs, that's like some 1980s, dude. I mean, I'm an AI company. I just want the AI aura. That's all I want. I don't need to be making anything. I don't want people touching my product. I just want to be the AI company. That is what's got NVIDIA to where it is now, I would argue.
It has, but look at what they've done on the server side. Server wasn't a very fast-growing market. Suddenly, everyone wants to be in the server market. Why? Because the nature of compute has changed with AI workloads. And with agentic AI, we're talking about a very different type of compute than what we are used to seeing on our desktops and laptops. And so from that perspective, if the new interface for agentic AI is conversational and a lot of stuff happens in the background with an agent, then clearly your old PC is not good enough for that.
See, Mandeep just doesn't have the technology chops that I do. I can think way out in advance, and I don't want to be with
You
the
are
PC,
the tech guru, Paul
exactly.
Sweeney, clearly.
Give me a
Mandeep,
white-
put into context for us another headline we got on NVIDIA, which is, it says Anthropic, OpenAI, and SpaceX are among the first big users of this upcoming microprocessor called Vera CPUs in their data centers. What is this about, and how does this fit in with the broader strategy?
Yeah, so Vera Rubin, as you know, is their new architecture after Blackwell, what they currently have, and they talked about ramping it to full production in fall. And as part of that, they're really touting, the CPU portion of that Vera system that has got, GPUs, networking, and everything in terms of an optimized system infrastructure. So they are saying our CPU, which works very well in this system integrated architecture, will help you deploy agentic AI. And the reason why that stress on CPU is because with agentic AI, the shift from chatbots to agentic AI, the importance of CPU has grown. So they think CPU is a big market, and it's an important part of that agentic architecture, and hence why the stress on CPUs.
So Blackwell's the current most advanced AI chip. Vera is the next generation
That's
one.
right.
Okay,
That's
got
right.
it. Thank you so much.
And once more, Mandeep is right. The market's right. I'm wrong. NVIDIA stock up 5% today on the news.
I was waiting for you to say
and
that.
it's up 63% over the trailing 12 months. It's got a market cap of $5.3 trillion. So maybe Jensen Huang and his team know what they're doing over there. We'll see. Mandeep Singh, Global Tech Research Head for Bloomberg Intelligence, once again joining us live here in our Bloomberg Interactive broker studio, because you can talk tech all day, every day, and Mandeep is the best person for that. Carol Pepper joins us here. She's the founder and CEO of Pepper International. Want to get her thoughts on these markets. Carol, it just seems like an equity market that just wants to move higher, and I guess it's earnings that have been driving it. How comfortable or uncomfortable are you with this move here in the equity markets?
Oh, I'm very comfortable. I think the family offices that I manage money for are finally getting bullish. I think people are feeling like these wars will fade away. And that's why you see AI and technology coming to the forefront. And now, as you just discussed, a lot of these technology enhancements of AI are going to move into objects like PCs, like robots, et cetera. So that's why you see this sector powering the entire market higher, because this is a long year, 20-year, 30-year play. So the family office crowd likes to invest in long-term plays for multiple generations. And that's what we're seeing in this market, the beginning of that much more sturdiness, because they have so much cash, they can withstand market shocks, and we're going to keep going higher.
You said something that caught my interest, finally getting more optimistic. So they were bearish for a while and missed out on everything?
Well, they were cautious. You know, I think earlier in the year when this Iranian skirmish happened and there was potential question about what was going to happen with Ukraine, people were holding back their cash, taking more of a wait-and-see approach. Now I think the feeling is, well, nobody's dropping a nuclear bomb. Nobody's invading Europe, at least this month. So it's time that we move forward a bit more. And I think the numbers are delivering on the earnings side, and that's making people a lot more confident to move ahead and take those positions that they will hold for a long time.
Carol, we're going to get a lot of mega IPOs, the size we've never seen before. Your family offices, how do they want to approach these types of things? And maybe historically, how have they approached the IPO market?
Well, most of them were offered these shares privately. So what happens is there have been several rounds in the last few months of SpaceX stock going privately through some of the major brokerage firms to the family offices. So they got in pre-IPO. There are very few family offices that weren't outside that weren't offered these shares already. So a lot of them are about to make a nice bump from the IPO, and they were all promised that, and they all signed up, and it's happening. So you do see that with family offices. For high net worth retail who didn't have that opportunity, these IPOs, tend to go up for a few days, then they're going to crash down a little bit and hang around at a level until everybody's free to sell their stock and the noise clears out. But there can still be some money to be made if you're willing to hold longer term.
So I'm glad you bring that up, because the lockup period for the SpaceX IPO is going to be a lot shorter than what we've seen in the past. So that idea of things crashing, after the initial run-up, how do you see that playing out? I mean, are the family offices among those that might want to cash out of their SpaceX holdings, or are they in it for the long term?
A lot of them are in it for the long term, but let's say you need a gain to offset a loss and you want to take a little, you're doing some tax planning, you might take that now. But a lot of people are putting things like SpaceX into your trust for your grandchildren, because the thought is we're not going to the moon tomorrow and starting a colony, but 20 or 30 years from now we might. And wouldn't you be happy if you, just like the people that went into Amazon or Microsoft in the early days, 20, 30 years later, they saw the fruits of that investment. So it's ideal if you can take it and put it away and set it and forget it. If you're a trader type, you probably want to watch when are the dates these folks can exit, and then be careful, because that's when it's going to fall off. Everybody's going to exit who is in it for a short-term bump up.
Typically for your family office clients, Carol, what's their allocation to alternative investments?
It's between 20 and 30%. It's crept a little higher, but they're going from alternative funds much more into direct investments on the alternative side in data centers, in real estate. They are still looking at real estate, in robotics, in deep tech. So a lot of the younger next gens are going for the technology plays that they want to hold on to for a few years. And the parents are still very interested in some of the distressed real estate in the US because they can get it at a good price right now and work out those buildings and then repurpose them.
Is there any area that your clients are avoiding right now? I mean, they feel better about the environment. They're looking to take on risk, but where are they saying, you know what, I don't need exposure to that?
Well, I think consumers a slippery slope because right now consumers are being squeezed by inflation. The war is affecting consumers way more than it's affecting the technology sector. So consumer plays are a little bit difficult right now. You know, a lot of the models previously always assumed you could raise prices. We're seeing now that consumers are hitting a wall on what they can and what, you know, the K-shaped economy, what can they actually bear in terms of price raises. So you have to be extremely careful with consumer until this inflation gets more under control. And that's unlikely as long as this war and oil prices are high.
Carol, thanks so much for joining us. Really appreciate it. Carol Pepper, founder and CEO of Pepper International. Pepper International caters to family offices, and that is certainly a growing part of the market. I'll tell you where the consumer's doing well. I was at a Cracker Barrel down in Richmond, Virginia this weekend. Packed. I mean, line the whole thing. So I don't know. That tells me.
How was your reunion, by the way?
Boy, my classmates got old. I mean,
this
holy
was
cow.
40-year reunion?
40. Yeah.
Okay.
Yeah, so it was good to see some
were people retired? Were they working?
Yeah, a lot of people were retired or talking about retiring, and I said, not me, baby.
You're like, I got to make it back to New York.
Keep going. Paul's just like, you know.
Nose to the grindstone, keep going, keep it going. But anyway, that was good. And Richmond, Virginia, city hopping, lots of good stuff going on down there.
It sounds like it was catered by Cracker Barrel.
No, it could have been. Boy, it was good. Yeah, started with the biscuits and gravy, worked my way back to the country ham, and then the eggs. That's how you have to do it. Got to get the important stuff first. S&P down 5, the Dow down 190, the Nasdaq up 10. Go figure. This is what.
headlines and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Right now, the major averages mixed to little change. And for the time being, oil back in the driver's seat on this report that Iran's going to hold exchanges of messages with the U.S. You Brent up close to 7%. Still under 100, though, 97.35 a barrel. Competitors to NVIDIA sinking on word NVIDIA is entering the PC market with this new chip. So you have shares of Intel right now. They are down close to 4%. NVIDIA, on the other hand, that is up 4.6% on this news. Aaron Cannon at Clear Harbor Asset Management says, you know what? Investors still grappling with the impact of artificial intelligence.
On the tech side. But there's also, the elephant in the room, and we talk about it almost every day, which is AI. And it sort of transcends both the economic picture, the earnings picture, as well as the Fed picture. How is Fed Chair Warsh going to deal with that elephant?
For the S&P 500, 6 points lower. The NASDAQ 100 up 32 points, so it's on track for maybe a record if it closes in the green. And the Dow right now down 210 points. An interesting study from the New York Federal Reserve Bank. It says the rise of remote work explains more the recent increase in unemployment among young college graduates than the proliferation of artificial intelligence. According to the study, at least 64% of the rise in jobless rates among college-educated workers under the age of 29 versus pre-pandemic levels can be attributed to work-from-home trends.
But these are the young people who want to work in the office, supposedly, right?
These are the young people who want to work anywhere.
Okay, fair.
I got a
point.
couple. Get them out of my house, please.
You need them off the payroll.
Off the payroll, out of the basement. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash, Scarlett and Paul.
All right, Scarlett Fu, Paul Sweeney live here in our Bloomberg Interactive Broker Studio in New York City, streaming live on YouTube as well. Speaking of office work, here's a stat I've been waiting for. Since the pandemic. Office conversions and demolitions exceeded new supply by 3 million square feet in the first quarter of 2026. Only the second time this has occurred since 2008. So that's pretty good for the whole supply-demand thing. Let's break that down with Mark Salvatelli. He is president and chief executive officer of NAIOP, the Commercial Real Estate Development Association. He's a Penn State grad, so he can stay. Mark, talk to us about the commercial real estate market here, broadly defined. We're seeing signs of life really for several quarters now. What are you seeing?
We are seeing signs of life. As John was just mentioning in his update, you were seeing this younger cohort really desiring to get back into office. And a lot of companies are bringing people back into office. What we're seeing, though, is that growth is really being fueled by buildings that are in the urban cores, highly amenitized, where people could come back and they feel part of a community. And that's really helped drive this growth that we've seen in the usage of office space now for 3 consecutive quarters.
We keep hearing how there's a lot of demand for higher quality buildings, some of what you're describing with the amenities and the layout that allows for interaction between different workers. Where does that leave the buildings that are, grade B, grade C, the stuff that looks like it's from the 90s and hasn't been upgraded?
Yeah, and it's a great point, Scarlett. That is actually probably the area that is still lagging behind here. Spaces that aren't nearly as amenitized, perhaps aren't in the urban core, and some of which, particularly as you're talking about Class C, have reached their functional obsolescence anyways. But what we're trying to do now is, developers are really trying to work with local municipalities to try to find ways to perhaps solve 2 problems at once: the vacant office space and, of course, the big housing crunch that exists pretty much anywhere in America, and doing what we can to convert some of those obsolete buildings into residential or other uses as well.
Interest rates are rising. They're higher than a lot of people would like to see them. How's that impacting the commercial real estate market these days?
Yeah, look, when you look to the past 5 to 10 years, interest rates are almost across the board higher than they have been during that time frame. And it has put a bit of a cap on development. That uncertainty combined with the geopolitical uncertainty that's out there has really created increased caution within the commercial real estate community. Doesn't mean development's not happening. All it means right now is that there's really a lot more putting pencil to paper to make sure that potential projects are going to pencil out.
What are the economics of new construction versus gutting, renovating existing, for instance, Class C buildings? Because it's not just interest rates that are higher, but also there's elevated construction costs. Labor is a lot more expensive than it was just a few years ago.
Yeah, and you cited two great points there, Scarlett. Both the labor and the materials themselves are certainly higher. Now, when it comes to building a new facility, those are the prime concerns. But when we're talking about converting something, perhaps a Class C building into residential, there are other costs that come to it as well, too. The floor plates for office, while similar to residential, aren't the same. Building codes, zoning ordinances, these have to be accounted for as well, too, because often that takes additional work. So there's even more costs associated with converting a building from office over to residential than simply just the elevated labor and finance costs and construction costs that we see perhaps with starting a new building right now.
Mark, we know that real estate is local by nature. Where in the U.S. is it the fastest to be able to convert an office building into something residential?
It can really vary by market in terms of fastest, but I will rephrase that, Scarlett, and say we are seeing certain markets where more conversions are happening than perhaps in other markets. We initially saw it in Manhattan, no surprise there. Washington, D.C. has really made a concerted effort into converting some of the older stock over to residential now. Actually, Calgary, Alberta was really kind of the pioneer in this, as they were doing this really post-Great Financial Crisis with the tumbling of oil and gas prices, which, of course, have a real impact on the Alberta economy. But right now, I would say D.C. is probably one of the leading markets that we're seeing in terms of the amount of conversions that are happening.
Mark, I spent the weekend driving around central Virginia, and I saw a lot of suburban office parks. Every single one of them had a sign planted in the ground with office space available. How's suburban office looking?
Yeah, as I mentioned earlier, we've seen the real strength in the urban core, but when you're looking at the suburban market, that's lagging. Now, you cited that, you could certainly see space available signs where you were driving around there. And in a lot of suburban markets, that's often the case. Typically suburban markets are, more of the Class B space. They're obviously removed from the urban core. Doesn't mean that they aren't growing. We're in a suburban office park here at NAIOP's headquarters, and our building is 85% leased right now. We just took more space actually and expanded what we have. So it's lagging, but the lag is starting to close from what we've seen.
How much demand is there from the co-working companies, the WeWorks and the companies that are trying to do what WeWork is doing? Is that still a force of demand in the market in commercial real estate?
It is. It may not be the force that we saw leading up to the pandemic when everybody was abuzz about co-working. I mean, think about how much WeWork was in the news prior to the pandemic. But while that kind of fell off a cliff for a while, there's been a noticeable increase in co-working companies that are once again leasing space. And that's not limited perhaps to just some of the gateway city markets. We're seeing that in a number of markets. But again, that growth is still largely concentrated in the urban core.
Mark, thanks so much for joining us. Appreciate it. Mark Savatelli, President and Chief Executive Officer of NAIOP, which is the Commercial Real Estate Development Association, joining us there. My number 3 offspring works for a major national financial institution in a sales role.
Mm-hmm.
They're still 3 days a week in the office, and I told him...
In New York?
No, in L.A.
Okay.
And I told him, get in the office more, and he says, there's no room.
There's no room.
Yep.
So everyone's hot desking and they're being limited to 3 days a week.
And I was not happy with that.
Well, the banks wanted to cut down their costs, so this is how they did it.
I guess that's kind of how they did it. But anyway, I said, get in there as
Does
much
he have to
as
go
you
in with
can.
a rolling suitcase every day?
I don't know. We'll see. This is Bloomberg. Good morning.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
All right, very good. We got Scarlett and Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube as well. We were supposed to have Isabel Lee last hour and extend. They bait and switched me, put Eric Alchunas in, which was a crushing blow.
That was a downgrade for you, wasn't it?
That was a downgrade
Yeah.
for me. But we got Isabel Lee now, cross-asset reporter for Bloomberg News. She's in our studio. You guys have a big take story out today. Lou Wang, Bailey Lipschultz, and you, Isabel Lee. This SpaceX IPO, this is kind of setting new rules and new norms for the IPO market, is it?
Yes, it's just so consequential. It's reorganizing a lot of the parts of the markets. And one of those that it's reorganizing is the stead quiet world of passive investing. So because a lot of the companies behind the massive indexes you can think of, the company behind S&P 500, NASDAQ 100, Russell, they're changing and have changed their rules to accommodate mega cap IPOs like SpaceX. They don't really say it's for SpaceX. It's just SpaceX, because when companies go public these days, they're mega companies as opposed to in the past when they're just, a company. Now you scale privately, you raise funds privately, and when you go public, you're the super giant company. So for the NASDAQ, I think the seasoning period, which you can think of it as the wait time before they add you to the NASDAQ 100, it used to be 3 months. They've narrowed it down to 15 days. For FTSE 100, it's 5 days. S&P is still in consultation, but from 12 months, it's 6 months.
Right. I mean, it feels like they have to go down that path if everyone else did. Is this a one-time thing where they're changing it for SpaceX, or is this from here on out? Because if the SpaceX IPO goes off without a hitch, then we're also going to see Anthropic and OpenAI list as well, and they too could then potentially join the NASDAQ 100 after 15 trading days.
Yes, they never say it's for SpaceX. It's for mega cap companies. So one could think it's likely also for Anthropic and OpenAI. And this isn't unprecedented. In the past, they've also tried to change the rules to accommodate Meta, if I'm not mistaken, in 2012. But analysts estimate that for SpaceX, if the rules apply, index funds would have to buy $20 billion worth of SpaceX shares, which is a lot, and that could really move the markets. And that's not even considering where it will be. Is it going to be communication? Is it going to be industrial? Is it going to be...
Oh, you mean what is it going to be
the
classified
classification, yes. Is it going to be a tech firm? So, yeah, no one knows, but
It's interesting you mentioned that because I was wondering, like, which analysts on Wall Street will be covering this company?
So, yes.
And so what I want to understand is a lot of the aerospace and defense analysts.
Rockets usually are industrials, but then if you look at the revenue generating, I mean, it has cloud services deals with Anthropic. That's communication. Sorry, no, that's tech. But then they, Nicolas Colas of Data Trek
He's
Research,
awesome.
he said it might be communications because of the sales. And guess where Alphabet and Meta is? Communications.
No matter what, it's going to be the gigantic company in that sector, especially if it's something like communications, which doesn't have as many names as the tech sector.
100%, but it's just so unprecedented, to be honest, and it will also pave the way for the mega IPOs we're going to see at the end of this year.
And what I like about the big tech stories, they're just really interesting stories, and they're deeply resourced and deeply sourced, all that kind of cool stuff. They have nice, pretty pictures. I like the pictures.
The pretty pictures always help.
And they've got a pretty picture about how SpaceX IPO stacks up in terms of offer size, the biggest, and in terms of market cap, 1.8 trillion, second only to Aramco.
Nothing can just compare, honestly.
It's just extraordinary. So it's way, way off the grid here. I guess, do we expect this thing to just do a normal roadshow? Are they going to go to, I haven't even seen a roadshow schedule. Are they going to do a day in New York, a day in London, a day in...
That I'm not sure. I think it's going to be mid-June, but I want to bring up one important point also. They're going to allot 30% to retail traders. And just this morning, news broke that 5% will be allotted to employees, which I think is more normal.
Why is that unusual?
That's a huge size because in the old playbook, it's institutional money that gets a lot of this and retailers are just left with leftovers. But now it's really putting the retail investors to a pedestal and recognizing them to be an important part. I mean, it's 30%, which is still minority compared to the 70%, but that's bigger than anything we've heard.
My deal is if it went 30% retail, that means it was a bad deal. I couldn't get the institutional. But this is different. This is Elon. And I think
is it different? Because does that mean there's going to be enough demand after the stock lists and is a publicly traded company? Is it going to have that swell of demand that usually boosts the share price?
Yeah,
I think that's what everyone's going to be worried about. And then if you go through Reddit, the best source on earth,
I know I've got it on my phone, but I just don't find it useful.
Yes,
I'm trying.
about this,
we're getting you. We're gonna. You're gonna be a convert
Some people were like, "Why will I even buy?" They think it's a scam. We all know some people think that, but others are like, "Why will I even try buying when it's going to be in my index fund, aka my brokerage account, soon?" Which again, because of the seasoning shortened periods.
And then another little derivative trade is: do I sell my Tesla? Because I can get Elon by just owning SpaceX.
Too much concentration risk if you have both Tesla and SpaceX.
So if you have an index fund, you basically have SpaceX in a few months.
Yeah, but half the people in this country, I think it's more than half, don't have any equity exposure to the equity markets at all. But but you just look at Tesla, how that's traded over its life. It's traded at just huge valuations on huge volume, huge market cap. It doesn't trade like an auto company, obviously, but it's a play on Elon Musk. And I think that's what the bankers are probably, it's a large part of their pitches. And the valuation is, hey, this is your chance. I think they have their total addressable market is, $28.5 trillion.
Yeah, almost 30 trillion.
That sounds like one of my IPOs from back in the late 90s. Okay, here's the pet market, pet food market, and here's what the internet's going to take, and therefore...
Oh, the references to pets.com don't end.
Exactly. And guess what? It worked. Until it didn't. Isabel Lee, thanks so much. Appreciate that. Isabel Lee, cross-asset reporter for Bloomberg News with the SpaceX story. Big take story here. You can read more of this story on the Bloomberg terminal and at Bloomberg.com/Big Take. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio, on SiriusXM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. The next hour of Bloomberg Intelligence starts in just a moment. We've got mixed trading in the equity markets here today, kind of quiet. The S&P's down 7 points. The Dow is down 200. The Nasdaq's up 11 points there. 10-year Treasury yields, they're higher sharply, up 7 basis points, 4.51%.
This is Bloomberg Intelligence with Scarlett Fu and Paul Sweeney.
How do you think the Fed is looking at tariffs, the uncertainty of tariffs?
Let's take a look at the sectors and how they perform.
A lot of investors getting whipsawed every day by news events.
Breaking market headlines and corporate news from across the globe.
Could we see a market disruption, a market event?
Are people just too exuberant out there?
You see some so-called low-quality stocks driving this short-term rally.
Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio, Originals, and the Bloomberg Business app.
Good Monday morning, good first day of the second half of the year as well, and good first day of June. This is Bloomberg Intelligence with Paul Sweeney, Scarlett Fu, and John Tucker. We've got a lot to cover on this second hour of Bloomberg Intelligence. There's some M&A deals to talk about. People offering to buy MGM Resorts. That's a company controlled by Barry Diller for $48.30 a share in cash. We'll get to that with Jody Laurie, our senior credit analyst here at BI. Matthew Palazzola, our senior analyst who covers PNC Insurance. We'll talk about Berkshire Hathaway making a deal of its own, buying the home builder, Taylor Morrison, for $6.8 billion in cash. Adam Phillips is Managing Director of Investments for EP Wealth Advisors. He'll give us his outlook on the markets. And we're going to get a check-in on geopolitics. Are the U.S. and Iran in talks to come up with a peace deal? Are they not? Ed Price is Senior Non-Resident Fellow at NYU. He will join us with more on that. And Woo Jin Ho, our Senior Hardware and Networking Analyst, will be giving us a preview of earnings out of HP Enterprise this evening after the closing bell. First, though, let's head over to John Tucker for Bloomberg Business Flash.
All right, let's start with oil. It's surging. Traders reacting to the Iranian report that the country is going to stop exchanging messages with the U.S. Energy, right now, the best performing major industry group in the S&P 500. Brent up over 7%, 97.59 a barrel. So it's lifting Treasury yields, as Paul was mentioning. The twos up 8 basis points, 4.08%. The 10s up just about 8 basis points, 4.50, and the long bond back above 5%, 5.02% for the 30s. Best performing individual stock in the S&P 500, back to MGM Resorts. Barry Diller, again, reportedly planning a takeover bid. Keith Lerner at Truist Advisory, meantime, says the 9-week winning streak for stocks, that can continue.
We looked back since 1950 and looked at how often has this occurred, and there's been 10 other times since 1950. And when you look a year later, 8 out of 10 times the market has been up with low double-digit gains as the average.
Right now, the S&P 500 down just 6 points, 74 in the index. The Dow down 224 points. The Nasdaq Composite Index up right now 18 points, up just about 0.1%. I know you love it when I do sports news.
Oh, boy.
Anyway, ESPN says Serena officially making her comeback to professional tennis. Serena Williams is going to play doubles next week at the HSBC Championships.
Where's that being held?
I don't know.
I mean, I know French Open is on the clay court.
Hopefully somewhere it's not real hot like the French Open, but
right.
23 major titles. Serena Williams. She was in the studio here once. It was back a couple of years ago. Very nice.
The best tennis player of all time. No
Oh,
question.
without a doubt.
And arguably one of the best athlete of all time. I mean, what she accomplished was crazy.
Anyway.
Oh, she's not done apparently.
Yeah, I know. Good for her. Good for us.
We check the markets and other stuff right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Scarlett and Paul.
All right. Thank you so much, JT, for that Bloomberg Business Flash. Let's take a look at some stocks on the move this morning. We have a mixed market. The S&P slightly lower than NASDAQ, basically unchanged. Elena Popina is here with us. Elena, what are you looking at?
Yeah, a mixed tape indeed, but a lot of really interesting stocks trading and exhibiting a crazy pattern. I'll start with IBM. IBM, the IT services company, is seeing a lot of speculative activity today. It's up more than 7% after a 6-month-old video of Donald Trump praising the company's CEO recirculated over the weekend. Back in the days when that happened in December, stock didn't react at all. There was little to no reaction. But right now, over the weekend, over Saturday and Sunday, traders recirculated the tweet over Reddit, over X, and as a result, shares are up 6% as the broader IT market is trading little changed.
Really? That's the story?
That's the story.
Wow.
Speculative frenzy.
See, it's again, Reddit. Again, John, we got to get on this Reddit bandwagon here. It's moving markets.
John's not convinced. He's
I've got it on my phone. It now resides
I
on
can't get Reddit on my BlackBerry.
Exactly. All right, what else you got for us?
We just talked about Berkshire Hathaway 10 minutes ago or so. So Taylor Morrison Home, ticker MHC, jumped 22% after Berkshire Hathaway agreed to acquire the Arizona-based home builder. It's an all-cash deal. That's very important. But what's more important is that it's the first major purchase under the new Chief Executive Officer, Greg Abel. And more broadly, it's a vote of confidence in the U.S. housing market that's been kind of lagging momentum because of a broader concern over interest rates, over mortgage rates, over the rate of refinancing. So it's a vote of confidence in the market. No surprise, shares are up more than 20% as we speak.
All right, definitely keeping an eye on what Berkshire Hathaway does with its ton of cash. Last stock you're watching, Elena.
Yeah, it's stock, but it's connected to Bitcoin. Bitcoin is down today. It's trading at about 71,000. And Strategy, known previously as MicroStrategy, fell about 6% after the Bitcoin treasury company founder, Michael Saylor, said that he sold 32 Bitcoin for about $2.5 million. That's not a huge position to unwind. He holds a huge position in Bitcoin overall, but it's more like a symbolic break rather, from the playbook that earlier helped the company become one of the market's largest buyers of Bitcoin, and that's part of the reason why Michael Saylor became so popular with a cult-like following on platforms like Reddit and X. So we'll see how shares react, but so far, shares are down 6% as we speak.
See? Reddit, John Tucker.
Yeah.
Okay.
Well,
That's the theme, I know. All right.
We're trying to get them on Reddit. They're resisting so far. Elena, thank you so much. She covers equities for us. She's, in fact, the team leader for our U.S. equities coverage here at Bloomberg News. And for more conversations like this, be sure to subscribe to our Stock Movers Reports, where we offer 5-minute audio reports on the biggest winners and losers in the stock market. You can find it on Apple Podcasts, Spotify, or anywhere you listen. All right, it is Monday, which means M&A is in the house right now. And one of the big ones that we're keeping an eye on here is People offering to buy MGM Resorts for $48.30 a share in cash. And for anyone who's wondering, People Incorporated is a company controlled by Barry Diller. So let's bring in Jody Laurie. She's our senior credit analyst for more on this. Jody, walk us through what this looks like, because this is $48.30 a share in cash. Is there going to be debt involved?
Oh, there is going to be debt involved, Scarlett. I will not doubt that by any measure. Now, of course, is the deal going to get done? That's the bigger question. But right now, so People owns 26.1%, and they're planning on increasing that by 24% in terms of total ownership, or 24 percentage points in total ownership. And so they want to own 50.1% and have other investors own the other amount. Now, if you look at the whole package of that 74% that's getting acquired, we estimate that's about $8 billion in debt if you exclude the amount of cash that People has on hand, which is a little over $1 billion. It's at $1.1 billion. So $8 billion is quite a lot. Now, if you only look at what they're going to buy, it's still it's still a large amount. It's still $4 or $5 billion in terms of leveraging up the company. So we're talking leverage going from mid 5 times to mid 7 times on a least adjusted basis for MGM. And we view this less so as an acquisition by equals, more so as an LBO type structure. So really just leveraging up MGM, putting all the debt on MGM, and creating a situation in which MGM's private, in which they have more debt on the balance sheet, and it's going to be at odds with, of course, the large leases that they already have, which is about, 3/4 of the debt that they have on hand.
As a former banker, I don't like this balance sheet to start with. What's your market telling you, Jody? I mean, how do these bonds trade?
Yeah. So, Paul, it's one of those names that really frustrates me in general, just because a few years ago they decided to do a sale leaseback of all the U.S. assets. So they got rid of all U.S. assets and instead went into this sale leaseback structure, which is basically they pay rent, they pay taxes, they pay all the upkeep and capex and operating costs on the properties, but they're a tenant. And so you look at that and you say, well, wait a minute, what's the benefit of that? These are long-term structures with a few parties and you're paying constantly. Now, it is a little bit cheaper in theory than borrowing debt all the time, but it is one of those situations that as a bondholder, you say, okay, if they only have about 5, 6 billion, 7 billion in debt outstanding, but then they have about 29 billion or 25 billion, in operating leases, you're not really a big fan of that. And so this is a company where, from a business perspective, it's really fantastic in terms of the reach, in terms of the geo structure that they have. I mean, they have buildings in Osaka. They have buildings, obviously, they have MGM China, which is based in Macau. They have all throughout the U.S. and a really big stronghold in Vegas. But then you just throw on those operating leases, and as a bondholder, you can never get comfortable. But even more so now when it's going to get levered up. And so the bonds are just widening.
Jody, what's going on in the casino sector? We had you on last week when we talked about Fertitta Entertainment buying Caesars, and now you have People's buying the chunk of MGM Resorts it doesn't already own. What's happening in the casino business fundamentally that is causing or that is triggering all this M&A?
So, Scarlett, I think we're in a little bit of a late stage indication from a credit cycle perspective, if I had to opine on it, just because you only see these sort of scenarios in these later stages, right? That's when the LBOs happen. We also have the political situation where things are a little bit more lax at the DOJ and the SEC, and so that also opens the door to these acquisitions getting done, even being a possibility. But for gaming in particular, it's sort of interesting because we also have the prediction markets, which of course have created all sorts of waves in the industry in terms of the digital side of things. So that online gaming, sports betting component has been a big sort of avenue for growth for a lot of these companies, where it's really just, otherwise not really a very exciting industry. And the prediction markets is definitely shaking it up a little bit in the U.S. and causing questions of what's the next growth story. So it's not really so surprising that these investors are coming in and saying, hey, I can do a better job, particularly investors that are already smart in the industry. They've already been involved in it in some sense or involved in related industries in some sense. So we're not surprised as much as we are intrigued and concerned for creditors.
Jody, thanks so much. Appreciate it. As always, Jody Lurie, Senior Credit Analyst at Bloomberg Intelligence, talking about this MGM International deal. MGM owns the Bellagio, my home away from home. If you go there, the Sweeney High Roller Suite, I highly recommend it. They'll take care of you there in the craps tables. I can't lose at the Bellagio crap tables. That's how good it is. I don't go anywhere else because that magic doesn't travel when I go to other casinos.
No Connecticut resorts?
No, please, come on. Let's talk about our good friends at Berkshire Hathaway. Matthew Palazzoli, he joins us here from Bloomberg Intelligence. He covers all the insurance companies, including Berkshire Hathaway. Berkshire Hathaway in the market again here for a deal. What is Taylor Morrison and what does somebody as a Berkshire shareholder think about this deal?
So you may or may not recall, I was in here a couple of weeks ago, and I had said what I would like to see Greg Abel do is hit some doubles and singles, perhaps. Okay. I think this is exactly in line with that. So Taylor's a home builder. Berkshire owns the biggest off-site home builder in the country.
What does off-site home builder mean?
So they build the house, and then they bring you the house. So when I was at the annual meeting in May, they literally had houses inside of the convention center. And those houses are more on the affordable end. This is a vertically integrated company. They're a company they own, Clayton. So they do it from beginning to end. They sell the house. The houses are maybe around $200,000. This company they're buying fits very nicely with it because they're an on-site builder of more higher-end homes. So it's complementary to the business that they have. They're not paying too much. It's $8.5 billion. That's about 2% of their $373 billion cash as of March 31st. And the valuation, these stocks have been beat up, as you might have guessed. So the valuation's down. I think I'm not a home builder analyst, but Taylor was underperforming peers, and I don't think Berkshire minds that all that much to get it at probably a discount to its historical valuation.
And one thing that analysts point out is the fact that Greg Abel said that they want to, over time, unify our site-built home building operations into a combined platform with this new purchase of Taylor Morrison and combine it with Clayton Homes. This is a different strategy, isn't it, from Berkshire's usual approach of letting acquisitions run on their own under their own branding?
Yeah, no, that's a good thing to point out, Scarlett. They typically, Berkshire does not ever talk about synergies or use that as any kind of justification for ever buying something. But Greg Abel did specifically note, so Clayton, they do the business where they build a house and they bring you. They have a smaller business where they do build it on the site. And they were building that, pun intended, over time, through acquisitions. So what Abel's saying is we're going to take that business and probably fold it into the Taylor business, and it's probably a better run through them. Also, by the way, Berkshire owns a ton of manufacturing component businesses. So Paul, you probably have the Benjamin Moore Seafoam paint in your shore house.
You bet.
That's a Berkshire Hathaway product, right? They do flooring, insulation, all kinds of companies. And again, they don't talk about like having synergies here, but there's definitely some opportunity to.
So they control a lot of the supply chain.
Yeah, and Taylor, while Clayton is vertically integrated, Taylor buys from suppliers.
What's the cadence of acquisition activity for Berkshire Hathaway? Do they like to do one a year, two a year, one just opportunistic?
You know the answer to that, Paul. They're going to do it when they see it in the market. They don't. There's no timetable. There's no. We have to do it. We have to deploy cash in any way. They preach patience over anything. So I think it's when we see the deal, we do it. In the note we put out today, we do have the deals and capital deployment that they have done over time, and it is, I think, more than you'd realize. Yeah. They spent $12 billion on Google stock in the first quarter, which is bigger than this acquisition.
We look at Berkshire Hathaway shares, and they've kind of underperformed, down 5.6% this year when the S&P is up about 11%. Does this kind of deal help Berkshire make up some of that gap?
Probably not. I don't think so. I think this is probably Abel building investor confidence over time. I mean, I think that the leaving of Warren Buffett really left a hole in the hearts and minds of people investing in the company, and I think that needs to be rebuilt. I think, ironically, Berkshire's the kind of proto anti-AI trade. They have all the hard assets. They have the financial business and the insurance. Should you see the AI trade kind of sell off, it would be the natural company that I would think would benefit from that. But even in the times where that has happened earlier in the year, it hasn't really overperformed.
Because there's been, we'll let you go, but there's been plenty of times to invest privately in these big tech companies, and they haven't done it.
Yeah, no, I mean, we talked about it. They bought into Google, which is, becoming obviously more and more of an AI play. I think that will happen over time, but I don't think you're going to see them doing those kind of smaller tech deals.
You think about it, there's so much capital or demand for capital, and they're sitting on a bunch of it. You could put the two together. Matthew Palazzolo, senior analyst covering the insurance business. That means he covers Berkshire Hathaway for Bloomberg Intelligence. He goes out to Omaha with the rest of those folks to see the company, and we'll see how that plays out going forward. This is Bloomberg.
Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash brought to you by Golden Crest Metals. Inflation, tariffs, and volatility have some investors turning to gold for stability. To get a free gold and silver information guide and learn how to add metals to your IRA or 401k tax and penalty free, go to goldencrestmetals.com/guide. That's goldencrestmetals.com/guide. Well, the surge in oil that we're seeing that's driving bond yields higher and the major stock averages fluctuating at this point with this report that Iran is going to halt talks is putting in doubt a ceasefire extension with Iran. We have Brent crude up over 6%, 97.23 a barrel. WTI up 7%, 94.01 a barrel. Two-year yield up 7 basis points, 4.07%. And the 10-year almost at 4.5, we'll call it that, up 6 basis points right now. And NVIDIA entering the PC market with a new chip aimed at loosening the stranglehold of Intel in that arena and modernizing the chips for the AI era. Intel down 2.5%. NVIDIA is up close to 4% in today's trading. And then you have MGM, the best performing stock in the S&P 500. It is up right now 16.2%. Barry Diller making that offer at the remaining portion of MGM Resorts International. Doesn't own already. The latest pivot for the billionaire media mogul after he overhauled IAC. You see this one? Shortage of whey. That's W-H-E-Y.
It's the
protein story.
Yeah, I was just going to say protein powders made with whey, right?
Yeah, it's prompting food manufacturers to reformulate their products. High protein versions of everything from Eggo waffles to Starbucks lattes now on sale. Whey suppliers are struggling to meet demand.
It's all about protein. Paul's not convinced that protein's the way to go, right? You don't call chicken or beef protein.
No, nor will I, because that'll be done in a year. We won't even be mentioning it.
I sprinkled some whey, some protein dust on my oatmeal.
You feel better now?
Not really. I don't think it made a difference. But
I know people who add whey into like their cake batter.
Oh,
so
yeah.
that their cakes are protein enriched.
Well, thank you for weighing in. We check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash, Scarlett and Paul.
All right. Thank you so much, John Tucker. We have a market that's starting the week with some confusion insofar as the S&P 500 unchanged. The NASDAQ composite higher by 0.2%. We continue to have this disconnect between consumers saying that they don't feel great about the economy and about prices and about employment, while earnings show that corporate America is doing just fine, and in fact better than fine, with profit margins holding up really nicely. Adam Phillips is managing director at EP Wealth Advisors, and he joins us now from Torrance, California. Adam, how do you reconcile those two things? The fact that consumers are negative and sour, and corporate America is saying everything's great.
Yeah, absolutely. Well, I think that we know the stock market is not the economy. When I've been speaking to our clients here, a lot of them, they're reluctant to really complain about the market and the performance they're seeing, and obviously it's helping them and their balance sheet, but at the same time, they just don't feel good with all the headlines they are seeing, and obviously with a gas station seemingly on every corner, it's really hitting them constantly in the face. And so they say, we just don't get it. And so it really does come down to earnings. If it weren't for earnings over these last couple of months, I think it could have been a very different story. And so if we were just to rewind the clock before the ceasefire, we were talking about what could go right to actually get the market to reverse course and trend higher. Now what we're talking about is what could go wrong. We know that earnings have been the story and one of the main catalysts here over the last several weeks, and so that's where we're really focused. If this is going to continue, and Wall Street is really going to continue to propel higher, we need to make sure that earnings continue to keep pace as well.
What's the AI story for you and your clients these days? I mean, initially it was just, be quiet and just go buy NVIDIA and some of the other chip names. That's still the case, but a lot of folks are trying to broaden that out. How do you guys think about it?
Absolutely. Well, the first thing we say is that you can have conviction in this AI theme without getting over your skis. And what that means for us is when we're building individual stock portfolios, we do not want to be bullied by the index and bullied by index weights. If you look at NVIDIA, that's 9% of the S&P 500. We know how concentrated this theme is. And so we're saying, have exposure, but make sure that it's diversified. And so of late, we've seen this in the chip makers. We've seen this in the semiconductors, which I would argue are also a little bit extended. We have some exposure there, but you look at semiconductors, the index itself, up, I think it's trading currently 60% above its 200-day moving average, over 30% above its 50-day. These things are a little extended, we think. So we say diversify in other sectors. Look at areas like industrials, like utilities. There are other ways to play this. And let's focus not just on phase one, which is really building out this infrastructure, but also who these beneficiaries might be down the road. Who are the key users of artificial intelligence, and how could they ultimately utilize this new technology to support their bottom line?
Yeah, the second derivative plays here of the whole AI revolution. Beyond diversifying to industrials, to utilities, I noticed that you're neutral on equities overall. Where else, in terms of asset classes, would you be looking to put some more money into?
Absolutely. So we're currently neutral on equities, and that's really just a reflection of how far we've come and the fact that we think that there's certainly some catalysts to move higher from here and some potential risk to the downside as well. So we're comfortable there. We've been that way. We actually came into the year in neutral equities, so we haven't felt really compelled to change that in light of what's going on around us. But we are neutral on fixed income as well. We always say there's more than one way to invest in fixed income. Not all bonds are created equal, and so we do have an overweight to credit right now. We're underweight government bonds. We are underweight duration relative to the bag and our primary benchmark. And then in some client cases, we are utilizing alternatives as well. These are generally semi-liquids. Rather than the drawdown structure, although we do use those as well. But with alternatives, we know that that's really been a key topic here over the last several months as well. And so here you just have to make sure that you utilize them appropriately and that clients know the risk that they are getting into. But we do think that alternatives do offer some diversification potential to portfolios as well.
Adam, thanks so much for joining us. Really appreciate it. Adam Phillips, Managing Director at EP Wealth Advisors, joining us via Zoom from Torrance, California. It's not just SpaceX, but that's certainly sucking up a lot of the wind in the IPO market. There's an active calendar out there, folks. A lot of stuff going on out there. We want to get the latest. Anthony Hughes, Bloomberg U.S. Equity Capital Markets reporter, joins us here. Quantinium. What is Quantinium, and when is this thing going public?
Well, Quantinium is the first quantum computing company to go public in the traditional way. There's a number of other pure play quantum computing stocks that are listed on the stock market, but most of those, all of those, have gone public via a SPAC process. So this is the first one that really has going public via a more traditional process, and that sort of reflects the more heavyweight backing, you might say, of Honeywell. But this IPO is pricing on Wednesday night, and the news this morning was that both the price range and the number of shares sold have been increased, and that really reflects very strong demand for the IPO. And we've reported that it's double digits oversubscribed. So there seems to be a heap of demand for this deal in particular. I mean, there's 6 other IPOs pricing this week, and then we're going to get on to SpaceX. But the Quantinium seems to be the one that people are most excited about before we get to SpaceX.
I'm so glad you pronounced it first because I couldn't figure out how to pronounce it. Quantinium. It's not an AI play. It is quantum computing, though. In terms of people who want exposure to, advanced technology, are there going to be people who are worried that there's too much concentration in like a SpaceX and a Quantinium to go after both?
Well, I mean, I think that the quantum computing theme has been playing out for a while now, and this is something that is sort of like happening parallel with AI, and it's somewhat tied into the AI theme. But these are really fast computers that have some specific, interesting use cases, especially around things like drug discovery, where the time it takes to discover drugs could be potentially be accelerated substantially using quantum computing. But it's quite it's an area that investors have been looking at for a while and have made a fair bit of money on it. It sort of peaked a bit last year in October, I think it was. But you know, there's a renewed appetite for this sort of stuff, and clearly the market has a strong risk appetite at the moment. So they're doing more than one thing at a time in terms of chasing the AI stuff, the AI derivative stuff, the space stocks, and quantum computing stocks. So all of these themes are, you know, obviously very strong at the moment.
SpaceX, what I have not yet seen is a roadshow schedule. When are we going to get that, do you think?
Yeah, so this is why this week is such a big week, is that likely on Thursday we're going to see the IPO actually launch, the marketing begin, and at that point you would well, it wouldn't necessarily be widely available to the public, but you will hopefully will see that there is a you know, you'll get some more detail around the marketing schedule. But essentially this whole process is moving forward fairly quickly, and so once the marketing begins on Thursday, if
has that been confirmed that they're definitely
that's not 100% confirmed, so
okay.
Things could change. But you know, this, as I say, this process has been happening fairly quickly. So it looks like SpaceX has probably put a little bit of a buffer into the timetable so that if there is a delay, but at the moment it doesn't look like there's going to be any delay. And so really the marketing would begin on Thursday, and the IPO would probably price, you know, a week later on the Thursday. So that's really a 6-day marketing effort, which is pretty fast for you know, the biggest IPO of all time. But you know, there's so much anticipation and you know, reorganization of capital markets around this deal that people are pretty well prepared for it by all accounts.
So if it's going to price on Thursday the 11th, does it mean it will begin trading on the 12th, or could it wait a few days? I'm just trying to get a sense of when this whole thing will actually hit the market.
If it prices on the 11th, it would debut on the 12th. I mean, I think there's a little bit of speculation that the process could get pushed out a few days, but from the recent contact with sources, it suggests that it's all on track.
So we had some news today that SpaceX will reserve up to 5% of shares in its initial public offering for certain employees and friends and family of the executive officers. Is this typical, or is this
direct share plans have been you know, are pretty common. I mean, there was an amended filing this morning from SpaceX which had, you know, some very minor adjustments to the prospectus, and that was one of them. It just specified the size of that part of the offering. But you know, I think you know, some of the other details that are still missing include the valuation, the price range, and also you know, I think there's certain things that aren't really in the prospectus. For instance, you know, we've reported pretty widely that maybe 25-30% of this IPO is going to go retail, but that's probably not going to be specified in the prospectus. It's something that we'll hear about separately.
Before we let you go, Anthony, there's also going to be a Canadian company with an IPO soon?
Yeah, Apotex Health is they've launched they launched their IPO this morning. They have a bit of a colourful history, but yeah, I mean, the Canadian IPO market, that's really a pure Canadian IPO in the sense that it's listing in Toronto. But yeah, there haven't been a huge number of Canadian IPOs.
Remember these dudes.
Yes, it's a colourful backstory to this one. You might want to elaborate.
Barry Sherman and his wife, Honey Sherman, were found dead in their Toronto home in December of 2017 in what police described as a double homicide. The case remains unsolved.
Okay, we're going to have to dig into this a lot more later on. It feels like a People magazine article right ahead of us. All right, Anthony Hughes, thank you so much. He is our IPO reporter here at Bloomberg, of course, covering all the big listings, U.S. equity capital markets here in New York. We've got a lot more coming up on Bloomberg Intelligence, including a conversation with Ed Price, Senior Non-Resident Fellow at NYU on geopolitics. This is Bloomberg.
headlines and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. Well, right now, energy, the best performing of the major industry groups in the S&P 500. Oil is surging as traders react to the Iranian report that the country is going to stop exchanging messages with the United States. Brent up 6%, 96.75 a barrel right now. That also has bonds selling off in price, so the yields are higher right now. The 10-year, the benchmark, 6 basis points higher, 450 right now. The long bond also just above 5%, up 3 basis points at this point. NVIDIA releasing that new chip for PCs and laptops. It's called RTX Spark Super Chip. So it's going to challenge Intel and AMD, among others. Shares of Intel right now down 2%. NVIDIA shares up just about 4.3%. Among the biggest gainers, shares of Arizona-based high-end home builder Taylor Morrison Homes up 22%. We told you this before. Billionaire investor Warren Buffett's Berkshire Hathaway holding company agreeing to buy the company for $6.8 billion in cash. In the meantime, Sarah Hunt at Alpine Saxon Wood says there could be clouds on the horizon for stocks.
It's a very narrow market. The earnings are being driven very, very small slice. That's a very exciting slice, and everybody's really excited about it, but it's not quite as broad. And if you don't get inflation to back down, you could start seeing some issues into earnings from that.
The S&P 500 up 10 points, so yeah, that's a record. NASDAQ Composite Index up 97 points, yeah, that's a record. Dow down 90 points, 50,941. I don't think this is Barry Diller related in any way, but Las Vegas's buffets are vanishing.
What? The all-you-can-eats?
Yeah, MGM Grand serving its last $45 mimosa brunch on Sunday yesterday. The Strip now boasts about half a dozen all-you-can-eat restaurants after once hosting more than 10 times that number.
Yep.
They're just disappearing.
Yep, high-end restaurants pricing out the average Joe in Vegas.
Yeah. How many times have you gone to those all-you-can-eats?
Never.
Really?
Yeah.
I went to one in Atlantic City way back when. It was scary. I was looking for the women, dressed in evening gowns and the guys in tuxedos.
For an all-you-can-eat buffet?
They weren't there. Anyway, we checked the market.
Strange that.
For you right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash.
All right, John Tucker, thank you so much. We appreciate that. Scarlett Fu and Paul Sweeney were live here in our Bloomberg Interactive Broker studio. We're streaming live on YouTube as well. As John Tucker was just reporting, oil spiking here because I guess we're no longer exchanging notes with Iran. My vision is like middle school kids in homeroom exchanging notes. That's kind of what it feels like here. So I'm not sure where we go from here. I don't think the market is sure where we go from here. I'm not sure the White House is sure where we go.
The market may not be concerned, though.
Market may not be concerned. Exactly. As John Tucker was reporting, hitting new highs here. Ed Price, he's concerned. Non-resident senior fellow at NYU, joining us live here in our Bloomberg Interactive Broker studio. Ed, what do you make of this elongated ceasefire and on again, off again negotiations? It seems very odd. I guess, what do you make of it?
It is very odd, Paul. It's kabuki theater, right? It's just, as you said, it's very superficial. I don't know what to make of it, similar to the government, similar to markets, but I'm going to add a caveat, which is that I don't really care. And I'm very bored of the financialization of geopolitics. I'm fed up with listening to the oil prices up or down as a measure of our security. So it doesn't really matter. To the extent that you pay a little bit extra at the pump, that's fine. It's not another oil shock per the 70s so far. Just like the tariffs. The tariffs turned out not to be a disaster, right? So what I'm worried about is whether or not the United States is flexing its muscles in an era of geopolitical competition. We have bad guys on the other side of exchanges, of bad faith counterparties, and we've decided to use some hard power. So I don't think the measure of that is the markets.
Okay, we're trying to get rid of the bad guys. How are we doing on that front? Because we've been in talks, negotiations, and I know you don't care about the latest tit for tat, but so far it seems like both sides just want to drag this out.
Both sides do want to drag this out because it suits both sides, right? Again, back to the kabuki theater analogy. You need a good guy, you need a bad guy, you need someone on stage. But if your question is, how are we doing on killing bad guys? Pretty well, because there are now fewer bad guys. And if that sounds like a barbaric statement, it's the answer to your question. We have, in fact, degraded Iran's hard power. Now, if you look at like history, there's often a premium if you have a sociopathic leader in foreign policy and a discount at home, because of course they mess with the civilian population. And autocracies have feasted on that dynamic by basically saying it doesn't matter what happens to our domestic populations. So they've solved for a sociopathic foreign policy. And with all due respect to the president, whose mental health or otherwise I couldn't possibly comment on, we now have a counter to that.
So what's the day after type of situation in terms of just dealing with our quote unquote allies, the folks that we've been with since the end of World War II? How's that dynamic changed, and is it irreparably changed?
Well, I hope it's changed irreparably if it means that the Germans are going to seriously rearm and put into the field a force that the Russians wouldn't dare mess with. I think one of the biggest mistakes in world history is that the French, the Germans, and the British, who had very similar political systems before the First World War, decided to kill each other. And if they'd had a longer view, if they'd looked at the Kaiserreich and said, well, it's not quite a parliamentary democracy, but it might get there, and instead had imagination about the potential power of Russia and Eurasia, they might not have had that war. Now, I'm not suggesting that they should have electively gone to war with Russia, but now, finally, the European Union is realizing that it needs to defend itself.
Okay, and we're seeing that kind of play out very slowly because this is Europe, after all, that we're talking about. How does China fit into this? The president met with Xi Jinping not so long ago, and I believe he still has another 2 meetings scheduled with him this year. Iran is always kind of overshadowing everything, and we're not quite clear what they discussed when it came to Iran. But how do you see it affecting the contours of how he approaches this war in Iran?
As relaxed as I am about the U.S. engagement in Iran, as fretful as I am about a potential US-China war. So I don't think there's any winning a war with China. I don't think that it would be good for the Chinese either. These are superpowers facing off over Taiwan and the South China Sea. So far as I can see as an analyst in the sidelines, China's looking pretty rosy right now. It hasn't actually crossed anybody's borders. It hasn't actually bombed anybody. It's manufacturing things and sending the world some degree of economic stability. Now, if that changes in the future, I might change my tune. I might turn around and say, well, maybe the same treatment with regard to an invasion of Taiwan would be appropriate. But look, back to Iran, I think it suits the Chinese to a degree that the United States is running down its munitions, but ultimately they want energy because their strategy is based on, as I say, macroeconomic stability and exports.
So what is the end game here for the U.S. in Iran in a reasonable, I'm not sure if we can use that term, but a reasonable sense? How do you think this plays out?
There is no reasonable end game, right? This is why we've come back 3 or 4 times together to talk about this. There is an unreasonable end game in which one side thinks we have to throw in the towel because too many of our guys are being killed. Again, a barbaric statement, but true. I don't think that we're going to get to that point. I think the Iranians will likely get to that point first. But the wild card here is, of course, Israel. Israel is pursuing its own security interests. And the Iranians have sort of thought, oh, well, wait a minute. If we say to the Americans, we're only going to talk to you if the Israelis stop doing what they're doing, full in the knowledge that the Israelis will ignore them, then we are actually on the hook for a regional war that we don't know how to get out of.
So what does that mean for U.S.-Israeli relations?
U.S.-Israeli relations are solid, and Israel knows that. They're solid because people like me support Israel as the sole democracy in the region that's worth supporting. And I would add that it's the greatest moral infraction of our time that we've accused Israel, of all countries, of genocide. So domestically, I think people are going to get it twisted and continue to criticize Israel. But if this is indeed World War III or anything close to it, we want Israel doing what it's doing. We want Israel on our side, and we want to attack Iran. It's that simple.
And there you go. So the question is there an end game here for any of these parties here? Ed Price, thanks so much for joining us, non-resident senior fellow at NYU, joining us live here in our Bloomberg Interactive Broker Studio. And again, just looking at the rhetoric today is not supportive of that peace plan that was circulating in a memorandum of understanding. So what do you see? You see higher energy prices. That's the first order of business here. WTI crude oil up over $6 here.
But you don't see much of an impact on equities, and that's because the AI trade continues to move forward. In fact, the S&P 500 up marginally 0.1%. Tech and energy are the sole gainers in the index. So we'll continue to keep an eye on that. The rest of the index is lower, dragged lower by utilities, consumer discretionary, and consumer staples. From New York, this is Bloomberg Intelligence on Bloomberg Radio. Keep it right here. We've got much more coming up here, including a conversation with Woo Jin Ho on HPE reporting earnings this evening.
You're listening to Bloomberg Intelligence with Scarlett Fu and Paul Sweeney on Bloomberg Radio.
Scarlett Fu and Paul Sweeney are live here in our Bloomberg Interactive Broker Studio. We are streaming live on YouTube and streaming live on Bloomberg.com as well. Last week we had Dell Technologies blowout quarter here. They were showing huge demand for AI servers. People are starting to extrapolate that and see where else can we see demand for this AI build with that in the tech stack. Hewlett-Packard Enterprises, they report after the close today. So all eyes are on HPE. Let's check in with Woo Jin Ho, Senior Tech Analyst for Bloomberg Intelligence. Woo, talk to us about, A, what we saw from Dell last week, and B, what we can expect from Hewlett-Packard Enterprises tonight.
Yeah, so, hey, Paul, thanks for having me on. So Dell last week, was a fantastic blowout quarter, like you said on the intro. And it was more than AI servers. It was actually traditional servers, really driving up, getting benefits from a pull forward of demand because of the memory price inflation that's going on right now. And quite frankly, I expect HPE to be a beneficiary of that as well.
Now, as I recall, HPE bought Juniper Networks, I guess, last year. Talk to us about why they did that and how that may be seen in the results.
Yeah, so Juniper was more of a diversification and also a margin play. Roughly 50% of their net operating profits are coming from the networking business because of Juniper. And quite frankly, if we look back at Cisco's results a couple of weeks back, the core networking business at Cisco has been doing well. So if we look at Dell's results as it relates to HPE's server business, Cisco's results is going to be positive for HPE's networking business as well.
HPE, boy, up another 6% today, up 9% year to date. Just extraordinary. How high can these go?
Hardware trade is in.
What's that?
Well, look, the hardware trade has been very, very hot, right? For a couple of reasons. I think coming into the quarter, people were a little bit concerned that the memory crisis is going to lead into a pull forward of demand, and then demand is going to sink in the second half of this year. What we're learning from not only from HPE's results, but also HPQ and Cisco's results is that the demand is a lot more durable than people would think. And what I think may be happening on the server side is that there's this structural shift that's going on in traditional server compute, where because of the AI era and as more enterprises use AI, they're going to need a lot more compute, and server demand is going to remain strong, not only for this quarter, but also for subsequent quarters.
And then SanDisk, up 640% this year, up 4,500% over a trailing 12-month basis. What are we doing here? I mean, are there earnings there, or is this speculative? Is this a meme stock? What's going on?
Well, I mean, if we're talking about the shares, expanding, 1,000 times, right? There's a couple of things, right? The AI story, AI needs a lot of memory, especially DRAM memory, and there's also HBM memory. And there's only so much capacity out in the world out there to help support it. And SanDisk has been one of the key beneficiaries there.
How does that market, I guess, normalize? When can the industry ramp up production to meet the demand for memory chips?
Yeah, so it's going to take about a couple of years. They're starting to build in the capacity into 2027, and then it may not meet the demand until the end of 2028, right? So there's not only do we have the AI server that needs the memory chips, but also traditional servers. Demand is rising, as I just said, and then the PCs, right? So as AI PCs start expanding, or the volumes start expanding, you need more memory for that. So there's this insatiable demand for memory that's unfulfilled right now.
Is there? It's probably way early to even think about this, but I know the business. You don't want to. You got to be careful when you build this capacity, like whether it's in chips or memory, because it's a cyclical business. But is that no longer a concern here for that part of the market?
Yeah, I've written a couple of notes that said, is this time different, right? And then we actually have to go back a couple of years back, coming out of the post-COVID era. Companies were very cautious in adding the necessary capacity just for normalized demand. And this AI boom just, hockey stick right up and surprised, I think, the whole industry. It goes into the optical space, the memory space, the hard disk drive space, and they're just catching up to the necessary capacity needed to support AI. So I think it's durable for at least another couple of years. The question is when does the trade catch up to it when it comes to valuations?
I tell you, well, the CEO certainly did well. He took last year's compensation, $4 million in cash, $15 million in stock. That stock is now worth $137 million. So that was a nice bet on himself and on the company for David Gogler, the CEO. So good stuff there. All right, Woj, thanks so much. Appreciate it. We'll check in with you soon as this tech story continues to just ramp up big time on the AI play. Woo Jin Ho, Senior Technology Analyst, Bloomberg Intelligence. He's based down there in our Princeton office where they have great breakfasts and great lunches. It's hard to get people out of that office. Looking at the markets here, we got red and green on the screen here. The S&P's up 4, the Dow's down 112, and the NASDAQ up about 60 points. That's 0.2%. And oil, that's higher. Got to call it out. It's up over $6 here. WTI crude oil just below $94 per barrel. For our listeners in the U.S., a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM Channel 121 is presented by Golden Crest Metals. Stay tuned for the latest market news and industry research. Your top stories. Global business headlines are coming up in just a minute. Again, stocks mixed. Yields higher. 10-year Treasury yield up 6 basis points. 4.5% there. Bitcoin calling it out for Tom on the Upper East Side. It's down 3.5%, 71,000 for Bitcoin. More reporting coming up. This is Bloomberg.
From ABC News, I'm Michelle Franzen. Talks are off between the U.S. and Iran. Tehran officials say over Israel's ramping up strikes against Hezbollah in Lebanon and threatening now to block the Strait of Hormuz. It comes after the U.S. carried out what it called self-defense strikes this weekend in response to Iran's targeting of a U.S. airbase in Kuwait. ABC's Tom Sufi Burridge is in Jerusalem with the latest.
The Iranians are pretty clear. They are saying that there has to be a ceasefire on all fronts. They're saying that there can't be some kind of deal between the U.S. and Iran if there isn't a ceasefire also in Lebanon, but the Israeli military, the Israeli government seem to be pushing in the opposite direction.
In Newark, New Jersey, ongoing demonstrators protesting conditions for detainees at the Delaney Hall facility clashed with law enforcement Sunday night. ABC's Aaron Katursky is on scene.
There were dozens of arrests for violating a curfew the mayor of Newark imposed outside the ICE detention center at Delaney Hall. Anywhere within a half mile is off limits from 9 p.m. to 6 a.m., and police moved in to clear the streets. The arrest capped a combative weekend with some protesters setting fires and using barricades as weapons. Mounted police and officers in riot gear pushing them back.
Health officials continuing to work to trace the Ebola outbreak in the Democratic Republic of Congo and Uganda. More than 1,000 cases now suspected, but the WHO says there are no confirmed cases outside Central Africa. In Colorado, a spokesperson for the Department of Corrections confirms Tina Peters is no longer in custody. The former clerk was convicted in a scheme to breach voting systems in the search of evidence of election fraud in 2020 and has been released from prison after being granted clemency by Republican Governor Jared Polis. In a statement to ABC News, Colorado Secretary of State Jenna Griswold said Peters' release, quote, will embolden the election denial movement. And a string of severe weather targeting parts of the South and Plains today. You're listening to ABC News. In Laos, the remaining 2 missing miners in a remote cave have been located by rescue crews, but now crews have to find a way to get them out. 5 other miners have already been rescued. Today's June 1st, and that marks the start of the 2026 hurricane season.
The yardstick for measuring hurricanes is the Saffir-Simpson scale, which ranks storms based on their top sustained winds. Category 1 starts at 74 miles per hour, Category 5 at 157. But a pair of climate scientists is pushing for the creation of a Category 6 as anything above 192 miles per hour, because they say storms are getting more intense. At this point, the National Hurricane Center has shown no inclination to change the scale.
ABC's Jim Ryan. NOAA is expecting a below-average hurricane season in the Atlantic. The start of June, also the start of a dog bite awareness campaign from the Postal Service.
It's no joke. Last year, postal employees suffered more than 5,200 dog attacks. California with the most on carriers, averaging well over 1 a day. Dog owners, you're urged not to open the door for your carrier unless your pet is in a separate closed room. Should your dog attack a postal worker, you could be liable for medical care, replacement clothing, emotional distress, costing you many thousands of dollars. That would really bite. Wayne Cabot, ABC News.
According to one study, remote work may be one reason why unemployment rates among college graduates are now high. I'm Michelle Franzen, ABC News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
Iran hangs up the phone. Welcome to the Monday edition as the regime reportedly cuts off diplomatic talks with the U.S. in protest of Israel's expanded assaults in Lebanon, throwing new doubts on the prospect of a deal to reopen the strait. We're going to get the latest for you in just a moment here. From Bloomberg's Michelle Gemrisco, as President Trump says, sit back and relax. Congress is back from recess today. Yes, they're back in town, here to face a pile that we'll walk through with Nathan Dean from Bloomberg Intelligence. And as President Trump becomes the backup plan now for the big concert at America's 250 Festival, we'll have more with our political panel. First, Wall Street, the S&P 500 coming off its 9th straight weekly gain. We'll see what we got today with Amy Morris. She's got her eyes on the markets here in D.C. Amy, how's it going?
Thank you, Joe. Oil is surging now. Traders reacting to that Iranian report that you had mentioned, that country is going to stop exchanging messages with the U.S. over Israel. WTI more than 7% higher now, closing in on $94 a barrel. And Brent crude more than 6% higher, near $97 a barrel. Financial analyst Meredith Whitney is with Meredith Whitney Advisory Group.
I think you do what most investors are doing, which is ignore it. I mean, there's, not to be a Debbie Downer, but it's unrealistic to think that this war gets sewn up in days or even months.
Meredith Whitney on Bloomberg Surveillance. We do check those markets for you all day long here at Bloomberg. The S&P 500 up 7. Actually, it's a little changed on the upside. Now, NASDAQ up about 0.25%. They're starting to claw back some of those losses we saw earlier today, and the Dow is down 0.25%. The 10-year Treasury yield at 4.49% and the 2-year yield at 4.07%. Anthropic, this just in, the Bloomberg terminal has confidentially submitted a draft registration statement on Form S-1 to the SEC for a proposed IPO of its common stock. We're going to continue to watch that for you as well. U.S. manufacturing activity expanding in May at the fastest pace in 4 years, bolstered by a pickup in new orders and production, adding to speculation that the Fed will keep rates higher for longer. Barry Diller made an offer for the remaining portion of MGM Resorts that he doesn't already own through his business Empire People, which expects to fund a transaction with a combination of cash and additional credit and equity funding commitments, and expects to own just over 50.1% of the equity of that company. MGM Resorts shares now 15% higher. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's get back to Balance of Power with Joe Matthew.
All right, Amy, thank you so much, and welcome to the Monday edition of Balance of Power. Rabbit, it's the 1st of June, and it really does feel and look like summer around here in the nation's capital. I hope it does where you are, because the news, again, is not that great. At least you can walk outside at the lunch hour and kind of enjoy where you live. We're live on Bloomberg Radio, streaming live on YouTube. You can dial us up right now by searching Bloomberg Business News Live. If you've got your satellite radio handy, we're always on channel 121. As the president says, Iran really wants to make a deal. And it will be a good one for the USA and those that are with us, he says. But after the weekend of back and forth, this is clearly a market that isn't sure about what in the world is going on. There's the truth if you're with us on YouTube. But don't the Democrats, he asks, and various seemingly unpatriotic Republicans understand that it is much tougher for me to properly do my job and negotiate when political hacks keep negatively chirping at levels never seen before over and over again? That I should move faster or move slower or go to war or not go to war or whatever. Just sit back and relax, he says. It will all work out well in the end. It always does. Exclamation point. President DJT. A lot of posting over the weekend about the concert, about the Kennedy Center, about the war in Iran, as he did hang around town here for the balance in Washington. And we do have a lot of news that's coming from overseas. Much of this is reportedly speaking as Iran cuts the line because of what's happening in Lebanon regarding Israel. And this is interesting here. We're getting further updates now. And by the way, the president meeting with the Speaker of the House this morning at the White House. It'd be interesting to see what this leads to, but that brings us to a completely different level here with the weaponization fund. A Lebanese official, according to Axios, this is the latest we have on this, told the U.S. that Hezbollah is ready for a full ceasefire with Israel. So could this whole thing come together today? The back and forth has been so hard to track, it's very difficult to know. The Speaker of the Lebanese parliament, though, is telling the Trump administration Hezbollah is ready for a full and immediate ceasefire with Israel, which is now at a whole new level in expanding its ground assault in Lebanon. According to the Israeli military, Hezbollah fired more than 300 projectiles at its soldiers in Lebanon and northern Israel over the weekend. And of course, the U.S. and Iran are still lobbing shots at each other as well. President Trump talking about things working out well, even as we fire at each other in the South. And so we want to start there with Michelle Jamrisco. Maybe we can find some sense or a path to a resolution here in Washington today. She is Bloomberg News White House and National Security Editor. It's great to see you, Michelle. You can probably add a few back and forths to what I just described, but it's week after week of this, and you wonder if anything has actually changed. Are we closer to a deal?
Yeah, I was wondering where you were going to start, Joe, because there is so much that is going back and forth, and then sometimes we get into the sort of Groundhog Day scenario where we feel like we're back where we started yet again. So I think it's important to start from last week. We saw the investors, most investors buy into the optimism that a deal was nigh, especially amid reports that there was this tentative deal and all it needed was Trump's sign off. And then we got into this zone, which we wrote about on Friday, where there were conflicting messages out of the White House that suddenly Trump was taking a more hardline position, even on things like tolls in the Strait of Hormuz that he had a different position on before. So we're seeing a lot, perhaps it's art of the deal, where he's pushing a hard line and only to retreat in the end. We don't know, but certainly not encouraging, and markets are reflecting the pessimism this morning out of Iran's reporting that they're cutting off messages through mediators too on negotiations. And then on top of it all, as you mentioned, the Israel front, which has been a key sticking point, not the only one, but a key sticking point for Iran, that, you know, this fighting must also stop for the whole thing to come together in terms of a peace deal or a further ceasefire. So that's another thing that's kind of standing in the way, and headlines just crossing the terminal some minutes ago that Iran is now threatening Israel if those attacks in Lebanon continue. So there's a lot of action here and kind of unclear where the talks go at this point.
Earlier yesterday, Israel Katz, the Israeli defense minister, said the IDF had planted, and we saw images of this, an Israeli flag on Beaufort Castle, which amounted to a permanent presence in the region, he said. Obviously, you have different voices speaking to this on different levels here, but that's a deal breaker when it comes to Iran, is it not?
Certainly for Iran's perspective, I think we've heard over and over again, this fighting needs to stop too. And what we're hearing, when we think about like how this is moving forward from Trump's perspective, we know that he has the hawks in his ear from, Israel, but also in Congress, saying you got to finish this fight. We got to keep fighting. We have to truly defeat. And you hear it from Israeli officials every day.
Yes.
They want to finish the job, so to speak, on Iran.
All the while, Iran has ballistic missiles in the air fired at Kuwait, presumably toward U.S. bases. How can we call this a ceasefire if ballistic missiles are flying?
Yeah, well, that's been a question for some time. It's,
That's right.
Something of semantics.
Seems to be
call it
new
a
level
ceasefire
here.
when the nothing has really ceased in terms of some attacks. And, the U.S. has branded these strikes in the recent days as defensive in nature.
Yeah, self-defensive.
But, I don't think Iran would see it that way. They certainly have not cast it that way from their own perspective and from their strikes as well.
Well, it's great to compare notes with you, Michelle. Thank you so much. Michelle Jamrisco helping to lead our coverage here of this very sensitive matter in Washington. As Amy Morris mentioned, crude oil prices are on the move today. It's the biggest move we've seen since the beginning of April. WTI West Texas Intermediate up almost $7 or 8% to top $94. Brent is just above 97, up about 7% there. So it's something that we've got an eye on. The XLE is climbing. Big oil is moving higher on this. Chevron and Exxon the same. We've got breaking news that we want to mention here as everyone obsesses over the looming SpaceX IPO. There's another big one coming, and that's Anthropic. And the company has confidentially submitted its draft IPO filing to the SEC. And I'm glad to say that Ed Ludlow is standing by to jump on this breaker for us, because the co-host of Bloomberg Tech and the man who covers AI so effectively for this network is with us now live from San Francisco. Ed, are we learning anything we didn't know from this filing?
Well, no, just the absolute fact and certainty that Anthropic is on a path towards the public markets, right? There's a mechanics to it. When you file confidentially with the SEC, there's nothing in the S1 on the number of shares being offered, the price range. There's no data in there. But it's a company's choice when they do file confidentially to say something about it. And Anthropic has said something about it. They've posted to their blog the usual boilerplate. It will depend on market conditions and other factors. But it is really interesting because it is the Monday after the Thursday, Friday that they just closed an absolute monster private round, $65 billion at a $965 billion post-money valuation. Timing is everything in this game, of course.
Timing is everything, and of course, OpenAI knows that as well.
Yeah.
What would be the sequence of these debuts, Ed, and how close might they all fall?
What's really important is to say we just don't know. So the prior reporting was that OpenAI's confidential filing was imminent. And yet here we are. It's not done to the best of our knowledge. The chronology as we had it prior to this Anthropic S1 being filed confidentially is that SpaceX, which will be the biggest IPO of all time, and if we have time we can go through the numbers on it, will price and list in mid-June to late June. So that is imminent. We had thought that OpenAI was on a path to maybe look at September for an IPO, and the prior reporting that Anthropic would look at October. There is a lot of crossover. It's highly analogous, the story between the three of them in the AI context. And, for Wall Street, liquidity and capital is not infinite. There are lots of commonalities on the banks working on these IPOs, who's backing each one, the choice that needs to be made if you believe in a world that all three of these compete with one another. But that's basically where we stand right now.
Wow, really interesting. So this could be a $1 trillion debut. Yet another one here. If we're already valuing the company at $965 billion, and to your point, where's the money come from? Once the IPO happens, knowing that SpaceX is part of this, there's a thought that maybe people harvest gains in Tesla. Where would they harvest gains for Anthropic? Would it come out of NVIDIA? Or I guess this is the question nobody can answer.
Yeah, I don't have a succinct answer other than, study the list of participants in that last Anthropic round and then identify how many of those are also investors in OpenAI. And in the private markets, this has been the story, right? They've been willing to back both. The Anthropic story has been about AI for the enterprise. So lots of your listeners on Balance of Power, they might be ChatGPT users. They may well also be Claude users, but much more of the Anthropic story is about selling B2B. So, let's see, Joe.
Maybe the answer is you just buy Goldman Sachs. They're over $1,000 today. IPO heaven. Ed, great to see you. Thank you so much for jumping on the breaker here. Anthropic moving ever closer to the IPO at the draft filing. This is Bloomberg.
It's 12:21 on Wall Street. I'm Amy Morris. Oil surging. Traders reacting to an Iranian report that the country will stop exchanging messages with the U.S. over Israel. Iran's semi-official Tasnim news agency reported the halt of exchanges in protest at Israel's escalation in Lebanon. That moves stocks lower and oil higher. We do check markets for you all day long here at Bloomberg. The S&P 500 is little changed on the upside now. NASDAQ up 0.2%. The Dow now down 0.3%. The 10-year Treasury yield at 4.5% and the 2-year yield at 4.08%. WTI nearly 8% higher, now topping $94 a barrel, and Brent crude nearly 7% higher, now topping $97 a barrel. Senior government officials are warning Russian President Vladimir Putin that spending on the war in Ukraine is on an unaffordable path. Documents reviewed by Bloomberg News and sources familiar with the matter show officials in Russia's finance ministry and central bank advise the Kremlin Kremlin that the current level of projected defense expenditure risks the government's budget deficit widening dangerously, and they're reportedly looking at new cuts to defense spending. But they're also facing pushback from those in the government who argue that many businesses rely on military-related contracts. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Balance of Power with Joe Matthew.
All right, Amy, thank you so much. Amy Morris spending the day with us here as we kick off hurricane season in Washington. Everyone's up on the front of the paper with something about FEMA, and we'll be talking about that throughout the day here with questions about whether the agency is ready following the impact of DOGE. Nice to know it's June, though, right? It's beautiful out. We've got a gorgeous week here in Washington, which is good if they're the folks working at the White House. They've been outdoors for a couple of weeks now building this massive structure for the UFC fight. And there's news. If you're with us on YouTube, check it out. Producer James just told me they got the canopy up for this thing. So I guess the fighters will presumably not be like in the direct sun, you know, swatting at flies while they're punching the guy in the cage with them, or gal. This is on the president's birthday. They're doing this big fight. Not to be confused with the concert that the president was talking about over the weekend. You saw his note on Truth Social, because last time we spoke here Friday, all we knew was that Vanilla Ice and Flo Rida were still on board. Everybody else, that was the day Bret Michaels said, no, the atmosphere is poison. Others dropped out of this thing. McBride's gone, others. And the president was not happy to see this. The idea was that it was becoming politicized. And what they had been told was a bipartisan event to celebrate America's 250th birthday. We should have a giant Make America Great Again rally for 250, he says, instead of having overpriced singers who nobody wants to hear. Why were they invited then? Whose music is boring, and yet who do nothing but complain. Cancel it, he said, just like I canceled my involvement with the failing and unsafe to be in Kennedy Center. I have to go down here a little bit here because he goes deep into the Kennedy Center. The president framing himself as the answer, and in fact will be headlining the event now. So if there were questions about the way this was all going to go, I think they have been answered. There's another post here, James. I don't know if you can find it for me, where he actually mentions that. Here we go. Talks about artists having the yips. So here's how it goes. I'm thinking about bringing the #1 attraction anywhere in the world. The man who gets much larger audiences than Elvis in his prime, and he does so without a guitar. The man who loves our country more than anyone else, and the man who some say is the greatest president in history, the GOAT. Donald J. Trump to take the place of these highly paid third-rate artists and give a major speech rallying the country. That's what we have to look forward to here. It's not what he's talking about in the White House today. He's got the speaker in the White House, Mike Johnson, with another tough one here as lawmakers come back to town. The House won't be here till a bit later on in the week, but they need to come up with a plan on the anti-weaponization fund before they can pass a bill to fund ICE and Border Patrol. This is where we start with Nathan Dean, Bloomberg Intelligence, of course, our senior U.S. policy analyst. You going to the fight? You going to the concert? You got kids?
I would have gone to CNC Music Factory. I would have been.
Yeah, they pulled out, huh?
Yeah, producer Matt and I would have been there for front row.
Is that true?
Oh, yeah.
They're going to have a Ferris wheel down on the mall. You got to bring the kids for that, right?
You know, there's supposed to be a World Cup viewing platform, so, you know, we'll figure out something.
Something for everybody. The way Politico framed this was hell week for Congress. Yeah. Like they're showing up at Paris Island. Something needs to break here. The White House either needs to pull back on this anti-weaponization fund or tell lawmakers what guardrails are going to be put in place. Which do you think is more likely?
I think the White House pulls back here. And the reason why, and I probably am a little bit about a consensus here, is that what Congress wants right now is they are in the stage where they should pass something, get it off their desk, and turn to the elections. Most of the lawmakers don't want to be here right now. It's beautiful today, but they want to be home campaigning.
Right.
Because every day they're here in Washington, it's another day that somebody's back home campaigning against them. Because they have a reconciliation bill, they have FISA, they have a housing bill, they have a crypto bill. All these people want this stuff done before they leave. And there's only like 18 to 24 days, depending on which chamber you are, that they're here before the recess. So I think ultimately what happens here is that you begin to see that it's more important to get stuff off Congress's plate and get towards the election and towards the midterms than it is to have these fights over weaponization funds. But that's just, that's just my view.
Now, just to back up, if this is confusing for people, this was going to be codified in legislation that would also pay for, in the reconciliation package, that would pay for ICE and Border Patrol, right?
Correct.
Is there a way that these could be stripped apart and have a standalone bill if it's not, in fact, withdrawn? For the anti-weaponization fund, why should the rest of this be all held up?
Well, they just don't have the votes, and this is where President Trump. President Trump.
It's got to be in reconciliation.
It's got to be in reconciliation. Okay. You're not going to get the 60 votes on this anywhere close to that.
Right.
You're probably not even going to get the 50 votes, which is why we're actually having this conversation right now. So I think what happens here is, in order to get the reconciliation bill, which is $72 billion for the Department of Homeland Security, not really much of all of a market impact except for a couple of private prison stocks. Other than that, it's not that big of a deal for the markets, but the Republicans need it off their plate because it protects President Trump from having these fights over ICE tactics through the rest of his presidency. I think the president ultimately realizes that he wants that more than he wants a weaponization fund that most Republicans probably don't support. And as a result, I think that's why this package probably moves, but in a slower fashion than it was, to the detriment maybe of housing and crypto.
Wow, boy, you just said a lot. So this is a self-inflicted wound, then, that this was not something that needed to be discussed until the settlement was announced from the DOJ.
Well, absolutely. All of this is just a self-inflicted wound from the Republican side because this $72 billion package, if you were to just say no strings attached, no ballroom, no anti-weaponization fund.
Is ballroom still in it?
It's not in it right. I don't think it's in it right now. I think that's been pulled out. But President Trump has consistently said, he's even said, if you don't include this, I may even veto it. And if that's the case, this should be a situation where it should be easy peasy lemon squeezy and just get this out. But, the Republicans, as we saw back in May before they went to recess, it's difficult. And by the way, we also have a recess tied to Juneteenth coming up. So time's ticking here.
Wow. All right. And it's so easy. They missed a deadline. This technically was the day the president said he wanted it on his desk. Reconciliation, that is, the 1st of June. Clearly, that's not happening. What do we think he's talking about with Speaker Johnson, then?
I think they're trying to figure out is how do they get it done?
Does Mike Johnson say, you've got to pull this back? I can't do this on my end.
I think Mike Johnson has to say that because, look, I don't think the votes are there for this. This would play directly into the Democratic hands going into the elections. When the number one issue right now for the voters is affordability, not things like, I'm just even going, sorry, it's affordability.
Sure.
And when you're dealing with things like weaponization funds and you're not dealing with things like affordability, it plays directly into the Democrat hands.
And giving taxpayer money to people who assault cops is a very easy political line for Democrats to use here. So you wonder where we're going and whether Bill Cassidy and John Cornyn and Tom Massey are the ones who make the difference. If the president had not upset his own party to the extent that he has with these primaries, would this pass a little easier or no?
Oh, absolutely. Henrietta Trey's on Surveillance this morning said, we now have a YOLO conference. And I love that so much. I'm stealing it and giving Henrietta the credit here. But you only live once. And now you have Senator Tillis, Senator Cassidy, Senator Cornyn, Tom Massey. They are going to have the most enjoyable another 6 to 8 months.
Just blocking everything.
They can just do whatever they want, and there's no ramifications for it.
Or voting yes, for instance, on war powers, which we might see this week.
Exactly.
Does John Cornyn really have that in his DNA? He's going to be a rebel now all of a sudden?
I don't think he's going to be a rebel, but I think if it ever comes push to shove, President Trump's going to say, I want you to do something. Senator Cornyn's going to be like, I'm not taking the call. When it comes to the war powers resolution, I think it does pass this week. But it doesn't really matter all that much. It's not going to change President Trump's mind.
We're certainly not going to be signing anything. And you wonder if he brings this to the Supreme Court to contest the constitutionality of the law as he continues to question. You said something big, though. This holds up crypto. This holds up ag. What else?
So the housing bill?
The housing bill.
The housing bill, the ag bill.
The one bipartisan accomplishment they could have trumped this summer.
Well, and the irony is that you have a bipartisan accomplishment against a bipartisan accomplishment here with housing. Because you have the House bill, which actually stripped out language tied to build-to-rent communities. The Senate bill includes it. There's been a provision. Both sides are saying, we're going to jam you up with the other one. And I think the House wins here because ultimately, I don't think the Senate has the time to actually go back to the bill and rework it and get through the Senate again. Just much easier to pass it. But the problem is right now is, does the Senate Banking Committee, like Tim Scott and Elizabeth Warren, do they focus on crypto or do they focus on housing? I think they're going to focus on housing right now. So I still think the crypto bill can pass.
Okay.
But my spidey sense is tingling here because you had Jamie Dimon over the weekend saying that he had concerns with ethics language tied to this crypto bill. I'm still here thinking that it's going to pass, but just...
So you could be out with new odds on clarity at some point, is what you're saying.
Yep.
Well, that's remarkable. This is the year it was supposed to happen. It might not.
I'm still at 70%.
All right.
But I will just say right now
Most likely will.
I still think it's going to pass, but time is ticking here, and if it doesn't get done before the August recess, then I certainly think it may struggle.
Do we need to find out today, if they want to vote Obama tomorrow night, we need to find out today what happens with this anti-weaponization fund, right?
Yeah, I think they have to make an announcement within the next few hours.
This afternoon.
Yep.
You ready for that, James? We're going to have breaking news here, either in this program or the late edition of Balance of Power on this, which will be truly remarkable. If they got CNC back in there, you'd go to the concert?
Producer Matt and I were all up and all ready to do it.
So, we called Nathan America's dad for a lot of reasons here. He's one of the best coaches of youth football in the Washington, D.C. area. Your season ended over the weekend, right?
We had 2 first-place teams that lost in the first round.
Wow.
So it was heartbreaking.
Heartbreak, yes. But I will say, don't try funny business on the sidelines when this guy's coaching or reffing. It's America's dad. Well, I won't say you dropped anybody, but you stopped them in their tracks.
We had a little bit of chirping going on.
Wow.
And,
the parents on the sidelines, man, they need their own reality show.
I had to be reminded by my wife that they're just 4th graders. So.
Very well. Good job, Dad. Yeah. Thank you for the update. He's still at 70% on clarity. We'll let you know if this changes. The great Nathan Dean, Bloomberg Intelligence, senior U.S. policy analyst, a dear friend of the program. And if you're a subscriber to our podcast, you get Nathan's as well, right? Nathan's Washington Policy Pulse podcast. We don't have anything that's got a cool name like that on the podcast feed here on Balance of Power. Could we have like the BOP Pulse or something? I'm Joe Matthew in Washington. We'll assemble our political panel coming up next. We've got a lot to talk about here on this day of days in Washington, with Congress coming back to town and some big decisions to be made. We'll look at what they're doing on the mall there. America's 250 celebration coming up with our panel. Jeannie and Maura on the way next.
12:40 on Wall Street. I'm Amy Morris. Oil surged as traders reacted to an Iranian report that the country will stop exchanging messages with the U.S. over Israel. Iran's semi-official Tasnim news agency reported the stop of those exchanges in protest at Israel's escalation in Lebanon. That's moving oil higher now. WTI now more than 8% higher, topping $94 a barrel, and Brent crude nearly 7% higher, more than $97 a barrel. Now, we check markets for you all day long here at Bloomberg. The S&P 500 is up 0.1%, NASDAQ up 0.3%, and the Dow is down 0.3%. 10-year Treasury yield at 4.49%, and the 2-year yield at 4.07%. NVIDIA getting back in the PC market with a new chip aimed at dethroning Intel and setting up laptops and desktops for AI. Bloomberg Intelligence Tech analyst Matthew Bloxham with more on NVIDIA's RTX Spark Superchip.
We've heard that Intel is getting very much into the GPU market, and NVIDIA is going back the other way. So there's going to be a lot more competition across all parts of the technology landscape going forward. And yeah, this is kind of potentially really shake up the PC market.
Matt Bloxham with Bloomberg Intelligence says this new NVIDIA chip will debut in Dell and Lenovo machines this fall and run on the Microsoft Windows for ARM operating system that has ARM shares advancing now 17%. NVIDIA shares 5% higher, Intel shares nearly 4% lower, AMD fell more than 1%, and Dell shares are 7% higher. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Balance of Power with Joe Matthew.
All right, Amy Morris, thank you so much. She'll be back at the top of the hour, 1 p.m. Eastern Time, with another read on the markets as we welcome our global television audience to the program. Welcoming you already. Thanks for being here on Bloomberg Radio, on YouTube, streaming live at Bloomberg Business News Live. Our panel will be with us in just a moment as we picture. It's really a shame that this isn't going to happen. Just the image of America's Dad, Nathan Dean, along with producer Matt, dancing to Gonna Make You Sweat on the National Mall. It's not going to happen. CNC Music Factory is out, is the latest word, along with Bret Michaels, right? We've talked to so many of, even like half of Milli Vanilli didn't want to go to the big concert. Yeah, bring your boom boxes because we're going back in time here, but I guess not, because they're canceling this whole concert. What are they going to do with Vanilla Ice? He hasn't canceled. Flo Rida, will they have their own show? Maybe they'll open for President Trump, because that's where we're going here. If you're just joining us, the President of the United States is in fact going to headline the America 250 Festival. And this is just part of this weeks-long celebration that will kick off with the big UFC fight in a couple of weeks at the White House. President writing on Truth Social, I understand artists are getting the yips having to do with their performance on Wednesday, so I'm thinking about bringing the #1 attraction anywhere in the world. The man who gets much larger audiences than Elvis in his prime. And he does so without a guitar. That, of course, would be himself. Interesting conversation on Sunday morning about, well, is this a partisan event? Because I guess these bands and singers and other acts started pulling out because they had been told it would be bipartisan. This is an American celebration on the National Mall, not a MAGA rally. If they go forward with this, it's decidedly a MAGA rally. That is, in fact, what the president calls it. How about we have a Make America Great Again rally to celebrate America 250. It's incredible watching this come together at the White House, by the way, and the whole downtown area. I mean, you can hardly drive around the mall depending on the time of day. There's a nice wide shot for you if you're with us on YouTube. Look what they're doing at the White House. Wow, nice one there, Sam. I mean, you've got the ballroom construction project already underway there, and now that they've added this whole situation on the South Lawn for the UFC, incidentally, Dana White, who we met at the White House Correspondents' Dinner, is paying for this whole thing. $30 million to build this monstrosity on the South Lawn. And they're building the canopy as we speak. I guess that's in place today. All the stands are going to be going in with room for 5,000 people. It's going to be mostly military members, and they put out the call for young men, presumably, and I guess and women. They want to be there in uniform. You have to show up in uniform, and you have to wear your short sleeves so you can show off the guns. The problem is you have to get yourself there. They're not providing
travel money to members of the military, who in many cases, these are the lower ranking members who don't have a lot of disposable cash. There's a lot of politics around here, of course. That's why the concert's apparently being canceled. And so we seize the moment with our political panel to see what they're thinking about all this. Jeannie Shanzano is back with us. Of course, Bloomberg Politics contributor, Democratic strategist, and democracy visiting fellow at Harvard Kennedy School's Ash Center. Hey, Jeannie. Maura Gillespie is back as well, Republican strategist, founder of BlueStack Strategies, having spent much of her career working for a former Republican Speaker of the House. We're going to get into all the politics that we have in Washington as well. But let's start with the showbiz, because the showbiz cannot be removed from the politics, Jeannie. And I'm wondering your thought on this now. President Trump did host the Kennedy Center Honors, right? He hosted many seasons of the reality program The Apprentice. Why not have him do a routine on the Mall for America's birthday? Does that work for you?
Joe, I'm having trouble getting over the fact that we are being robbed of Nathan Dean and Matt Shirley on the lawn dancing. And Joe, why weren't you going to be with them? I think all three of you still go boombox in hand. I'm just picturing it. The world needs this, Joe.
Everybody dance now.
That's
yes.
Right. Yeah, very good. By the way, did you hear on the people, the military folks invited to pay their own way? I think I heard, and you correct me if I'm wrong, that they have to meet certain physical requirements as well. They have to be in shape and those kinds of things. So, it's not just anybody who's welcome, but yeah.
Look, I'll say it if you won't, Jeannie. No fatzos and no beardos. No fatties or beardos, you heard the Secretary of Defense say that. And yes, I believe it's the chest to waistline ratio that needs to be in check, Jeannie. That was the message that I saw on the invite.
Okay, so thank you. I'm not crazy. I thought it was crazy, but it's in keeping with this White House. But yeah, I think Donald Trump is going to host this thing. We're going to hear a lot of, YMCAing. You three will be dancing on the lawn. It's going to be an old MAGA rally, I guess.
So it's not, I guess, bipartisan in this case. And Maura, is this a loss, or is this actually a great idea for the president to speak about Republican values in a forum like this? You'll have the backdrop of the nation's capital and presumably the nation watching.
So I think there's a really big difference here, and it's important to call it out, between what's going on as America 250 versus Freedom 250. Freedom 250 being the Trump-backed and funded operation to celebrate America's birthday. But America 250 is a bipartisan, congressionally sanctioned commission that's been working for years to get ready for this, semi-quincentennial celebration.
Yes,
and so
nice job.
I want to make sure that there's a big thank you, I nailed it. But I want to make sure that there's a separation between what America 250 is doing in a bipartisan fashion to celebrate and to highlight American towns and infrastructure and transportation and history. And what the Freedom 250 is really becoming more and more of another vanity project by the president and his team, with less transparency on the funding and who's running the operations there. And I think that there's something to be said about a missed opportunity to celebrate this big opportunity for the president to be at the center of it, because regardless of your politics, the president's role in celebrating something as big as this could have been something where he brings bipartisanship to the forefront. I'll just speak from my experience with Speaker Boehner. Speaker Boehner was Speaker of the whole House, and we had events that were done. And so our team, our office, worked with members across the aisle to celebrate gold medal ceremonies when the Tuskegee Airmen came through. That was a celebration with different offices and bipartisan fashion. And so I think this is a real missed opportunity for the president to show up as a leader. And instead, it's going to be a vanity project. And I don't know that it's going to sit as well as he is imagining it will.
Well, I appreciate your giving a serious answer to that question, Maura. And, look, Jeannie, that they haven't scheduled this thing yet or confirmed the plan for the program yet. Is there a way that the White House could make this work by featuring military families, by taking the sort of rally aspect away from this, doing a speech that acknowledges the moment here? It's not lost on us that the president's not going to be very far away from where he spoke on January 6th. How do they make this more palatable for both sides of the aisle?
Yeah, the last time he had a rally on the Mall. And, absolutely they could, but the question is, does Donald Trump support moving in that direction? And, just listening to Maura talk about her experiences with John Boehner, it sounds like a completely different world than we're living in now. The president was up Saturday and Sunday, and some people counted, I can't remember the exact number, 60, 70 posts from early in the morning till late at night. All of those posts, with a few exceptions, were about his trials, his tribulations, his frustrations, whether it's about, his name on the Kennedy Center, whether it's about these artists. What was missing there was any sense of the American public and what we are going through. It would be one thing if you had a president up posting all weekend about concerns about credit card debt, concerns about groceries, concerns about gas, and his attempts to work to deal with all that. That's not Donald Trump. He's up talking about how he should be on Mount Rushmore, how he and George Washington are on horses together, parading through memes. I mean, this is Donald Trump. So yes, can they switch this around and make this about America 250? Absolutely. But under Donald Trump's leadership, remember Susie Wiles saying it was going to be a year of affordability? We've heard none of that. So I'm not going to hold my breath. I think you're going to be out there listening to the YMCA.
Well, look, if you looked at the president's Truth Social feed over the weekend, you might have wondered. You're right. He was posting about everything from his own cognitive ability to the Kennedy Center to memes. In one case, he's playing basketball, stuffing Kathy Hochul, which was really bizarre. Then it was about the Kennedy Center more specifically. I want to ask you guys about where this is going. I'm drowning in these posts in here because it looks like he's walking away from this project. Remembering on Friday, a judge ordered him to take the name Trump off the side of the building. This is such a long post, guys. I'd be in the next hour if I read the whole thing. But the heart of the matter here, this is why the Kennedy Center will soon be closed, he says, probably never to open again. That is why at a different level and with different players, our country has lost the tariff case, forced to pay back money received from people who hate everything we stand for. Is the president really going to turn away from the Kennedy Center here, Maura? And will Congress pick up the baton and renovate the building as he's calling for?
So I think a few things here. One, obviously the president's embarrassed and he doesn't like being told no, and he doesn't like having any opposition to him whatsoever. So that's first and foremost. These are emotive reactions and emotional reactions to it. And I think what you're seeing here is an opportunity for Congress to once again step forward and point out the fact that this is a memorial. It is the John F. Kennedy. This is the memorial to a president, and he is trying to supersede that by closing it because he's upset that he didn't get his way. I would hope that members of Congress can show us that they can be the adults in the room. But from what I've read over the weekend, the judge said you can't close it either. Not only was putting his name on there illegal, but also closing it and saying that it was going to be closed without having real reason for it and without plans to show what they're going to do during that time period. So I think that there's still some questions to be had, to be answered here. But the role of Congress to push back a little bit here is going to be really crucial because, again, this is a memorial to a former president, a deceased president, and Donald Trump's emotional reactions isn't justification to close it.
Who writes that piece of legislation, Jeannie? And do Republicans shepherd that through Congress? I mean, would the president sign it?
It is so hard to tell at this point. I mean, I think John Thune, Mike Johnson, just at the White House have a lot more on their hands than this. And this is what I mean. I mean, all of this focus, sure, the Kennedy Center is critically important. What happened never should have happened. The name should have, if it was going to be proposed to be changed, should have gone through proper protocol, procedures, the legal structure. So many things Donald Trump does. He doesn't want to follow process. And that long tweet you mentioned, or truth, he talks about the fact, if I can't do it my way because I'm the best at it, then I'm not going to do it at all. But none of this is relevant to what the American public cares about right now, as we're paying almost $4.60 a gallon on average for gas, grocery prices, rent, healthcare. And, Joe, you couple Donald Trump's messages over the weekend ad nauseum. I mean, it almost seemed like 100, probably a little less, but he was truthing, almost all day on Saturday from early morning to night. You couple that with somebody like his National Economic Council director going on Fox. And when he was asked by Shannon Breen about whether, in fact, there is a big concern about delinquency with credit cards. It's about 13%. Kevin Hassett responded by saying, oh, don't worry, the credit card companies will get their money. No mention of the people who are delinquent. This is where this administration is.
And it's only Monday. Jeannie Shanzano and Maura Gillespie will be back in our second hour. Kaylee's on the way in too. Stay with us, only here on Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
Iran cuts off talks with the U.S. and blames Israel. Welcome to the Monday edition as the regime halts diplomacy in protest of Israel's expanded assault in Lebanon. I'm Joe Matthew alongside Kaylee Lines in Washington. Thanks for joining us here with new doubts on the prospect for a deal to reopen the strait, Kaylee. We've got oil prices back on the rise.
Indeed, it does seem like oil markets are a little jittery. We haven't seen a gain like this in some time, going back to April. But of course, President Trump is urging calm. He says, sit back and relax, suggesting everything will ultimately work out with Iran, and criticizing the chirpers, he says, that are casting some difficulty on the U.S.'s diplomatic process here by undermining the U.S. position, at least in his view.
Whether that's true, we're getting a lot of messages from overseas as well, and much as this comes through state media, so we throw a grain of salt here, but Iran is clearly not happy with Israel cranking up its assault against Lebanon. Reports say Lebanon wants to get back to a ceasefire with Israel. Iran is warning Israel not to test its patience.
And what will Israel say? To this point, we're not entirely sure. We also should point out that the U.S. Central Command had to intercept 2 ballistic missiles that were targeting American armed forces in Kuwait overnight, and yet we're still hearing from the U.S. that the ceasefire remains intact.
It's a shooting ceasefire, which remains the case. We saw this last week with repeated exchanges of fire. United States sending a missile into the engine room of a ship that tried to dock in Iran. So this does still feel like a hot war, even though we technically are in the throes of a truce.
Yeah, of course, the market's still feeling pretty hot. At least if you're long equities, you're probably feeling pretty good, because despite everything Joe and I just said, we're still seeing stocks continue to climb, even in the face of higher oil prices. So let's get a check on all of that now as we turn to Amy Morris today here in Washington. Hey, Amy.
Hey, Kaylee, you're absolutely right. Oil is surging. Traders reacting to that report about Iran that the country is going to stop exchanging messages with the U.S. over Israel. WTI now more than 6% higher, nearing $93 a barrel, and Brent crude about 5.25% higher, around $96 a barrel. We do check markets for you all day long at Bloomberg, and as you mentioned, S&P 500 now about 0.2% higher, NASDAQ 0.4% higher, but the Dow is about 0.3% lower. 10-year Treasury yield at 4.48% and the 2-year yield at 4.06%. U.S. manufacturing activity expanded in May at the fastest pace in 4 years, bolstered by a pickup in new orders and production, and that has added to speculation that the Fed will keep rates higher for longer. And Anthropic has confidentially submitted draft paperwork for a public listing as it races longtime rival OpenAI to make a Wall Street debut as soon as this fall. Anthropic recently raised $65 billion in a funding round at a $965 billion valuation, including the investment, eclipsing OpenAI's value for the first time. Anthropic and rival OpenAI have been one-upping each other in recent months as they are both chasing those public listings. Barry Diller has made an offer for the remaining portion of MGM Resorts that he doesn't already own through his business Empire People, which expects to fund a transaction with a combination of cash and additional debt and equity funding commitments, expecting to own just over 50.1% of the equity of the company. MGM Resort shares now 16% higher. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Balance of Power with Kaylee Lines and Joe Matthew.
All right, Amy Morris, thank you so much. As Amy was just running us through and Joe and I mentioned, we are seeing oil prices on upward trajectory once again today, despite an 11% drop last week over what's going on in the Middle East. It's the ceasefire that still evidently is remaining intact. The question is, are negotiations intact after Iranian media said that Iran is walking away from talks for now, given Israeli activity in Lebanon? It's striking that we're seeing Israeli media reports now, Joe, that are suggesting that actually Hezbollah is conveying to the Trump administration that they are willing to accept a ceasefire as we see this intensified Israeli effort against the militant group.
You wonder if this could be a very newsy day on the back end here, Kaylee, with the President of the United States that needs to make a decision on an anti-weaponization fund to allow reconciliation to go forward in the next 24 hours, and also apparently may need to make some decisions. Remember, he was talking Friday about a final determination. Yep. It's not been made yet. The president, having spent a couple of hours in the Situation Room on Friday, is still facing some pretty tough decisions. And so we want to bring in Tyler Kendall for the latest on this. Bloomberg's Washington correspondent has made her way back over to our bureau from the White House. He spent a lot of time talking on Truth Social over the weekend. Here, Tyler, I'm still seeing posts that I missed in the throes of weekend fun here. He says it's much tougher for me to properly do my job and negotiate when political hacks keep negatively chirping. He's telling people to sit back and relax. It'll all work out well in the end. Does that suggest optimism on his part?
Perhaps, Joe, that's a good point. At this point, though, the White House has maintained that diplomatic efforts are ongoing, despite what we saw was an uptick in fighting actually in the region. CENTCOM confirming today that they shot down ballistic missiles that were heading towards Kuwait. The IRGC saying that they retaliated after the U.S. targeted Iranian radar and drone sites. Definitely something to watch. At this point, though, it really feels like the president is urging patience as we get these reports from Israeli media that apparently the president is speaking right now with Israeli Prime Minister Benjamin Netanyahu because Iran has pulled in that the front in Lebanon must be part of any ongoing negotiations. Something that we've seen Iran do before, right? Try to pressure this in terms of pushing the U.S.'s hands in the talk. But I would also point out that at least publicly, the updates that we got earlier this morning and yesterday from Iranian state media showed that the two sides were far apart on some of the key issues, like Iran saying that any discussion about the disposal of the nuclear stockpile will not be in this memorandum of understanding, and that Iran would retain the exclusive authority. That was the direct quote over the Strait of Hormuz.
Well, of course, that's not what President Trump has said. He has repeatedly said on True Social and elsewhere that the U.S. is going to go in and get that nuclear dust out of Iran. So clearly the public messaging, there's a bit of a difference there. It's unclear what private messaging is, assuming that private messaging is still happening, because we haven't heard from the U.S. that the talks have actually ended, unlike what Iranian state media have said.
Right. So from Iranian state media, we've heard that the two sides have repeatedly traded updated amendments, is what they called it, to this draft memorandum of understanding. Now, the U.S. has made it pretty clear what sort of structure we're pursuing here, that this would be that phased agreement that would need to prioritize the Strait of Hormuz reopening. We heard President Trump say as much just last week in the cabinet meeting. Then the U.S. could lift its naval blockade in return, and then that would start that second phase of tougher negotiations around what future curbs to Iran's nuclear program could look like and what happens to that stockpile of highly enriched uranium. There are so many different threads here at the moment, but so far at this point, we have to say that the U.S. isn't letting up its leverage, right? We heard over the weekend some pretty incredible reporting from our colleagues at Bloomberg News that CENTCOM is continuing to provide information to these vessels to help them transit through the strait in a bid to get any sort of supply to market. But so far, the U.S. isn't going to deploy those military assets to actually fully escort vessels. So we're still basically locked in a stalemate.
It sure seems like it. The president's speaking to the other financial news network as we speak right now, saying, I don't care if peace negotiations with Iran are over, saying he was going to ask Israeli Prime Minister Benjamin Netanyahu what's going on with Lebanon, and says he's not worried about oil prices, convinced once again, as we've heard repeatedly, that they will fall precipitously once the Strait of Hormuz is reopened. But of course, Tyler, it is still closed today. It sounds like there's a lot of cross currents, though. There are people talking today. The tectonic plates are moving. We could have news later.
Right. We certainly could. I mean, we've also seen such a role that our regional partners have played. That's going to be also something to watch. On the weekend, we saw this Wall Street Journal reporting that the UAE was actually a lot more involved than previously thought in the beginning days of this conflict. We mentioned Kuwait and the American base there that was targeted by the IRGC just overnight. So it's interesting to watch some of these other channels and some of these other discussions, not necessarily between the U.S. and Iran, but the U.S. and other partners, including here with Israel. Now, on the Lebanon front, we should say that we did see the broadest incursion into Lebanon over the weekend in nearly 2 decades, but it came as Israel said that Hezbollah had launched nearly 300 projectiles towards the country. This dynamic, though, is incredibly important because before the conflict started, the U.S. had long said that they wanted Iran's support of proxy militia groups like Hezbollah to be in any sort of final Iranian deal. But so far, this is one of those avenues that we haven't seen Iran back off on. And that perhaps is also adding to the tensions in what these negotiations will entail. Because so far, we haven't heard that aspect of it be in any of the reporting about what could be in that memorandum of understanding.
All right. Bloomberg Washington correspondent Tyler Kendall, thank you so much. as always. Now, as Joe mentioned in a phone interview with the other network, President Trump suggested that he isn't worried about oil prices, which he expects will drop like a rock when the conflict is over. But of course, it is seen by some that his pursuit of a diplomatic off-ramp here, some kind of deal, is with the aim of getting oil prices down and the Strait of Hormuz back open. Certainly, his former national security advisor, John Bolton, seems to fall into that camp. He had this to share with our colleagues on Bloomberg This Weekend yesterday.
I think Trump is getting what he wants. This is a deal about gasoline prices at the pump in the United States. Trump worries, obviously, about the price levels people are paying. He's worried about the effect on inflation. He's worried about the effect on the elections in November. But this is not a deal that really ends the war in a satisfactory way for the United States.
For more on this, joining us now is Adam Stolberg, Sam Nunn School of International Affairs chair at Georgia Tech, where Joe and I, of course, had the pleasure of broadcasting a few weeks ago. Professor, welcome back to Bloomberg TV and radio. When we consider the chances of diplomacy actually even prevailing here, obviously an open question now with what Iranian state media is saying about walking away from talks for the time being, but if we think about the objective they are trying to achieve, or at least the U.S. would like to achieve via the reopening of the Strait of Hormuz, the thinking is that would bring some relief to prices at the pump. How quickly would that actually happen, even if a deal is to come to fruition?
Well, that's a great question. And I do think the diplomatic dimension is adding a lot of volatility to everything, and that in the short term is having the impact on prices. But I think there's some long-term challenges to really seeing structural changes in those prices. One, of course, is that the ships are not where they need to be refueled and shipped to the different markets. And of course, it takes weeks to get to those markets. The infrastructure has been damaged itself. Supply stocks in different countries and consumer countries need to be refilled to maintain the balance of those prices. And of course, a lot of the institutional stabilizers to the oil market have really been torn asunder by this crisis. So there's a lot of uncertainty baked into the system now that's going to be much more protracted than the diplomatic negotiations underway right now.
Which is why some, Professor, wonder why oil prices are not, in fact, higher. I know we're up today. WTI is up 6%. We're about $93 a barrel right now. Brent's at 96. We're well below the highs that we saw at the outset of this conflict. And of course, it's been nothing but time and corrosion ever since. The buffers that we were enjoying are going away. Do you suspect that prices could be significantly higher if we see more weeks of this?
Well, I think the prices could be significantly higher if the situation sustains itself through the summer, because I think that's where the real consumption is going to be, driven. And so I do expect to see, if we don't see some damping down of the crisis, for prices to begin to move up at a much steeper rate. But I think we're going to be seeing higher prices like we are today through at least the first quarter of 2027, even with a diplomatic settlement today.
Well, obviously, that would take us well past the midterms. There's some domestic political considerations here. President Trump, though, has said repeatedly that he doesn't take those domestic considerations into account. He said last week he doesn't care about the midterms. Many that Joe and I have spoken with have said that's really signaling to Iran to let them know that he's not going to be pressured by our own domestic political calendar. But when we think about the other players domestically in the world who might feel this more acutely, whether it's in Europe or elsewhere in Asia, I wonder if you feel like this could reach a point where the kind of global energy shortage is blowing over to an extent that there is pressure for other nations to get involved to try to relieve this situation.
Well, I think ultimately the standoff between the United States and Iran is over playing who can play for more time and who feels that time is on their side. I think one of the pressure points, obviously, for the U.S. and for the Trump administration would be those midterm elections. But obviously, other countries have other pressure points, and the oil prices are spiking a lot higher and faster for them in Asia and in Europe. Than they are here in the United States. So there are different pressure points. But I think ultimately what you're seeing is that Trump is trying to dampen the concerns and the opportunities for Iran to exploit anxiety at home by diminishing the potential consequences for the United States while trying to keep pressure on, while, as we see with Iran, they feel emboldened by the situation there, as evidenced by bringing Israel and Hezbollah back into the negotiations, dragging their feet on the nuclear equation, as was discussed in your previous segment, as well as continuing to fire some missiles on an ad hoc basis.
We asked you a couple weeks ago when we met, Professor, about the potential for well closures, the storage crisis we were told was looming in Iran. Some thought this would be the catalyst that potentially brings everyone to the table and ends this war. The idea that Iran has nowhere else to put the oil, and before they start closing wells, might be more willing to talk. We haven't seen that happen yet, however, and I wonder if Iran is simply managing its production more carefully, or if that's something that could take place imminently.
Well, it's hard for me to know how imminent that would be. Obviously, that is a critical issue. But I do think, as you mentioned, Iran has been able to manage its supply, get it out through other channels, obviously use illicit types of shipments and other outlets. So it's trying to buy for time. And I think what it's hoping is that time is more on its side than the pressure building up, as you mentioned earlier, domestically and internationally on the Trump administration to blink.
Well, when we consider who has time on their side, it seems that Russian President Vladimir Putin is getting warnings that time and spending may not be on his. Bloomberg is reporting today that senior government officials, including the Russian finance ministry, have warned Putin that spending on the war in Ukraine is on an unaffordable path and risks a widening of the budget deficit. This is even as we see oil prices that are more elevated, which everybody thought would benefit Russia, and the relief of some sanctions for Russian crude on the water. How do you see that energy-driven war economy in Russia and the strength of it right now?
Well, I think that report that Bloomberg carried is quite interesting, especially because in the report, the finance ministry and the central bankers are particularly calling for cuts in defense spending, rather than just overall, pain being leveled on the Russian economy. So I think that's noteworthy. But ultimately, I don't think Putin's decision-making on Ukraine is determined by economics. And I do think with oil prices higher than they were when the budget was made earlier in the year, that there's maybe thinking by the Putin administration that they can still play for a little bit of time, squeeze out as much as possible while still ramping up the pressure on Ukraine.
Only have about 30 seconds, Professor. We're at $4.32 today for a gallon of regular unleaded nationwide. Where do you think we are by the 4th of July?
Well, it's hard for me. I'm not much of an economist or a gambler, but I would say that even with these on-again, off-again negotiations, prices are going to be going up. They need to, it's very difficult to imagine, especially in the heart of summer as the consumption demand goes up, and without a fundamental stop of this crisis, that we're going to see those prices come down.
Well, maybe you don't need to be a gambler. Professor, it's great to have you back on with us. Adam Stolberg, Georgia Tech, live from Atlanta. I'm Joe Matthew alongside Kaylee Lyons, live in Washington. We'll assemble our political panel next. Politico is calling it Hell Week on Capitol Hill. We'll tell you why. Straight ahead on Blue.
It's 1:21 on Wall Street. I'm Amy Morris. A report that Iran is stopping talks with the U.S. has cast some doubt on a ceasefire renewal. That's driving bonds lower and oil prices higher. WTI now near $93 a barrel, more than 6% higher. Brent crude around $96 a barrel. That's more than 5% higher. We do check markets for you all day long here at Bloomberg. The S&P 500 up 0.2%. NASDAQ up 0.4%. The Dow down 0.25%. The 10-year Treasury yield at 4.47% and the 2-year yield at 4.05%. Berkshire Hathaway will acquire Taylor Morrison Home Corp in an all-cash deal worth about $6.8 billion. That deal is expected to close in the second half of this year and will unify Berkshire's site-built home building operations into a combined platform. Shares of Berkshire Hathaway about 1% lower. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Balance of Power with Joe Matthew and Kaylee Lines.
All right, Amy Morris, thank you so much. Checking out the trading as we kickstart the trading week and the trading month. Yes, it's June 1st. Hard to believe that we're already here. I don't know where 2026 has gone to this point, but it's interesting that it is June 1st today because we thought we might be seeing a signing ceremony in the Oval Office at the White House, something today, because this was the day that President Trump said he wanted to have a budget reconciliation bill to fund ICE and CBP on his desk for signature, having passed both chambers of Congress. It has passed neither to this point. It's $72 billion worth of spending that we're talking about here, going to fund these agencies for 3 years, but it's getting held up by a separate, unrelated, but now related issue, which is the $1.776 billion anti-weaponization fund that Republicans want to see some guardrails around before they're willing to move forward.
So welcome to June. Rabbit, no bill. And it's not just that. Remember, the ballroom at one point was going to be coupled with this, giving a lot of members of Republican leadership agita on Capitol Hill. Speaker Johnson was in the White House this morning. I don't know if he's potentially still there now, if we knew that he left, but he was behind closed doors with President Trump talking about this anti-weaponization fund that reports suggest, Kaylee, could be pulled altogether by the White House, if not given guardrails, some of which we talked about with Senator Rick Scott a couple of evenings ago. But it's something that they need to figure out very quickly if they're going to have a vote-a-rama by tomorrow night and actually get the gears turning on this.
Yeah, so the question is, can they? And what ultimately would those guardrails look like? Knowing that this is a partisan piece of legislation we're talking about, they only need to find 50 votes in the Senate for it. But can you get to 50 without adequate guardrails, knowing that there are a couple Republican senators who have been basically ousted by the president in their primaries who might be feeling like they're ready for a fight.
The new YOLO caucus we keep hearing about. Let's assemble our political panel for their take on this, and they do have one. Bloomberg Politics contributor Jeannie Sheehan Zaino, our Democratic analyst and democracy visiting fellow at Harvard Kennedy School's Ash Center, is with us alongside Republican strategist Maura Gillespie, the founder of Blue Stack Strategies. Maura, I'll start with you, as you spent a good chunk of your career working for a former Republican Speaker of the House in John Boehner. How do you manage this one? Is the job for Mike Johnson, which seems to get harder on the daily, to convince the White House to withdraw this idea altogether, or craft enough guardrails that makes the rest of the conference happy?
Well, I think when it comes to Donald Trump, you have to play to his ego. So what is going to be more palatable for him? Does he feel better about hearing that there's going to be guardrails around him? I don't know that that's the case. Or does he pivot, remove this from consideration and go on to the next thing, which I feel is more in line with what Trump does, is that not necessarily taking it as a loss, but pivoting to something else that he cares more about at this current moment. Again, I think when you have this judge that's now looking into the case itself, and so then to create this weaponization fund with money that you may or may not have, with a judge looking into it, I think it's better to pull it and then pivot your attention elsewhere. And so I think for Mike Johnson, the challenge becomes, how do you relay that message to the president without necessarily saying, you don't have the support in Congress. I have members who will not touch this with a 10-foot pole, and you need to get this off the table so I can do my job. That's obviously not what Mike Johnson's going to do, but he's going to do it in a way that sounds very more appealing to the president and is more in line with showing him flattery and, I'm on your team, I'm on your side, let's work together type thing.
Well, and of course, it's not just Mike Johnson, Jeannie. I would imagine Senator John Thune has a pretty similar message, as it was the Senate that had to shelve this thing before the Memorial Day recess.
Yeah, absolutely right, Kaylee. And you mentioned prior people like John Cornyn. And I don't know if we talked about this on Friday, but John Cornyn put up a very, very interesting X or tweet where he talked about the fable and right, fable scorpions, people saying they're not going to, they're doing things because of their character. I mean, it really does raise the question. Is he going to be this kind of renegade when he, or now that they are back? And what does that do to things like this slush fund? And of course, I think the White House would be smart to try to pull it. The problem is Democrats are still going to be able to introduce amendments to this bill saying what the White House cannot do. And that is, again, going to cause consternation because you're going to have Republicans who also want to sign up for that because they are very upset. And we heard this from the former vice president over the weekend saying they do not support this kind of anti-weaponization bill that could give funding to people who attack the Capitol and cops.
Well, look no further than the latest Dear Colleague letter from Chuck Schumer, dropped late yesterday to get the tongues wagging this morning. He points to a coordinated effort, as he writes, to kill the slush fund before 1 cent goes out the door. How do you do it, Jeannie? He says if Republicans return to reconciliation, which they will be ready with amendments to shut the fund down. If they try to bury the issue, we'll force them to the Senate floor. If they try to sneak behind appropriations, we'll fight them there too. But he's in the minority. Is he counting on Bill Cassidy and John Cornyn and Tom Tillis to help him out?
Yeah, I mean, there is no question. The weaponization, the ballroom that you guys were just talking about, this has been wins for Democrats just in terms of messaging. And you're hearing that in Chuck Schumer, who is saying Republicans can try to run away from these two unpopular things, but they cannot hide because we are going to fight the issue on amendment. Again, they can do that because there is a justice line in this bill. And so this is why Republicans have a problem. And I think the thing that we forget is this bill would have probably passed already, and we would be talking about the more difficult Reconciliation 3.0 if the president didn't continue to be pushing for things that are widely unpopular with his own party.
Should we just be writing off the chances of a 3.0 reconciliation bill at this point? Maura, the August recess is looming, the midterms only get closer, and clearly 2.0 is challenging enough.
It is. You have 6 weeks right now until the August recess, and after that, you really have maybe 4 weeks until members go home to campaign for the midterms. So, at least in the House side and Senate as well, should be out there campaigning for their colleagues. But it's an interesting timeline to be looking at. It's June 1st, as you said, but really there's only a handful of weeks to play with here for Republicans to get done what needs to get done before they go home. And so I do think that there is this opportunity when you have the ballroom spending, as Jeannie talked about, and you all talked about this slush fund bill, all these things that have added cost to the American taxpayer. And Republicans pride themselves on being fiscally responsible. And so can they reclaim that message? And I do think it requires not just this yellow caucus, as you called it, Joe, but more members to stand up and say, we are the party of fiscal conservatism. And so looking at what we're spending and how we're spending it, and are we being accountable for those dollars that our taxpayers are even more so cognizant of when gas is where it is, where groceries are where it is. And so there's a real opportunity for Republicans to rally together at what they stand for and the values that conservatives have. It's part of the reason why I'm a Republican, right? I believe in where does our money go and where is it being spent, and having that transparency for, front and center that's really being denied a lot by the Trump administration. They're certainly not putting forward conservative principles and policies. And so Republicans have this opportunity right now. I've been saying it for a little while, but I really hope some people take heed of this. But there is this place where they need to be standing in terms of where are we spending our constituents' money.
We've got a new post on Truth Social from the president, which takes us a bit off topic, but not, if you'll put up with me. I had a very productive call with Bibi Netanyahu, he writes, Israeli prime minister. There will be no troops going to Beirut, and any troops that are on their way have already been turned back. Likewise, he says, through highly placed representatives, I had a very good call with Hezbollah, and they agreed that all shooting will stop, that Israel will not attack them, and they will not attack Israel. This is incredibly important because Iran earlier today warned Israel about its continued assaults on Lebanon, suggesting that it was a violation of the ceasefire and threatening a much wider conflict as a result. Headlines are just now crossing the terminal, and we're going to keep tabs on
the market reaction here, knowing that oil prices were already higher and they're coming back from their highs right now. A Dow Industrial average that was lower is now coming off of its lows, and the S&P 500 is up 21 points. Jeannie, there's still the matter of war powers. Even with everything that I just said, it is expected that if legislation hits the floor this week, it will pass. Do you believe that?
I think it could, and I would just go back to the president's statement. I mean, this is not the first time we've seen a statement from the president and something different coming out of other parties involved. So again, we don't know how Hezbollah, Israel, Iran, and other parties to this war are going to respond. But I think we have to take a wait and see attitude, because let's not forget, Israel took a castle in southern Lebanon just in the last weekend. And so this would be welcome news if they agreed to not go to Beirut, if Hezbollah agreed to all of this. But the president has been stepping out above his skis during this entire war, making statements that we've then had to walk back, or he's had to walk back. I do think there is going to be a war powers vote. That's why the House fled Washington ahead of Memorial Day. They knew that was going to pass, and I think there's a very good chance it passes. Then, of course, I think the president will either ignore it, as Senator Graham has advised him to do, or they will try to take it to the Supreme Court and try to fight it. And it's not the first time that bill, which many believe is unconstitutional, the War Powers Act, has been challenged in court. So it will be, though, I think, an important moment, as Congress has not yet given their advice on this war yet.
Well, so Maura, we do know that war powers vote is at least expected to be put on the floor on Wednesday. Is it your expectation that it will pass? And if so, so what?
I think it will, and I do think that, one thing that just struck me as Joe was reading out that tweet or Truth Social post is the fact that we were sitting here wondering, is that true? I think there's a lot to be said about the fact that we're not even sure if those phone calls necessarily took place with Hezbollah. Who does he talk to? Who is the representative there? And are they speaking for Lebanon? Are they speaking for all the people? And so there's a real concern there that I have, just thinking about, is that true? And what of that needs to be walked back? What of that do we need to look into further? Because this playing with the markets by posting things on Truth Social that don't end up coming to fruition is jeopardizing not only our economy, but our standing in the world, when you have someone who is sharing every thought, every whim, and what he wants to be true, putting it out there like that. And so I have concerns greatly there, but I'm hopeful that the Congress can reclaim their power and their authority when it comes to the authorization of war powers.
All right, Maura Gillespie and Jeannie Shanzano, our political panel today. Thank you so much. And as Maura pointed out, we have heard from President Trump on this. He says he's spoken to both Hezbollah representatives and Israeli Prime Minister Netanyahu, and Israel will not be attacking Hezbollah further. Hezbollah will not attack Israel, but we have yet to hear confirmation of that from those two other parties, Joe.
That is absolutely right, and we're watching the market react to this with some ups and downs. It's a bit of a confusing play here for the energy market and the stock market, getting back a bit closer to where they were. We'll have an update on the markets from Amy Morris. We'll spend some time with Gregory Allen as we turn to AI next on Bloomberg.
It's 1:40 on Wall Street. I'm Amy Morris. Iran says it will halt talks with the U.S. in protest for Israel's expanded ground assault in Lebanon. Now, Iran says Israel's move is a violation of the ceasefire and that any agreement must apply to all fighting across the region. Iran and the so-called Axis of Resistance have considered the complete closure of the Strait of Hormuz in response. The announcement moved oil higher and stocks lower. Oil prices now coming off of those highs. WTI nearing $92 a barrel and Brent crude near $95 a barrel. We do check those markets for you all day long here at Bloomberg. S&P 500 up about 0.25%, NASDAQ up about 0.5%, and the Dow is down 0.2%. 10-year Treasury yield at 4.46% and the 2-year yield at 4.05%. NVIDIA shares now 5% higher. ARM shares advanced 16% after NVIDIA announced it's entering the PC market with a new chip. The RTX Spark superchip is expected to loosen Intel's stranglehold in the arena and modernize machines for the AI era. The new chip will allow for powerful machines that are thin and light and will enable PCs to run large AI models securely, giving users control over what data and software are accessed. MGM shares 16% higher after Barry Diller made an offer for the remaining portion of MGM Resorts International that he doesn't already own through his business empire, People Inc. The proposal is for $48.30 a share. That values MGM Resorts at $18.8 billion, including debt. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Balance of Power with Joe Matthew and Kaylee Lines.
All right, Amy Morris, thank you. She'll be back at the top of the hour as we kick off Bloomberg Business Week Daily for more on the markets here. One of these days, though, Amy Morris will be giving us live coverage of an Anthropic IPO. We can confirm that today. I know you saw it coming, but we actually have confirmation today through a confidential draft that was submitted to the SEC. Anthropic BBC submitting draft paperwork for the public listing, potentially leapfrogging OpenAI to the public market. Kaylee, that would be a big deal in a company that has been valued at nearly $1 trillion.
Yeah, it just closed that funding round last week that values it post-money at $965 billion. Now, of course, going to public markets, and public markets are going to be real crowded with some of these juggernaut companies because, of course, SpaceX is expected to IPO in just a couple weeks. Right. And as you said, OpenAI, we think, was targeting fall as well. So these two might be racing each other for that fall IPO. But we want to get into all of this and the policy that is going to be shaping these companies that will be public companies in the not-so-distant future as we turn now to Greg Allen. Of course, you're familiar with him here on Bloomberg TV and radio. He joined us in his previous capacity frequently at the Center for Strategic and International Studies. But as of today, is launching a new company. He's the founder and CEO of Decision Tree Research. And what you're doing is focusing on policy of not just artificial intelligence, but all of these geopolitically significant technologies, be it semiconductors, defense tech, and the like. An interesting moment for you to be doing this, clearly an exciting moment for these companies and these capital markets. When we consider the race that specifically these AI juggernauts seem to be in to go public, it's not just a question of if they beat each other. Are they also going to beat a regulatory framework that guides them as public companies operating in this space? When we just saw a few weeks ago the president pulling an executive order that would have helped regulate AI.
Yes, and all of these big muscle movements are happening at the exact same time. You know, they're trying to IPO on a valuation in the absence of a regulatory structure. And one of the things that might determine some of that valuation is a regulatory structure. So there's so much uncertainty going into these extraordinarily generous valuations. I have an MBA, and I think it's useful sometimes to just go back to Business 101. What do these valuations mean? If you were to buy, an annuity that it was valued at $1 trillion, the interest-free risk-free rate is currently 4.5%. $1 trillion annuity would mean $45 billion in guaranteed cash every year for the rest of time. And they're saying that these companies, some of which not only don't currently make a profit, but actually lose significant amount of money every year, are worth north of $1 trillion. What's that kind of bet based on? It's based on the explosion in revenue that they're generating. Anthropic has disclosed some of their run rate numbers, and they are jaw-dropping. End of last year, they were at a $9 billion run rate, which means if you took their December monthly revenue and turned it into a 12-month annual, it would have been $9 billion. Now it's reportedly north of $47 billion. That is 5xing the company's revenue in 5 months. That bodes well for the future of this company. But as you started out by saying, there's so many different things going on. There's still so much uncertainty in this ecosystem.
I can't imagine why someone would want to open an AI research company right now.
There's a lot of unanswered questions, and I'm happy to try and help answer.
Congratulations. We're very happy for you here because you've helped us understand a lot. And I want to go back to this. It was almost 2 weeks ago the president decided to cancel a signing ceremony for his AI executive order. He was asked about this, but there were executives on their jets in the air on their way to Washington when he pulled the plug on this event. Reporters asked him why. Here's what the president said.
I postponed it. I think it gets in the way of, we're leading China, we're leading everybody, and I don't want to do anything that's going to get in the way of that lead. We have a very substantial on AI. It's causing tremendous good, and it's also bringing in a lot of jobs, tremendous numbers of jobs. Again, we have more people working right now than we've ever had. I really thought that could have been a blocker, and I want to make sure that it's not.
A blocker, he said. Somebody got on the phone with him. Reportedly, it was Zuckerberg, Elon Musk, and others.
David Sachs, the former White House AI advisor.
David Sachs might have that cell phone number, that it would interfere with competitiveness. Is he right?
Well, let's start with sort of what's reasonable in what the president is saying. He's talking about competitiveness mostly with China, which actually has AI models. Some of them are pretty good. And depending on how you sort of measure how good the AI models are, you can say roughly that the United States has something like a 12-month to 18-month lead on China in terms of where their models are today and where our models are today, and sort of where their models are compared to where we used to be. Now, the draft executive order, which was leaked because all these executives had a copy, they had been told in advance, they were in the air, as you pointed out, and that was talking about a 90-day pre-release review period. So think about if you're President Trump. Okay, 90 days, and we only have an 18-month lead, so we're going to consume, a month and a half of that just for risk reduction. Is that a reasonable trade-off? Well, here's the thing. It wasn't even mandatory. As I said, we have the text of the executive order, and it was voluntary only. So if there really was some kind of concern, right, that this was going to take too long, you didn't even have to ask permission to not go through this sort of framework. And so you have to ask yourself, why is the government opposed to building the kind of capacity that we need to ensure that these models are safe, that they're going to work as intended, and they're not going to get in the hands of the wrong people? Let's not forget sort of how we got here. The Trump administration took office saying they wanted to dismantle all kinds of AI regulations, that the risks were not that significant. Then they met Claude Mythos. And according to some of the reporting on this, half of all the cybersecurity vulnerabilities that have been discovered ever were discovered by Claude Mythos just in the past handful of months. I mean, this thing is a chainsaw to most organizations' cybersecurity. Now, imagine if Anthropic had taken a different approach to releasing that model, just throwing it out into the wild and saying anybody who wants to use it can use it. I think a lot of banks would have been opposed to that kind of outcome. A lot of healthcare institutions would have been opposed to that kind of outcome. And so Anthropic was kind enough to go off and do this. But how do we know that future executives of future companies are going to have that approach? And how do they even go to the government for help, right? One of the things we need the government to do is to invest to get good at these types of skill sets so that there are people who companies can call to check their homework and understand whether or not they've done a good job securing these models.
We want to continue this conversation on the models. I do just want to mention, though, a redhead that just crossed the Bloomberg terminal. It's actually coming from a True Social post from the president regarding talks with Iran, which he says are continuing. And he says, quote, "They're continuing at a rapid pace with the Islamic Republic of Iran. Thank you for your attention to this matter." That is all the president said. No context as to whether or not these continuing talks are going well. And yet it seems to be enough, at least for equity markets, which just hit session highs. We're around 76.13 on the S&P 500. The NASDAQ 100 briefly was up a full percentage point right around session highs as well. So we'll continue to monitor that. But we also want to continue this conversation on AI. You were talking about the notion of our competitiveness with China and how we do have a lead on that. How much of that competitiveness doesn't just come from making sure that our artificial intelligence companies have an advantage and aren't running into red tape versus also making sure that China can't access the chips to power their own artificial intelligence development?
Well, this is obviously a topic that has been at the center of U.S. foreign policy for years now. I mean, it started really with the first Trump administration trying to restrict Huawei's access to advanced chips. They were thinking about phones and laptops, but now we know really what counts for strategic impact is thinking about AI. Well, the Trump administration has been back and forth on this issue. First, they tightened controls, then they loosened them, then they loosened again. But there was one line that the Trump administration and President Trump himself said he wasn't going to cross, and that was selling NVIDIA Blackwell chips to China, the latest and greatest. But according to an issuance from BIS just on May 31st, just yesterday, they had to issue a clarification on a rule that made it obvious that they have been allowing the sale of Blackwell chips to go to Chinese companies not based in China. Wow. So President Trump assured Americans that China wasn't going to get access to these Blackwell chips. But now it's clear that his own government is saying, actually, because of how we were interpreting our own rules and how we were not clarifying the questions that companies were asking in terms of what was allowed and allowed, they allowed a lot of these sales to go through. And we don't know the full scope of just how many chips were sold. But ask yourself the question, why was China so casual about saying, we're not going to buy any of these NVIDIA Hopper chips? A plausible explanation? Because they were allowed to buy the better chips, and they just didn't want to say the quiet part out loud.
Wow, incredible. We heard from Jensen Huang himself last evening. This is the Computex annual speech and event. Is a big keynote, tends to move the stock, and today it is for the better. I'm going to ask you to play that shot in a second here, Sam. There were a couple of announcements that came out of this, including a CPU that would make your own laptop or PC AI enabled. That seems to be moving the stock. But more interesting for this conversation was what he had to say about coding and the SaaS-pocalypse that we've spent so much time talking about. We're not going to need fewer coders. We're going to need more, is essentially what his message was. Listen to Jensen Huang at Computex.
People talk about AI reducing jobs. Complete nonsense. It's causing more software engineers to be hired because the output is so incredible. People want to hire more software engineers. This is going to show up in our economy somehow soon. And so the first thing is useful AI has arrived.
It's an incredible time to be a software company, he says. We're going to be hearing from CrowdStrike and Palo Alto this week, left on the side of the road in the SaaS-pocalypse, but most recently have been rallying because of what you pointed to. Mythos, that in fact we will need cybersecurity to deal with these threats. What do you make of this confusion over software in its relation with AI?
Well, so Huang's comments are actually correct in the data that we can observe, but they need a little bit of context. It's not just every type of software developer demand for them is going up. It's really those most seasoned engineers, the ones who are qualified to grade AI's homework and observe when it's going in the wrong direction. Okay. You know, if you have a complete novice who is using AI to generate software, they can get a little bit down the road before they find out that somewhere their AI made a wrong turn, and they're not really qualified to assess where that wrong turn was. So the job breakdown has sort of been, we need fewer entry-level people, the kinds of folks who are probably not qualified to oversee and check all the work that AI are doing, and more of those seasoned people who can actually understand and make use of these tools. Those types of individuals are 10xing, maybe 100xing their productivity. And if I told you that, you know, a software developer today, for the same price, can do 100 times more work than they did last year, you might want to hire more of those folks this year. But what actually determines the overall ceiling for labor demand is the elasticity of that demand, which is to say, if the cost comes down, how much more do you want to buy? Think about this in terms of food production in the United States, right? In 1920, 1 out of every 3 Americans who had a job on a farm. And today we produce way, way, way more food with way, way, way fewer farmers. And that's because we can all double the amount that we can eat, but we can't 100x the amount that we can eat. So that's how the job destruction leads. But in software, you can 100x the amount that you eat. The elasticity of demand, we're nowhere near the clearing point there.
Truly fascinating. And I can't wait to hear what kind of clients you assemble for your new firm. Decision Tree Research is the name of it. The sage of the most important technology of our time, Gregory Allen. It's wonderful to have you back with us. You're always welcome here. I think you know that. But
thank you so much.
Shedding light on some really complex stuff. here. Kaylee, the president said he postponed that EO signing, but we don't have another date for it, do we?
No.
Okay.
We don't. Maybe we'll see these companies come to public markets before we actually see an
entirely
executive order
possible.
signed. The sequence here, we have a lot of questions. So we're not hearing from President Trump on that, though I would reiterate that the news just broke from his Truth Social feed a moment ago that he says talks with Iran are continuing at a rapid pace, and that's given a little more juice to equity markets.
You wonder if they open some of the events he has on the schedule right now, all closed to press today, and we'll find out between now and 5 p.m. Eastern when we meet you for the late edition of Balance of Power. We could have some news by then. Alongside Kaylee Lyons, I'm Joe Matthew. Thanks for being with us on Balance of Power, only on Bloomberg TV and radio.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser. and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And happy Monday, everybody. Good afternoon, live on Bloomberg TV, radio, YouTube, Bloomberg Originals. It is Bloomberg Business Week Daily. I'm Tim Stenivek. That is Emily Graffeo. She is in this afternoon for Carol Master. She's from the Bloomberg News credit team. Emily, I'm looking at equity markets, and we're seeing stocks higher now than they were earlier. This after President Trump said that U.S. talks with Iran are continuing at a rapid pace. He added that Israel and Hezbollah agreed not to attack each other.
That's right. We're also seeing a little bit of a rally in the bond market, at least just relative to what we had seen earlier in the day. So maybe going slightly more risk on those headlines, Tim.
Well, that's exactly where we're going to go, and we're going to have more from Amy Morris on the trade in just a minute. We're going to be covering the latest out of the Middle East, the back and forth, the mixed signals, what we're hearing from Washington, what we're hearing from the region, too. Galit Altstein, who covers economy and government for Bloomberg News, is standing by in Tel Aviv. And then on the equity trade, David Bianco is here from DWS.
He's joining us very soon. And as far as that equity trade goes, tech is one of the few bright spots today, at least strength in the NASDAQ 100. NVIDIA's rallying along with Microsoft, Dell, and others. Ian King from Bloomberg on what Jensen announced today in Taiwan.
And calling Dr. Copper, a deep dive on the metal with the chairman over at Copper Intelligence. All that and more coming up over the next hour right here on Bloomberg Business Week Daily. First up, though, a check on the day's trade and top business stories. Amy Morris is standing by. She's in for Charlie Pellet. Hey, Amy.
Hey, Tim, you're absolutely right. President Trump talking about Israel and Hezbollah agreeing to dial back those attacks and to stop shooting at each other in Lebanon. Trump says he spoke with Prime Minister Benjamin Netanyahu and representatives from Hezbollah in separate phone calls, and that there will be no troops going to Beirut. And Iran said earlier it would suspend negotiations with the U.S. in protest over Israel's offensive in Lebanon, also threatening a complete closure of the Strait of Hormuz. But the president says those talks with Iran are ongoing. That has oil off its session highs. WTI now just over $91 a barrel, and Brent crude near $94 a barrel. We do check markets for you all day long here at Bloomberg. The S&P 500 is now up 0.4%. NASDAQ up 0.7%. The Dow little changed on the downside. 10-year Treasury yield at 4.46%, and the 2-year yield at 4.04%. Manufacturing activity in the U.S. expanded in May at its fastest pace in 4 years. That was bolstered by a pickup in new orders and production, adding to speculation that the Fed is going to keep rates higher for longer. Barry Diller made an offer for the remaining portion of MGM Resorts that he doesn't already own through his business empire People, which expects to fund a transaction with a combination of cash and additional debt and equity funding commitments, and expects to own just over 50.1% of the equity of the company. MGM Resorts shares 16% higher. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Bloomberg Business Week Daily with Emily Graffeo and Tim Stenivek.
Amy, thanks for that. Do appreciate it. Well, Wall Street traders, as we just heard from Amy, sending stocks higher. Oil pairing its rally. This after President Trump said U.S. talks with Iran are continuing at a rapid pace. He added that Israel and Hezbollah agreed not to attack each other. The president also said that Israel and Lebanon agreed that all shooting will stop. President Trump said in a social media post. The president, or rather Iran, had earlier said it would suspend talks in the exchange of documents through mediators in protest for Israel's assault on Lebanon. That was according to Tasnim, and Tehran warned that it could target northern Israel if the attacks continue. That's according to the semi-official Iranian Students News Agency. We're going to talk to Galit Altstein in just a minute. She's Bloomberg News economy and government reporter. She's out there in Tel Aviv. We're working on her signal. In the meantime, Axios also reported that the Speaker of the Lebanese parliament told the U.S. on Sunday that Hezbollah is ready for a full and immediate ceasefire with Israel. I think the question that a lot of people have, Emily, right now is, what piece of information do you trust? The president is out there on Truth Social saying certain things on his social media platform about the talks continuing between the U.S. and Iran, and then the other side, you have, Iran saying we need Israel to essentially stop what it's doing in the region in order for these talks to continue.
Right. At least, Tim, for the market, the equity market took this as a positive signal, a signal that we're getting one step closer to a potential deal between the U.S. and Iran. And it was interesting to see that, you came in earlier this morning, equity market down, people leaving U.S. treasuries, and it's reversed a little bit just on like a small update like this, Tim?
Yeah, I'm looking at oil too, and that's really also what's driving this. It's still higher today on the day. WTI up more than 5%. Brent up right now more than 4%. I do want to go to Tel Aviv now and bring in Galit Altstein, economy and government reporter for Bloomberg News. Once again, she does join us from Tel Aviv. Galit, can you help us make sense of what signal is the one that we should be listening to?
Yeah. Well, let's try to figure that out together. So things have been happening very quickly here today over the past half a day or so. So this day started out with Benjamin Netanyahu saying that Israel would ramp up its military operations in Lebanon against Iran-backed Hezbollah, and he said that Israel would be attacking in Beirut, the southern suburbs of the Lebanese capital that have been off limits for Israel since about mid-April, when President Trump basically said that the Iran ceasefire would be copied to Lebanon. Since then, Israel has not been attacking in Beirut. Now, the IDF, the Israeli military, hasn't acted on this threat from Netanyahu. And this evening, it's just past 9 p.m. here in Israel, we've been hearing that Netanyahu and Trump have spoken over the phone, and that Trump, he actually also posted this on Truth Social, has once again declared a ceasefire in Lebanon, saying that Israel and Hezbollah will no longer be attacking each other, and that no Israeli troops will be attacking in Beirut. And if any troops were on their way there, they were already been turned back. So that's what we're hearing this evening. If you're asking what the signaling is, I would say that at this point, although we've not yet heard anything from Netanyahu, it does seem like things are going toward a ceasefire, but we do have to say that with caution and see what happens on the ground.
Yeah, Galit, just bring us up to speed, too, on just how much of a development we're now seeing between Israel and Lebanon, because as you had reported over the weekend, basically just 2 days ago, this was the broadest incursion into Lebanon in a quarter century, Israel's ground assault in Lebanon. But now it seems like things have shifted quite a bit.
Yeah, that's correct. So just to go a little bit back in time to put things into context. So when the U.S. and Israel jointly attacked Iran at the end of February, Iran-backed Hezbollah in Lebanon was quick to retaliate on behalf of Iran against Israel. So throughout March, there was ongoing back and forth fire between Israel and Lebanon, and that exceeded the April 8th ceasefire in Iran. So what happened then was that Israel kept going in Lebanon. At some point, as I just mentioned, in mid-April, Trump said there's going to be a ceasefire there also, there meaning in Lebanon. And basically, since then, we've seen that ceasefire crumble. That peaked over the weekend, as you just mentioned, when we saw the Israeli military, the ground forces, go deeper north into Lebanon. If at first they were kind of taking hold of this security parameter about 8 or 9 kilometers into Lebanon and then up to the Litani River. They had crossed that river and had taken over a ridge called the Beaufort Ridge, and that was the deepest incursion in 25 years, and that was just 1 or 2 days ago. Hezbollah retaliated with very heavy bombardment, heavier than usual, toward Israeli communities, mainly in Israel's north. So that's what we've been seeing over the past few days, and that brought Netanyahu to threaten with attacks on Beirut today. But as I said, just less than 12 hours after he threatened with these attacks, Trump comes out and says, we're going to see the end of attacks or ceasefire, although he did not use that specific word.
All right, we are up to speed on at least everything that has happened thus far. Galit Altstein, we're going to let you get to bed. We appreciate you staying up late and joining us here on Bloomberg Business Week Daily. Galit is Bloomberg News economy and government reporter joining us from Tel Aviv. Well, traders glued to the latest signals out of the Middle East and Washington. After all, as David Bianco points out, the geopolitical stakes right now are high. He's America's CIO at DWS. It's one of Europe's largest asset managers, more than $1.1 trillion in assets under management. He joins us here in the Bloomberg Business Week studio. We had planned to talk about earnings and AI CapEx, and we're going to get to those things. But I want to kind of start where we left off with Galit just now and hear from you about the inflationary view. Because I think at the end of the day, that's what this is about. This is about inflation expectations, energy prices, and when that Strait of Hormuz gets open again.
Thanks for having me. I mean, all investors, including myself, are keeping an eye on the Middle East. We're at the stage where seeing actions is a lot more important than announcements and words.
But announcements and words are still moving markets.
They still are. But we may be running out of some scope for that, because while I understand that disinformation is a part of any conflict, and if, it's important to hold out olive branches, but if saying that we're closer to a deal gets oil prices down $10 a barrel or takes yields off the boil, fine, but we are going through our strategic reserves pretty quickly, and the bond market may be losing some of its patience as well. Now, the equity market is more focused on tech. We'll come back to that, but I am looking at this conflict from, look, conflict is expensive, conflict is inflationary, conflict is a signal of maybe this world being less cooperative than it used to be. That weighs on productivity, and that weighs on potential for growth as well. So, yeah, gas prices are important. The deficit's important. American service lives are extremely important, but the stakes are extremely high here. Many are watching, particularly those out of Russia. And I think China is still more of a friend than a foe. But this is no time for the U.S. to seem as if a little bit of an expensive price at the pump and fear of our own democratic process of midterm elections. These aren't reasons for the U.S. to back away from what hopefully is a good deal. And there's still time for a good deal, but it should be a good deal, because if Trump and the Republicans for the midterms or Americans or our allies should fear anything, it should be a bad deal.
What is the portfolio trade then, if there is any, based on that setup of the conflict in the Middle East?
Well, we're still watching this conflict with a little bit of skepticism that this gets wrapped up quickly and we go back to, as I said, movement or actions and movement of ships out of the Strait and a big decline in oil prices and peace in the Middle East. We're skeptical of that. Mm-hmm. So until we see something more concrete in that front, we're sticking with where we see unquestionable strength, which is the tech trade. We're moderately overweight tech and communications because that is the large part of the S&P. So often the question put to us, what else can we do to diversify? Mm-hmm. And we've got some other things.
We talked late last week with Chris Kennedy, who leads economic statecraft at Bloomberg Economics, and he keeps going back to the JCPOA mm-hmm. and the so-called Iran nuclear deal. And when you say that Americans should be more worried about a bad deal than sort of, and I don't want to put words in your mouth, but my interpretation was then waiting for a good deal. Mm-hmm. I think a lot of people out there are saying, wait, what does a good deal look like? Especially if the uranium enrichment question is a can that is kicked down the road.
All right, what a good deal looks like is something that suggests Iran doesn't want to militarize the region. To debate whether a country should have nuclear weapons, I'm not sure they've earned that trust from the world. I don't think so. But, this is a country that, this is a big topic here, that has used revenue from oil or other, agreements, deals on freezing assets, being able to sell oil to certain markets, and it's helped them. It's largely what's allowed them to fund a lot of chaos in the region. So these are, you got to judge everybody by their track record, investors as well as geopolitical actors. Their track record's very poor. So take your time, and let's not take words, and let's make sure that the U.S. Keeps its options fully open.
We saw a bit of a sell-off in the Treasury market this morning. It's come down a little bit in terms of rates. I think the 2-year was up like 7 basis points. And the longer end too, on potentially this idea of inflation staying higher for longer. How much does your tech equity optimism hinge on rates staying relatively under control?
As far as the equity market goes, the part of the equity market that's probably most resilient to higher interest rates and yields is tech. The debate at tech isn't what is the cost of capital. It's what's the return on capital going to be about all of this CapEx? We don't really have too much concern about whether the cost of capital on a weighted average cost of capital is 5.5% or 6.5%. We want to know, is this going to be a return on capital below 5%, above 10%? That's the uncertainty. It's the return on capital. It's the other parts of the equity market that, if you take a good look, are sporting pretty demanding PE multiples up against this interest rate environment that we're in. So we're a little bit concerned about certain bond substitutes, staples or REITs even, or telecom. But there are many parts of the S&P 500 that are not delivering the kind of earnings growth and outlooks that tech has been delivering. They deserve their PEs. Their PEs have been shrinking upon the earnings deliveries. The rest of the equity market, it's still an above 20 PE on general, excluding tech. That's what's at threat to if yields go higher, even at these yields.
On tech, our team reported, Anthropic actually announced this earlier, that the firm has confidentially submitted draft paperwork for a public listing. It's potentially leapfrogging longtime rival OpenAI in the race toward a Wall Street debut as soon as this fall. So this could be an IPO of a company worth $1 trillion. Same with OpenAI. Same SpaceX, $1.8 trillion. We'll see what happens. Right. Are you going to buy into those companies when they go public?
That's for my team to decide. I manage a whole team of portfolio managers across growth strategies.
Have you given them a mandate at all yet?
Well, we're still looking to see what the pricing is and see how the market receives these. I don't have any comments about what we will do, but we're certainly intrigued by all of this, from not just the size of these IPOs, but this is going to empower companies and people like Elon Musk to pursue their ambitions. And we know his greatest of all ambitions is space exploration, Mars, and so forth. So, probably what we'll hear more about is the space economy, the launch economy, data centers in space. Nothing's going into space unless it's launched up into space. But just think about the capital that's being raised and the wealth that's been achieved of these companies. Some of them are tapping debt markets. Some of those companies you mentioned may be doing that in the future as well. So we're talking about a huge allocation of resources, and whether you think it's a good allocation or not, we'll debate that over time. Just as we see the bottleneck or the CapEx plays on AI, think about what are the CapEx plays on the space economy and launch economy.
Right. And your note from a few weeks ago, data center CapEx, $600 billion expected.
Just the U.S.
Just in the U.S. That's incredible. Just in the last minute, what's the best way to invest in this AI build-out trade?
Well, there are a lot of ways. And I do believe that the main hyperscalers are going to get good returns. And that these are attractive businesses. But people keep asking us about the tech hardware, semiconductor plays, and where I would say that what you see going on in the United States is going to happen in China. The other part of the world where I think you'll get huge data center investment building is the Middle East. We need a little bit of peace there, but I think that's going to be coming. And those regions are still going to be dependent on a lot of Western semiconductor equipment to get that done. And those just for an example. There's names like AMAT, Lam, KLAC. But ASML, people forget about some names out of Japan, like Tokyo Electron. China will use its own cooling equipment, its own electrical equipment. They may even design some of their own chips and still probably need Taiwan Semiconductor to make most of them. But the point is, everyone's going to need a lot of this key semiconductor equipment from the West to build this infrastructure around the world.
David Bianco, America's CIO over at DWS. Coming up next, we are talking Dr. Copper.
It's 2:21 on Wall Street. I'm Amy Morris. President Trump says the U.S. and Iran are still talking and that Israel and Hezbollah have agreed to dial back fighting. Iran had said it would walk away from the talks because of Israel's continued strikes in Lebanon. But President Trump says he has spoken with Israeli Prime Minister Benjamin Netanyahu and representatives from Hezbollah in separate phone calls, and that talks with Iran are continuing. That has oil paring back gains. WTI crude now less than $92 a barrel, and Brent crude now less than $95 a barrel. And we do check markets for you all day long here at Bloomberg. The S&P 500 is now up 0.5%, NASDAQ up 0.7%, and the Dow out of the red, now a little changed on the upside. It's about 25 points higher. 10-year Treasury yield at 4.46% and the 2-year yield at 4.04%. Anthropic has confidentially submitted draft paperwork for a public listing as it races longtime rival OpenAI to make a Wall Street debut as soon as this fall. Anthropic recently raised $65 billion in a funding round at a $965 billion valuation, including the investment, eclipsing OpenAI's value for the first time. Anthropic and rival OpenAI have been one-upping each other in recent months as they both pursue those public listings. Berkshire Hathaway will acquire Taylor Morrison Home in an all-cash deal worth about $6.8 billion. That deal is expected to close in the second half of this year and will unify Berkshire's site-built home building operations into a combined platform. Shares of Berkshire Hathaway now about 1% lower. For on-demand news 24 hours a day, subscribe to Bloomberg News now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Now back to Bloomberg Business Week Daily with Emily Grafeo and Tim Stenovec.
Hey, thanks, Amy. Do appreciate that. Shares of NVIDIA rising as much as 6.3% today. Best day going back to February. Shares of ARM surging close to 20% to a record high earlier in the session. This after NVIDIA announced a new chip for PCs. It's aimed at loosening the stranglehold of Intel tech in that arena, modernizing the machines for the AI era. So starting this fall, NVIDIA's new RTX Spark Superchip will debut in laptop and desktop PCs from Dell and Lenovo Group. That's according to Jensen Huang, who talked at the Computex trade show in Taipei. Here he is a little earlier today in Taiwan.
The developers are so excited about it. This is an incredible computer. All of the acceleration, all the software capabilities associated with it, working with every developer to make it incredible for all of you.
That was Jensen Huang just earlier or overnight at the Computex trade show in Taipei. I want to bring in Ian King right now. He is Bloomberg News U.S. semiconductor reporter. He joins us from our Bloomberg News Bureau in San Francisco. Ian, I have so many questions. I'm glad we have a good chunk of time with you right now. We're seeing shares of Intel lower on this news. We're going to talk about that relationship in just a second. But my first reaction to this, and you know, NVIDIA is a company that goes back to the 1990s and that Denny's. And wasn't it originally a company that gained notoriety for the GPUs in PCs? Isn't this a return to NVIDIA's DNA?
To an extent. You'll remember that its GPUs essentially have always worked in tandem with the CPUs, the central processing units, from Intel or to a lesser extent from AMD in PCs. So, you know, NVIDIA's had a very strong brand in PCs, but on the graphics end. If you're a gamer, if you like, you know, killing things in the virtual world, you love NVIDIA because it allows you to do that in better definition than anything else.
So then how is the announcement today related to what NVIDIA has been doing for more than 30 years?
Right. I mean, it's using that brand, the GeForce brand, to extend its reach in PCs, to say, hey, look, this central processing unit, which has really been Intel's domain for a very long time, we can do that too. And we can use this mobile phone architecture, this ARM architecture, to do that. So we're going to have lower power, better performance, and we believe we're going to have a compelling sort of offering in the PC era.
And Ian, why get back into PCs now, particularly when this is a time that NVIDIA is dominating in the data center world?
Yeah, no, that's a very good question. There are a couple of elements to that. On the one hand, it's not that exciting, right? I mean, you're thinking about $100 ASP, couple of 100 million units, maybe you get 20, 30% of that. compared to your data center where some of your parts are going at $30,000 a chip. Doesn't sound as exciting, but what NVIDIA is anticipating here is that the use of AI is going to spread, that for it to really connect with the consumer and really become pervasive in the economy, that it's going to be part of devices that we touch every day. And obviously, outside of the smartphone, the PC is a device that most people use on a daily basis to sort of compute.
You know, isn't that, I'm just looking at shares of Qualcomm right now, because Ian, when you're talking about shares of Qualcomm down 8.5% today, what you're describing to me is what the folks who from Qualcomm come on our program and say is the so-called AI PC, and this is what they've been talking about with regard to Snapdragon for the last few years as they've joined us on our program. Is this is the AI PC? That's the promise?
100% exactly the same thing. Microsoft has been looking for a chip partner that would get it into this particular realm of laptops for a while. Obviously, this is something that Apple has already done with its own in-house silicon. So we're talking making devices that are really sleek, run for a long time on one battery charge, and also are very powerful as well. And Microsoft has been out there looking for partners to do that. It's tried with Qualcomm. We've had some really nice devices, stuff that I've had to go at that's been absolutely fine, but it's just not caught on with the consumer. And now we've got NVIDIA coming, so we've got the money, we've got the industry expertise, and we've got a brand as well that counts for something in this area. So we'll see whether that makes a difference or not.
So what do we as normal human beings do on AI PCs? Emily and I, just a few minutes ago before we came to you, we were talking off mic about this. And she was saying, she's an OpenAI person, ChatGPT person. I'm like, I'll just switch between Claude and OpenAI and Claude and ChatGPT. Increasingly, I'll use what Google offers when you search for something with Gemini. What do we, who just talk to chatbots like they're search engines, what do we do with an AI PC?
Yeah, no, that's a very good question. And I think what we've got is promise, and arguably not really delivering on that promise right now. I mean, as NVIDIA pointed out, throughout its history, you've been typing or you've been clicking with a mouse and looking at a screen. That's how you interact with the PC. That's, fundamentally you're calling up a piece of software and then you're asking it to do something based upon some typing parameters that you give it. Arguably with AI, assuming that it progresses along the path that we've been told it will, you'll be interacting with that computer in a much more dynamic way. Obviously, you'll be speaking to it. And that speaking to it isn't just a voice to text. It's telling the computer, hey, this is my intention. This is what I want to achieve. Go off and do it for me. So then your computer doesn't just recognize the sounds you're making as text and do what it's always done. It then does more things, such as calling up various programs, having them interact together, and giving you a solution, giving you an outcome that you might have taken several steps with a keyboard and a mouse to achieve. And we got examples of that given to us yesterday.
Oh, talk about some of those examples. I'm curious to hear about that.
Yeah, I mean, the big example that they gave was with Adobe, with Photoshop. Right now, for example, you've got a sketch that you upload as an image into Photoshop, and you think, I want to make this look realistic. So then you have to, go and color it in and choose color palettes, choose shadings to try to make it look realistic. And then you think, what it looks like from a different angle. Can I rotate it? Can I fill it out? Can I make it a 3D image? And then, maybe I want to animate it and have it move around naturally. And what they showed was a version of Photoshop and other Adobe tools where you basically just told the computer that that's what you wanted to do, and it happened. Whether that is really practical and whether that happens as smoothly as they showed, we'll see. But that's the kind of idea that we're getting at here.
For those just tuning in, we're speaking with Bloomberg News U.S. semiconductor reporter Ian King, who's in the San Francisco bureau at Bloomberg News. So, Ian, I do want to pivot for a moment here because we're seeing ARM holdings at a record high. What's at stake for ARM given this new NVIDIA chip?
Yeah, NVIDIA is one of the biggest licensees of ARM technology. Or remember, ARM provides either designs and licenses to use what's called an instruction set. The instruction set is the code that a chip uses to communicate with software. Because NVIDIA is a big licensee, this new chip that it is producing will basically use ARM technology, so therefore ARM gets a cut of every chip that's sold. It gets royalty revenue. So just on a very instant basis, that's good for ARM's revenue. But on a broader basis, it's affirmation that this ARM technology that Qualcomm is using, that Apple is using, has a broader role to play in PCs, that there's now a really, really big company putting some effort behind that, and perhaps, you know, this nascent effort that's really been going on for more than a decade is about to take flight.
So ARM is higher today, NVIDIA is higher today, Qualcomm is down as much as 8%. I go to Intel, it's down 4.3% right now, Ian. And when I think of Intel, I think, hey, congratulations to Emily, to you, all these taxpayers here who are shareholders of Intel. But I also think on the Bloomberg terminal, I type in HDS, and I see that the fourth largest shareholder of Intel, you know where this is going because I saw you grin right there, is NVIDIA. NVIDIA, thanks to that investment last year, owns more than 4% of Intel. How do you explain a move like this going into Intel's turf, but also being one of the largest shareholders of the company?
Yeah, I mean, as you'll remember, there are two sides to the Intel story, and Intel has increasingly differentiated them. There's the one part of the business, which is Intel goes out and designs chips and then manufactures those chips. So that would be the PC chips that NVIDIA is going to compete against. The other side of Intel's business is what's called a foundry, which is, hey, we've got all of these factories. We can't fill them ourselves anymore with our own designs because we're not as big a company as we used to be. Why don't you give us some of your work and we'll do it for you? So there's kind of a duality there inside Intel. So this is a blow, but if Intel down the line can become a provider of manufacturing for NVIDIA, then maybe that's a good thing.
That's a good point. And I guess to be fair, Intel, even with today's decline, is still up close to 200% so far this year. Ian, where does it leave a company like Apple and what technology Apple offers in its PCs?
Yeah, I mean, there's a kind of an overlap between Apple and NVIDIA here in that, you know, both companies like to definitely paddle their own canoe. They like to have absolute control of what they're doing, and that's what Apple's success has been built upon with its silicon program and this fundamental architecture, which is, you know, low power, high performance. NVIDIA is coming in on that and in theory arming the Microsoft Windows world to have similar capabilities. So we'll see how that plays as a competitive threat against Apple, but undoubtedly this is an attempt to do so.
Ian, we got to run, but we appreciate you talking about this with us for such a long time this afternoon. We had a ton of questions. You answered all of them for us. Ian King is Bloomberg News U.S. semiconductor reporter joining us from San Francisco. Check out Ian's story and more on NVIDIA, on ARM, on everything within this ecosystem on the Bloomberg terminal and at Bloomberg.com. Looks like, Emily, we're still seeing stocks higher, though the majority of stocks in the S&P 500 are actually lower today, even though tech is a bright spot, up about 0.5%, the S&P is.
Do you know what else is higher today?
No.
Copper.
Okay.
We're going to talk about that next.
I was like, I could have gone a few different places. That's next on Bloomberg Business Week Daily.
It's 2:40 on Wall Street. I'm Amy Morris. President Trump says Israel and Hezbollah have agreed to stop attacking each other in Lebanon after fresh violence threatened negotiations to end the Middle East conflict. Trump says he spoke with Israeli Prime Minister Benjamin Netanyahu and representatives from Hezbollah in separate phone calls, and that talks with Iran are continuing. Iran had threatened to suspend those talks with the U.S. in protest over Israel's offensive in Lebanon. Trump's announcement moved oil off its highs for the day. WTI more than $92 a barrel. Brent crude right around $95 a barrel. We do check markets for you all day long at Bloomberg. The S&P 500 up 0.4%. NASDAQ up 0.7%. And the Dow is little changed on the upside. 10-year Treasury yield at 4.47%. The 2-year yield at 4.05%. NVIDIA shares more than 6% higher and ARM shares 16% higher after NVIDIA announced it is entering the PC market with a new chip. It is the RTX Spark Superchip. It's expected to loosen Intel's stranglehold in the arena and modernize machines for the AI era. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Amy Morris. That's a Bloomberg Business Flash. Let's go back to Bloomberg Business Week Daily with Emily Grafeo and Tim Stenovec.
Well, thanks, Amy. Copper advanced in New York and London to kick off a crucial month ahead of the Trump administration's deadline to make a fresh determination on launching U.S. import levies. In the meantime, Goldman raised its end-of-the-year copper forecast by more than 10% as it sees U.S. stockpiling and weaker-than-expected mine supply keeping the market tight. Its analysts wrote in a note that copper will finish 2026 at $13,735 a ton versus a previous forecast of around $12,465 a ton. So we're curious what Andrew Groves is seeing right now. He's chairman of Copper Intelligence, which focuses on mineral exploration and acquiring and developing high-grade copper assets in the Democratic Republic of Congo. He joins us here in the Bloomberg Business Week studio. Thanks for joining us, Andrew. How are you?
Very well. Thank you very much for hosting me, having me here. First time, but
yeah, welcome.
Interesting.
So let's just start kind of high level about where you kind of see the forces driving the copper market right now and how AI plays into all of that.
I think there's a number of factors driving the market, and you've got to start with the supply issue always. And, over the last 10, 20 years, you've had a dearth of mining investment in the source of raw materials, whether it's existing mines upgrading the mineral reserves or finding new deposits. And then so there's been a complete lack of that. And then you have the existing mines. Mm-hmm. A lot of them, especially in South America, have declining grades. So if you look at some of the mine grades in Chile, in that you're running at 0.9, 0.7, 0.8%, that means you've really got to move 100, 110 tons of dirt to produce 1 ton of copper. And how much does it cost to move that 100 tons of dirt when you look at fuel costs, human costs, vehicle costs, et cetera, et cetera. So you've got that issue in the supply side. And then obviously on the demand side, you've got these hyperscalers requiring, 50,000 tons of copper per unit. So you multiply that over a whole series of hyperscaler data centers being built out.
In terms of regions of the world where you are most bullish, is it fair to say it would be DRC?
I'm very bullish on the DRC on the basis it's very, very underexplored, and historically it's been in constant conflict.
Which is why it's probably underexplored.
Correct. And the new government under Felix that's coming in his second term, where he's not in a coalition with Kabila, he's done an exceptional job. There's a lot of investment going in the country, roads being built. You go into Kinshasa, there's a lot of infrastructure being built, buildings, and a lot of mining investment. You had $32+ billion of mineral exports last year, the highest ever for the DRC, and it's on track to do probably in excess of $50 billion this year. So a huge amount of investment in copper. But what's exciting about Congo is the copper grade. So if you look at the average grade in Congo, is running 2, 3, 4, some deposits 6%. Means you've got to move a lot less dirt to produce the same ton of copper than you do in a lot of these South American jurisdictions.
How do the customers of the buyers of copper, how do they access the copper? Is it a market where there's still, I guess, more demand than there is supply, and it's getting even harder?
At the moment, demand exceeds supply. I mean, even going into this year, I think you're going to have a 400,000 ton shortfall. And I see the banks, they're targeting 13,800 at the year end. Sort of my own prediction would be more on 15,000 tons.
Oh, wow.
So you saw Codelco recently announced 20% reduction in supply. I'm not sure if Grasberg has fixed its issues in Asia. So, and with the demand going, where's the supply coming from?
You mentioned the history of conflict in the DRC, and it's also right now in the news as a result of what's happening with Ebola. And I'm curious about how that affects, you're on the ground there. Oftentimes. It's one of the places you split your time between. What are you seeing? What are you hearing? How does that affect the industry? I mean, it's a story about infectious disease and it's a story about people, but it's also a story that affects exports.
I mean, Ebola at the moment is concentrated in that northeast area around Punya, and it hasn't really spread, and it kind of self-contains itself, and over time it burns out. I mean, in 2014, we were in the Ebola area of Guinea, near Nzerekore, where we were exploring iron ore. And again, as long as you sort of hygienic and you're not sort of getting involved in any way with the locals, and as far as sexual activity, as far as, it's all driven by semen, saliva, and blood. It's not an airborne disease.
Dr. Amish Adalja from the Bloomberg School of Public Health was on our program on Friday, and he reminded us about how, we hear about how it spreads, but he reminded us this is blood and bodily fluids.
Correct.
Is the way
exactly
that this spreads.
And one of the traditions in African culture, when a body dies, they wash it, and then they all hug the body. And the Ebola virus sits on the body. And that's one of the big issues in their culture of perpetuating.
But for you and for your business, not an issue?
No, it's not an issue, really. We've got all our staff are well aware of the risks. We run a program informing everybody of what to do and what not to do. So don't eat bushmeat, don't eat bat meat, don't eat fruit that bats like because they urinate on the bat.
Does this current outbreak make you spend less time there? Or will you go back?
No, I'll go back. It's not. I mean,
no problem.
It's no problem.
Okay.
As I said, it's not an airborne disease. If Ebola was an airborne disease, I'd be staying, a million miles away. But it's not an airborne disease. It's it's a bodily fluid disease. So as long as you avoid bodily fluids in whatever shape or form, you're okay.
Okay.
So it's not a huge risk.
I do want to end just going back to copper here and the role, how you see the U.S.'s role kind of playing into this, because are you seeing, guys, an increase in manufacturing and mining in the U.S.?
I can't comment on that because I don't know too much what's happening in the US. Sort of my if you want to call it expertise, is working in the DRC and finding high-grade copper assets that we can develop. But one advantage with us is we haven't signed any offtake or done any offtake agreements with anybody yet. So all our copper will be coming hopefully to the United States.
What's the way that you identify a deposit?
We identify the deposit normally looking at surface mineralization, where you look at the copper oxidization on the surface, and that's very, very visible in Congo. And I'll just run you through quickly how we discovered Butembo. We have a sort of way of discovering deposits in the DRC, whichever mineral it is, and our local team called us at our office in Lumumbashi and said, guys, you come up here, there's very interesting copper. And how it was discovered in that area of Butembo, the locals were digging from the top surface through the laterite and then through an oxidized mineral layer of copper. So you looked at about 10, 12 meters of ore, and they were panning for gold and getting very nice lumpy gold, 3, 4, 5 grams a ton out. But then at the bottom, they hit almost a layer of cement, of green cement, which was your solid copper. And then they'd move on to the next sort of 50 meters, 100 meters away, do the same, you'd hit the same. And it was over and over. So we then flew up there with our team, we brought in an excavator.
Right.
And we dug along strike 1.2 kilometers.
And you found it, Andrew Groves. Good to see you. Thanks for joining us.
Thank you very much.
Chairman of Copper Intelligence here in the Bloomberg Business Week studio.